Fuck. Oh. Yo, why do this to me, bro? Why does it do this? All right, can you guys hear me now? Are you guys able to... Wrong link? No. All right, are you able to hear me? Can you guys hear me? Okay. Oh, shit. I didn't say that, I promise. Alright, sorry about that, guys. It wasn't a incorrect link, but it's I don't know, it was YouTube, bro. Yeah, it's working. Alright, cool. I'm getting Nick in here now. Sorry about that, guys. Bruce and the other admins, I'm gonna do as well. Could you please post the link to this stream in the other YouTube. Yeah, I think Nick is here. There you go. Cool. Nick, you're on. It's all working now, so.
He's so handsome.
Thanks, my love.
Yeah, YouTube.
I'll own it. I'll own it.
Sure, 70,000 people, bro. They're all going to be able to hear that.
There we go. 70,000 people.
Is that all?
Lovely. Don't worry, guys. It's my screen that's making me look red. It's not me.
You sure you're not blushing there? You can continue with my one's still over, but you can continue with whatever you're doing. It's working now.
Yeah, sure, no problem. Let me just get my screen sharing here.
Yo, bloody YouTube problems. Never ending, man.
Let's do that. There. Yeah, let's do that. All right. Dave, can you just set up the screen sharing there, the stage, essentially? There we go. Right. Let's start again.
Amazing, eh?
All right. You just keep if there's any questions, you'll let me know. Or if I must slow down or anything like that.
It's in chat now. If you click on the comments, it's all there.
Aha. Okay, all right, I'll get there. Great, there we go. Great, welcome, New Zealand. Lovely, lovely. Fellow New Zealander. All right, perfect, great. Glad to see everybody's joining. Glad to see we've got the links up and working. And we're going to get straight into it. Thanks for joining, everyone. We're going live for our 24-hour, our second time we're doing this. And so this will be the first time that I'm doing this, but I'm sure a lot of the guys that are from the school, you would have had time to chat to me or hear my voice at least in the stages. So today, essentially, for the next 24 hours, we're going to go through multiple different topics on trading, and you'll be able to get to meet some of the pro traders that join with us in the strategies and with their trading strategies. I'm going to be running through backtesting, something that most people find probably boring, but it is essential to your trading journey. You're going to need to know how to do it, and you're going to need to put the time into it if you really want to take this seriously. In order to test your strategies. All right, so let's get straight into it. So, two questions you're probably going to start asking. One is probably, who am I? So just a little bit of my background is I've been involved in the crypto industry for the last 6 years, 5-6 years or so. And I basically just got in because of the technology and Bitcoin, and I saw the benefits of it, what's going to happen there. So that's why I got in, and I've got a background I've got a Bachelor of Science background, and I've also got a sales background. So that's just a little bit of me and what I do on the side. Next question you're going to ask is backtesting. Do you really need to do it? So you're going to just have to, hopefully I'll be able to answer that question by the end of the session, and you'll be able to go, yes, I definitely need to do my backtesting, and it's going to save me time. So that's my goal. So do you have a strategy, and what is it? When it comes to trading, one of the most important things that I've learned with trading is risk management. And there are two components that come with risk management. One of them, of course, is your strategy, and whether or not you have the correct strategy for the correct token, or the correct strategy for the time frame that you're using. By backtesting and looking at the historical data, you'll be able to, you can see where your strategy is at risk and whether or not you're using the right one. By doing it on backtesting, you're then not using your money, and you'll be able to save yourself a lot of money. And we'll get into that as well. Capital risk. This is now another side of things where your capital risk management has got to come in. You don't want to be blowing your account on the first 10 trades that you do. You want to know how to have a strategy to prevent yourself from blowing your account. And Matt is going to be expanding on this in his session. So stick around for that, and you'll get to know exactly how he's doing that. Right, into strategies. There are many different strategies that traders use, and that's what makes trading so exciting, but also so frustrating, is because there's no boundaries that are in trading. You have to set your own boundaries, and you have to set your own strategies and your rules. But which one works? You know, you have trend line, support and resistance strategies, where you find a trend line, buy on the trend line, or if the trend line breaks, you buy on the retest or you sell on the retest. All right. You've got smart money concepts. In the next hour, you've got Fefe and Maison, who's going to go through some of the details on the smart money concepts and how it's put together and what is done, how to trade it. You know, you've got MACD and stochastic strategies. You've got swing trading strategies. So you've got all these different strategies that you can use, and they all can be valid, and they can, but you need to test them to find out which one works the best for you. Right. With backtesting, we've got to analyze certain information. What information are we going to be looking at? Firstly, we're going to look at your P&L. At the end of the day, you want to be making money. You don't want to be making losses. You're not in this game to make a loss. Right? We want to look at drawdown. You know, what's your maximum drawdown of your account going to be using this strategy? For example, if you're using a strategy that uses a high risk, you need to know that you've got the big enough capital in order to cover those losses that you might have. So if you've got $1,000 account, if you're going to draw that all the way down to $100, right? But if your strategy works and you've backtested your strategy, and after multiple trades, you can still come out from $100 right back into your $1,000 and profit, then your strategy still works. You need to decide whether or not you're happy with an 80% drawdown and the emotions that come with that. And then the last thing we want to look at is your win to loss ratio. Now, your wins to losses, when you're getting in, especially the new traders around, you know, you're wanting to get in, you're used to having high wins, you know, you've been taught at school that 80% that's a pass, you know, or you're doing good, you're getting an A at 80%, you know, 50% is a pass. But in trading, if you're able to get a 30% win ratio, you're still able to make profit if you're using your risk management properly. So new traders out there, if you're coming in and you see that you're losing 4, 5, 6 trades out of 10, then you're okay still. You don't have to get negative. You don't have to worry about all those fears and emotions that get stuck into trading when you're losing half of your trades. You can still be profitable by doing that. With backtesting, if you're looking at different tokens, be it Solana, be it Bitcoin, or even in the Forex side of things, you're able to see how the market moves. Right, you get a much better understanding of the waves of the trade. Right, I was going through my slides, and I enjoy my bodyboarding, and I'm sure there's a bunch of surfers out there, especially if you're from South Africa and you live close to the coast. You don't spend much time out of the water, but there's always a saying, and it always repeats in nature as well, is when you're out surfing, you will count the waves, and the waves will come in threes, and you will take the first of the next wave will be your biggest wave. It happens in the sea on a regular occasion. The same thing with trading the markets. You will find that there are certain patterns that replay itself, either in the level of threes, an ABC wave. You'll get to know all of these things. And in the beginning, it'll all seem Greek to you. And you'll start to see it. The more time you spend on the charts, the more time you go back testing, the more time you will see it going up and down, and you'll be able to ride those waves. And you will find that your patience will grow. And then after wave 3, you will then take in your trade, and you'll make your profits on that wave. You can ride each wave, but you know your best wave once you've done some back testing and you see how the markets move. Right. Another thing about back testing is handling your emotions and getting into a behavior of finding your strategy and sticking to it, and then getting confidence in your strategy. You'll find that you have a cycle of emotions when trading. It's a weird thing to explain. Once you get into trading, you'll feel it. You'll feel the time where you put in a trade and you are getting to that excitement stage. Okay, it's now in profit. We're doing well. You're getting to double your profit now. You think you know what you're doing. You are ecstatic, and then that can easily just flip right around to going into a couple of losses. You're starting to panic. It's the same feelings you will feel as what I forget the name now. The emotions of trading. When Annie was looking at it earlier today. Anyway, you'll feel those emotions yourself within one trade. And by back testing, you'll be able to get into control those feelings. You will stop the nervousness, you'll stop the doubt, and most importantly, you'll stop the FOMO. Because if you're trading your strategy to the T, you won't get into a trade if you're FOMOing it. Okay. You'll also stop overthinking the trade. Many times, and I know I'm at fault here. I look at a trade, I plan the trade, I get into the trade, and then I start seeing all sorts of things I should have seen before the trade was made. And then I overthink of it, get out too early, or I don't go right through to my profit level. So by testing your strategy in the back testing, you'll get all over this, right? You'll have 10. Remember, you'll also have lots of people giving you rules. There's 10 rules of trading. There's 9 rules of day trading. There's 5 rules for intra trading. There's so many different rules. By back testing, you'll be able to know which ones are right for you. And you'll be able to declutter all that noise that's coming out of you. All right. With trading, sometimes you feel like there's guesswork involved. Sometimes you'll be tempted to go with your intuition because of what people have said, right? Which will give you an emotional bias, and it'll start to, yeah, absolutely, Paul, trust the method. That's what backtesting allows you to do, is it allows you to be confident in your method, so that when you're looking live at a trade, you can just be, everyone wants to be like a robot, but we're not. We're people. We've got emotions. We definitely are going to get emotional, but this helps you control that. When it comes to intuition always comes only after years of practice, right? In the early stages, especially with trading, you'll have a lot of information coming to you. You have Banter that you're listening to. You have Kyle that you're listening to. Everybody is good at what you're doing, especially in the Banter group. They're all good. They know what they're doing. They've done it for a while. They're professionals in what they're doing. But because you're getting, as a newbie, you're getting all this emotional bias to your trading strategies. Which ones should I do? Am I doing the right thing? That will lead to lack of consistency. And you will start to see that on your trades, right? You'll start overlooking the data, overlooking the analysis. You'll look at the fundamentals as well as the technicals. You'll start to get confused on which one's telling you what to do. Whereas with backtesting, you'll be able to get rid of all of this information, that is being fed to you on a consistent basis. Your intuition will then, of course, lead you to inconsistent results. And hopefully by doing the backtesting, we'll get you consistent results. Saving time. If you're trading on a paper trading account, which, as a beginner, you want to start to do, you can then watch the charts and start to trade your ideas and trade your strategy. But then you still got to wait for the price to do what you want to do, right? Or price to come to where your strategy is helping. So that takes a lot of time. It's worth doing paper trading in the beginning, and you get used to the whole trading. But then when it comes to saving time, you can go and back test your strategy. Because if you're back testing your strategy and you're doing it enough times, you will save yourself time, because you can just fast forward and check what the times is, what price is done based on your rules. So that's what back testing will do, is save your actual time. Although while you're doing it, it feels like you're not making money and you're not saving any time. It's actually just costing you time. But you will understand it once you actually start to do it. And then your competitive advantage. The trader that back tests is the trader that has the competitive advantage. The trader that backtests is able to get ahead of everyone else and then have an edge. The question is, what is going to be your edge? And how are you going to find that edge? You're going to find that edge through your strategy, all right? And you're going to use your rules and test them from there. Basically, in summary, we've gone through risk management. The backtesting allows you to validate your strategy. It allows you to evaluate the performance of your strategies. It gives you more insight to the markets. Are we in an uptrend? Are we in a downtrend? What is the markets currently doing? It allows you to get into a discipline that a disciplined trader is always a profitable trader. In a book that was written, who would you rather have? Somebody who risks a lot, that makes a lot of money, but is an inconsistent trader, or somebody who has the discipline that doesn't make a lot per trade, but is a consistent trader? And you would want the consistent trader, because over time, the consistent trader is the one that's going to make the more money. And that's what backtesting allows you to do, is to set yourself on that discipline. We've spoken about reducing guesswork, right? You got to get that out of trading. You don't want to be guessing, because if you're guessing, you might as well go to the casino. You might as well go and to bet on red or black, because in trading, the price is going to go up or down. So if you're going to guess, then that's where you go. So that's why you can back test your strategy here. And then, of course, we want to save time. Those are the things we want to do. And at the end of the day, because we're in trading where somebody loses, somebody wins, right? you need to have the competitive advantage. You need to have the trader's edge. And that trader's edge is going to come from backtesting, from making sure that you know your strategy and you know exactly when to place your trade because your strategy rules has put it in there. Right. Tools. How do we do backtesting now? Okay. There's a couple of ways. You can trade. You use TradingView, the free account you can use. You can also use the paid link, right? So you can go to TradingView and you can get the paid version. And something that if you're really wanting to do trading, then I would definitely go with the TradingView paid version. Gives you a lot more flexibility. You can back test a lot easier, and it's well worth it. Okay, if you want, there's the school link in the Discord. I'll be posting it. It is posted there already, so you can go in the Discord and you can check that out. Then there's another paid version that you could use. It's called Trader's Edge. It's a slightly different way of testing your strategy, slightly easier. It is a paid version. You can check it out if you want to. So that's also a nice way to do things. But you don't really need to pay anything. You don't have to, because on the TradingView, you can do it all yourself, right? So now I'm going to go just into some examples, some live examples. We're going to look at, in one of the Sheldon's talks, we went into the stochastic RSI long-term trading strategy, right? Where he looked at what would happen if we only bought at when it's oversold, or if we only sold when it's overbought. And over time, would we have made money? Wouldn't we have made money? And that's a strategy that you could use. You can choose whatever your strategy is. I'm just going to go through an example of how to actually do it and see if we're actually profitable. Then we can also look at just some examples of support and resistance with the trend line break strategy. I'm just going to do something simple, just so I can show you how it works. And then let's pop into the example. All right, so let's just change this quick so we can see what we're doing. And go to Bitcoin. Right, so this is TradingView. This is currently the paid version. So the paid version just allows you to do a couple of extra things. One thing, when it comes to back testing, the paid version allows you to replay the data, replay your chart, which is quite valuable in my opinion. So if you're going to get TradingView, that's one of the reasons to get it. All right. I'm going to start just basically with, just want to check my time here. I want to start with the paper trading side of things. Okay, so you can trade using paper trading to see if your strategy works. What you would do on TradingView, you scroll this up here at the bottom. You have a crypto pair screener, Pine editor, strategy tester. If you know Pine editing or you know how to code, then this is the place you want to be. I don't know how to code, so I'm not even going to worry about that. Or you go to your trading panel. On your trading panel, you've got various different brokers here. OKX, Bybit, all that is over here. Sorry, just had an alert. Right. Well, there we go. So what you want to do is you want to activate your paper trading. You connect your paper trading account to your TradingView account, and now you can paper trade. On the top over here, you can see that you've got an account. You can create multiple trading accounts. So for example, if you want to just start labeling your different strategies, it's a trend line strategy, and let's say we want to work with $1,000. You can work with $1,000, right? If you know what your fees are on the exchange that you're using, you can put that in here as well, and it can also calculate that. But let's stick with $1,000 and see where we're going. Oh, wait, sorry. It has to be one word. There we go. Okay, so now you have your trendline strategy loaded over here. You've got your account balance of $1,000. Now you can start trading. Okay, let's say we've got Bitcoin, for example. Now you're on so Bitcoin, this is the live account, so that you can watch the price. This is live. And for example, over here, we can look and we can say, let's find a trend line. Remember, this is just examples. I'm doing it rough just so that we can see how it actually works and how you can backtest. So let's say we have a trend line over there. We can pop in a trend line over here, and we're getting a little pennant forming over here. Now we know price can either go up or price can go down. Let's say price, we're going to assume price is going down. We can then put in a short tool over here. All right, you put in your tool over here. You say, that's my recent high. There, I don't want price to go higher than that. My 1 to 3 to 1 ratio. So we're looking over here for the 3 ratio. There's my trade. Okay, now you want to paper trade this. Price is going to, we want to see when price drops below that trend line, we want to enter. Okay, let's say that's your strategy. Your strategy is find a pennant, price drops below the pennant, enter. That's your strategy, as simple as that, those 3 rules. Will that work? Okay, so now you can paper trade it. You can say one of your rules is I'll always have a 3 to 1 ratio. Okay, we're going short on this if it goes below there. Once you've set your short tool, you just right click on it and you create a limit order. Now you can start setting up your limit orders here. How much are you going to risk per trade? You have $1,000 in your account. We set that at the bottom here. There's the $1,000. You've got $1,000 in your account. How much are you going to risk per trade? Here's your risk. Is it going to be 25% of that? 25% of $1,000 is $250. That's where that comes in, right? Let's say a good way of doing. Matt will chat to you about risk and how much you should be risking per trade. Right? You can risk what you want, but an average trader will be risking between 0.5% of his account right up to 5%. That is sort of 5 is like the max I would use. If you're starting out, use between 1 and 2%. For this strategy, let's work on 2%, which means that if we lose this trade, we're going to lose $19. Okay, 2% is $20, but it's taking in a little bit of the spread. Okay, you then click sell. Your limit has now been placed and it's jumped into the trade. Okay, remember there's going to be variations on each chart that you use. Each chart that you're using, going to be variations. Make sure that you're testing your chart on your same exchange that you're using. So if you're using OKX, chart on OKX. So then you know that your strategy is going to work on the OKX exchange. That's what I would do. All right. So now you can watch this play out. Okay. As you can see, it's already jumped into the trade. What that means, the reason it's jumped in the trade and price is not even there yet, is because there's a bit of a spread here. We won't get into that now. We can always change that at a later stage. Okay. We can close that position. Let's move this down. Let's make sure we don't get into the trade. Let's say we want the trade down to go down to the bottom there. We can always just create another limit order. We want the risk to be 2%, and we hit sell. And I can't tell you why it keeps jumping into the trade right now. When you do things live, things just never go as you plan it to go. Anyway, that is the idea of trading your paper trading, right? Back testing now. If we had to back test our strategy, right? Let's go on to a higher time frame, daily time frame, or even a weekly time frame. We can then zoom out, and we can see here's here's Bitcoin on the weekly. Right, let's bring in our stochastic indicators. Stochastic RSI. Right, now we have our stochastic RSI at the bottom. Now we can say, okay, well, what's our strategy? Right, now we can replay. You know, Sheldon was speaking about looking at when the stochastic is at the top, we sell. When the stochastic is at the bottom, we buy. You know, so now what you can do is we can replay. You hit the replay button. Let's say we go back down to here. Okay. Now, one of the strategies is when it tips in, so you've had the price come up, price is now going down, or the stochastic is going down. You can now buy or sell here. So there's a paper, it's sort of like paper trading over here. So what you would do is your rule says when the stochastic comes down, in this case below the 80, let's sell. So you can sell. So you'll sell one at that position. And now it's not working. There we go. Right. So now you've made a sell at that position. You can then play it out. So you can hit the play button and you can watch what price does. So price will then move. Your target is when the stochastic gets down to the bottom, you will then sell. As you can see, prices going into negative. That's your drawdown. You've gone into a negative 5,000 drawdown. You're waiting for price to get it. You're not going to change your strategy until prices hit the bottom and turning up. That's when you sell. Right? So you can keep going through it. You can skip as it goes, and there's price turning on the up. Okay? Now you can sell or buy it back because you started with a sell. You buy it back. You can see you've made a loss of $2,300. Don't worry about the dollar sign over here. You want to see what your strategy is and whether or not it's going to work. Okay, so now you've bought one over here again. Okay, and now let's see if it plays out. Wait until that gets back to the top. We'll watch the price. It's now at the top. We now want to sell. We've now made some more money over there. So that's the idea of replaying your strategy. Okay. If we wanted to, we can go to a smaller time frames. Oh, not that small, because it's too far back. Let's just start again. Find out our price is currently over here. So you've tested your strategy on a 4-hour time frame. Let's go to 4 hours. Okay, let's replay a couple of days. Let's replay to there. So the idea is you replay to a place that you can't remember what the price was doing. And you start looking and you say, okay, well, if I was over here, what would I have done? All right, we can see prices on support. So now we're using a different strategy. We'll go into just drawing a square. And we'll also do a quick, there's support here. Right, so we have our support zone. We can see prices just wicked into that support zone. And based on our rules, if it bounces on the support zone, right, we wait and we see if there's any trend that it's broken. Here's a trend. Okay, so we can see it's broken through the trend, still running quite flat. Your rules are it needs to break the trend and reject from a support. Your rules have been met. So now you put in your long tool. You want to long from there. You want your stop loss just below the wick. And you're wanting a 3-to-1 ratio. Now, is that going to achieve its 3-to-1 ratio? Let's see. Let's play the price. No, it didn't. Stopped you out. So now you can say that's a loss. Okay. Now you play until you see something different. Okay, you can see that prices come under your support. Now, is it going to break down and go lower? Potentially. Let's draw another support line. There's a trend line. The idea is this: you're testing your strategy. I've got 2 wicks over there. There's my strategy. I have an uptrend. Okay, price comes down, goes up again. We will take another trade. Okay, this is where the speed comes in. You're starting to see how prices respecting certain areas. It did in the past. Will it again in the future? Okay, so now we're watching. Okay, prices come down, tag that trend line. Okay, it's now moved away from that trend line. Okay, that is a valid trend line. Let's take a long position from there. All right, stop loss under the wick, 3-to-1 ratio. Now remember, guys, I'm doing this very roughly. Okay, so this might not work out, but it's all about the concept, right? You want to see how it plays out. As you can see, price has dipped down, hasn't hit your stop loss yet, but let's see if it plays out. And price didn't. It broke below your trend line. That was your rule. If it breaks below the trend line, right, what's probably going to happen was going to go down. It didn't. This trend line wasn't strong enough. Okay, now you start to assess your trading strategy. Okay, I need to look at more than just the trend line. I need to say, okay, well, if I have a trend line, I need to make sure that the stock is at the bottom. Now you can adjust your strategy. And this is the important part of it. You can now go back and adjust the strategy. All right? It's not, and you can see it's at the bottom. Now let's go long. I don't know if this will play out. It might. So this is the nice thing about just going live and just trying things. You know, when you're back at home and you can just play with it, just have a look at the different details. So there we have the trend to break. We don't have a lot of volume coming in here. Everything is flat. So maybe you decide you want to get out of the trade. But that's not your rule. Your rule is we put the trade in and you play the trade out and see what's going to happen. Because that's the nice thing about backtesting is you're able to let the whole thing play out. And you can start assessing without losing money, without feeling fear, without watching a trade play out away from you. You can then just trade your rules. All right. Unfortunately, we've got stopped out in this one. So current strategy that we're using is not working. So essentially, that's what I've got for you guys today, is just to go through some examples, do some back testing, see if the strategy works, and use that to refine your trading skills. Yeah, we've got 5 more minutes left until the next couple of guys jump on. I think it's Fefe and Maison that's going to come on next. So I hope you're able to take a little bit away from this backtesting, and I've been able to answer the question of whether or not it's worth it doing your backtesting. In this case, the way we did it, the strategy that we used, it was not worth it. Well, the backtesting was worth it because we now know that the strategy is wrong. Fefe!
Good morning, my man. What's happening? What's happening?
Oh, all good, and yourself?
Yeah, I've been listening to you. You're killing it up here. You're killing it up here. I was like, I'm going back to bed. Yeah. Are you enjoying yourself? All good, all good.
Yeah, all good. Have I convinced you to do some backtesting?
Yeah, absolutely, man. I gotta get back to learning, brother. Oh, good. It's actually 4 a.m. here. So I was like, I just opened my phone. This slot was, available. And I was like, okay, someone got to take this. So like, it's 4 a.m. Okay, no matter, I'm going to take it. And I just pop my phone up. I'm like, okay, this is going fantastic. So I'm just, gonna go back to sleep.
All right.
I'm happy.
No, good, man. You're looking very fresh for 4 a.m.
Yeah, kinda. No, it's just, you're not gonna do what you gotta do. But I'm gonna let you finish. I just wanted to pop in here and say that I'm here. I'm
Sure.
ready. And then also I know Mason is going to come and jump in here. So
All right,
until then,
excellent.
just wrap it up as you will, and just let me know when you want me to come up.
No, great. Essentially, I was just going to open it up to some questions. If anybody's got any questions in the chat, pop it down in the chat and do my best to answer. So, do we have any questions? Anything about backtesting or any questions? It doesn't have to be about backtesting. About the school, about your trading journey. How's it gone? Yeah, give us some comments. Let's have some chit chat. Paul mines an old 3MK Ford Cortina at the moment. Any questions coming through? You guys awake? Where's most people from? I mean, I saw one Kiwi, Devs. I think you're still in Oz. Yeah. Steve, it's let's get you out of a 12-hour workday. What I can do, I wonder, Dave, can we put the schedule in the chat? Is that able? Are you able to do that?
Which one?
So people can see what's happening next and when.
It should be in the description of the current stream.
Okay, guys. So check the description of the current stream, and you'll be able to see exactly who's coming on next. What's maybe I'll be very impressed for those that stick around for the next 24 hours. Yeah, you should get a T-shirt or something for that. I survived the 24-hour. Hint, hint. So that's coming up, and then just check in the description. You'll see who's next. Pick your guys that you want to listen to. So, yeah. Great, Sean.
Awesome, Nick. Awesome.
Nice.
I appreciate you, brother.
Learned a bit.
I appreciate you so much. Thank you so much for being here. It's been, guys, give it up for Nick in the chat. I really want to see. I only saw the last 10 minutes because I was deep sleeping. But please, smash the like button and let us know in the chat, how did you like this? Yeah, Nick, appreciate it, man. You're more than welcome to stay. But you can also just take your screen, and then I'm going to take over.
Yeah. I'll pop my screen off here.
What's the time? What's the time where you were in the world?
It's now 2 p.m. So 2 in the afternoon.
Bro.
I'm happy. Yeah.
Now the question remains: is it your time zone or my time zone that's drunk?
It's probably yours.
Yeah, I think so.
I'm usually on your end though. The 4 a.m.s or the 1 a.m. for the live show is my side. So yeah. It gets me frustrated in the sense that the Americans, they start everything at 1 a.m. in the morning. It's like
yeah, they must be drunk. Cool. All right. Cool. Awesome, man. Appreciate you. Have an amazing day, huh?
Yeah. Have a great start to your day.
Thank you. Take care,
guys. Everyone.
What is up, guys? What is happening? I see we've got 77 people watching, 73 people. So let me know what's happening. It's, again, as I said, it's 4 a.m. here. Just woke up. I haven't really been looking at markets and whatnot but I actually went to sleep at 1 something. So I slept 3 hours. But it's perfect. I also see Bruce is in the chat. What's up, Bruce? I see Solson. I see beaches and beverages. That sounds so cool. I see Ratus. Oh yeah, I see Bruce saying, "Yo, Fefe, yo, what's up?" Mr. Bird, what's going on with RNDR? What's going on with RNDR? Let's look at RNDR, guys. So I wanted to give you a brief. I don't know if Mason is sleeping or not, or what's happening. Mason is supposed to come and talk to him yesterday. So he is going to come very, very soon. And until then, Sam says, thanks for Nick. Never tried this before and look forward to trying this. Awesome. Guys, also, please let me know in the chat, how is this 24-hour session going? How are you learning? I hope you are, but like, what is happening? Are you learning massively? What is the aha moment that you had? You already had a couple of people doing this, which is super cool. I think I'm the third one, I believe, today. It's gotta be a packed session, guys. I mean, if you can stay up 24 hours, or if you can just, obviously it's gonna be recorded later on, but if you can stay, that will be incredible, because it's gonna be very, very nice. Paul Reed, I see you as well. This is awesome. Please upload full videos so I can watch over the weekend. Yes, we will do have the video staying up on our channel. Evening all 10 p.m. here. It's crazy. It's crazy to see the community that we have here. It's like people at 4 a.m. and I just saw in Cali it's like 7 p.m. and we have Nick at 2 p.m. So it's like going around. Oh, he's the second. I'm the second one. Okay, sorry. Okay, all right, then filled with coffee, ready to go. Let's go, guys. Cool. So first of all, what is this? It's my. Let's drink some water. Everybody, let's drink some water. And we have 76 people. That's good. So what did we think about FOMC Nothing Burger yesterday? Who was trading FOMC? What are you guys looking at now? What were you trading? And also just let me know, the segment that we're doing is smart money, trade with smart money. So I want to give you some tricks and tips on how you could, and what does that even mean? Trading with smart money is such a clickbait terminology now, that I want to clear out, but it can also definitely help you on the way. So Paul is saying, good morning. What is this session again? It's about smart money. Wayne Data. It's about smart money. Is it possible? I actually recognize your YouTube. Is it possible that you came up on one of the sessions? I think I saw you in one of the sessions, one of the workshops that we're doing, and I think you came up on there as well. Anyway, so let me share screen. What are you guys expecting of this session? Let me know also. What do you think about Cosmos Ethereum chart? Sniper 8 here. Yeah, probably. That's what I'm saying. That's what's up. So I saw you on the workshop. I'm pretty confident. Let's do this. So let me share my screen. Someone is up here. Someone is gone. Oh, I think it was rain. Okay. Anyway, so let's look at charts. Paul Cockrell says we want to learn SMC. Awesome. Let's do that. So first of all, I just want to tell you, I'm gonna just give you some general stuff as well. So it might be worth taking notes if you want, or just enjoy this session and have fun. So number one that I usually do is that when you trade, I think it's very, very important to understand that trading is a very difficult endeavor. So you are not going to start out trading as like a very successful trader, just doing stuff, out of the door and being profitable, consistently making money, and not struggling at all. That's not going to happen. A lot of people come into trading as, wanting to make some quick cash. Trading cryptocurrencies is very profitable, very easy. So let me just come and do that, and then sit in my Ferrari a week later. So that's not what trading about. Trading is about conquering your own mind, struggling with your own emotions, controlling your own emotions, and it's a lot of people. I believe this is all my thoughts. When you come in, and at the same time, yeah, Ray is here. So when you come into trading, you think that there is like a secret sauce, a secret formula where you can just come on and then you can just start, there's a system that you can follow, RSI crossing, buy, that's it. And then you think that you have it and you can just start trading out of the door. Well, the thing is that there is no secret formula. There's no secret formula to trading. The secret is actually you. The secret is your mind. The secret is the discipline. The secret is, making sure that you conquer your own mind. Rain, I don't know if you can come on stage, but if you're here, please come on stage.
Bro, how do I do that? Can you hear me?
Yay! Good morning, legend.
Morning, bro. Like I was
Oh,
actually trying to join. Like I didn't know. Like I had to sign up and all.
oh, okay. But you're
Platform is
here, brother. What the time is? What's the time in your place?
7:36 a.m.
Oh, that's good. So I'm the outlier here. So it's probably my time zone that is drunk now.
Like
But
there are
that's
people
okay.
who are not even who are way early
Yeah.
in the chat.
How is it going?
It's good.
How's everything? How is did you trade FOMC? Did you monitor the market
Um,
or?
no, like the market is dumping or is it pumping? I didn't see that. Like my expectation was that it will go down.
Yeah, it is going down. I mean, it's not doing much, but I think it is going down. We can look at it later. I'm just
Okay.
explaining. I'm just explaining that people come in and they expect to make quick money, very fast in trading, and this is also how most of the traders start out. They come in and then they simply
Uh-huh.
lose because risking way too much, no proper risk management, no proper strategy, and then the next phase of trading is and just add anything that you feel fit. uh, the next phase is that you have a strategy that you find. For example, you come to sniper school, or you whale school, or whatever that it might be, or you just come to crypto school and you see something and you're like, okay, so this is the strategy to go forward. Like, oh, this is going to be my strategy. And you start finding your strategies, and there's no one fit all. So you will go and start discovering. This is why these 24-hour sessions are gold, in my opinion, because you as a trader, your job is to start trying to figure out what strategy works for you, what strategy fits your lifestyle, what strategy you can execute without having into an emotional war with yourself. And once you start finding that, we're talking about months and months and maybe years. And then when you finally find a strategy that actually works for you, that resonates with you, that you back test, and you're like, okay, this is what I could take, this is what fits my life, this is how all this thing would work for me. Then you think that that strategy is the solution for everything. And then you start realizing that why is it that this strategy is still losing. And then you start working on your risk reward and risk management. And once you have that, then again you come to a conclusion that risk management is very important and whatnot. And you're still going to say, okay, but I'm still losing. I have a proper strategy now. I understand my risk management. I understand my risk reward, and I'm still losing. And why is that? And a lot of time, this is kind of like the advanced part of trading, where you realize that the problem really boils down to you, and the problem really boils down to your mindset and your internal struggle within you with yourself. That is the actual challenge. So the reason why I was just saying this is because I wanna give hope for everybody and say, if you feel like you understand TA and you get the concepts right and whatnot, and you're still not profitable consistently, the next step for you to do is to start working on yourself. And this is where a journal really comes in handy. Not because you can record your entry and exit and whatnot, but because you can record the emotions that you go through while you take a trade. And we'll talk about SMC, and I can also just show you a cool way of doing a journal on TradingView directly. What do you say, Rain?
Same here.
Huh?
Yeah, just go ahead.
Yeah, cool, awesome. What do you
Yep.
what do you think about these steps that I explained? Would you agree, or
It's
would you add
absolutely correct.
something? Or
These are the phases that people go through when they start trading. Like initially they start trading, and then they go for strategies, and they expect to learn these things within like 1 day or 2 day, and they expect to be profitable with that within 2 days. The fact that they're not realizing is that they have to practice a particular method for the more than like 3 months to just to know if it works for them or not. They're just gonna try it for like 2 to 3 days, and they're just gonna end it, thinking that it's not working for them. That's how they do it. That's how
people
people
are
do. That's
after
actually a phase
Yeah,
in
exactly.
learning.
People are after the strategy, right? The secret sauce, the shortcut. Just give me the strategy, I'm ready to go. And then that's not the case. So the reason why also I brought this up is because it doesn't really matter what strategy you see here, and it doesn't really matter what we explain here. This is just an eye opener for everybody to start expanding your trading knowledge, start expanding your vision, and start finding the strategy that might work for you. But this is not going to be the secret. So you will not see a strategy in this 24-hour session that will guaranteed to make money for you, because the secret sauce is you. So take these strategies and whatever we teach or whatever the next person will teach, and take these strategies and adopt them to yourself, understand yourself, and then start backtesting them and start testing them in real life, and then see what sticks. Now I see, I just wanted to look at the comments. I am looking at the comments, guys. So we do see the comments here. Make the comments fly, and we are very happy to look at tokens that you want, and then at the same time give you some alpha. Someone is saying, Toby, hi Fefe, hi, airports are going and I'll listen even while I'm asleep. So also, it is all about the mental game, a solid mindset. Yes, I agree. Nick says backtest your strategy. Someone says Maison is great. That is pretty cool. Salson is saying Maison. Paul saying rain. Cool. Expecting alpha. Paul really saying expecting alpha. Awesome. Amazing. So let's look at some charts, my man. Shall we do that?
Definitely.
All right. So number one, I want to tell you, also very, very important, that when you start at trading, you don't necessarily look for stuff like liquidity and order flow and economic calendar and stuff like that, but you definitely should. And I'll tell you why. Because these are the things that most of the people don't look at. These are the things that most of the retail traders just ignore, and that's how they get wrecked. That's also one of the reasons why they get wrecked. So I want to bring in a couple of things. Number one, Banter bubbles, guys. If you are not on Banter bubbles, you are missing out. Someone is saying, why is IMX pumping? So this here, Banter bubbles, if you have not heard about it, we should put it in the description, by the way. If it's possible, David. But Banter bubbles is it doesn't allow me to log in. Why is not allowing me? Banter bubbles is an awesome tool to actually connect with people and to monitor the market. Oh, what is this doing? Sorry about this, guys. Let's see. I'm trying to connect this here, but I'm on another browser. Okay, won't happen. Anyway, so you can log in, you can add your Twitter to this, and you can talk about all the coins here. You can also see, filter, you can create your own portfolio, you can track that. And then we have a newsroom where the whole Banter research team is going live every single morning at 7:15 GMT. And that's all the alpha that's being put into the shows. So you guys should be on Banter bubbles if you are not. It's much better than crypto bubbles, I'm telling you. And Josh, the legend, is developing this. I have a sneak peek in the back end. This is gonna be a very, very powerful tool. But you gotta look at this. You see the market, what's pumping, what's not pumping. See the weekly. Let's see on today. What's happening today? We see mostly red. This is a great indication, exactly as Rain said. Nothing bigger on the FOMC, but we also see some greens. We see IMX, we see Aave, we see Maker, we see Flow, eGold, Algo. These could be coins that we could look at. So you could go to Banter Bubbles and just look at it and let us know what is interesting for you. And the other thing to look at, which is very, very important, is the economic calendar. Now, it is very, very important because you want to understand what events are there on the day that you are starting to trade, and this can actually cause a lot of troubles for you, because if you look at this week, it is packed with shit ton of stuff. So the way this is Forex Factory, not sponsored or anything like that. I just like the platform. So if you go and register here, you can have a calendar, then you can filter what you want to see, and or you can filter for currencies as well. So you can filter what currency and what kind of events you want to see. So you might want to see just mild events. You just want to see red events. And then it will list you. So every day before we start in the market, we also trade Forex with Rain, which is a little bit different, but we always come here and just check the economic calendar, because we've got to understand what currencies are impacted, and if we have a red day potentially coming up, meaning that could impact the market. So the way these actually work is that you have different economic numbers coming out that impact the currency of that country. So GDP numbers. We had the FOMC. We had the British CPI, the UK CPI, and then we have the Canadian CPI. So all these numbers, inflation numbers and GDP numbers and whatnot, is impacting the strength of the currency and therefore the relation of that currency to the other currencies, and that has an impact on risk assets as well, especially if we are talking about the British pound, the US dollar, the euro, or the yen. So if we're talking about, yeah, maybe not that much, but if we're talking about the dollar, it does definitely have an impact on crypto as well. So if you're only trading crypto, you got to pay attention to this and the major currencies, and make sure that when you trade, you understand that your, for example, Bitcoin and the crypto assets movement will have an impact regarding on what the decisions are, what the numbers are here. So for example, yesterday, if you saw how powerful this is, there was the CPI reading yesterday, which came in lower, which means inflation is cooling. And this is what the on the pound dollar did. That like if you look at this, this is what let me delete all this here. So this is what happened on the pound. Yeah, exactly. So the inflation is cooling, and that's not the best for the currency, but it's better for risk assets. So this can happen.
Yeah, like it was positive. It was actually a positive news for the dollars, so that's the reason why pound dumped.
Say that again.
Like it was actually a positive news for the dollar. That's the reason why pound dumped. And if you like, these are all correlated to DXY. So
yeah. Also, but this was like at 8 a.m. my time, so it was way before the FOMC.
okay, that's the news. Yeah, that's another news. Yeah.
Yeah, exactly. So, but everything is related. Somebody saying, what's the name of the site? So it's economic calendar. So you gotta search for economic calendar. But I use do you use Forex Factory, Rain?
Yep.
Forex
Yeah,
Factory.
I mostly use Forex Factory.
Yeah. So, but you can find different economic calendars that fit with you. We just use this because it's cool. I also wrote a complete Twitter thread about all these. What does the retail sales mean? What does the PMI mean? So go check that out as well. Cool. So that's very important. So first off, when you come and you wake up, or you plan the week, or you plan the day, you just gotta come on and say, okay, so what is it that's gonna happen? So today we've got Switzerland, we've got the UK monetary policy. Sorry, it's almost the same thing as the FOMC we had here. We have a lot of red bank rate was, I don't even know what that is, official bank rate. Unemployment claims in the US. This is also very, very important for the Dixie. So we have to watch at 2:30 p.m. Actually, we're gonna be on this. Yes, we are going to be on this, Rain. When this happens, we're gonna be on, so we can stream that. We can talk about this as well when that happens.
Yeah, we can actually stream it live. We can actually show them live.
Yeah, is it? We're gonna be on 2:30, eh?
Yeah, 2 a.m. is our next session. Yeah.
Awesome.
No, no, we're gonna end our session. Like our session starts at around 11 a.m. to 1
GMT.
a.m. Yeah, GMT.
Yeah, exactly. So we are exactly in this. Awesome. Cool. So the other thing I think is important to talk about is the correlation between the Dixie, the total market cap, Bitcoin, altcoins. So when you start trading, you gotta understand. I'm gonna put this up here. Yeah, this is the name of the website, Forex Factory, Hellfire. Yeah. So when you start out trading, you have to understand the correlation between the DXY. Let me know in the chat, how many of you know what the DXY is? What does it stands for? Let us know in the chat. And you have to understand what the correlation between the DXY, the total market cap, Bitcoin, altcoins. So you have to understand the whole picture. So you cannot just jump in here and you say, okay, I want to start trading and not understand the correlation between the economic calendar, the Dixie, the total market cap of Bitcoin, and so forth. So, okay, so beaches and beverages, who I love the name of, says do not know what it is. So let's look at it. So DXY is the Dixie. I have it here. Woo. Yeah, I have this drawing here. Look at this. Are you proud, Rain? Looking
Yep.
at this.
Yep.
The DXY is the dollar index, the US dollar index. So you have to imagine it as it measures the strength of the dollar against a bucket of other leading currencies like the yen, the pound, the euro, the Swiss franc, and so forth. So what it shows you is how much strength the dollar has compared to a bucket of other currencies. So it's not the dollar against the euro, the dollar against the pound, the dollar against the Swiss franc. Is the dollar against all of them. The states against everybody, as usually is. So so that's what the DIX is really showing us. Now, why is this relevant, and how does that tie into the economic calendar? It ties into the economic calendar because when inflation, for example, is cooling, or when inflation is heating up, meaning things are getting more and more and more expensive, or things are getting less expensive, the monetary policies that are being brought forward have an impact on the country's currency. If the country has high inflation, for example, that means that they might need a tighter monetary policy, so people will start spending less, so inflation would not start going up that much, and that means that that's good for the dollar, because what we've seen in the past year, you probably have heard a lot about this, or maybe you have heard a lot about this, that they are, for example, raising interest rates. So raising interest rates means that they will basically pay you more if you borrow money from them, or if there's if you have to pay more to borrow money from the bank. So that's good for people who invest in the dollar, and that's creating demand for the dollar. I don't know, is this, I hope it's not confusing that much, but what it means basically is that if the DIX is going up, that means that the dollar is strengthening compared to other parts of the world. Now, what does that mean? That means that the money is flowing into traditional assets that has direct correlation with the dollar. So if the dollar is in high demand, that means that other investment assets, for example, risk assets such as crypto, will not go and do that good, because money will flow out of risk assets into the more traditional assets, because it is tempting to put your money. For example, interest is 5.5%. If it was whatever, I don't even know what it was. Do you know what it was before this whole madness? Was interest rate? I don't know.
No.
Anyway, it was not 5.5%. So it's just makes more sense to make more money risk free. That's basically what it is. So why is this important? Is because money flows out of risk assets, and that's not good for crypto. So if you will see, the DXY and the dollar is negatively correlated most of the time. So this is why it's also very important. And then you start putting together the whole picture, which is when the dollar is strengthening, then the total market cap of crypto. Let me know if you know what a total market cap is, and how you should read that, and what does that mean. Please be honest, it's very important. Then you know that if the DIX is pushing, if the dollar index is pushing, potentially the total market cap is dropping. Let's look at this.
Interest rate didn't change on Famas Factory. It was on 5.5.
Oh no, yes, but it changed for for I don't know what it was, a year ago.
No, I was actually changing. I was actually reading a comment by Nick Labis.
No, I don't know. I'm just telling him that it didn't change from the last event. This is why it was a nothing burger, but it was changing for months and months. I don't know how many rate hikes we've had, but a lot. Anyway, let's look at this. So the whole idea here as well is that when the DIX is pushing, we have you see, for example, from July, it's pushing, and then we will see the total market cap from July coming down. So because we see the money flowing out of risk assets such as crypto and flowing into the dollar, this is what we see on these two charts. So if we see the DXY pushing to some levels, we can say, okay, so the problem that we're facing is that there is no demand for crypto. Now we know that the Dixie is followed by the total market cap, negatively correlated, but the total market cap in and of itself is not really relevant. What is relevant is what the Dixie is doing, and that's how we can predict what the total market cap is doing. And to predict what the Dixie is doing, we gotta watch out for, or we gotta pay attention to the Forex calendar, because that's how we're gonna know what the Dixie is going to do. So, and Bitcoin is following the total market cap. So Bitcoin will follow what the total market cap is. They are complete. So if you look at the Bitcoin chart, it's basically the same thing. Basically the same thing. A little bit of difference here and there, but this is the Bitcoin chart and this is the total market cap chart. So it's almost the same thing, and they follow each other. So Bitcoin is following the total market cap, and everything else follows Bitcoin. That's actually what this whole thing is about. So this is how you set up your trade. So no matter how good of a trade you have, maybe on an altcoin, if you see major levels being broken on the total market cap, or you see major levels being broken on the Bitcoin chart, you should be very, very cautious trading, because that indicates that we as a whole market can just simply go down and retrace. So you always have to consider. Now, this is already smart money, guys. Like in terms of not the strategy, but in terms of the way of thinking, how you look at the markets, and not just come in here and I'm going to take a trade today because why not? This is a very thoughtful process to start getting into the market. How many of you do this process that I've just explained? How many of you do this? And then Rain, I would actually give you the mic and let you look at the markets if you can.
Yeah, definitely. I haven't charted in a while because I was outside, but yes.
Yeah, we're gonna
we can
do it. We're gonna chart now. Then you can explain how you do charts. Guys, let us know in the chat how many of you do this process, what we just explained, or how many of you had this aha moment now that this probably is a way to look at the markets. And then until then, I'll just remove my screen, and then you can pull your screen up, man, if you're keen.
Yep. Just give me a second.
I'm gonna
Have
open
a
up
huge lot of drawings over here.
Beaches and Beverages says, aha. That's nice. That's nice. That's nice. Cool. I'm actually gonna pull up the stream here for myself to see, because I think the comments are a little bit late in StreamYard. So say, you make it sound so simple, but it is simple, Nick. It is simple. Look, it is simple. It's just very important. You know, obviously it will take a lot of time, but you just have to understand. You just have to think of, just have to think of the whole. Think of it in a big picture, right? That's what you want to do. You want to think of it in a big picture and be like, what is the big picture? The big picture is that we have forces that we can't control that have impact on our. We little humans live here, and we spend and we do that. And JP is sitting up there and is trying to adjust all this stuff, how much money we print and how much money we don't, and all that. And that kind of have an impact on the whole economy. And that impact, we reflect, or we as little humans reflect on that and try to adapt so we don't break shit. And while we adjust and while we're trying to not break shit, some shit breaks. And we think some countries are more powerful. It's just like Formula One. You think one of the teams are very powerful, or like soccer, one of the teams are very powerful, and at some point something happens, and the team has to make a decision, and that decision comes out as an impact, and the odds are immediately changing, right? So that's the same thing here. And if you want to start really analyzing teams, you have to understand the whole game. You have to understand the whole league for you to make a decision what team you're going to bet on any given match or any given day or any given championship. And it's the same thing. Like, we have all the currencies, all the countries in the world which are competing, and you have to understand what impacts what different country. And when you took, and also other than, below that, we have all the asset classes as well. So you've got stocks, you've got Forex, you've got real estate, you've got a lot of different things crypto that is out there that is impacted by these decisions. So if I see that goes down, then this goes down as well. Or if that goes down, that means people gonna move to this and that will go up. So you have to see the bigger picture. And once you understand that, then you can start trading and start making much better informed decisions. So actually, I got a very, very big loss, and didn't even tell you, Rain, on Euro USD because I wasn't paying attention to. I think it was the German.
You can see my
German.
screen, right, bro?
No, I don't. I will bring it up now.
Oh, okay.
Yep, I do see your screen. So it was the German
Made a loss.
CPI or German German CPI or German GDP reading. I don't remember exactly what it was, but I was long, I believe, and then got smashed big time.
Bro, like, why do you first question, why
Maybe
are
it's
you
not-
long
it-
in a bearish market?
No, maybe it was not Euro USD. What it was? It was. I don't remember what it was. Let me look at it.
Like euro, if it was euro, it's actually accurate. Look at it. It is dumping, and you try to long in a dumping market. In a
No,
bearish
then
market.
it wasn't Euro. Then it wasn't Euro USD. It was Euro something. I'll look at it. But until then, do you wanna look at the market? Someone saying any pair, not often, but more since watching the daily live sessions. Any periods of a time where DXY and crypto both go up. There are times. It's weird, but I also saw it's more of like an internal structure thing. It's not like for a long term, but
It's like a smart
there are
money thing,
times.
yeah.
There are times. And then it says understanding this correlation is crucial for getting the whole picture of the markets. That's what's up. Trend wise, not short term, obviously. Yes, this is important, but I need the structured way of doing it if there is one. Like the structure way is this: you wake up, you look at the markets, you look at Forex calendar, you go like, okay, what are the red events? Red events are CPI rating in the UK. Okay, so that will impact the pound. Okay. Yeah, go ahead, go ahead, Dwayne.
Like in my opinion, basically, you only need to watch what's happening in the US dollar. Like GBP doesn't actually affect a lot in crypto.
For crypto, yes. For crypto,
Yeah,
yes.
for crypto, GBP or any other currency won't affect. I mean, the news which is impacting any other currencies are not going to impact crypto. Only the US dollar ones, as well as the Chinese ones.
Yes.
Nothing else.
This will be recorded, guys, and it will be on our channel. Just one important alpha. If you don't want Ren show yesterday, you should actually. But if you didn't, he said that there is data suggesting that 10% of the total crypto, almost $100 billion, is of crypto is held by Koreans, South Koreans. So like 10% of the total market of crypto is held by South Koreans, which is crazy. It's like Asia is coming in hard, and also Ren is going big on India. Rain is going massive.
Yeah, I'll definitely meet him.
Cool. Okay, bro. So tell us what's up. Tell us what you see, and just try to give us some alpha on how do you analyze the market. So once we got all this out of the way that I just explained, how do you go about trying to find a trade? What are you looking at? What your thought process is?
I want to ask them about this. Like, what do you guys want today from us? Like, do you guys want an educational content, or do you guys want a charting session? Tell me, what do you want? Do you guys want to know how strategies and how we trade?
Let us know in the chat. Do you want more charts or do you want educate? Let's start with education, man. We're here to educate. Give a man a fish, feed him for a day. Teach a man how to fish, feed him for a lifetime. So there'll be so many charts coming out today. We can talk about charts as well, but
strategies. Okay, I can't actually teach you guys a particular strategy because smart money is actually there is actually a huge lot of a wide variety of stuffs in smart money. So you have to learn all of these things to understand a particular concept. So I won't be able to teach you guys all of those, but I can actually give you guys small things which can actually help you guys in while you're trading. Okay, guys. Firstly, you guys need to understand that price moves ahead of the market. Okay, so if you guys want to become a smart money trader, then using an indicator is kind of like it's kind of hold you back because it's actually lagging, and smart money basically follows price action. Price action meaning what the price is actually showing in the market right now at the moment. Okay, so educational content.
Rain, I have to interrupt you for a second, guys.
Yep.
Very important. We are strong believers of you have to You have to find your own method. Whatever we say is just what we think. That doesn't mean that other strategies don't work. It doesn't mean that our side don't work. It just means that we did not find that useful in our own trading. So whatever we say is, there will be a lot of people who will come up here and they say they make money that way, and that's awesome. I mean, you have to listen to everybody. You have to find out what works for you. I'm just saying that whatever we say is not, it's not like this is the way. It's just that this is what we believe is the way, and this is what we do. But I think you started out awesome, man. Like, continued that route. You've
The
got
reason why
84 people stick to the screen watching it.
the reason why I said that is because, like, initially when we started trading, we also did all these things. Like, we went for indicators, we went for strategies, but that's not actually the way to learn trading. It's like, don't go for strategies or indicators because they're all lagging indicators. But yeah, you can definitely make money with indicators and all. Okay. Now for now that's it. Okay, that's good. So what am I going to teach you guys today?
Let's talk about price action, man. What does price action mean?
Price action is basically what the price is showing you, the movements which the price is showing you in the markets. Okay, so like, you don't, like, what do you do in an indicator? When you have an indicator, you basically look at the indicator to judge what's going to happen to the price, right? That's what you do when you have an indicator. But price action, you don't look at the indicators, you just look at the price and understand what the market is going to do, or by seeing what the price is showing you. So that's basically the simplest explanation for it. Okay, what the price is showing you, you don't need any indicators. Price action consists of a lot of things. The first major thing that price action has is market structure. There is a concept called that, market structure. So for you to know more about price action, you need to learn about market structure. Simply saying, I'm just going to give you guys this will actually help you guys a lot when you guys trade. Have you guys ever heard of okay, let me ask you guys, like, how do you guys define a trend? How do you guys identify a trend? Do you guys use trend lines or anything? Tell me in the chats.
And also,
Trend
what
lines.
what direction the market moves? What are the direction the market moves?
Tell me. How do you guys identify a trend?
Yo, what's up, Simon? We see you.
Tell me. This is an trend, right? And how are you guys gonna identify it? By drawing a trend line or by drawing something else? Tell me.
Trend
Me, guys.
lines.
Trend lines up and
Oh, so
sideways.
Kevin says up, down, sideways. That's actually correct.
Like, okay, someone says higher highs and high lows also. Like, okay, these are levels, like, these are methods which people use to identify those things. But in reality, like, these are, in my opinion, okay, guys, one more thing, all of these what I'm teaching you, and all of these what I'm saying is based on my education. Okay, based on what I know about trading. So a trend line, according to me, a trend line and higher highs and higher lows, these concepts are not actually the actual way to identify a trend. Okay, so the reason why I'm actually saying you is that a trend line may break and the market will definitely go up. You guys might have noticed this thing happen. This happened a lot of times, right? Darren, not RSI, no. Higher time frame, no. A trend line can actually break in the markets and the market will definitely go up afterwards. Like, you guys might have noticed this a lot of times. The reason for that is because a trend line is not actually the actual way to identify a trend. Okay, guys, you guys need to understand that, because the actual way to identify a trend is by identifying the main structural low points of a market structure and main structural high points of a market structure. I'm just gonna type it, MSL and MSH. So these two are the actual ways to identify a market structure or a trend. You guys might have been confused to understand what this is, MSL and MSH. Okay, so let me just tell you guys that main structural low and main structural highs. So in an uptrend, in an uptrend, for you to say that this is actually a main structural low point, the move it started from this main structural low point has to go up and break above the previous highs. Okay, that's the only way time that you can call this low as a main structural low. And in an uptrend, this main structural high has to be created by the move it started from the main structural low point. Okay, Okay, so that's the only way to and understand it. And you guys will definitely know. People say higher highs and higher lows are actually the actual ways, but the market may actually make lower lows and still the market won't actually go down. The reason for that is because you need to understand the actual meaning of higher highs and higher lows. A higher high basically means is that the high is basically higher than the previous high. Okay, that's what a higher high means, and a higher low means Namaskar ji. Identify a trend, form lines, breakout, higher highs and higher lows. Guys, higher highs and higher lows, like just think about it. Higher high is basically means is that this high is higher than the previous high. That's what the meaning of higher high is. And if the market shows something like this high is actually higher than the previous high, right? This high is actually higher than the previous high, right? But still the market, it didn't go up after that, right? The market can actually come down, right? So that is not the actual way to identify a trend. For you to identify a trend in an actual manner, you need to understand the main structural low points and the main structural high points of a move. And like I told you, for you to understand the main structural low points in an uptrend, you need to go to the chart and see where the main structural low point is.
So what
Meaning,
Rainey's saying, guys, what Rainey's saying is that you gotta look at a larger time frame. So if you go into the daily, you gotta see a bottom of a move, right? You wanna show the daily on Bitcoin and then see from January. It's very clear what you're just explaining. So you've got two main structures, right? So you have the main structure, which means that you gotta see a low, a high, a higher low, higher high, higher low, higher high. And then you have the internal structure, which means that you can see you can see within that low high, higher low,
internal,
higher high.
you will see highs and higher lows
Exactly.
inside.
So you will see the market going different, exactly as you just drawn it. Exactly. So that's still in this market. What Ray just drawn is still in an uptrend. So this is still in an uptrending, trend. It's still in an uptrend because the main structural points, the main low and the main high, which you define by the level that was responsible for breaking a previous major level, that level is the strong low on the main structure. And unless that is broken, you are looking for a long. You are in an uptrend.
Exactly. Like you may see this happen in the markets. Like over here, you will see a trend line break, and you may expect the market to go down afterwards. But in reality, the market didn't actually break below a main structural low point, which was responsible for the break of the previous main structural high point. Okay, so you may see this happen very often in the markets. Like let me just see. Let me just look. This is the 1 hour chart. I mean, is it the total market cap? Okay, wait, let me just show the Bitcoin chart. Right now, in this moment, think about it, guys. What is this according to you guys? This is actually a trend line break, right? You guys might expect market to come down, tap onto the low, and it's gonna pump, right? But in reality, the market may actually go down because the reason for that is because this is actually the main structural high point that the market needs to break for us to say that the market will turn bullish, which is in the 30,000, 20,400, 29,400 levels. Like for example, over here also, I can just show it to you. You might have seen a trend line break over here, but the market didn't go up afterwards. The reason for that is because this was the main structural high point in that level, and this was the main structural low point in that level, and the market didn't break below that low, those lows. Break meaning a break with a body. Okay, look at this. The market was still trading inside this range or internal range for a while, and then it went down. Look at this thing. The main
Are you
structural
guys
high.
familiar?
Main
Are you guys
structural low.
familiar with body, wick? Are you guys familiar with all the concept of what is a body, what is a wick, what's the difference? Because that is very important. We can also that's also going to be a great education if you're, in fact, if you're not. Let us know in the chat, guys. Are you familiar with the concept of body, wick, open, close? Like, do you know that, or should we touch up on that?
I think they already know about body and wicks, I think.
Okay.
Yes. So
Body
like
was like cool.
so we needed a break with the body over here, and we didn't get that. And so this will still remain our main structural high point. Because for another main structural high point to be formed, this main structural low point has to be broken. Okay. when this main structural low point gets broken, that's the time when we have another main structural high point. So that got broken over here. So when it gets broken, you will have another main structural high point, which is responsible for the break of these main structural low point. So this could have been a trend line break for you guys, and this could have been a higher high for you guys. And you guys might have taken, tried to take a long position on the big picture, and the market went against you. So this will happen for a very long time. And yes, this is why I say that a trend line break is never actually a good confirmation for us to say that the market will go up. Okay, guys. I hope you guys got that. And over here in Bitcoin also, you guys might think of this as a trend line break, right? You guys will definitely try to show it over here. This is Bitcoin on the big picture. This is actually a trend line break. You will definitely try to show it on the retracement, and you will expect market to go down afterwards. But in reality, the market still didn't break the major low point on the weeklies, a main structural high point and a main structural low point. The market still didn't break the previous highs, so this will still remain the main structural low point, and this will still remain the main structural high point. So you can expect the market to range inside this area and then move up. Still, the market hasn't turned bearish. Okay, guys. Possible to explain price action as well? Like, price action is basically what the price is showing you, bro. Like, the movement in the movement which is happening in the price is basically the price action.
Let me. Can I take this? Can I take this, Rain?
Yes, definitely.
Let me add my screen here. All right. So it's very important. So when we talk about price action, it is very important. Dix is pushing for this equilibrium here, Rain. Actually.
Like we did call this like long back.
Yeah. So let's look at this. So price action. So it's very important to understand that markets move. Someone pointed out in the comment very, very nicely. Markets move 3 directions, right? They move up, down, and sideways. That's the 3 directions we move. That there is nothing else. Up, down, sideways. Now, as traders, very important that we need a direction. It doesn't matter if it's up or down, really, because you can short, you can long, but it's very important to have direction. And that is one of the major problems with Bitcoin right now, is that we don't really have a direct. We have a down direction, but it's not clear because we have a lot of internal structure and we build up a lot of liquidity on both sides, and that's an issue. So if you understand that markets move 3 directions, down, up, and sideways, you will know how to spot a trend. Why? Because you will in an uptrend, you will look for a low, you will look for a high, you will look for a higher low, and you will look for a higher high. This is a higher low because it's higher than the previous low, and this is a higher high because it's higher than the previous high. So this is what you're going to look for. How do you define the main structure? And I'm talking about the main structure. You define, and also the internal structure as well, but you define the main structure by identifying what level was responsible for the break of the previous high. So in an uptrend, every low is strong. Every low is strong because these levels are so demand is in control, and that means that the price pushes through the weak levels, which were the resistant levels up here, and therefore in an uptrend every high is weak because we are expecting that high to be broken. And unless a strong level is broken to the downside, unless that's broken to the downside, we are still in an uptrend. The exact same thing goes to the opposite, which means if you're in a downtrend, you are looking for the strong levels, the levels that were responsible for the break of the previous weak levels. And you are expecting every in a downtrend, every high is strong and every low is weak because you're expecting the lows to be broken. This is when you say, you want to trade, the trend is your friend, you want to trade with the trend. This is exactly what it means. So if you're looking at the main structure and the main structure is bearish, meaning you are going down on the main structure and the main levels are being broke, the main levels that broke the weak levels are the highs. Yeah, the highs are strong. Then you do not want to start longing on a potential weak level, because if you start seeing a retracement here and you start to long, that means that you're going up against the wall. And Gary Stoloway, yesterday was talking to us. He's like, imagine that you have a wall in front of you. Like literally, you can stand up and walk to the wall if you want, and then try to go through the wall. Like try to just go with face into the wall. It's very difficult to go through that wall. So resistances and strong levels serve as a very strong brick wall. And you can long it. It doesn't mean that there will be no there will be no reversal. It just means that you have to take a very good approach to approaching these.
You have to be cautious. You have to be cautious.
Longing on, so that is counter trade. That's what we call counter trading. So when you identify a main structural trend and you go and trade against that trend on the internal structure, that is the what counter trading is. So if you look at the Bitcoin chart here and you
Bro,
look
take
at
the euro chart. Like it's better. Like you tried to long yesterday, right? On
but
euro.
the problem is the guys are trading. Oh, not problem, but the guys are trading Bitcoin. That's why I wanna stick with Bitcoin.
Like I was just like, yeah, okay.
If
Like
it's
just to
okay.
show the chart, like to understand what the chart is showing. Look over there, you might have seen a trend line break or anything, but I'll go to the 4
No,
hour.
but I was actually. Oh yeah, no, but I was actually playing. I don't even know it was this chart. I don't remember what it was.
Look at this.
Yeah. Yeah, exactly. So you have the main structure here, you see, but I want to show it on Bitcoin because that's what's relevant for them. So look, so what was the level? So what is our structural point here? Oh, by the way, also, as Rain started this off, let me look at the chat, please, then we can open and close.
What is
Yeah,
the main correct time frame also?
I'm
Like
one.
all the time frames. Like you can use it on low time frames as well as on higher time frames.
Okay, we've got about 8 minutes, so I wanna, and then you guys have to come back for more later. But what I wanted to show you is that you have to identify what the main structure is. This was your main structure, right? So this was the main structure coming down, the main structure, the higher to like the weekly structure, right? So you're coming down here, you have to identify what the level is that you want to break. And this is, I actually messed it up because it was this. So you can say on the daily structure, this was our major level, major high. And that means that this was the level that took the liquidity from here, took these lows here, just wiped out everything, consolidated, and started coming back, and we pushed above this level. That means that this was our weak level. And if this is the weak level, you have to identify what level was responsible for breaking this weak level. And it was this level. It's just that simple. So this is our main structural low. This is our strong low here, because this was responsible for the push through this level. Okay, and then you want to identify what was the high of that move, and we identified that. So you have to know when that high is broken that you have created a low. And there is a tricky part to this, because we usually say in smart money we use something called premium and discount zones. This is just a simple Fibonacci tool that I only left the 0, the 1, and the 0.5 levels on. So it identifies, you can see the 50% level. And for a level to be good, it has to be, if you're in an uptrend, a level has to be in the discount zone below 50%. So the retracement, a lot of times we're talking about, Sheldon talks about the 618, but a lot of times price doesn't come back to the 618, but it does come back to the 50%, and that's sufficient enough. So if price came back to the 50%, so you look here, for example, this is exactly why it happened, because if you look here, you're like, okay, Fefe, but why did you choose this level when this level is actually the high? And the reason is because this high was formed by a low that was not down in the discount zone. So this is a weak level. This is not a strong, as strong low, and there's a potential for it to break. This still was a point of interest for us. This still was a level where we were looking for, potential longs, but because we did not get the confirmation, we were waiting for the 50% retracement. And then
50,
once you see that, yeah, go ahead, Rain.
the 50%, as a buyer, you always want the discounted price possible. That's the psychology that everybody has in all the markets. Like that's your psychology. You always want a product at a discounted price, and as a seller, you always want the product at a higher price, right? You'll never sell a product at a lower price, right? That's the logic for it. Go
Exactly.
ahead.
Same thing. Exactly same thing. So and then when you have the structural points, so you have, now you have 1, 2, 3, and 4, you confirm a trend, and you say we have 4 points, and the trend, 4 points in the trend, and that means that you have an established trend. And this is why this level is very interesting, because we come back down here, and what you're expecting is a break above here, which we get, So we'll get the break above. So until this level is broken, we are in an uptrend. We are in an uptrend, and it is broken with the wick, but this is also very important. It's only broken on the perpetual. If you look at the actual spot chart, there is no wick here. I can actually put it up here.
I think we did get a break over there, but
No,
on the
we didn't.
weeklies we didn't. I think.
No, we didn't. Not even on the daily. Let me show you. So this is the perpetual. The blue is the perpetual. And this is the spot. So there's no wick. There's no break. This is our low level. And there's no break.
Okay, you're the low. Okay. I was looking at the high. Okay.
No. I'm looking at the low. So here on the perpetual, you break, but on the spot, you don't actually break. That's a big difference. And that means that we're still in an uptrend because our main structural point did not get broken. Guys, time flies, bro. Time flies.
Yep.
So we're coming back. I want to share. I know Matt, the man, the legend. I'll bring you up, Matt. Can I bring you up, Matt?
I think we didn't actually, we made them confused.
No, I don't think so. What's up, brother? What's up?
Hi.
Good morning.
How are you, mate?
Good. We're gonna round it up in a second, then we'll bring you up. I just wanna show the guys the events that are going to happen with the times and stuff in 2 seconds, and then we'll give you the stage if that's okay, Matt.
For sure, mate. No worries.
Awesome, brother. So guys, please let me know in the chat, how did you like this session? Did it confuse you or did it actually give you some alpha? I want to show you Crypto School. We have the schedule up here. So we are at Trade with Smart Money. We are here and we're going to have risk management with Matt. He's here. Identify market directions for trade sentiment is going to come up. Guys, I just want to say, we have so much alpha in this. I want a big shout out to the team and Chris, especially, for putting this together, guys. This is just, I honestly think that this is the reason why school is here. Like, I would have begged for something like this when I started out. I would have begged for something like this. You have so much alpha coming. Sheldon live is going to be streamed in, and Kyle's live and all that, but we're going to have Mama Sniper joining. We're going to have Thales. We're going to have Bruce coming up with, actually, with Nick Shawn. You have to look Nick Shawn up, a pretty cool guy. Then we have OG Craig playing Pain and Pleasure, guys. It's still 4 a.m. So and so on. So I would have begged for a session like this. And I'm very happy that it is happening. I hope you guys are happy about it as well. Let me just look at a comment. Someone says, "This one good, Bruce. you're nice. Clarity, this was good, great. I wish you guys can do like a PDF book of some sort." You mean a course? Yeah, this was excellent. I wish it was longer, as I know you both could have shared so much. Yeah, so this is the thing. Like, guys, I'll promote our Twitters as well. It's worth following. Everybody who you see up here is definitely worth following. I'll make sure that we have an email going out with all the participants' Twitter handles as well. That is the place to follow everybody, because we post updates. So do that. Rain, any final thoughts? I'm just reading through the comments.
Nothing. Like, you guys will definitely see more of us in the coming sessions.
Yeah, we're gonna spend 2 hours in the next session, so it's gonna be here from 11 a.m. GMT. So,
and those who didn't have the clarity, just stick on that, come on that session, and we'll explain it in a better manner. Like, we didn't have that much time left for us to explain it in a good manner. That's the reason.
Yeah, but also it's very, like, this is also something I want to say, guys. Like, it's okay to get lost. It's okay to get lost. You will get lost. I promise you. It's okay. You will be, especially if you really take this 24-hour live, and you're gonna have people talking RSI, people talking smart money, people talking support and resistance, people talking, trend line break. Like, you will get lost. You will get lost, and that's fine. That's okay. That's the part of the process. If you don't get lost, you don't know how to find yourself, and then you don't know how to find yourself, you're never gonna progress. So I wish you to get lost in this 24-hour session, and I wish you to find yourself in the community later on. So thank you so much for being here, Rain, my brother. I appreciate you so much. See you back here for a 2-hour session in about what, in about 8 hours, eh?
I think so. Yep.
Yeah. And I'm gonna get to work on the mentorship program. That's what we're gonna do now. All right, guys, we're gonna give the stage to the man, the legend, Matteo. I would actually hold on. I wanted to do like a sound, and then it's just, you know, all that. But hold on a second. Matt, the legend in the house. What's up? What's up? We're gonna leave you to it. Have fun, bro. Have fun. Enjoy yourself.
Thanks.
Take care.
Thanks, boys.
Enjoy.
God, you two are bloody legends together. And thanks for the intro. It's the best intro I've ever had, actually. It's crazy.
I'm gonna send you the
All
invoice
right.
later.
Yeah, see you, mate. All right. Welcome, everyone. Welcome from all over the world. Let's see. Let's get into it. As Fefe, the legend, said, I'm Matt. You can probably tell by my accent, I am from the land down under, so I'm in actually South Australia. All right. Let me see if I can share my screen so we can get into this. See how we go here. And just bear with me, team. All right. Hopefully you guys can see my screen, because I'm also going to bring up all right. Hopefully you guys can see what I've got up here. I have my little presentation on risk management. So what we are going to do is start off with a little bit of an introduction. Sorry, bear with me, technical issue.
Can I help you? Or are you gonna be good?
Sorry, team. Just trying to get to the bottom of what's going on here with this. Going to unshare my screen.
Matt, can I help you, Matt?
Yeah, I'm just trying to get my presentation up, but it's not working for me.
Take your screen. I'll just remove your screen so you can sort it out.
Yeah.
And then you can go present. On the bottom, there's a present button. And then you can go, you know, slides or share screen. You have to click on your screen on the bottom, and you got to go, you know, remove screen. So on the present button, you can click on that, and then you remove the screen that you are having shared now. Guys,
Yeah, my
until
whole
then,
StreamYard thing's disappeared. Here we go. There we go.
you are sharing the screen that has the chart on.
Yep.
Okay, now you took it off. Good.
Yeah, I'm just trying to find my why it won't give me my PowerPoint that's sitting here.
Until then, guys, I'm just gonna put this up here. You should go and follow Matteo on Twitter. Mattotee.
That's it.
I put it up on the screen. It's just right here.
That's the one, mate. So for some reason, I can't share my PowerPoint presentation, which is really weird.
Let me just do this for a second.
I mean,
Is it me or we lost Matt? Oh, you're here, bro. Okay.
all right, I'm trying to share my screen. I don't know why that's not.
You did? Yeah, I edit. Yeah, good, good, good. Now you're sharing. Now you're good. Now you're good.
Yeah.
It's shared.
Cool.
I put it up on screen.
All right. Let's see if this works.
Cool. You got it, man. Take care. Take it home.
Cool. Here we go. We got there. Thanks, Fefe. Thank you, mate. Sorry, guys. First time using this software. Didn't really know how to get around it. All right, let's go. So risk management. This has been a absolute journey for me. So just a little background about myself as well. I've been in crypto for a couple of years. Bought into it 2 years ago at the very top, as you do. Lots of people were talking about it. I saw heard people chatting about it, some friends of mine. So I thought, you know what, I'll have a go. So I invested some money. Of course, the usual story, the market went down. I also then had some money. I rode the wave of Luna, and it was great while it lasted, and then my money was disappeared before my eyes on Anchor Protocol. And I thought, you know what, I've got to make this back. So that's when I got into some trading, and that's where my obsession with risk management started. It was where I saw some really nice highs, saw some really big lows, and I thought, you know what, I've got to continue to protect my money because I'm just losing too much of my hard-earned cash, you know. So come the start of this year, I've been following Banter actually for a few years, and then I got into crypto school in cohort number 2, and that just really cemented everything that I'd saw about trading and about crypto, and all the pieces just came together, and then I had a lot of success quite quickly from there when the market was a little bit spicier than it is today. So Fefe actually got in contact with me once on Twitter, and then I've been involved with the awesome crew at Crypto School since then. And you know, you'll see a bit more of me going forwards, hopefully as well. So anyway, enough about me. Let's rock and roll. Let's get into this thing. So what we're going to cover today is we're going to talk about you know, what are the things that make up a successful trader? Why is risk management important? How do you trade safely? So in other words, how do you stay in the game? You know, experience is a big thing. And literally by experiencing the ups and downs while controlling your risk, you then evolve as a trader. So it's important to stay in the game and have your keep your eye in, as they say. Lastly, this is a really, really big thing, and I don't want you guys to fade on this at all. You know, looking at self-review and having your peers review you as well. So having a buddy, you know, look at how you're going, how your performance is, and you guys just having a really candid, open conversation about it. And you just got to be honest with yourself. All right, so let's move along. Okay, so the top 3 qualities of a successful trader. Experience is a big one. So this is where the longer you're in the market, the better equipped you can come to handle, you know, the emotions that come with it. Learning from past mistakes, developing strategies to avoid repeating them again and again and again. So you're going to make these mistakes, like I said, and that's where we want to bring in the risk management, so that if you implement a well-defined risk management strategy, it stops you from losing the money. It allows you to be more emotionally stable. Okay, so these are the qualities of successful traders. You notice the guys you see, you know, Kyle and Ran and Annie, Sheldon, all those guys, Miles, you don't see them getting stressed out about their positions. They're, you know, they can joke about how they might be down a little bit in their position because they have the risk management in place, and, you know, they're happy where they're at. If they lose 1% of their or 2% of their account size, it doesn't matter because they know on the next one they're going to make more. So that's a big part of it as well. So you got the experience in the market, controlling your risk management, which helps with your controlling your emotions, learning the tools to control that. And then you got the discipline. This is another big one that's been difficult for me personally, was discipline. You know, everyone, as you know, we get the FOMO. You know, we just want to dive into something. We get fired up about it, you know, and certainly for me, Luna was like that as well. You know, I'm getting in on this. I'm not going to miss out on this. and you just got to be disciplined. You need to have tools in place again to help you sit back, make the right decision, and stop being impulsive as well. And if you have these systems in place that takes the emotion out of it, it keeps you focused, keeps you on track, rather than these short-term big gains and big losses. All right. So what it's about is staying in the game, gaining some experience, and controlling your emotions as you go. So why is risk management important? We've already touched on that a little bit. We're going to harp on a few things here, so just bear with me, guys. Obviously, if I'm running through things a little bit quick as well, you guys can watch this recording later and go over it again. But I think I've got a couple of things in here that might actually just blow your mind when it comes to controlling your risk and how you can really stay in the game and control things. And I'm going to share some personal stuff with you as well about how things went for me over the last 30 days. Well, I'm literally going to show you my profit and loss and some of the traps that I fell into and how I got out of them. All right. So what we're going to do is, the idea of risk management is to cut down on those losses. Now, this is applicable for everything. This is applicable for leverage trading, spot trading, or even your investing. Like, why would you want to lose money on any investment? No one wants to do that. So risk management is important, whether you're leveraging or not leveraging your position. We need to be smart about what we're doing and protect what we've earned. We all work so hard these days for our money, and it's tough out there with inflation and things like that. So we need to protect what we have. So it's a good idea to spend time focusing on this. Okay, for me personally as well, when I started thinking about what I was going to lose on my trades, and not instead of what I'm going to make, I became a lot more consistent, even just from doing that, because it made me be more cautious. It stopped me from over trading, and it made me protect what I had a lot more. And that was probably the first light bulb moment I had when it came to this and risk management, before I even came up with the numbers of how much I was going to allow myself to risk for every trade. It was just as soon as I started thinking about how much I could potentially lose instead of thinking about how much I could potentially make, it really changed my mindset. So that's what we want to do, is we want to cut down your losses. This will then, by protecting your losses, it will keep your emotions in check. So keeping your emotions in check will then allow you to make smarter decisions. The smarter decisions will allow you to have a more controlled equity curve, minimal drawdowns from losses, but some nice moves up from the wins, because we're going to stick to a risk to reward ratio as we go as well. So you're going to lose some, you're going to win bigger, you're going to lose some, you're going to win bigger, and your equity curve will continue to rise as you go. Sounds pretty simple, right? So you can see how just one thing feeds to the next. It's about keeping your emotions in check, making smarter decisions, things like that. Now, I never, prior to the risk management stuff as well, I could put on a trade and be fidgety the entire time. Like I was worried about my position. That's a sure sign that you're not comfortable with what your loss is going to be, right? Like then I made a rule. I'm not going to put on a trade and then let it run overnight. At the time, it made sense, but it's actually friggin' ridiculous. Like, it's stupid. Why can't I let it run overnight? If I'm worried about my position is obviously not good. I'm overexposed. If I can't sleep because I'm worried I'm going to lose the trade, then my position size is too large, right? The market does what the market does. We can't control it going up or down. It is what it is, but we control how much risk we give ourselves. So that was another light bulb moment for me personally. So this chart here is a little bit interesting as well, because this actually goes to show you guys as well. Hopefully you can, if you look here at the realized loss column. So for every, if you lose 2%, for example, you need to recover 2.5 on your next trade to recover from that. 5%, you've got to gain back 5.26 on your next trade, and so on. Because everything compounds down. As you lose money, you're compounding down, and as you gain, you have to compound on the way up. If you struggle to make sense of this in your head, the easy way to look at it is if I lose 50%, so if I have $100 and I lose 50%, that means I need to gain $50 to get back to 100. So I'm actually have to gain 100% of my current position to make that money back. You think about it, you lose 90% of so you do a trade, it goes bad, you lose $90 out of a $100 account, you actually got to make back 900% to get back to $100. So this is where controlling your losses can have a really, really large impact on staying in the game and protecting what money you already have. Okay. So like we said, gaining the experience is really what helps you get an edge in trading, because you are going to lose. Like Fefe said before as well, he wants you guys to get lost in this. There's so much information out there. So by experiencing these 24-hour streams that we do, getting on Discord and learning from people within the community, watching all the YouTube and stuff, you need to get lost in it for a while and try a few different things to work out what works for you, what's your style. And honestly, it's been a bit over 2 years for me, and it's been probably the last, 9 months or so, I would say, where I've really found my place and my style and what works, what doesn't work. Like I know now those things, so it's worth exploring. But in order to explore, you want to protect what you have. So you can't gain experience if you don't stay in the game, and you can't stay in the game if you don't have any funds. So it's this catch-22. So we do really need to have a system in place from day one, however, while you're learning all these things and you're getting lost in the different strategies and whatever, to protect your funds. But you can't do that without having a risk management strategy, which I want to show you guys. And the biggest thing is too, it's all well and good to have these risk management strategies, but if you guys don't stick to those strategies, then there's no point having it at all. So once you come up with your plan, stick to it. Yes, you can change it, absolutely change it if it's not working for you, but definitely give it a go. Like there's no point just doing it for one day and going, no, that sucks. I'm going, that's stupid. Matt doesn't know what he's doing, blah, blah, blah. Just change it to something that works for you. But be disciplined and give something a go and work your way through it. So an interesting thing here also on this graph, if you see here, like if you had $100 and you traded at a 1% loss every single trade, and you lost 100 trades in a row, you would still actually have $36.97 at the end. So you could lose 100 trades in a row at a 1% loss and still have money left over. So, risk management just goes to show it keeps you in the game. You're never going to get 100 trades wrong in a row. Well, you better not. But, it's interesting. Just by protecting your capital, small losses keeps you in the game. And you've only got to jag one or two big ones and you're absolutely flying. So that's an interesting thing. That's a bit of a light bulb for me, seeing that sort of information as well, Now, this one here, this is the thing that really blows my mind. And hopefully you guys really see this and you see it as well, as a real light bulb moment. I keep saying light bulb moment, but you guys have to really see the benefit in this strategy after this example. So what this is literally a coin toss experiment. All right. So what we did was, for every time you get heads, it's a win. So you actually get a win of 3%. Every time you get a tail, you flip a tail, you get a loss of 1%. So we're working on this like it's a 1 to 3 trade ratio. Okay. So you just randomly toss a coin. Every time you get a heads, it's a win. Every time you get a tail, it's a lose. And you just track your account balance every time you do it. So you start off with $100 and you work your way through. Now, what's really interesting, that blows my mind, is you do the 100 coin tosses. You won 48 of them and you lost 52. So you didn't have a positive win ratio. It was a negative win ratio. But because you traded at a 1 to 3 risk to reward ratio, your account actually grew. So you started off with $100, you ended with $256, which is pretty crazy. You literally had no actual influence on the outcome, exactly like trading. You have no influence on the outcome. You just had a win or a loss based on whichever direction the coin fell. So it just goes to show that you can go onto a chart and you don't necessarily have to know what you're doing, but if you control your risk, you have a chance of still ending up more than doubling your account. Interestingly as well, there was only a losing streak of 5 and a winning streak of 6, which is interesting because I would have thought after 100 coin tosses, you might have bigger streaks than that, but no. So yeah, sticking to that 1 to 3 is a great way to protect your capital, and you don't need to win more than 50% to still end up actually winning, you know, so the account more than doubled. It's like 2.5 times basically. So pretty cool. I found it really mind-blowing, which is definitely, you know, why I'm so diligent with sticking to my plan, because, you know, it's so easy to just kill your stop loss and decide, nah, I'm an absolute legend. This thing is flying. I'm getting rid of my stop loss. I don't need it. And then within 2 minutes, you've lost yourself $100 or whatever. We're all in crypto because we love the volatility, but the volatility can be, you know, your worst enemy at the same time. All right, so let's talk a bit about, now we've talked about, you know, some examples of how you really can stay in the game by controlling risk. Some of you guys, you know, I understand we've got people here with different experiences with trading, etc. But some of you are also new. Some of you might be in, you know, cohort 8, where you've only had that the one session I think you guys have done last night. But you know, on TradingView, it's all there. You guys can use the short position tool or the long position tool on TradingView to really overlay on the charts and work out what is my risk to reward going to be like on this actual trade. So it's all there. It really outlays it. And then it's about translating that into your account and how much you're willing to put into your position to control your loss. So I like to stick to a 1 to 3 ratio as a minimum. So, you know, sometimes you might enter the trade and it doesn't end up like that in reality. Things start to turn prior to it getting there and you might have to exit out early. But I like to go into it with a 1 to 3 minimum. If I don't see that on the position tool on TradingView, then I simply don't even bother because it's just not worth it. There's so many tokens out there and so many opportunities. You know, it's you don't need to rush in and put yourself into those positions that aren't going to potentially give you what you actually need from a risk reward standpoint. So in order to calculate what your position is going to be, I'll just go back to this one here. So if you see on these ones as well, if we look at the long position tool, on this particular example, on the long position tool, we have the stop loss is sitting at 3.61% of the actual price of the token, with a potential target gain of close to 15%. So you can see on there it's a 1-to-4 ratio. Now, that doesn't mean we're going to go into this and we're going to potentially, risk 3.61% of our account. We're actually going to ratio our position to make sure that we're still only exposing ourselves with 1 to 2%, whatever is your risk tolerance that you decide on each trade. Okay, so I just wanted to mention that as well. Now, there's numerous ways to calculate that. So on the next slide, this is actually a spreadsheet that I use personally, that I've set up, and I literally just go through and I enter in the entry price, the stop price, what my target is. So I actually will use the position tool on TradingView and enter in the numbers that TradingView gives me. I put in my percentage risk. So for me, I'm happy with a tolerance of 2. And I've worked out that even with a percentage of 2, with my trading conversion rates, etc., that I'm still going in a positive equity curve with that. I put in my account size. So that's not how much. I can tell you guys as well, this account size of $1,000, I'm never, ever fully in on my account. Never. I'm only ever in a small portion of that at any one time because of my risk tolerance. I don't want to risk, more than my 2%. So as you can see here down the bottom as well with the outputs, it tells you how many tokens to buy, the value. I'm going to change that column from cost of position to value of position because it's about the value. And I've set this up as well. This is for 10x leverage. It's not the leverage like the title says here. It's also very important to note, it's not the leverage, that liquidates your accounts. It's the position size, So I probably 98% of the time trade on 10x leverage. And that is because then I'm not in all of my account. I also have some powder left over. If I do see another trade that really ticks all the boxes, I do have some funds there in that account where I can do another trade in isolated mode as well. If you guys understand what that means in isolated. So only that trade is affected by those dollars. It doesn't take my whole account into account. And, I'll do it in how to enter a second trade or even a third trade if I'm feeling, like there's a third opportunity there. But for the most part for me as well, I only like to be in one leverage position at a time because I just found, again, emotionally, it keeps me where I need to be, using this position sizing tool that I use, this spreadsheet that I have, I can risk that 2% and I can really just relax. I'm in the trade. I can just sit back. I've said it a few times to the guys at crypto school as well. I can really be a monk. I can get enter into this position, and I just don't worry about it. I know that I'm only losing a certain amount. Sometimes my account, sometimes I'm trading on a different account that's a lot smaller. Sometimes I'm on a different account that's bigger, but 2% is what I'm comfortable with every time I trade. So I'm happy to share this spreadsheet with you guys as well. So if people want it, you can hit me up on Discord. I'm happy to share it around. Ping me on Twitter or whatever, or X as it's known now. And I'm happy to share it with you guys. You can tailor it also to suit whatever you guys want. It's very simple and it's really easy. And I also, again, as part of that whole risk management thing is I make sure that I do this on every single trade. I don't enter a trade unless I'm entered the details into this Excel spreadsheet. That's one of my rules. It stops me from being impulsive because it makes me take the time to open it up, enter in the data, use the position sizing tool on TradingView. And that's just part of my rule process. It's not all about what the charts tell you as well. Part of your rule process has to be obviously what the charts are saying to you with regards to, if you follow breaking trends or you're a swing trade, like you like to look for discount zone buys, stuff like that, or swing failure patterns. It's also about having rules that control your discipline and your emotion. So this is part of that as well. This is the stuff external to just the chart that keeps me in check and keeps me emotionally sound and controlled in what I do. So yeah, I don't just pick up my phone and just go on to buy a bit and start buying stuff because the market's moving. Don't get me wrong, I've done that before heaps of times. 9 times out of 10, I get burnt because I just rush in. I go, I'm going to spend $500 on that thing. Bang, 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 bang. Next thing you know, it's turned around and I'm, $50 down. So that's one of my rules. I don't do it, get onto your spreadsheet, take the time. In the meantime, it allows you to subconsciously as well. You might go, what am I thinking? This trade isn't actually what I thought it was going to be. I'm not seeing it the way I'm being extra bullish today, and really it's not working out for me. I liken it as well to, sometimes you might get a text message or an email from someone that's really, frustrated you, and instead of responding immediately, you take some time away and you process it, you go off and do something else, then you come back and address it later, and you would have quite often you'll handle it in a different manner, and that's what I relate this to as well. By sitting down and entering it into this spreadsheet, I can, I'm sort of subconsciously processing the trade without even really thinking about it. I'm just like entering in the numbers, and a couple of times I'll stop and I'll go, oh, hang on a minute. Maybe I do need to just sit tight for a little bit longer, so it gives me that little breathing space, stops me from rushing in, etc. All right. So there's lots of stuff out there as well, guys. There's also, literally just websites that do have position tools built into them that you can just have on your browser as a favorite and that sort of stuff. But I like the spreadsheet idea. You can make it your own as well, again, to suit your style, what works for you. So yeah, hit me up if you want it. It's also easy to make as well, that sort of thing. So there you go. That's that one. All right. Just to relate it to something a bit more real as well. Sorry, I just go grab a drink. This is actually a render chart from last night. So I was just putting the finishing touches on this presentation last night. This is a render trade that I was in today. I got out of it a few hours ago, but this just shows you how to use the position sizing tool on TradingView and the spreadsheet. So if you guys have a look there, you can see there the entry price, $1.593, which is what it says on the position tool. My stop loss was at 1.571. So my spreadsheet, I've just rounded it up. I'm only using 3 decimal places because that's close enough for me. You can obviously on Excel, you can have as many decimal places as you want, but 3 is enough. My target price was 1.671, 2% risk, count size is at 1,000. And then I bought in on a position of basically $1,400 position. On a 10x leverage, that meant that I actually had $140 of my own actual cash in on that trade, and I was going to lose potentially $20. All right. So I was going to, with a risk reward ratio of 3.36. So essentially, I was going to risk 20 to make 60. what I did this morning was I let that run overnight. It wicked up and down a little bit with the FOMC stuff. Then this morning I was up nearly 30%, I think it was. What I decided to do was just cut it there, just because I was satisfied. I'd made, 3/4 of the way up to my take profit point, so I was pretty happy with that. I decided to be in that position any longer. The market was starting to look a bit shaky, so I just thought I'll take my money while I had the opportunity. So again, use that tool. It's very, very powerful. Take the time to enter in your stop loss numbers, your percentage of your risk, and then stick to it. Definitely stick to it. And the rewards will come from that. Even if you have a streak of a few bad trades, you can see, on that coin toss thing, you can just randomly toss a coin, and if you stick to the risk to reward ratio of 1 to 3, you still can end up ahead at the end of the day. And actually, the next thing we're going to talk about is soon is my example of how I went over the month, and you're going to see that it's not all it's not all rosy, but because of my risk management, I was able to keep my head above water. So just very simply as well, when we talk about this, if you just want to work out roughly using the position tool and you don't have a spreadsheet, it's just some simple maths as well. So if you have an account size of $100, you just divide that, so your account size, by the percentage on the position sizing tool. So the actual price percentage drop for your stop. So in this case, you can see it's circled yellow. 3.61% was the actual price drop on that particular token. So you got your $100 account, divide that by 3.61. Your position, in order for you to risk 1%, which is $1, your position size will be $27.70. So you're risking $1 to win 4 in this case, because the risk to reward ratio, which is also circled in yellow, is 4. So that's a simple way of working it out. If you want to do it without getting your calculator out every time, which is me, I'm lazy like that. I love creating a spreadsheet. So I just enter in, again, my entry point, my stop loss, my take profit point, and I let the spreadsheet work it out for me, enter in my percentage, my risk percentage that I'm allowed to lose, and I just let it do it from there. And then I go away and I sleep like a baby at night, knowing that I've controlled my risk. So once we start doing that as well, you're controlling your risk, but you need to learn from what you're doing as well. And this is, again, something that I've learned myself. You need to step back, look at what you're doing, work, how can I improve what I'm doing? Yes, all of a sudden I'm controlling my risk. Brilliant. But how can I improve my win-loss ratio? This is a process I used in a previous career as an athlete, actually. My coach and other staff would make me review myself. I would review my own performance numbers and try to give myself an honest review on how I was traveling, and then they would do the same. And it actually really did. Sometimes it stings a little bit because you hear stuff that maybe you weren't being honest with yourself about, but it does actually make you improve. So back in the day with that career as well, there was a lot of software that would analyze your physical performance. And that's the same thing. And my coach would make me take a journal on training sessions, events that I was participating in, etc. And it was really good to look back on that and to actually be really candid in what you write as well in those things. So for example, guys, we talk about keeping a trade journal. So if we relate this back to trading, keeping a trade journal, it can be in any structure you like. It can be in a spreadsheet form. There's journaling software out there. You know, people want to pay a subscription. There's software out there that does that. You just enter in the numbers. It can even include an equity curve for you. Everything looks really pretty. But it's about, you know, same as everything to do with this, with trading and that, it's about working out, you know, and finding something that works for you, you know. So for me, what I have is I have two things that I do. I have one book here that is titled My Trade Ideas. Now, what this has in there is just literally notes that I take when I'm looking at charts. It's just things I write down, you know, got lots of stuff in here, pictures on it, all sorts of stuff. So it's just notes. So I use that to come up with my ideas and stuff like that. Then what I have is when I'm in the trade, I have another notebook here. Inside my journal is actually tracking my entry point, my exit point, general notes about how I'm feeling about the trade as well. You know, sometimes I write, you know, stuff in there that I rushed in. You know, so like, for example, where are we here? I needed to show you more patience. That's all highlighted in a highlighter as well. Got stopped out because I rushed into the trade. You're a dickhead, I wrote to myself. So, you know, I'm just trying to be honest with myself and learning from that. And I've highlighted it. I've drawn boxes around things. There's asterisks everywhere. There's arrows everywhere. It's not particularly neat, but this is my trading journal. And I just find by writing it down, like physically writing it in a book, I feel it a bit more than just typing it. I've played around with the spreadsheet, and whilst the spreadsheet can make it look all nice and neat and all of that, it just doesn't feel the same for me. And I don't know if that's, my son would say it's my age or whatever, but I just like to write it down. I just feel like I feel better about it. And I think it just hits home a lot nicer. So I have my ideas notebook that I just write in, you know, my ideas about trades and some things that I want to look up later, that sort of thing. And then I have my actual journal where I journal each trade in to try and improve my win rate, you know. And as you improve your win rate, obviously you're making more money and your equity curve is slowly rising. So yeah, once you've planned your trade as well, enter that into the book and then come back after and have a read, you know, after it's done. Come back, you know, a week later and go, okay, let's have a look at those trades I did last week. And, you know, sometimes I actually will add to my notes because afterwards, after a few days after, I think of a few different things. So it's actually not bad. Like, you know, I can't really show you my book here because of the camera and the screen and stuff, but, you know, I've added notes. There's squiggles everywhere. Some of the pages just look, you know, I've just jammed in notes sideways and stuff because, yeah, I've just thought of stuff later, or I've had a conversation with someone about something and that's just jogged my memory on a certain aspect that I need to look at. So, you know, you do that on that level, and then also, you know, looking back at it on a bigger picture as well. So every month doing like a review at the end of the month on how you're going as well. And you know, if you're having a bad streak, take some time off as well, you know, take some time away from the charts, reassess it, and then get back into it again. And you know what, for me as well, like one of the biggest things for me has been, and I know a few people, this is the case, is finding a trading buddy. You know, use the Discord out there, find someone, preferably in the same time zone, because obviously then you guys can chat a lot easier. You can, you know, create a Zoom link for each other and you know, chart together, or meet on Discord in one of the rooms there or something. You know, find someone that's similar style to you. Doesn't have to be exactly like you, but someone that is really relatable to you. You can push ideas off each other. You can keep each other honest as well, and you'll both actually really grow from it. So yeah. So this is my latest one. I wanted to share this with you guys. Last month was a difficult month for me for a few reasons. I actually ended up sick at the end of the month. So for the last few days of this month, this time period, I hadn't traded at all because I had a really weird stomach virus. But so I want to share this with you. This is my, a screenshot, obviously, from my buy bit for over those dates covered, which was from the 11th of August to the 9th of September. So my overall P&L, 8.1%. Not a huge gain for the month, but once I break it down for you and tell you, the little hole I got myself into, you'll sort of see that with my risk management and stuff like that, I was actually able to turn it into quite a solid second half of the month. And it could have worked out a lot worse. If my risk management had been, 5% risk on every trade, there's no way I would have been able to recover into a positive position. So I had 27 trades for the month. I had 12 wins and 15 losses. Similar sort of ratio to that coin flip, right? Not an awesome win rate by any means. It's certainly, the second half of the month finished off well, and I still ended up with an 8.1% gain. So I was pretty chuffed with that at the end of the day. But things to note, I always used a 2% risk. I did not waver from that, not even once. There were a few occasions throughout the month where I took a trade, I was in the red, and I noticed that it was just not going to recover, market sentiment, whatever. So I just got out. So there was a few there where I took less than a 2% hit, but not on any of them did I risk any more than 2%. That's just a rule I will not break for any reason whatsoever. Not going to happen. You can see here 11 out of my first 15 trades were losses. All right. So that hurt, including 6 in a row. Like that really sucked and that really hurt my brain. And that caused my account to have an 11% drawdown. So 6 trades, 2% risk. As it compounds on its way down, it was about 11.1%. So, already within the first half of the month, my account's taken a decent little hit. As you know as well, because I'm down 11%, it takes me more than 11% to get back to break even. So what I did was in the middle of the month there, obviously, like I said, it hurt my brain. I stopped. I took a few days away from the charts. I was still involved, with chatting to my friends on the Discord, stuff like that. But I just didn't chart. I just didn't trade. I barely looked at the charts for a couple of days. I just wanted to get my brain sort of reset and get my emotions in check again. And then after a couple of days, I reviewed my trusty old journal here. Went over my journal, looked at what I was doing, and realized what I was actually doing was the market was trending down and I was being an absolute moron and I was trying to pick the bottom. I'm like, I'm a good trader. I can pick it where it's going to swing here. It's going to swing, and I was just getting smoked every time. So I took a look at myself and went, nah, I'm picking the bottom. And the old saying, I think, Rand says it a lot, if you're going to try and pick your bottom, you're going to get shit on your fingers. And that's exactly how it is. I tried to pick the bottom and I got smoked. So I went back, reviewed what I was doing. That's what I was doing. Then instead, I'm like, you know what? I need to go back to basics. I'm trading with the trend. Why am I even trying to go against the trend? This is ridiculous. I'm an idiot. So anyway, I learned from that. My final 12 trades, I had 8 wins and 4 losses. So I needed to get back 33% to get my account back to break even. And on my final 12 trades, I actually grew my account 41% in that last second half of the month. So it would have been easy as well, you know, back during that time to break my rules on that 2% risk and going, I keep getting stopped out. If I just increase my risk a little bit, maybe it'll bounce. Because it did happen a few times, you know, like I got stopped out, then the market just, you know, jumped a little bit and then pulled back some more, jumped a little bit, you know. That would have been an easy excuse. But my rules are my rules. 2%'s there to protect me. So you can see that with risk management, some journaling, some self-assessment, you know, I was able to recover my position and still finish the month, you know, on a positive. It wasn't an awesome month, but the market was also hard. You know, the market was generally trending down, but it was having some spikes up and then some spikes down. You know, those market makers were having a good old hunt around looking for the liquidity, and they were taking people out left, right, and center. So, you know, 8%, take that. And then, you know, towards the end of the month there, like I said, I got sick. Again, I didn't trade for 10 days, which was actually, you know, turned out to be a good thing because I've reset myself completely again. And then, you know, I've only taken 3 trades since. And I've been lucky enough that I've won all 3. So I've already given myself a little bit of a head start on this particular month. So it's taken the pressure off me now. I can stick to my 2% risk. And I know that I've probably got like 7 or 8 losses in a row, and I'll still be at break even for this month. So, you know, that's a nice thing. So yeah, guys, in summary, I hope you guys have enjoyed it, but you know, there's no need to be scared of futures trading, leverage trading. As long as you use it safely and you protect your risk. So it's about risking what you have in your account on every trade. All these trades are taken at your own risk. You know, you guys control when you buy, when you sell, what your stop loss is. That's the only thing you can control. You can't control the market, but you can control when you enter, when you exit, what your risk is going to be. Plan your trade, trade the plan. Don't be too stubborn to exit a bad trade. You know, if you see that your strategy that you had in mind is simply not playing out anymore and things have changed, don't be too, this is just not panning out how I wanted. I'm getting out now. You know, don't be afraid that it's going to turn. If you're just not seeing it at the time, just get out. Same thing as if it's going in your favor. You know, don't go, nah, it's going all the way to the moon, to my stop, to my take profit. Just bank the money. That's what I did with render today. I just didn't like the way it was looking, and I just took my money and got out. You know, that's in my account now. No one can take that away except myself. You know, so it's there now. It's no longer an unrealized, you know. So yeah, guys, I hope you like that. We've got a few, what do we got, like 7 minutes left or something? We can have a bit of a chat. Let me see if I can get rid of this screen. Stop my screen sharing. All right, here we are. Let's have a look at the questions. Has anyone got any questions for me? Anyone out there? All right, we got one here from Paul Reed. So Paul, you said, what's the most eye-opening part of my crypto journey? Yeah, definitely. Most eye-opening part actually was how easily you can actually lose your money trading, because it can be very easy to think about how much you're going to make, but you forget about how much you're going to lose. So the most eye-opening thing was how quickly you can lose your money, and how quickly you can make your money. So it's nice to be in the market all the time, and you feel like you need to be in the market, which to a certain point you do to be able to make money, but you need to be able to protect, you know. So that's probably the biggest eye-opener for me on that one. Invaluable, thanks, Banter Bubbly. That's awesome. Hope you guys took something away from that. Like I said, you know, for me, that coin toss thing, you know, and just protecting your loss, it's just mind-blowing. That just really says it all, and I hope you guys really do take that on board, because yeah, my 2% is my rule. That's just something I just don't ever break. I absolutely refuse to break that rule, because you work hard to get your gains. After crypto school, I went on a really nice streak, and I really did increase my account size by a lot. And the other thing I wanted to say to you two guys too is that when you do go on a nice little streak and you do actually add to your account size, just reward yourself as well and take that money away and spend it on something. Like, they call it risk to reward for a reason. So reward yourself. I put the money towards a trip to North Queensland, up to Cairns. And actually, it was the first time I'd been in crypto where I actually gave myself something back for my effort. And it really did make me feel proud of what I'd achieved. And it gives you more drive to be more successful. So you actually have to, you really have to definitely take those wins when you get them and reward yourself for it, because it is really hard to do. Ted, yeah, trading in the zone, mate. That's awesome. It's awesome. I've read the book twice now. I'm about halfway through my third time. And I also listen to it sometimes. There's some YouTube things on it. There's also a lecture he did for a bunch of traders. I don't know how long ago it was, but it must have been a while ago, because he's using an overhead projector with slides and stuff. But it was actually really good, because he talks about a lot of the concepts in the book as well. So yeah, if you don't like reading and you don't have the attention span, like I do find it difficult to read myself, because my brain always just goes off on tangents. But finding something on YouTube that you can listen to is really good. So yeah, definitely. And that's what his concepts of that psychological side of it should not be faded either. You guys really need to think about that, and risk management is the first step in that. Is if you're controlling your emotions, your risk, your emotions will be controlled as well. And it just allows you to be much calmer. Do I count trading fees into my calculation? Yeah, you do, but like the position sizes aren't huge. Also on like my leverage stuff, I'm never really in the trades that long where fees are really substantial. The fees are like something like 0.2% or something. So you're in and out. I'm in and out pretty quickly for me. Like, I don't usually sit in a trade more than 24 hours. Sometimes I will. Obviously, I'm in some spot positions that I've been in for a lot longer. But when it comes to the leverage stuff, I like to be, in and out. I don't trade on anything beyond a 4-hour time. Usually it's a 1 hour, to be honest, for me. Just my style. I just like to be in and out. I don't want to just sit there for days on end waiting for something. So, yeah. What else we got? We got a couple of more minutes. I think, I'm not even sure who's up next. I think it might be Chris is up next. So he'll be ready to jump on shortly, no doubt. What else we got here in the questions? The book, Wayne, the book was Trading in the Zone. Let me see if I can find it. Here we go. Trading in the Zone. Mark Douglas. So that's the one there. Definitely find it. Have a read of it if you don't like reading it. Look at it on YouTube as well. You can see I'm halfway through again. Got my bookmark in there. So it's it's awesome. Oh, you already got it, mate. Good. Nice one. Nice one. What are the top 3 coins I trade? Tony, mate, I love Render. I trade Render a lot. I love the volatility of it. And because I've been trading it for a long time now, I understand it pretty well. I also like Injective. That thing moves nicely as well. And then also lately, Rune has been a good one as well. Rune I traded a bit in the earlier days, but yeah, they're my three main ones that I trade with leverage. What else? Sheldon's business strategy. Yeah, I've been using, that was one of the big things I actually learned on crypto school, was that business strategy that Sheldon, that he came up with, about having different accounts for different purposes. So, I actually have 3 different leverage accounts. Each one has a different amount of money in. Each one I use at different times for different purposes. It's good. Like it makes sense. It'll be nicer when the market is moving a bit nicer. So you can really build on those in a better way. But because I only like to trade one token at a time, I don't usually have a position in each exchange at any one time. So mostly stick to my one, and then I have another one, like I have a KuCoin one that only has $100 in it that I use when I'm testing out new strategies as well. Because then with my 2% loss, it's only a couple of dollars, and then I can just play around with my new strategies on that. So that's kind of like it. That's like the one scratch the itch for trying something new. Yeah. All right, I reckon we're out of time. Hey, we need to see if we can get someone else up here on stage. Chris, he's stuck backstage. I know. Hey, how are you, buddy? You're on mute.
That's a good thing. Okay.
I got you, mate.
All right.
How are
you? Yeah. Good in yourself, bro. Good in yourself.
Yeah, good.
Just having my morning cuppa, listening to your alpha in the back end there.
Yeah, nice. So you ready to rock and roll?
Thanks. Ready to rock and roll. So I've got so basically what I'm going to be going through with you guys today is essentially how to determine your market sentiment. So you get your indicators, you've got your fib, you've got your supports and resistances, and you've got all of these things that you can put onto the charts. But there is a next level, which is to determine whether you feel the markets are moving bullish or bearish on that particular day, week, month, dependent on what sort of time frame you guys are trading on. So I'm gonna share a chart. I'm gonna share a screen. David, how do I share my screen here? It's not giving me the option. There we go. Present. So I'm gonna share a screen with you guys. Essentially, what we do is we're gonna go through a green sheet. So there's 2 parts to this. Before we get into the day, this is like a daily routine that as a trader, I spend at least 30 minutes going through my green sheet to identify whether or not on a macro scale the markets are looking positive or negative. And then once we have that sort of understanding, then we can look at whether or not we are looking for shorts or we are looking for longs. And then with that, be able to more effectively judge and determine a good or a bad trade. It's not all about this project is on support, I'm going to long. This project is on resistance, I'm going to short. It's this project is on the resistance and the markets are looking weak, so I'm going to short. Or this project is on resistance, but the markets are looking strong, so I'm going to wait to see if it breaks resistance and retests, and then I'll go long. So it will help you to mitigate your losses significantly and increase your win rate. And at the end of the day, that's the purpose of trading. What we do here is we are as traders, as day traders, It's the unpopular opinion. It's the unpopular opinion, but I'm going to, sorry, I'm just sharing a window. Okay, so it's the unpopular opinion, but essentially, as day traders, we are taking bets on the direction of the market. So if we, and what we're doing here in the school is we are determining, or at least saying, giving you guys a responsible way to do that. You know, cut your losses, build on your wins. You know, so when you have a winning trade, you build on it. When you have a losing trade, you cut it quickly. You mitigate the amount that you're losing. When you win, you increase the amount that you're winning, right? So that you're this is a responsible way of gambling. Okay, and that's the gist of it. You know, we are educating you in a responsible format of gambling. You know, if you're going to just jump into your exchange and look at the chart and for 5 minutes and take a trade, may as well go to the casino, put it on the roulette table, pick black or red. You know what I mean? So this is a way that we are building businesses, guys. You know, we're building potential for our financial freedom, for financial, you know, to create wealth for the future. And the only way to do that is with consistency. The more tools that you guys have in your toolkit that can help you get to those goals, the more likely are that you're going to get there. So first thing first, we're going to go through my green sheet, and then I'm going to, if we have time, I'm going to go into a strategy with you guys where essentially you can use small wins to build from $100 to $100,000. Right? Now that process takes 30 green trades, okay? Which means that it takes a lot of patience to get the trade. You're gonna spend a lot of time watching trades play out and not taking them, even though you should have taken them or you could have taken them and it was positive. But it's a very, very powerful strategy to get in there and slowly but surely build your account and keep discipline and remain positive, right? So that you are able to protect your capital. All right. So these are the two things that we're going to go through with you guys. I'm going to just jump into it. I know because otherwise I'd talk way too much. All right. So here we've got my green sheet. Okay. What my green sheet includes is market indicators. Okay. So and I'll go through each one. I know that throw some comments in the chat, guys. If you've seen this before with me, if you new to trading, if you advanced traders, give me an idea as to who's listening right now, so that I can, you know, I don't want to bore you guys, you know. So if I've got a bunch of advanced traders in here, then maybe I'll just you know skim through this quickly and we can jump into the strategy. But I just want to know who's listening. What's up, Banter? Lovely. Good to see you again. To Tom, what's up? Nice to see you guys. All right. So let's what's up? Okay. So we're gonna jump in. Okay, it's still new. All right, awesome, guys. You guys are in the right place here. All right. So take a look at the screen sheet here. Okay, you've got the S&P 500, right? The S&P 500 is the top 500 companies in America. It controls the it basically, if the S&P 500 goes up, Bitcoin's going to pump. If it goes down, Bitcoin's going to dump, right? So a weak S&P 500 is really not good for crypto, okay? Bitcoin, the next one we've got is Ethereum, okay? So you've got Bitcoin. Bitcoin is your gateway into crypto, okay? So people want to invest into the crypto market. The first thing they do is they're going to buy Bitcoin, okay? Then they're going to get comfortable with Bitcoin. And then once they're comfortable with Bitcoin, the next thing they move into is Ethereum, okay? So Bitcoin becomes the gateway. So if Bitcoin's going up, that means that more money is moving into the crypto markets, right? Then Ethereum is essentially the gateway from Bitcoin into altcoins. So people then move money from Bitcoin into Ethereum, and then Ethereum into other alts, right? So it's this phase. If you think about when you guys first got into crypto, you probably followed a similar strategy or similar process. So we look at those two charts. Then if we've got Ethereum to Bitcoin. Okay, now that shows a flow out of alts into Bitcoin or out of Bitcoin into alts. Okay, it works as a very good indicator. Then you've got your Dixie. All right, now your Dixie is your dollar currency index. So, all right. So if you got a strong dollar, that means that people are deleveraging their on-risk assets and moving into risk-off assets. So if the dollar is going up, that means that people are selling their shares, selling their crypto, exiting the markets and moving into a more risk-averse, lower interest rates, lower interest investments like buying bonds and things like that. Okay, so if the Dixie is going up, that's bearish for the markets. If the Dixie is going down, that means that that's bullish for the markets. Okay, then you've got Bitcoin dominance. Bitcoin dominance is something that you can align with the ETH BTC chart. So I'll put those two together, right? So you got ETH BTC. So you got Bitcoin dominance. If that's going up, ETH BTC is going down, right? Then that gives an additional indication that money is moving out of alts into Bitcoin. So that means a stronger potential Bitcoin than alts, right? Then you've got your market caps. Okay, so you've got other, which is essentially your other alts. Okay, so we'll have a look at that. You've got your total 2, which is your total market cap excluding Bitcoin. Total 3, which is alts without Bitcoin and Ethereum. Okay, and then the last thing that we look at is the Dow Jones. Dow Jones not as important for crypto as the S&P 500, but always a good idea to keep an eye on because a solid move in the Dow Jones can give you an indication as to what is going to happen on the S&P 500. Okay, cool. So let's jump into that, guys. And here we go. So S&P 500, first chart that we know. Did everyone get that? By the way, did everyone understand what I went through there? Any questions so far? Morning, Desmond. Morning, Des. What's up, brother? All right. So first things first. Now, what we're going to do, this is what we're looking at then before we even get to our indicators, right? We have our indicators on these charts, higher time frames, and we dig into it. Okay. Dig into it. Go from daily. You always go from a higher time frame to a lower time frame. Why? Because if you start on a lower time frame, right, then you're not actually understanding the bigger picture, right? Not understanding, is this thing moving bullish long term or moving bearish long term? Am I looking for a retest of a lower high or a break of a higher high? All right, cool. So let's get in. So now we've got the S&P 500. So the S&P 500, you can see, has been moving in a range to the upside for quite some time. Okay, we created a high back on the 1st of August, where we were attempting to break the high of April 2022. Now, post that, we've subsequently created a double bottom and a lower high. We've created another lower high. And so the S&P 500 is currently trending to the downside. What that means, that is a bearish signal for the markets, okay? What you would be looking for is potentially a retest of the 100-day, right? So I've got the orange line here as the 100-day, okay? So that lines up with the support at 4384, okay? So you're gonna, but at the moment, when you look at if you're looking, I wouldn't be looking to take a long while the S&P 500 is doing that. I'd look for it to find support and push off. You come down to a lower time frame, you can see that it has created a lower high, another lower high. I'll put those on here. You've got a high, you've got a high over here, got a lower high, you got a lower low, you got a lower high over here, lower high, right? So now we have now broken that low over here, and we are creating a lower high. So until essentially what you could do is then you can bring in a trend line onto that on the 4 hour, right? And I would be waiting waiting for longs, I'd be waiting to see what happens with this candle. Does it hold the 100 day, right? Alternatively, you could be looking at it coming all the way back to either this level here at 4329 and then get the bounce, okay? But 1, 2 tests, third one, something, third break, okay? So often you'll get the third break. So think about a support and resistance like a gas station, okay? Now, every single time you go to the gas station, you fill up with fuel. Then another car comes, it fills up with fuel. Another car comes, fills up the fuel, until eventually that petrol station runs out of fuel. Then what happens is, then you start going to the next gas station. So a support and resistance is like a gas station, right? So it comes, it tests, gets and fills up with fuel, comes back down, fills up with fuel. Next time it comes, right? If we break the 100 day, then I would be looking for a hard rejection, otherwise a break. Okay, if we break, again bearish. So until we find a support on the S&P 500 that doesn't look bullish, right, towards the market. Okay, and you'd be looking essentially if we turn bullish, if we do rebounds, okay, then we're looking for until we actually break that 4514 level, we're going to still be trending downwards, right? You guys know we've got markets move in 3 directions, okay? You're either bullish, which you're creating higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? Okay? Or you're moving sideways, right? Which is ranging, okay? Or you're moving downwards. Now, if you're moving downwards, essentially, you got lower highs, lower lows, lower high, lower low. So always follow the trend, okay? Follow the trend. I was on another AMA actually the other day, and one of the ladies in the chat, she was like, I was like, follow the trend. The trend is your friend. And then she said, follow the trend. The trend is your friend until it bends, right? Which is true. So follow the trend until it bends. So if this is trending up, that is a bullish move. If it is trending down, that is a bearish move, right? So don't try and long a bearish move. Don't try and short a bullish move. Wait for, if you want to short, right, then you want to wait for this. So you've got the high, and then you get the lower high, lower low, lower high. And that's where you short it, guys. Because then you can see that the trend has broken to the downside, and now we're moving in that direction. Okay, so just bear that in mind. You don't want to try and like catch a raging bull. You don't want to try and, you want to wait for that lower high. Okay, so at the moment, S&P 500 is moving down, which gives me a bearish sentiment towards the market. Okay, I was hoping a few days ago that when we broke the mid-range, that we would retest it and then we would break this high. Unfortunately, we created a lower high, so so that adds bearish sentiment for me to the market. Okay, now you also get some mixed signals. Now we've got Bitcoin. Okay, now Bitcoin, we obviously, you guys know, everyone remembers this dump off over here. Okay, I was hoping for a wick below that level over here. Why? Because essentially everybody's got this. Everybody who is long Bitcoin is currently sitting with their shorts pretty much right under this area over here. Okay, so if everyone's got their stop losses right here, then in order for the market to move up, right, as in like have a solid move up, then they kind of they need to come and grab this liquidity and then move up. Okay, now you see that they did attempt. So they attempted to break this support, and I was hoping for just that shorter time frame wick down, get those stops, add that volume back into the market, because you would be forced closing everybody out of their positions, then wick down, wick back up, and then we move. Because we didn't get that, that means that the volume that I was hoping to see in the market didn't enter into the market. Okay. Now we've still got this move up. We're still bullish currently because we are creating. We've created a high. We've created a higher low. We've created a high. We're currently creating a higher low. Okay. If you come down to a lower time frame as well, you've got so we had our range, right? We were ranging in Bitcoin. We had the ETF, that news, cool, ETF news, great, news event, straight back to where we were, straight back to bearish. We're retesting our range at the bottom. We've got confluence in the middle of the range. We've got confluence at the top of the range. When we broke the range, we came out, we retested it, we moved up, we created a higher high, currently creating a higher low, right? So the potential for a break here is still there, right? But I would watch it closely. Because of what you're seeing on the S&P 500, there is a possibility and a probability that we will break down, right? So be careful with any long positions because at the moment, if you come down to a lower time frame, although on the daily we are creating a high high, look here, right? We are slowly but surely bleeding out over here. Where's that indicator gonna get? Anyways, so you can see we've got a lower high, we've got a lower high, we've got a lower high, we've got a lower low, we've got a lower low, right? What happens after a lower high? You either get a lower low or you're going to get a lower high. Now, if for instance, so this is kind of that decision making point, right? We had a decision making point here because essentially we're now caught into this little wedge. Okay, we're moving up, caught into this little wedge. Either Bitcoin is going to break out of here, break those levels, come up, create another higher high. We want to break those levels as well, and then we move up, or we're going to break down and create a lower low, right? Now, because you've created a lower high, you've created a lower low, you've created a lower high, lower low, right? The trend is currently down. So to long from a position like that would, with S&P pushing down, it's counterintuitive, which means that because of those two factors, but I wouldn't be looking to long here. I would be looking to long once it breaks and the retest. Break creates a higher high, right? Like what I showed you guys over here. Okay. Remember what I showed you here? You had the break, change in structure. So you have a change in market structure. You're now creating a lower high, lower low, lower high. So it's the same thing on Bitcoin. On Bitcoin, you're going to want to see a break, and so now we're creating lower highs. Now you want to see a higher high, higher high, higher low, and then you can see the move up. Okay. If it was opposite, if it was different, and the S&P was bullish and like S&P was pushing up, and then you start looking at Bitcoin, you see Bitcoin's on a support zone. There is volume. You look at the volume indicator. You can bring up the volume. If you can see volume is picking up, and you can see we're on support here, and you can bring your fib in, then you can start looking for longs. But at the moment, you can see where I'm coming with this. You can see how this starts to build a sentiment for you for the day, so that you're not just jumping in, support, buy, resistance, sell. Like you need to take into consideration what the overall market's going to be doing for the day. And are you guys with me? Throw something in the chat there if you guys are with me there. All right. Cool. So now we're going to move over to the Ethereum charts. Now, I told you guys, Ethereum is your intro into alts, right? So once people start getting comfortable with Bitcoin, then they start moving their money into the alts, okay? So we've had this trend coming down, okay? Had the trend coming down. Now let's look at them. Now we're just looking at trend here. We're just looking at direction, okay? And hide of the volume. Let me get rid of that. Cool. We're currently trading below the 100-day and the 200-day moving averages. Okay, we've had a cross. Personally, don't really follow the crosses, but if that's part of your strategy, you can take into consideration. You can see when we had the golden cross over here, then everything pumped. All right, so potentially something to look at, but that's up to you. Now, at the moment, okay, I've still got a lower high, a lower low, a lower high, right? So you are sitting on a support. You are sitting on a support. Hopefully, I want to see a move to the upside, right? Hopefully, you want to see a move to the upside. But as you can see here, we are not getting any volume coming into the market. So how do you then take a long position until you start seeing this trending up? So what I would do is come back out, right? You can see that we're starting to get a range moving here. So what I would do, come and take this, right? You're starting to get a range, okay? You can see that we've broken down, we came back, we retested, we came down, we retested, we claimed with a candle close back within the same level. We're pushing back up. We've rejected the mid-range. We came back. We did create a higher low, right? We did create a higher high, but very insignificantly. And we're currently sitting on that support zone, right? Currently could be calling that, could be looking at this as a potential double bottom. But you need a few more candle closes, higher probability, breakdown. At least come back down to the 1576 levels, right? And then try and push back up again. So nothing extremely bullish here to look at, okay? But all I can do is give you guys a viewpoint. At the end of the day, you got to look at your own charts. You got to, yeah, you guys got to look at your own charts and make a decision. It's your money. Jump in, have a look at it, and make a call. Okay. So the reason why I like the ranges is because it gives me a confluence at 3 separate points. I've got confluence at the top, right? I've got mid-range confluence. You can see how we tested it as a support. Is it as a support again? We broke through. It was a resistance. It was a resistance. It was a resistance. It was a resistance again. It's resistance again. Then we've got support at the bottom as well. Okay, so it's better than a trend line for me. I look at it more. I look at a range as a much more more primary indicator than a trend line. Trend line is really just so it can help me from a visual perspective to see if we are breaking structure or potentially looking to break structure. Okay, so watching the ETH chart there. Okay, then we've got Ethereum. Ooh, look at that! Look at that. Okay. Look, check at this range that we've been sitting in for such a long time. So back to the beginning, early mid-June. Okay, we broke into this range. Boom, 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 boom. See how we held the top of the range. We broke down, literally touched the bottom of the range, came back up, top. We've been bouncing around. We have subsequently broken. Okay. Now, what that means is that let's see if we've got a bullish Dixie as well. We're gonna have a bullish Dixie. Yeah, see how so for those of you guys who join my Monday sessions, you'll remember I told you we're gonna test this resistance, right? And my belief is we're gonna break this resistance. We're gonna come and then test the resistance level a bit higher up, right? Now the Dixie is trading above the 200-day. We've broken trend. We're creating a higher high. We're creating a higher low, higher high, higher low. You know, we need to come in and test this level until we actually see a lower high. We cannot say that the Dixie is reversing. Until you see a lower high and a lower low form, you cannot see that the trend is reversing. So for as long as the trend is moving bullish up to the upside, right, that is bearish for the markets. Okay, Bitcoin dominance. Also, we had a range form. We broke out. We came back. We retested the top of the range. That also falls in line with your 618. 618 is such a powerful indicator. If you guys don't use it already, you got to add it to your trading tools. From the bottom of the wave to the top of the wave, you look for a retest on the 618. That's generally a great area to long or to short if you're moving down. Check at this. Okay, so we've come down. So what that means is like if for instance, price is moving in a specific direction, okay, that means that if price pumps up, okay, in order for it to have a healthy price action, in order for you to look at this and be like, yeah, this is healthy price action, okay, this is healthy price action. How do you look at that? You see that the price has reversed at least 50%. If you just see this massive wick and it's just like candle, 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 like a rocket to the sky, very unhealthy price action, short that shit. You know what I mean? Because it's at some point it needs to reverse back to the mid zone. Okay, price always needs to do a wave. Price always does this. It always goes in a wave. Right? Eventually, price will come back to the 50, and then it'll move off. Now, in the Bitcoin dominance chart, you can see here, even on the dominance, it went up, it came back, it retested into the golden zone between your 50 and your 618. It retested top of the range beautifully, retested the 618 beautifully, retested the 50 fib beautifully, creating higher high, creating higher low, creating a higher high again, right? Now, we've claimed the 200-day. We've now also basically sitting on the 100-day moving average, okay? So for me, there's not something really bullish for, this is bullish Bitcoin, not bullish alts, okay? So let's take this back a step. We've got Ethereum to Bitcoin, okay? Ethereum to Bitcoin has basically smashed through the bottom of this range that has been sitting there. So we've been sitting on this range, on this trend since January 2020, guys. In January 2020, been pushing up here, okay? We've smashed through there. We've basically lost the 618, okay? Looking out on the weekly, we've lost the range, we've lost the trend. Probably that means that money is moving out of the altcoins, out of Ethereum into Bitcoin. People are essentially de-risking their crypto portfolios and moving that money into Bitcoin because it is a lower risk asset within the crypto space, right? Now then from Bitcoin, they're also potentially then moving it out of the crypto space into where? The Dixie. Look at that. Dixie is now pumping up, okay? On a positive side, something that I have to mention is that you can see that we created a lower high here, right? Ooh, bless myself. That now we've created a higher high on the Dixie. My expectation is that we will get some confluence, some kind of chatter around, or some kind of reaction at the 105, right? And then come down. So at the moment, we're in an indecisive trend because we were creating a high, a lower high, a lower high, a high high, right? Or sorry, a lower high, a lower low. So the trend was bearish, okay? Bearish trend. But now we've created a higher high. We have broken this resistance area, creating a higher. At some point, now we're going to need that to reverse, come back down, and create a higher low. When that happens, markets will then become bullish again. Okay, whether that will happen at this area or it will happen up here at the 107, or if the Dixie is going to come all the way back up and try and retest its previous high, create a double top, we don't know. We don't know. We can only play what the market gives us. At the moment, the market is currently giving us a higher high on the Dixie. We need to see some kind of reversal on a lower time frame, right? So you can come down. I've got it over here. Jesus. Look at that on the Dixie, eh? Lots of high highs, lots of high lows. Pushing, 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 guys. Pushing, pushing, pushing. Okay? So the longer that this goes up, the more bearish it is for the market. But at some point, it's going to need to reverse. And then I wanted to mention to you guys the same thing what I said on the previous charts. Everything that goes up without without coming back down, right? At some point, it needs to reverse, and it's going to have a hard reversal. Okay, the longer it pushes bullish without actually creating waves, stepping up in the market. If it's not stepping up in the market, it's creating unhealthy price action, right? Unhealthy price action just generally gets dealt with in an unhealthy manner, which means that at some point, this is going to have to dump off. And you see how you had this dump off on the Dixie, and that was bullish. That becomes bullish alts, bullish Bitcoin, bullish markets, bullish everything except for the dollar, right? You're going to have to get that. Whether that'll happen here at this zone over here at the 105, or it's going to happen higher, I don't know. But at some point, this has to break. This trend has to break, and the Dixie needs to come back down, and that will then be a good bullish period for the market. Okay, so look out for that. Look out for those breaks. Look out for a change in pattern. Look out for a lower highs and a lower low formation on the Dixie, and then that'll give you an early indication as to a shift in market structure. Okay, so now is this. See, I want you to. Can you guys see? Am I explaining this well for everybody? Can you see in the chat? Just throw there. Am I like? Can you see how you tie all of these different charts together to create sentiment, so that you now know? Can you guys tell me, like, if you know now, am I going to look for a long or am I going to look for a short when I start looking at the charts, right? Am I going to so that you're not just jumping into the day, opening up, XRP and being like, oh, okay, cool, it's on a support long, it's on a resistance short. You're actually going in and going, okay, cool, where's my projects that I trade, and then I'm looking for shorts or I'm looking for longs. Let me go look for this. Let me go look for that. All right. Then you start looking at your charts and going, okay, cool. Where is a short zone if I'm looking for shorts? Is there something that is talking to me on this chart? Yes, cool. This is where my potential entry would be. Let me set my alerts. No, okay, cool. Let me look at the next chart next project that I trade. Let me find what I want to trade. You see? And then with that, you mitigate your emotional state, right? Get rid of the influences, okay, that are hyping projects. Used to fall into that trap. You open up Twitter, and then one of the Instagram one of the influencers that you're following is like, yo, guys, this thing is so bullish. Look at this. I'm buying. You like, oh, okay, let me jump in and buy. And you just copy trade, and then you never actually know what you're doing, and you lose your money, right? This way, you're creating your own opinion about the market, right? Utilizing the tools that you guys learned in school. And then from that point, you're able to then go into the charts and go, okay, cool. Let me see. Let me go start looking. Let me start looking, where am I? Let me start setting alerts. Let me come into this one. Let me start looking. Okay, cool. We've broken that. There's the mid range. Where would I want to short? Am I looking for too long link? Am I looking to short it? And you start finding your trades for the day, right? So this is the setup, guys, that I want you to be thinking about on a daily basis. I can promise you that it does help a hell of a lot. Okay, it does help a hell of a lot to determine whether or not you're going to go bullish or bearish. Now, I have to give one little other component to this. It's a helpful factor. Doesn't mean that if you're bearish macro, doesn't mean that you can't be bullish micro, like macro as in over a holistic markets for the week, for the month, for the whole day. Doesn't you can be you can have a bearish market and then still have certain altcoins that are pumping, right? Okay, so I'll give you an example. Now, I've been building a XRP long. Why? Because since basically down here. Okay, so I was building this XRP long because I saw that we broke and we held above the 200 day, this green line over here. I can see on the XRP Bitcoin chart, we also held support above the 200-day moving average. And we are creating higher highs and higher lows. Okay. So started building this long, considering that we're getting a lot of these wicks to the upside. Okay. Now, what that means though is even though that now where this comes in is that I can't then get overly risky in this trade because I've got a bearish sentiment overall towards the S&P 500 and the other projects that we were looking at. You know, obviously you might see them differently, and that's okay. We all see it differently. That's why there's always a buyer and a seller. You know, if I look at it and I see bearish, and you look at it and see bullish, you know, then we're buying and selling. We're trading together. We're trading together. Somebody's winning, but only one of us is winning, but you know, we're trading together and somebody's making money. Right now, because the overall market is weak, in my opinion, where I look at it, then I have to then trade with a very, very tight stop loss. You know, make sure that I'm literally sitting stop loss at entry. I took very risk averse entries. You know, essentially, I had my fib on this move. I saw that we held support. I saw that we broke down, right? So that we broke up, took an entry on the 618, took another entry on the 618, stop loss at entry, and so then literally bringing in an average net cost underneath those wicks, around about there. Right, so if now we're breaking down, right? See, we've created a double top, we've created a lower high, we failed to break that high, failed to break that high, we've created a lower high. Probability, market's gonna come down. Cool, you guys with me? I want to tell you guys now, seeing as we've got another 20 minutes, about a strategy that I think could be very powerful, okay, for all of you guys. So I'm going to pull this up quickly. Essentially, if you're going to trade, now I'm going to go into this in more detail in my AMAs on a Monday at 11 a.m. SAST, which is around 9 a.m. GMT. So look on the Discord, come and join me there. We'll go into this in more detail, okay? But essentially, this is a strategy where we say we're looking for 30 trades that is going to, can I show this other screen? I just want to show you guys, I'm going to bring this up. Share screen, cool. There we go. All right, can you guys see that? No. How do I get the screen up, David? Present. I'm trying to bring my screen back up. Sorry, man. Otherwise, I'm just going to have to explain it to you guys. So essentially, we're looking at trading. I'm just going to try it one last time. So essentially, where we are is we're going, okay, I want to take 3% moves in the market, okay? And I want to take 30 trades, and I want to move from $100 to $100,000, okay? Now, what that means is that you're not looking, you're becoming very, very, very picky about the trades that you're going to take, okay? And if you're going to, okay, I've presented the screen, but it's not showing. I've said present. Okay, so it looks like I've lost the screen share. David, if you're there, could you just share the screen up again? That would be great. Otherwise, let me just chat you through this. So if you you're looking to take 30 perfect trades, okay, which means that you're actually going to be looking for further confirmations before you take the trade, and you're trading a trend, okay, a trend whereby you're looking for that retest where you're getting a 3% move, 3 to 5% move in price, max 5, and you're taking your profit off the table. Okay, so how you do this is you're looking at building a 10x position. So you're looking at building a 10x position that you then get a 3% move on. That gives you 30% on your capital. You get 30% a day for 30 days. That moves it from $100 to $100,000. Okay, so instead of trying to build positions in choppy markets, you look for projects that are ranging and giving you a 3 to 5% move in those ranges. Okay, and then you build into that position. You ladder into that position. I wish I could get my screen up again so that I could show you guys just quickly on the chart. So what you're going to do is you laddering into a position. You don't want to risk more than 2.5% of your capital, all right? And if you're going to risk it, because then at the end of the day, every single time you take a trade, don't ask yourself, what am I going to buy when this trade goes well? It's what am I going to lose when this trade goes bad? And that is a very important question to ask, right? When you're building a long-term strategy, because if you want a consistency, you know that you're going to lose. You are definitely going to lose. Consistency comes from cutting your losses quickly and gaining and taking your wins, right? Now, essentially, you're going to be you're looking to take 3 entries. So you'll be laddering into that position, okay? You're going to ladder into that position in 3 increments, okay? You get a change in market structure, okay? Let's say you get a high, low. This is a lot more complicated without my screen share. Okay, so you're getting you get a change in structure, or you get a retest of support, or you find a trade that looks really good, okay, on a higher time frame. Okay, what you're going to do is you're going to ladder into that position. So let's say you have a 1% stop loss. Okay, now you're looking to take 100% of your capital into that trade 10x. Now, if you've got a 1% stop loss, that means you can only put 25% of your capital into that trade on your initial entry in order to still have a 2.5% risk to capital. Once you get that initial entry, and then you're going to look for confirmations on a lower time frame. So let's say you've got you're looking to long, right? So you get the retest, you get that entry, the initial entry on your 618. You're taking 25% of your capital. You've got your stop loss under the previous low, which is 1% below. So 1% in price action below, which means that you would only be able to take a trade with 25% of your capital, which would essentially then work back to 2.5% of your capital, right? So 25% goes in 10x, right? So then let's say you've got $100, you're building $1,000 position, you would enter with $250. 1% move in price on $250 is $2.50. That $2.50, if you get stopped out, that $2.50 works back to 2.5% of your $100, which is your capital. Okay, so then you're not getting stopped out with too much. Okay, then you're going to be looking for a further move. All right, price moves up, comes back. You can double up on that entry on a higher low. Double up on the entry. You're then moving your price. You then doubling up. So you're going from a $250 position to a $500 position. Okay, you get on the lower time frames another higher high, another higher low. With that higher low, you can then double up on your position, and you're moving your stop loss then underneath the initial lows on that lower time frame, waiting for a push to the upside. Okay, each time you're adding, you're also decreasing the percent. You're now utilizing a different low as your disqualification within that trade. So you're going to be going, okay, cool. If when you're moving your price, actually your the volume in the trade from a $250 to a $500 trade, then your stop loss needs to also be coming a 0.5% stop loss, not a 1% stop loss, so that you can keep. And if you're not getting that entry, right? If you're not getting that entry, if you're not getting that stop loss right, then you're not taking the trade, and you're only running the trade with 25% of your capital. You're running that $250 trade, right? You're looking for that push, and then you're looking for another trade. So you're looking to essentially, then if you're only getting one trade, you push that up, you take your 3% move in price action, you close the entry, you've essentially secured a quarter of the profit that you need for the day, right? You're not going, let me just do this quickly. Looks like I'm going to be running out of time soon, but let me just finish this off. So you're going to run the trade with 25% of your capital. But if you're able to get those entries, so you're building a position, right? You're building up, when you build it to a $500 position, okay, then you're bringing to a 0.5 stop loss. When you take it to a $1,000 position, you're then going to get a amazing. I just got my screenshot. All right, so I'm going to show you an example here quickly on a price reversal. Okay, and let's pull up Phantom. Where's Phantom? There we go. Let's just hide that. Okay, you can see I actually had this for you guys. All right, so you can see on this move here, we had the range. Now I'm going to show you how this plays out. So you have a range. You had the price that came down. Okay, you have a range forming. You pull the fib top to bottom. You've got a 618 reversal zone. Okay, you can see that price has moved up into the reversal zone and rejected the top of your range, come back down. So what you're doing, you're looking for that retest of the 618. Okay, on a high. So now you're looking at, as an example, you're looking for that retest. Okay, so here's where you would be taking your initial entry. Oh, that's a long. Okay. So here's where you're taking your initial entry. Okay, you can see the rejection come on price. Okay, now you've got a 1% stop loss. What you're looking for, a 3% move, right? On that 3% move, essentially 10x, that gives you 30% on your capital. You do 30% on your capital every day for 30 days, you move from $100 to $100,000. Okay, you need patience, right, guys? You're going to keep patience in your strategy. You're looking for that one perfect trade. Okay, you're looking for confirmation. You're looking at market sentiment. You're looking at your fib. You're looking at your range. You're looking at your support and resistance zones. You're looking for things to line up as much as possible to give you a higher probability for that trade. And if you're wrong, you're not losing more than 2.5% of your capital, right? And this is patience. The markets will always give the money to the patient trader. If you're impatient, you front run yourself, chances are you'll not calculate your risk correctly. And then, guys, you're giving your money to the market. You're giving your money to other traders. Yes, we're all family here in the school, but at the same time, within the markets, we're competing with each other, right? And if you're not going to do your TA correctly, you're not going to actually spend the time in the day to get to the point where you guys know what, like, have a picture in your mind before you even go to the charts of what you're looking for, what you want to find, and trust in yourself. Then go to the casino, put it on the roulette table. You got just as much chance of winning, right? So here you had your initial entry. Okay, you saw here we failed to break the top of the range. We created lower lows and we dumped off. Right now, here's my entry. Okay, my entry is not down here at 9 p.m. on the chart. Okay, my entry is not down here. Just because we're moving down, that's not a trade over here. It's not in the zone. So we wait. If price doesn't come back up here, you don't taking the trade. Okay, you're waiting for the next. You're looking at other charts. You're waiting for the trade. Okay, you can spend 5 hours looking at the charts and not taking a trade. That's actually the best feeling, because if you got the dollar in your account, the dollar's still in your account, right? Now, see how we got that initial entry, okay? So you're at essentially 25% of your capital. Let's get this to load. Now, you get that entry, okay? Comes back down, creates a low. Now you're getting another lower low. So you've created a low, right? High. You've created a lower high, okay? So on that wick candle close, right? You could take another entry, right? But now when you do that, you need to be then careful with your stop loss. So because you're going to take an entry up here, okay, which is essentially a short, and then you're going to take another entry over here, you can also then start to see what happens with your average net cost, okay? So your average net cost is 50% between your two orders, right? So there's your average net cost, which then brings your stop loss above these wicks over here, okay? So you got about a 50% stop loss, which is still $2.50. On a $100, you got a $500 position, you're still only risking 2.5% of capital, okay? Then you can see that we then get a further confirmation on the lower time frame of a lower high and a lower low and a lower high, right? On that lower high, right? Now, this is where the calculation comes in, okay? Because in order for you to get that entry, okay, if price action does break now above this high, then this is essentially then not forming a lower, a lower high, but actually on a higher time frame, creating a higher low, okay? So if, for instance, now we break this level, then we are also breaking the 618. We are also breaking the top of the range. So this becomes my new disqualification zone, right? If price now breaks back above that 216 level, then I have, because we've now created what are we seeing on the lower time frame is that lower low, right? And now we are pushing back up, okay? So what you can do is you bring that in line, okay? Bring that in line and you go, okay, cool. If price now breaks back above that area, okay, then I'm disqualifying this trade and I'm going to take my knock. And this is where you then look for that push back up, right? A little bit more than $2.50 here for that double up on the entry, okay? When you look for that push up, ideally you would have wanted price sort of to get to that zone, right? And then you would double up. Now you've got that 100%. Let's say if you take the trade, okay, you increase your risk slightly because you've got further market structure confirmation that the trend is moving down, right? Then you've got a 3% move. 3% move. As soon as we break that low, stop loss comes to entry, right? And it's a risk-free trade. When you get that 3% move, right, you're going to then have you're going to make 30% profit for the day. You switch off, you go do something else, take your girlfriend for lunch or your boyfriend out, or go surf, or go for a walk with the dogs, or do whatever you want. You walk away from the charts and you spend an hour doing something else and you come back. And why I say that is because it is very easy to get sucked into the charts and spend 8 hours literally staring at the screen. And because you get one trade good, like you get a winning trade, then you become a bit more lax and you get a bit more overconfident, and then you start taking trades that you shouldn't be taking. So get a win. If you get that winning trade, take a break, come back, look for something else. And 30%, David, can I share a different screen? I'm not too sure if I can. Can I share a different screen? Doesn't look like it. So essentially day one, you'll start with $100. Okay. Now, if you make 30% on that, and you factor in 3% for fees, okay, you're gonna have $27. So you make $127 in your account. The next trade, you're gonna make 30%. So you're gonna do a 3% move. You're gonna go to $161. The next day, you're gonna do a 3% move. You're gonna go to $205. The next day, $260. By day 10, you're at $860, right? By day 20, you're at $9,400. By day 25, you're at $30,000. By day 30, you're at $100,000. And you're not trying to make the big moves here. You're not trying to determine a trade that you can take for 3 days or 2 days or hold. No, you're looking for something that is ranging, giving you 3 to 5% moves, right? And then you're laddering into that position. And if you don't get 100% of your position, that's also fine, because if you get 50% of your position and you get that 3% move, take your profit, get out, right? And then you will be able and look for another trade where you're essentially looking to get, 10% of it, like 50% and a 3% move. And then you've made your money for the day, right? Give you an example here, right? If, for instance, on XRP is this trade over here that I said to you guys. So I trade two different accounts, right? So I trade the strategy on one account, and then on another, and then on a separate account, we look to build the positions over time if we're getting the bigger moves, right? So you can see on the XRP chart, we trended down, we created that double bottom. I told you my entries where I took them, 618, 618, right? And stop loss to entry down here, okay? So if, for instance, I was just looking to try and get a short move, I would have looked to make sure, am I gonna get if I get that double top, right? If I get that double top, what is the move, right? 3%, right? 3%. Okay, cool. So all I'm looking for is a double top then on this chart. Okay, and I'm out. Instead, if you hold the trade, right? You hold the trade, what happens? Comes back, wicks you out, you end up with nothing. So by hunting those bigger moves, you actually end up losing a lot of money, leaving a lot of money on the table, because you're not and then you then hunt that adrenaline rush, like, yeah, I made 150% in this trade. Woohoo. How many trades did you actually get stopped out at entry where you left money on the table as well? Yeah. Play this into your minds and think about it when you guys are trading this week. I'm pretty much out of time. I'm not sure who's coming up next, but it's been really, really kif hanging with you guys. Throw some comments in the chat. Tell me what you guys have thought of the session that I've been going through with you guys. And if there's any questions, quickly throw it out there, man. Let's throw some thoughts there in the chat, guys. Give us a like as well. Give us a like and subscribe on this channel. This is the Banter Plus channel. If you guys haven't already done so, this is essentially, we're going to be doing these live 24-hour marathons once a month moving forward. So yeah, awesome to have you guys with us. And this is going to be essentially a place that we live and we love and we grow together. Just throw some comments, throw some questions in the chat if you guys have anything before we bring up the next speaker who's going to be taking over from me. Yes, Jakes. So essentially, you're building on your capital. Okay. Rule number one in trading is protect your capital. Rule number 2 in trading is protect your capital. Rule number 3 in trading is protect your capital, right? And then rule number 4, 5, and 6 is to look at your indicators and determine sentiment for the day. There's no fortune telling here. We are trying to predict potential moves in the market, right? But this is not necessarily going to be, just because you feel bullish doesn't mean it's a bullish day, right? But yes, so essentially you're going in with the full capital. So you're starting with $100 in day 1. In day 2, you're starting with $127. In day 3, $160. In day 4, $205. You're never risking more than 2.5% of the capital in the account, right? And you're never looking for more than a 3 to 5% move in price action, right? Doesn't matter if price moves more than that. If you come back to that phantom chart over here, and you were to actually look at the move that it did do. Ooh, way too far out. Yeah. If you did close on 8%. Okay. Now that is an amazing trade down to 8%. Okay, 8% in your capital is amazing, but how often does that happen? You need those big pump and dumps to get the Bart Simpson, all right? So if you that's why it's great to kind of run this on a separate account. So you have your account where you can get your badges of honor within the trading community, being able to show that you did 100% on a trade or whatever floats your boat. And then you have a separate account that you run the strategy on. And over time, see which one grows faster. The account where you're consistently cutting your losers, never risking more than 2.75% or 2% of your capital, right? And consistently doing 3% moves on your chart, because it's a lot easier to find something that does 3%. Look at this, right? Look here. 10% moves, right? I need a third of that. I need that wick over here. So one wick is 3%. Check here. This is on a 4-hour. That 4-hour candle is 3%. Look here. This is phantom. Look at that. 3%, right? In roughly a 4-hour period. See that candle there? That's a 4%. Literally within 4 hours, in a 4-hour candle, you can do this on phantom, right? So look at the charts that you guys enjoy trading, and then see whether or not you can apply the strategy and how you can apply it. But also just take into consideration and look at this, right? You saw that 8% move, right? How often has that happened from August to now, right? How many times could you have gotten 3% moves here and compared to that 8% move? So if you're hunting the 8% move all the time, or the 10% move on your projects all the time, you're going to end up leaving a lot of money on the table. You're going to see this. Oh, we're going to break above. No, we came straight back to where you got your entry. Oh, we're going to break above. No, straight back to where you got your entry. We're going to break above. No, straight back to where you got your entry. Right? So keep that in mind when you guys are taking trades this week. And I hope that I've been helpful to some of you. Pierre, yes, this is recorded. It will be on the Banter Plus channel. So you can go back and view it. Essentially, what we've done is we've split the live into 2 sessions, 2 12-hour sessions. So you'll just need to, we'll try and bookmark it once it's done. You should be able to hit rewind on YouTube, watch it as much as you like. I'm going to just throw my my Twitter handle in the chat as well. I'm going to be posting more about what I've talked about with you guys on Twitter as well. So there's my Twitter handle, and I'll also be posting, and you can also chat to me on so on Twitter, it's the Dawn Charter. You guys can give me a follow there. What's up, Chaos? What's up, brother? Hey, man. See you in the chats. What's up, Banter? Bubbly? Awesome. Thank you for the support. I really appreciate it. Really, it's great to to see so much love coming out. And yeah, great to have you guys. Who is the next up on the? Who is next? Who is next? Let's see. Yeah. Doc. Let me just double check who's coming up next. I think we got some. Hey, we got Thales coming up, man. You guys love Thales. You guys love Thales, man. Oh, okay, awesome. Now that you guys are in for a treat. Yeah, on that one. While we wait for him to get up on stage, so that he can come in and jump in with you guys on the next hour of this show. Thanks, Des. Is there any other questions? Did I miss anything in the chat? When you think Dixie will turn? Yeah, look, Jakes, I'm thinking on the Dixie, we should get some price. We should get a reaction, right? We should get a reaction at this area. Whether it will hold or break is to be seen. As long as price is moving up, I would it'll definitely, in my opinion, at least break up here, and then I would be hoping that we then get some kind of swing failure where we kind of get something like we get a push through it, right? Then we get a pull back, and then we get that lower high and it comes down. Otherwise, the next support resistance area is around the 107, and we're gonna have to wait for that. Okay. Yo, Thales, you here? Yeah.
Good morning,
brother.
Chris.
Welcome.
How you doing, brother? How are you? Good morning.
Yeah,
Great show.
fantastic, man.
Fantastic.
Thanks very much.
Great
Thanks
stuff
very
out there.
much.
Great offer. Great
Thanks. So
offer.
I hear you.
I don't know how
I
I'm going
hear
to carry
you
on now.
Should we just cut the stream, eh? We should just cut the stream now. We're
Yeah,
done for
we
the
finished.
day.
We're done. You said it all.
No, joke. Good joke. Man. You guys are in for a treat. If you haven't sat with Thales before, he does 3 sessions every single week: Monday, Wednesday, Friday on the Discord. I'm sure that you guys know him well already. Crazy, amazing chartist. We're very lucky to have him in the community. So show him some love in the chat, and yeah, Thales, I'll hand it over to you, man. Much love, brother. Good luck for the next hour, and you guys are really in for a treat. I'll be listening in the background.
That's good. Good morning, guys.
Sure.
Chris is going nowhere. He's going to be around here with us, isn't it? You're not going anywhere, brother. Good morning, guys. Good morning. I'm gonna talk a little bit with you how to look the markets or the charts, right? So it doesn't give you any panic. So you know, when you wake up in the morning and you don't know what to do, we need to make sure that you see things out there that will keep you in control and be more calm. And this is the trick. If you want to win this game in the markets, we need to be calm, right? And let me see if I can share my screen, and I'll do the entire screen. Okay, screen number 1, here it is. It should be coming up. Okay, that's good. So what we can see now Bitcoin, right? And this is the 4-hour. We're zoomed in, right? And we can see that Bitcoin is an uptrend. And everyone, well, half of the people of you got excited, right? Because it's pushing up. And some of you will have some FOMO and say, oh, what did I miss? Right? And they're trying to find an entry to get in as soon as possible because they're trying to catch that move, right? Well, so far, so good, in a sense. But what if we're trying to zoom out a little bit, right? And if I zoom out a little bit, right, then we can see a different picture, sort of, right? And say, oh, okay, yes, I can see a push to the upside. But if I see the whole picture, I can see that was my last high, that was my low high, another low high, another low high, and by the looks of it, it's going to be another low high. so far. So now you can see that if you zoom out a little bit and you come out a little bit, even on the same time frame, I'm on the 4 hour. I did not switch any time frame. I just zoomed out on the chart, right? I'll back off a little bit and have a see the whole picture. And I said, okay. He had another push. He broke the trend line, which is good. Yeah, it's bullish, right? However, we still haven't create any high. On a smaller, if you go into the zoomed in version, you keep on getting highs, and higher lows and higher lows and higher lows, right? However, on the big picture, you need to see what Bitcoin is studying around to the previous action and said, okay, you see, that was my top sub there, right? We had, that was the base. And then finally, if you zoom out and you say, oh, I had a common base, right? So that can be like a big, huge, giant double bottom, right? And it's not a double bottom really, but what it is, it's a supported resistance, right? And said, okay, price came back to the supported resistance and then it bounced off. Okay, now for a very bullish move to come, you need to have some rules, right? When things are getting bullish, when the price action, doesn't matter what token it is, it manages to break the previous highs, right? It managed to break that range high. It did, okay. But on the continuation, it hasn't broken yet the previous highs. So you're like, oh, now it's not that bad. So I don't need to have this FOMO anymore because I haven't missed anything yet. So go back to the other rule that we have in school. The break of the trend line, right? And you want to come back to retest that trend line on the same level. And it's going to hold that level and it's going to kick to the upside. That will be the opportunity for you to get in. So again, you have another rule from the school that again you don't need to panic. All right? I hope that makes sense. So, we need to use the zoom out version of what in any token that you're looking at. It doesn't matter this Bitcoin. Now we're looking at Bitcoin, right? But it doesn't matter which one it is. You need to start on a daily 4 hour, zoom out a little bit, and say, okay, what's going on? What's going on? Where are we? Right? I said, okay. I mean, I can clear the screens here for you very nice and quickly. Remove all this noise, and I have this huge trend line. People that follow me, I have this huge trend line comes all the way back from 2019, that green one, right? I got that green one there. But what if we're going to do another support trend line from the recent 15K? You can do that easily. Here it is, trying to catch that into these levels there. Right, and everyone knows that I like to do averages, right? I would like to see the average of the trend line. I don't go very crazy about picking up the wicks or the bodies. I want to see the general direction of the trend. And I can see that if I got multiple touches like wicks and stuff like that, right? I've got like multiple weeks there. This is a daily. I can go into 4 hours and get some more resolution. Like make sure that I get lots and lots of bodies and weeks that's touching my trend line. And I'm gonna make that trend line a little bit thicker so everyone can see. I'll make it that too. I can make that green. I'll make it a solid. Can you see that? Yeah, I think you can. I can make it a yellow to change the color as well to make sure that we don't get confused with that huge giant support journal that I have. So I've got multiple touches there. Okay, I'm quite happy about that. And I come here and I follow multiple touches on the wicks and bodies, right? And I've got a touch there, I've got a touch there, I've got a touch there. I've got the same direction of the angle. So I'm pretty happy about that. Now, a lot of people are going to ask me now, what about this one? Well, I'm not worried about this one because we do know that fake outs do happen, right? I mean, sometimes the price will come down, do some grabbing, stop loss hunting, and then we'll come back again to reclaim this level. So I don't need to go crazy and put my trend line down here. It's all right. I'm fine because in my mindset, I do know that fakers do exist, right? And we are still, on that giant trend line. Previously, in the back days, I had that trend line up there like this. Again, nothing wrong with that trend line. Why is that? I've got multiple touches there, right? I've got a touch there. And let me fix that a little bit. And I've got a touch there, right? And basically we got the break of the trend line, trying to recover it, reclaim it, and then comes down. Is this trend line wrong or right? No one can tell you that it's wrong and right, in my opinion, right? You need to make sure, because trend lines, it depends your way of viewing the chart. And no one can say to you, oh, this is wrong or this is right. Use the trend lines that makes sense. Make sure that it has multiple touches, it has a direction. Yeah, it makes sense. We've got another touch there, no problem. It didn't come close as much, and then it came down, right? Touch it, break it, retest it, trying to reclaim it, came down again, and we still Android. That trend line, again, with these conditions, are still valid. So you can use a trend line that makes sense. Now, if you are confused, here I did this deliberately, right? So I used two trend lines to make that small confusion. What can you do? What can you do? I mean, okay, listen, I'm not sure if my trend line is right and wrong, because I said to you, there's nothing to do with wrong and right trend lines, right? What we can do, you can switch on some indicators for help, right? And I switch on the AMA cross. The AMA cross is an easy indicator that you can find. It's in-house, built-in. You just go there and say AMA cross on the indicators, and here it is under technicals. And you put a little star on the left, and it become under the favorites. So it's going to be on your favorites. I'm using one indicator, but the good thing about it is inside it has two values, and it's customized. You can put any values you want. I like the 50 and the 200. Right? The 50 is the fast one, the 200 is the slow one. And I use a time frame of 3 days. Right? You can change that to any settings you like. Daily, or you can go to a chart. And then chart means it will follow the chart's time frame. Now, if you want to, let's say, be specific on one time frame, like I do, like a 3 day, you just put there 3 day, and always it stays there, right? So recently, the beginning of August it was, if I recall correctly, I spoke about that in the school, on the AMAs. I did a quick live update about this, that we had the so-called golden cross, and we love golden crosses, right? Basically what it is, it's that the fast AMA goes above the slow one, and that is a very, very bullish sign. And before I go further, so let's go a little back and have a little bit of view. When was the last time, beg your pardon, when was the last time that we had another bullish sign, like another golden cross? So on the 3DMA, you can see that these crosses do not happen very often. So that means that indicator has less noise in it. And I like indicators that have less noise, right? Okay, so let's have a look and see when was the last time that we had a golden cross. And it was around that back in July 2019. Here it is. We had a golden cross, right? Let's have a little bit of observation what happened to Bitcoin on that period, right? So this is when the golden cross happened. And Bitcoin again was a little bit on a down move, right? And then finally, it dropped under the price action, dropped under the 50 MA, right? And then it was targeting, it got rejected. So that 50 MA, it was acting as a dynamically, it was acting as a dynamic support here, and now into resistance, and it pushed the price all the way down. Where to the 203-day IMA. And you see, it got rejected there. A little bit break, but it came in, reclaimed it, rejection, third time rejection, and then it pushed the price up. Target the 50 MA, retest it, and then off it goes. And then after that, it came down. Now, let's summarize that a little bit. So, okay, after the golden cross, which is a bullish sign. However, we've seen a little bit like bearish price action close to that golden cross. And the one observation that I had is that sometime afterwards, it broke the first trend line and it went to target my second trend line. And that second trend line goes all the way from the beginning of time of Bitcoin. I mean, if I put it back, it goes all the way back in 2009, right? 2010 and 11. If I zoom the scales, you're going to see that I pull that resistance into support, rejections, and when it was acting as a support and when it was acting as resistance. So I was keep on following all the rejections. To have some price action below it, again, I don't mind. Why? Because we do have the fake outs, right? It's not a problem. Anyway, back to the basics now. So I said, okay, I made two observations. After the golden cross, we had Bitcoin coming down and then breaking the two trend lines. The first one and then target the second one. So, okay, I see this. What happened after that? When it touched that second major, super support trend line, Bitcoin never looked back. So it started moving, right, and going up and up into the bull market. So it had a bull run. So what do I keep in note? I keep in note that after the golden cross, we had some down momentum for that period for that small amount. It broke a trend line and it targeted the second trend line. So it did a market shakeout. It cleared all the markets out, it confused the people out, kicked out all the high leverage people, right? And what did it did later? A bull run. It just went and went up and up and up. It never came back, right? So I said, okay, I'll take this information and let's have a look now what is going on here. Right, let me use that trend line into these levels, right? And let's have a look a little bit what's going on. Let's have a little bit new observation. Let's do this color a white now, right? So we have the golden cross. Check. We have Bitcoin going down. Check. We have price action going losing these AMAs, the 50 and the 200. Check. We lost that trend line. Check. Okay. And maybe it wants to target, right, the second trend line. I'm like, okay, now that is getting interesting now. Let's do another indicator and try to see, I mean, up to here, again, I don't feel panic because now, I took a scenario that happened before and somehow is repeating again. So I say, okay, according to the first scenario that we saw previously in history, maybe it wants to come down and do a market shakeout. And then what's going to follow? The bull run. And that's what we want, right? And I said, okay. Also, I have to remember that next year in March, we have the halving of the Bitcoin. And always after the halving or very close to the halving, we have runs. I said, okay. So far, it seems like Bitcoin is on schedule. It's like it's on to something and it's on the right direction. So far, again, because I've zoomed out and I'm using that indicator, I feel more relaxed now. I'm not panicking. I said, okay, is Bitcoin crashing? No. Why no? I'll explain to you why. I'll give you another indicator, another very favorable indicator that we use in school, right? And that is the Fibonacci. And let's put the Fibonacci on the recent bottom. That was around 15K, right? And let's pull up the Fibonacci all the way to the top. Okay, the magic of the Fibonacci. Look at that. We are bouncing on a 38, right? We do know that, when a token has a great momentum inside it, has very, very, that token is very excited and has some anxiety into it as well, and he doesn't want to retrace yet, and it's bouncing off on 38. Okay. We know that it can happen. Where there's a momentum, we see many, many times that it's bouncing on 38. No problem. However, where is my golden zone? Here's my golden zone. So, on the last move to the up, Bitcoin went up and now is breaking that trend line. No problem. And maybe he wants to do a full retracement. It paused a little bit on 38, fine, but it's not the end of the retracement, isn't it? We don't believe that the 38 is the end of the retracement. So we are targeting the golden zone. Nice. Secondly, we have a trend line on that golden zone. Remember that trend line? That support trend line that comes all the way back, in time, all the way back in 2019, right? I said, okay, so we broke the first trend line, and maybe it wants to target the second trend line. It's going to be acting as a major support. So you have that trend line, you have the golden zone, right? So again, up to here, if it comes all the way down here, right? Bitcoin comes down here and bounces off. We are still bullish. Even that comes all the way down to 21, 20, even 19K. I don't think it will come all the way down to 19. But even if it does comes down to these levels like 2021, we are still bullish. So again, all these these little tools and little tricks, it will calm you down. And say, okay, hold on a minute. You know what? I don't need to panic. So if I see Bitcoin going down, I am not bearish because it's doing a full retracement. It's natural because it moved from 15K up to close to 32K and then comes down to 20. It's a full way retracement on the Fibonacci and then it will go up. So you haven't missed a train, really. What are you going to do? You're going to wait to come as close as possible to the discount zones, right? Something like what Chris explained a little bit earlier. So we need to come down, right, as close as possible to this trend line for us to enter the trade and go up. And currently, again, you need to see this. That was my top, right? That was my low high. That was another low high, and this is another low high. So far so good, right? Can you see now that the panic it just moves away? You don't need to panic anymore. And then you may have a better understanding that Bitcoin may have a plan to go down to that gold zone, or even better, to that trend line. It's fine. Another little trick that you need to look on your left, right? A nice little trick here. Remember that we spoke before that, when price action is moving too fast on the way up, it creates gaps. What kind of gaps are we talking about? We're talking about the gaps that the exchanges or the market, so to say, it goes so fast that leaves behind unfilled orders, unexecuted orders, right? So we have a huge gap between here and there. And then we have another gap here and there. So let me mark this here, like a little drawing. So let's do an example for you to give you that understanding a little bit better. So we had the market pushing to the up, right? And this is a very sudden, a very quick move to the up, and that is a very nice momentum. No problem with that. But it left behind unfilled orders. So the market always love to grab the money from the table, right? So when they see orders have been unexecuted, the market will turn around and say, "Oh, hold on a minute, we got some money on the table. Let's go and grab it." So what they do, the market comes down and fills that gap, right? And then you can see that comes down here again into support and resistance, comes back, gets all the fills ticked now. So these orders that have been left behind are now filled. So that area now is done, no problem. However, I've got this area here waiting. So it will make sense to me if the market wants to calm down, right, and fill these orders. Again, it's going to get in closer to my golden zone. Now, I may see here on the support and resistance that happens to respect to that Fibonacci tool. I'm telling you, that Fibonacci tool is magic. It's the only leading indicator, right? It is not the lagging indicator, it's a leading indicator. So let me clear a little bit the noise here for you to make it a bit more clear. You can see that these price actions, they are bouncing off and respecting these Fibonacci levels, right? Look at that, right? Rejections, rejections there, right? So Bitcoin may come down to fill all these orders, and then it's going to bounce on the base of these rejections there, like a supportive resistance. So it most likely is going to come down here. And that is within our buy zone, golden zone, and very close our trend line. Even if he's trying to fill some of these orders, right, what's going to happen? It's going to come down, break a little bit that trend line, do a small grab, and then come back. So even if that happens, right, now I have an understanding why he did it, because he wanted to fill these orders, to grab the money from the market, from the table, right? So even that you see a small fake out to the downside and then come back and reclaim it, you are still on schedule. You're still on spot. You feel you shouldn't be feeling any fear at all anymore, right? Because now you have a plan A, that maybe Bitcoin wants to come down, do a healthy retracement, right? Fill the orders, it means grab the market. And obviously, it's going to be under the 50% zone, right? So these zones here are the discount zones. Anything below the 50. The ideally zone is the golden zone. That's why we've got the golden zone, right? Why now we expect that the price is going to bounce from the golden zone? The theory behind the Fibonacci and the golden zone is psychological. There's nothing else. The Fibonacci has no magic powers to move the price. However, what it does though, it makes every single trader the same price level to focus. What does that mean? It means that me and you and everybody, we are watching that golden zone and we are building patience within us and say, listen, I'm doing nothing. I'm going nowhere until price is going to come down into the golden zone. So I'm holding my cash now. Yeah, my stables, my cash, whatever you have. And you're going to say, this is going to be, you know, the time and the level that I'm going to be interested and I'm going to be waiting when it's going to get there. So all the traders, they're thinking the same way. We're going to wait until the retracement. We're going to wait until it goes to the golden zone. We're going to wait until it comes to 618. And that's why you see markets reacting to the Fibonacci, because this is when everybody enters a trade into the market, right? So that's the magic of the Fibonacci. So drop me down in the comments. Is this a little bit, does that help you and understand that using indicators and zoom out a little bit on the same time frame that you use in the 4 hour, you zoom out and then, panic should be out, from your system. Let's have a look on the chart here. What's going on? Good, good. Is this live? Yes, it is, James. It is live. Picasso in the house. Yeah, I'll do a lot of drawings. I do a lot of drawings here. So by now you should understand, well, have a better feeling, better understanding that if you use some indicators and some tools and zoom out version and then look to the left, right, and zoom out a little bit, then you can understand why Bitcoin or any token is acting the way it's acting. We cannot predict, all right? And I'm going to say that over and over again. We cannot predict, right? However, we're trying to see the possibilities. Which way is the highest possibility, right? So you look to the left and say, okay, this is my last high. I know that, right? I got some gaps. It got filled by here, no problem. You have another gap here, okay? So, you can see it went fast up, it went fast down, right? These little areas there, these unfilled orders, similar act the same, right? So if it's going to reach, if Bitcoin's come down and it's going to reach these levels, expect to go fast down. So when that time comes, right, remember to look left and see why it's going so fast. Don't go straight away and think that it's going to crash or it's crashing or something bad happened, right? So use the chart uh, to your benefit, right? To your advantage. Have a look at it because this is all the data that you need. That's all you need. It's not bad for you to look out for the news on Twitter, on X, on TikTok, Facebook, website, blogs, and stuff like that. It doesn't matter. You can use any of them if you want, but it's not real time. And what do I mean by that? If something happens to the market, people are going to start searching left, right, center to see why this happened. They need to find an excuse of the movement, right? So they're going to get out of the chart, looking elsewhere on the internet to find an excuse. And then when they find something that aligns with their knowledge, right? They say, that's why it dropped, or that's why it pumped. And then they come back to the chart. However, that means the real time action. So into my mindset, I don't go running left, right, center to find out why did it done or why it's moving. It's good for you to know in ahead, like the meetings. So we do expect some volatility. We've seen some yesterday, didn't we? But the real time, the real data, it's up here and use the indicators. AMA cross, right? Let's have a little bit zoom in again on the AMA crossings and let's have a look again what is going on with the price action. This is the 4 hour. We know that we lost the 50, we lost the 200, it came down, it found some support. Look at these wicks, right? It's like a support, bouncing off, right? No problem with that. Nice, lovely. It came up, trying to break again the 200. It didn't manage to reach all the way up to 50. It didn't manage, and then it came down. It came back where? To the base, right? So, okay, cool. And then we had that sudden move to the downside, right? I got very excited about that. Everybody knowed me that if you break that level that supported resistance and you come down like this, like stop loss hunting, liquidity grab, you name it. This is the liquidity pool here, right? All these people that they're trying to go long, they're trying to go up, right? Their stop losses up in sitting here. So what the market did, it went to grab the money from the table, right? So I got very excited about that. And I said to you guys as well on my AMA that if you grab that as a long from this point here, well done. Because a little trick that you can try to master, and please do that, is trying to enter into levels where everybody else put the stop losses. So you have a lot of stop losses sitting here. If you manage to have your entry here, you are in a big win. Seriously, try to master this. Try to put your entries where everybody else put the stop losses. And also, what did we see? We broke the 200 and have a little close look here what happened. It tried to come up first, got rejection, came down and pushed through. Nice. It goes all the way up, found a lot of pressure, a down pressure. It pushed the price down and it got rejected this time on the 200. So the question now is it really going up to the 50? Right? So do it like a small correction and trying to go up to 50? Maybe. You don't know. Right? Nobody knows. You take things step by step. Right? All I know now is that it bounced on the 38, right? It's under my trend line and it just broke the 200. And let's see if it's gonna support it. Let's say if it's gonna stay above it. But don't forget that it's keep on giving you, I think it's keep on printing a lower high. This is a low high, this is a low high, and so far we don't know yet, but so far this looks like a low high. Right? Can we put another trend line there? Yes, you can. Let's put a trend line from there, trying to get the average. And look what I look. I look for the, like the wick, and I got 2 touches there, right? And then it's getting close to these. No problem. Here it is. 1, 2, 3. So I got another down trend line. And maybe it's going to bounce off from these levels and then it wants to go down. Now, in the case of, let's say that Bitcoin, it's going to bounce from the 38 and it doesn't want to go down to do a full retracement yet. It's not the time. Okay, maybe that's the case. What are you going to look for? So, well, I need some evidence for the price action, right? The current price actions to convince me if I need to look for to buy. And what will that be? Well, that will be the break of the trend line, come back and retest that trend line, right? So it doesn't lose that support and then it goes up. And that will follow the break of the 50 MA. Then maybe you're going to say, okay, you know what? Maybe it has another push to the up before it comes down again to do a full retracement. Because the 38 is not a full retracement. It is a small correction, a bullish correction. Sometimes on the bull market, when we're going to get in officially on the bull market on phase 2, because we are on the phase 1, we had a small push from the 15K. So this is the 15, 15 to 32 is just the phase 1. And now it's doing a pullback, right? Which is natural. It's healthy to do the pullback, right? But things don't move really fast, right? Remember, go back and see. We were going really, really dead slow. It was very slow down here in the 15, and it was very slow when we reached, let's say, we reached around 28, and then it tried to push up to 31. It came back again down. It took how many days? From there to there, it took 98 days, 100 days, right? So 100 days is 3 months, right? Over the 3 months. So over the 3 months, it's like boring. It's doing nothing. Then a giant push, hit the 38, and then slowly, slowly again for another couple months is very, very slow. And people don't know what to do. It's boring. If Bitcoin doesn't move, the rest of the market doesn't move, right? So this is one way of seeing things and trying to stay out of panic, right? So before I move on to other charts or little tricks for you to see what is going on with Bitcoin, are you happy so far? Does that make sense? pop up in the comments there and let me see. Right? Does that make sense? Is that more clear now? Does this approach manage a little bit your, let's say, your psychology into the market? Good. Okay. Good stuff. All right. So let's move forward. Um, good stuff. Okay. Right. Okay. Let's move forward. And then let's have a look on the 4 hour, which I like the 4 hour, and let's have a little closer look what Bitcoin is doing. Right. Now, if I go to 1 hour, we get a very close look and said, okay, what is happening the past, couple hours? And let's have a look. Right now, remember, this is the big drop that it did, and it went all the way up and it's pushing. It's hitting the trend line. Maybe it's going to reject that trend line. We don't know. We're going to see. Now, every time that, let's say, Bitcoin is moving or pushing, you need to find out if it's a legit move, right? So you need to see, is it legit? Is it a push to Bitcoin? How do I can figure out? Well, you can use the dominance, right? And have a look on the dominance. What dominance is doing? Well, dominance right now is pushing up, right? Okay. What Bitcoin is doing? Bitcoin is doing the same thing. Bitcoin is pushing up, right? Okay. Let's have a look on the stables. This is the USDT stable, and I'm going to use the 4 hour, right? What do you see on the 4 hour? You see a little push to the down. So, okay, it's acting the opposite way of Bitcoin price. So Bitcoin price goes up, dominance goes up, stables go down. What kind of idea does it give you? It gives you the idea of that people, traders, right, moving the assets away from stables and then go into the crypto space. So you can see a little bit the cash flow. You can understand that you have shifting, right? So you can see the cash flow. As long that the stables go down and Bitcoin goes up like this, then you can understand that people shifting from stables and they go into Bitcoin. So they're investing into Bitcoin. They're trading Bitcoin. Now, let's have a little close into the very last actions. Lately, from Tuesday, last Tuesday, stables goes up. Let's have a look what happened Tuesday. Tuesday, we have Bitcoin going up. So Tuesday on Bitcoin is around this level. So Bitcoin goes up, right? Stables go up since Tuesday, right? And so, okay, if people going back to stables, right? Why Bitcoin's going up? And have a look at the dominance. Where's Tuesday? Tuesday, it's Saturday here, Tuesday. So even on Tuesday, dominance goes up. And you're like, okay, hold on a minute now. Since Tuesday, Bitcoin price goes up, dominance goes up. What does it mean that dominance is dominating the market? Yeah. However, stables goes up as well. So that means people putting the money back into stables. So if they do that, how come Bitcoin is getting stronger? So if people don't put money into Bitcoin and they put money into the stables, why Bitcoin is going up, right? And then this is where you bring Dixie and say, oh, look at that. And let's go back to the 4 hours. Let me reset my chart and have a look what happened since Tuesday, right? This is Monday, this is Tuesday, and this is yesterday. So What happened? Dixie was going down. What is Dixie? Dixie is the value of the dollar, right? So on our charts, we have Bitcoin, right? BTC against what? USD, right? So if USD goes down in value, right, automatically that means the other side of the pair, it will go up. It's a pair, right? One goes down, the other one will go up. If Bitcoin goes down, that is USD goes up, right? They correlate together. They cannot go on the same direction. Either they're going to be, flat, or someone is going to move up, or someone's going to move down. However, when USD goes down, that means the value of Bitcoin goes up. Right. So now Dixie gave us an indication for us to understand why Bitcoin goes up, dominance goes up, and why stables go up. Because it has nothing to do with Bitcoin. It has to do with the dollar. Right? So using these four charts like Bitcoin, Bitcoin dominance, stable dominance, and Dixie, you can see the bigger picture of where the cash flow is moving. And now you can understand that if I got that little push from that Bitcoin, right, it is not because of people trading Bitcoin. That doesn't indicate that all that move is not because of people trading Bitcoin, right? That is because of the value of the Dixie. It went down. Now it's trying to push up, and that is because of the meetings. And you can see these crazy weeks. I mean, pay a little attention to these weeks. A large week, push up, and then went all the way down, crashing to the same level. Look at that huge week. We have a week from here to there. It's crazy, right? And that has to do with the meeting, right? A lot of people will say, oh, this is manipulation. Yeah, okay, no worries. You can call it manipulation, but if we want to be a bit more serious about traders now, what traders do, right? Traders, what they're doing, they are protecting their investments, their capital. So when these meetings came out, they want to make sure that their investments and their capital, they don't lose money, right? So what are they going to do? They're going to shift to other markets. So they're going to move their capital left, right, center to make sure that at least they stay the same or a little bit above, but not below. They don't like negative numbers, right? Every time they wake up, they want to see green numbers. They don't want to see red numbers. So when these meetings came out, they are desperately looking where they can shift. Can they go to the stocks? Can they go to the forex? Can they go to the commodities? Can they go to the oil? Can they go to the gold? Can they go to the crypto space? Right? A couple months ago, we had a meeting again, and the meeting went horrible, right? Bad numbers. And everybody in the crypto space, we thought, okay, you know what? Bitcoin is going to dump now. The numbers are so bad, Bitcoin will go down. And it happened exactly the opposite. It was pushing out of the sky and was like, hold on a minute. What caused that? We're not expecting that. We're expecting the opposite. And then we found out days later, hours later, right? They tried to show us the action, but we had no news. So the people that were looking to get answers, we found out that the people left from the Dixie, from the dollar, and they went into crypto space because they found out at that time Bitcoin was stable, it was going sideways, and they felt that if they move the assets to Bitcoin, so no matter how bad the US market was at that time with the bad, the meeting giving out the bad numbers and expecting everyone to panic, they came into Bitcoin. And because the move was such big and, the asset was so big, it pushed the price up. So these boys, you can call it manipulation, but if you look deep in, you can see that the people they are trying to protect the assets. And this is like the survival instinct that we all have. Since you get into a trade, the first thing that comes up into yourself is like, I need to protect this. And that's why you get very upset that since you enter, you see a red candle, you get upset and panic. Why? Because you have that survival instinct that you need to make sure that you don't lose money. For you to battle that, what do we need? Risk management. And this is the next section that I'm going to talk about. But up to here, is that any helpful to you that you can use other charts for you to understand what's going on? Right? So you have the zoom out version. Look to the left, right? Then use the indicators. AMA is good enough, right? You have the Fibonacci tool. It give you a plan, right? That should be good enough for you to calm you down. And also, look, Bitcoin dominance, right? USDD dominance, which is the stables, one of the largest of the stables, and then you're gonna have a look on the Dixie what the dollar is doing, right? So you do come back now and say, you know what? Any push that happened lately, it is not backed up by real investments behind Bitcoin. And then it may give you a better understanding. Let me bring the chart a bit closer and zoom out a little bit. Let's make these candles a bit bigger. And then you can understand that maybe, right? That's why you can't have a high yet, because there's not volume from Bitcoin to go in, right? So they said, okay, that's why now we have a low high, because all that move, I'm not saying it's a fake move. What I'm saying is it's not backed up by real investments in crypto space. That price action here is because of the Dixie, because of the meetings, right? So if there is no backup pushing this price action, most likely what's going to happen? Most likely, we're talking about probabilities now and possibilities. Most likely it's going to come down again. And maybe he wants to come down to these levels and retest these levels. Right? We cannot predict, only make plan A and plan B. What if Bitcoin wants to go up? Let's say, I have a question like, okay, Thales is telling me, nah, we don't have a real volume going on there. And then, we zoomed out, so we didn't have a high. Is there a possibility that it's going to crack that trend line and come back and retest and go up? There is a possibility. Why is that? Because you have no way of seeing, right, when the big boys are going to move the market. Let's say, AKA, they're going to invest in spot and push the market up. There's no way for me to know. There's no agenda, yeah? No one scheduled, not the big boys. No one scheduled. Oh, you know what? Today's Thursday, right? Crypto Banter has a 24 marathon. Why don't we do a small investment and push the price action? It doesn't work that way, right? They don't do that. So most likely, if you're going to see a push to the up, is why? Because maybe they found an opportunity, right? They found a good time. The big boys said, listen, you know what? I see these as a support of resistance, right? Rejections, bouncing up as a support. And you know what? The market is boring. It means there's no resistance. No one is selling. There's no down pressure. So if I put millions into the system, right? That money, that volume will find no resistance. So it will go push the market forward without any restrictions. No resistance, no restrictions, no down movement. So my money will work up to 100% of the value to push the price up. We don't know that, right? There's no way for me to say, because the big boys, they have the assets left, right, center, right? Even let's say they have it on a cold wallet, right? They're gonna plug in the USB from the ledger, push to the market. No one saw it coming. It's not on the order books. It's nowhere, right? So you cannot predict. You always need to react whatever the chart is giving you, but make sure that you zoom out a little bit and see the whole action. That's the little trick. and do have scenarios. I'm going to do like conditions. Keep your conditions in play. When I'm going to be interested to get into a trade, for this example, right now, well, break that trend line, first condition, come down, retest that trend line, second condition, right? And move up and break that previous high. If you break that level, you can have that as a third condition. Now, if you have three conditions met, what does it mean? It means that you maximize your risk management and you're making sure that you are entering in a healthy bullish momentum. Because you probably found yourselves many times that when it's breaking the price, you get interested, you get excited, it's coming down, rejecting the trend line, retesting, and you get interested and you get in. And then you find out that it comes up again, it doesn't break the previous high, and then goes down. And what happens? You got stopped out. And you say, okay, I tried. It wasn't meant to be. Okay, it didn't go. Right? If you have a third condition and say, listen, I want you, let's go one step back. I want you to show me that you are bullish and you have momentum. That means you're going to break this level, that previous little high there. You're going to break it. And technically, what do you get? A high, a higher low, and then you get a high high, right? It's the normal way, the pattern. It goes up, comes down. It's giving you a high high and a high low, high high, high low. Now, what do you want? A high high and high low. The recess. What do you want? A high high. No problem. If I get these three conditions, one, break of the trend line. Two, retest of the trend line, respecting it and rejecting it. Don't go under it. That's the second condition. And then the third condition, that is up to you if you want to do it. But I have three conditions. I want to make sure that you break in that level. And then I'm entering because there is some steam, there is some momentum going on. And that I will minimize my stop loss targeting. The stop loss targeting me, right? So that means, I'll escape from me getting hit by my stop loss many times. That doesn't make you perfect. I mean, everyone will get hit by the stop loss. Me too, right? But I'm trying to find ways to make sure that that number of times I'm going to be getting hit, it's at minimum, right? So that is your three conditions. And the same way goes on the way down, right? On the way down, let me zoom in a little bit here. You're going to do the same thing, right? You're going to pull that emergency trend line. Remember the emergency trend line that we took in school that Sheldon old teaches? Yeah, he taught us that we can use the emergency trend line. What is this? This is a trend line that you use on the way up, right? And let's make that a yellow because it's an emergency trend line, right? Here's my emergency trend line. I even have a template for that. It's called emergency. Ba-bam, here it is. And I'm going to make it a little bit thicker so you can see it on the screen. Here you are. You can see it. I'm in the way as well, my camera there. I'll pick a button. So here's my emergency, right? If Bitcoin wants to go down and you say, okay, is this an opportunity for me to go short? Yeah, no problem. How am I going to do that? Break, first condition, retest, second condition, and break my previous level, third condition. And then that will be my entry, right? Will I be upset that I didn't catch that? No, really. No, because if it's passing that point, that means I have less, let's say, less chances that the price will come back and hit my stop loss. Because, if I enter here, where my stop loss going to be? On the previous high, right? So if we break that level, next time I will expect, so to say, if price wants to come back, it will respect this level that was got broken before. So it's too far away from my stop loss, right? And where is going to be your target? Well, your target is going to be like step by step. So I say, okay, where was the previous rejections? rejection, rejection on the way down. So that will be your TP1, that will be your TP2 or point of interest, or that will be your TP3. And don't panic to grab immediately your profits, right? You can have another option. I can take my profits and get out, so I'm relaxed. That's a good option. Nothing wrong with that. But I'm trying to teach you now here not to panic. What you can do is say, listen, I have a level here, right? My entry is there. It came down, right? Bounced a little bit, goes down, retest it, and then goes down. I have a little trick. When that area gets retested and is pushing away, that means it doesn't come up again. Then, only then, I move my stop loss into this level on TP1. And then it's targeting the second level. Okay? I'm waiting to go away, come back, retest, rejects that level, and then carries on. When it's going to be pulling away and breaking my previous levels, then I move my stop loss to there. And then when it comes to the lowest of all of them, I have no other close information. You see that level there, that level there. You say, okay, this is very strong support now. Maybe my short is towards the end. Then you can say, you know what? I'm happy. I took X amount of profit percentage. I'm getting out. Right? So always, whichever way it goes, use conditions, use your rules, use your risk management. Don't go without the stop loss. Right? We all keep on saying about that. Now, another other indicators that you can see. Let's talk about stochastic RSI. We love stochastic RSI. So let's bring up the stochastic RSI, right? This is, so let's bring up the stochastic RSI and let's close the RSI, right? Now, let's go to 3 days. Let me give you another indicator that you can use on a larger time frame, right? This is the 3-day. I like the 3-day. It has less noise from the daily, right? A lot of people using the daily because it has less noise from the 4-hour. But 3-day, guess what? It has less noise. So my indicators have less noise too. So first thing, let me check that my time frame is following my chart. It does. I'm good about this. I am on the 3-day, and stochastic RSI is in the middle, right? And for the time being, for the 3-day, we see that stochastic RSI is very bullish. Why is that? Because the fast line is going upwards, right? And also, it's the fast line is above the slow, and the slow is following on the same direction. So they have the same angles, that both pointing upwards. So, okay, on the 3-day, it's looking good. And obviously, here we are, we've got all these nice blue candles. Let's go and have a look on the weekly. Right, on the weekly now, recently, let's say around Monday the 4th, right? Or let's say, no, the cross happened, let's say Monday the 11th, we had the cross, right? So the weekly is looking very bullish. Like we had a cross under the 10 and both looking to the up. Nice. So on a weekly basis, maybe Bitcoin wants to push a little bit more. Maybe on a weekly, we're going to see that, right? On the monthly, however, we had a cross to the down. So, okay. So is that confusing you? It shouldn't. Why? Because each time frame is different calculations. Why is that? Because we do know that any indicator like stochastic RSI or RSI or DMI or any indicator you use in MACD, you name them, right? They're all lagging indicators. For them to give you a value, they need to calculate X amount of data in the history. So if I'm looking at monthly, it has to calculate, right, 15 periods behind. And how do you know that? Go into the settings and you can see the length. It says 15 periods, right? So for that stochastic RSI to give me that indication, it had to calculate 15 months behind. No problem. Should I be worried? Well, let's put stochastic RSI in the monthly into the test. When we had the cross at the very bottom, what do we have? The very bottom of the market, of the price action. When we were on the top, right, and we had a cross, what did it happen? It came down, right? So stochastic RSI is giving us, let's move my chart a little bit to the right so you can see it. Okay, away from my camera, away from that title there. So you have the stochastic RSI indicating you, yeah, remember, stochastic RSIs don't act as a triggers, right? It doesn't mean because you've seen a cross, it means you go straight into it, but it's a good indication, right? So it indicates that it's overbought and maybe it's time to go down according to the past data, right? 15 months behind. So it gave a push down, right? Now, recently we were at the bottom. What it did, that was the 15K push to the up. Now again, we have a cross, right? And maybe for the next month, maybe we're going to see the next month we're going to go down, right? And that will make sense that it wants to come down into that buy zone. And maybe by the time it comes down all the way down there, maybe, stochastic RSI will come down and reset these levels again, right? But today is the 21st of September. That stochastic RSI cross to be confirmed and finalized, it means it will not change because this indicator is still on the move. We are on the monthly, and we've got another 10 days before we finalize and seal that value. Right now, we've got a cross, right? The blue one, the first one, is under the red one, bearish. They're both looking on the down direction, bearish, but yet it is not confirmed. Wait by the end of September, right? If not, let's say by the end of September, by 1st of October, if you see that the two, let me maximize that and you can see it. Let me zoom in a little bit. If you see these two peaks turning around, let me do dots because it's going to be clear. These little dots there are fixed. They're not going to be moved. The ones that are going to be moving is these two, right? So these 2 points can move by the end of the month. If they stay as they are, right, and the last candle, it turns into red, right? Most likely it's going to go down, right? Again, possibilities, probabilities. We cannot predict the market. And this is the monthly view. Again, another nice indicator, right, to give you an overview of what's going on. Stochastic RSI. Maybe you like more the RSI. Let's bring the RSI up. This is the RSI. I like to delete the MA so I get less things, less noise. And let's have a look now on Bitcoin. Let's have a look at a small observation. Every time that RSI is at the bottom and you're turning around, we have a move to the up. Every time it's coming down, it's pushing to the up. Okay, let me put to the left so you can see it here. Right. So let's put an horizontal level inside the RSI. Can you see that level? You can. And let's find where are the majority of the lows that we had Bitcoin moving around. And that level is around 44, 45. So let's make that a round number. You can make that 44, 45, doesn't matter. Here it is. Even 44. Let's do 44. Here it is. Right? So every time that RSI is approaching 44, 45, right? is turning around. Let's have a look at zoom in version here. So every time that it touched the 44.45, right, it had a move to the up. So that was phase one of the bull market. It moved a shift, came down to some correction, a little bit sideways, and it pushed to the up, right? Let's go to the left. After that dip, it went down. It touched the 44.45, turned around. That was the bottom of the market, right? Now, what do we have? Let's go closer to more recent time. Let me go to the right so you can see it. Right, so let me zoom in a little bit. Can you all see this? I hope you can. Right, so again, we even broken the 44.45 level, and we came down here to 16 and 15k. And since then, it reclaimed that 44 and is pulling away. And what do we have? A push to the up, right? So you can use these nice, lovely indicators, stochastic RSI, RSI, pick your favorite one, and use it on the larger time frames and see what is going on. What does it show you, right? The stochastic RSI is telling you on the monthly that maybe we're going to have a small push down. That maybe means that the RSI will point down to that 44 level again. And when it's going to turn around, that will be the touch of that trend line. And maybe we're going to target firstly, right? Firstly, these levels here. And you're going to say, okay, hold on a minute. How come you have a target up there? Let's have a look. Let's bring another indicator now there. Right? So far, so good, guys. Do you like what you see? Does that give you a less anxiety attacks? Right? Does it? Or doesn't? Let me know. Right? Okay. Now, how come I came up with these, target zones over there? Right? What can it be? What can it be? Come on. Good, good, good. Let's bring the Fibonacci. But this time, I'm going to bring the Fibonacci from that very, very top up there all the way to that 15K that we have the change of the direction. Remember, Fibonacci's always go on the direction of the wave. So that was a down wave, change the direction, and this is an up wave, and still moving. We don't know yet, right? It's not finished. So I can't use that wave on the monthly, but I can use that last down wave. So the very top to the very bottom, that's the direction you're going. Where is the target? Where is the golden zone? Right? So comes down, comes up a little bit, do a small retracement. Maybe it's going to come down to that buy zone, golden zone, our recent golden zone. And then the next target will be around 48 and 53. And then we'll come down again. And guess what? Maybe it's going to touch that trend line and then go and break the previous highs. That price action is not going to happen this year, right? If we're going to be lucky, maybe by the end of this year, I would like to see, I'll be very, very excited. I would like to see to catch that level. Maybe. Otherwise, if not, price will come down here, let's say around Christmas time, New Year's. And by the time that we're going to approaching halving, maybe we're going to have a small push, maybe another retest, and then we go up. Right? So if you've seen some people talking about the 48K level or the 50K-ish level that, Bitcoin will not go straight to 100, right? It will go first to 50 and then we'll see some retracement. It does make sense because that is the golden zone. And what people are going to do, they're going to target from this buy zone to this target zone, and then you're going to see the shifting of the market. People will see this golden zone and say, it's time to shift, and they're going to go down. So, do I say it's going to happen that way? No, but there's a possibility. Why don't you have that in plan and keep it and watch it and see what's going to happen? It's we need to keep this as simple as possible, as practical as possible, and less is more in this case. Zoom out a little bit, right, and see what's going on. All these tactics and things that I'm showing you to you now, guys, is because I want you to be more relaxed on the market. Some people are not very good with futures and very short time frames, like 4 hours and 15 minutes and 1 hour. They're not good at it. They're not good at futures. They get stopped out too many times, and instead of making money, they're losing money. As Sheldon said many, many times in his lives, for you to make money, on the long run, big time, it has to be in spot, right? We use futures and leverage for us to make some money now so we can increase our spot positions. We can do that on DCA. When I enter the market, guys, I'm gonna I'm gonna say a funny story now. When I entered the market, guys, I was back here, right? I was back here. And I think it was around these areas that I entered the first time the markets. And it pushed up and I was so excited. I was like 30%. No, the first time was around 20% up. And I was like so excited. And it went down. Obviously, I was a newbie. I got panicked, right? And people keep on telling me, no, no, don't worry. It's going to go up again. And then it did turn up and went up. And I went 40% up this time. And I was like so excited. I was so thrilled, right? And I said, okay, people that told me not to panic, they were right. And then it came down again. And then I was like under under my entries. I was underwater again. I was like, oh God. People said to me, no worries, no worries, Bitcoin will go to the moon. So it did. Right? It went up to 60s. And I was like, again, good days, all smiling, new to the trades. I was trying to learn strategies I didn't come across with Banter back then. And I was looking left, right, center. I use all kind of strategies out there, fail them all. Right? And then it was going down. Right? Everyone's keep on saying, buy the dip, buy the dip. I said, okay, I didn't do that before. Let me do it this time. I bought the dip. It did what? It went down again. I was like, oh my God. I'm going, in the negative now big time because I bought the dip, right? At DCA, but the price instead of going up, it went down. People keep on saying, don't worry about it, buy the dip. It goes a little bit higher. I felt a bit better, right? I said, okay, good. What it did, it went further down. I was like, oh my God. So everybody was keep on saying buy the dip, buy the dip. I bought the dip like 3 times by now, and I just ran out of cash. I was like, guys, you know what? And it was keep going down, keep going down, keep going down. By the time it went Christmas time, recent time, it was like the bottom. It's like, right, now it's the time for me to DCA because I saved some money. I have a day job. I saved some money. It's time for me to buy in. And, you know, it was a good opportunity. But somehow I missed it because it was Christmas and we had other things to do in Christmas and you have kids at home and you need to buy presents and you do the family dinners and we got out of budget. So they said, I said, okay, this time of Christmas time I didn't have enough money for me to DCA because I went large up there, right? Anyway, so I do expect for another push to the down. And then when I get that, when and if I get that, I'll DCA my positions down here. Uh, what else? So far, so good, guys. What's the time? It's 9:30 my local time. It's very close to Carl's show. Good morning, Terry. Good morning, everyone. Great alpha. Good morning. Good morning. Great info. Good stuff. So I hope that this kind of approaches will give you less stress, push the emotions away out of your system, have, a better understanding and better look of the markets and have a better decisions from the rest of the markets out there, the traders out there. A lot of people will panic and will talk on the TikTok and Facebook and Instagram, even YouTube, and they're going to spread out the panic. You don't need to do that, right? You don't have to, right? Don't listen to them. Just go back a little bit, use the Fibonacci's, use the indicators, stochastic RSI, whichever is your favorite one. 3-day MA, here's a 3-day MA, right? Why use a 3-day? Less noise, right? Not so many triggers. But when it triggers, it's a big thing, right? So use things on the larger picture, on the larger scale, and you're gonna be doing better, much, much better. And you don't need anyone to give you FOMO or FUD. You don't need it. You don't need to listen to me. Just use the tools, you do your own TA, and you're gonna do better. Now, can you look at Soul, please? We're gonna have a look at Soul. Well, no problems. I can do that before I move away, and Carl is gonna jump on, right? Before I move to Soul, I would like to give you another. Let's say, let's bring Vet. I don't mind. Let's bring Vet up and use the 3-day in the 3-day. Right, can you see that? Yeah, a little bit small for you. Let me clear this. Let me clear this. Let me clear this. Okay. Let me do a daily. Well, can you see me? No, you can't. Okay, let's go weekly. Okay, I think that's much better. Right. Okay. Now let's use a little bit of horizontal levels. Let's do a little crosser. Let me remove all the noise. No, just leave that. That's okay. Let's find Christmas time, last Christmas time. So let's go back March, February, January, December. So this level here, let's do an horizontal level there, and let's do a vertical level so you know this is Christmas. So we know that in Bitcoin, Christmas was at the lowest on Bitcoin. That was around 15K, and then it pushed up, right? So that was the bottom. And if you look to the left, it was at the lowest point on the down move, right? On the downtrend. Look at that. It came all the way down from there, and that was back in time. In Christmas, that was the lowest point. No problem. After that, Bitcoin moved to the up. So it went, it moved, it followed Bitcoin. No problem. And then Bitcoin consolidated a little bit, right? It did a small move down, small move up, a little bit boring. Why? What do we see here? We see around June, the beginning of summer for us here in the northern hemisphere, right? In June, we found out that red, right, went even lower from Christmas. So that was a nice opportunity for you to buy again. Not in Bitcoin. Bitcoin never returned back to 15K. That was Christmas, right? That was Christmas. And where's June? June is here. And that is June. So when Bitcoin went up to 25, that is 10K up, right? That came even lower when Bitcoin was 15. So if you didn't have the opportunity inside Bitcoin, have a look on other altcoins. Maybe you have a better opportunity like that. That gave you another great opportunity for you to re-enter again, right? Bitcoin went even further up, or let's say retest on the same level again, right? 25-ish, that was the bottom there, right? Recent bottom, 25-ish, right? And we can see, okay, in 5 minutes we got Cal. That's good, no problem, no worries. Let me try and share my screen share for 5 minutes. Okay, somehow it doesn't come up. It's on standby. Okay, one of the admins needs to push up the screen. But just for me to close anyway, I gave you. Oh, thanks. Here it is. So all I want to say is that if you think that you missed the bus, the train, the boat from Bitcoin, go have a look on other coins. You may have other opportunities. Even VET gave a third lower opportunity. So you haven't missed the bus, right? And if you entered here, fine. DCA here, right? Buy some more. If you didn't enter, you know, you are very close again to the bottom. And if Bitcoin wants to come down to these levels, that buy zone, do expect to VET to come even further lower and lower. Anyway, look at this. You know, VET is still on the downtrend, right? So don't panic. Look on all the charts and find opportunities elsewhere. And you can use that little VET to give you some money on the move up. And when it breaks that trend line and decides to go up, I mean, this is like triple bottom, right? This is like giving you a new solid support now. Trying to enter as close as possible to that support and go up and, enjoy the profits. And once you get these profits, get the profits and go back to spot and invest and DCA. If you haven't, let's say you don't have all the entries, just DCA in. Now, let me finalize now, guys. It's very, very easy, right? Let me stop my screen. Let me stop sharing. Okay. So let's talk about like the final thought, right? Zoom out a little bit, right? Zoom out a little bit on the 4 hour, on the daily, right? Weekly, monthly. Use all the charts available out there. Use the indicators. Observe. Go back and study a little bit the history, like backtesting. Do a backtesting of that indicator. What was the bottom? Where was the bottom? What Bitcoin did when that indicator was at the bottom? Use them. See them as your friend, right? Don't go crazy on them, but use them in the best way for your benefit. Uh, don't listen to anyone. It's like one of the rules. Don't listen to external noise, external factors. Try to minimize that, right? Um, it's trying to keep the noise away and don't let anyone else change your TA. Do your own TA and do what not about comfortable, what makes sense to you. If it makes sense that you pull that trend line there and you have price action is respecting, fine, go with it. Don't go crazy. Other people will say, oh, you need to go week to week. Other people will say, we go body to body. Other people, I do parallel channels on the trend lines and I use the channel as a buffer. And I said, when price action is inside my buffer zone, inside the parallel, I don't panic. I don't do anything about it. I'm just watching below that parallel channel or above that parallel channel. So I keep that noise away from my system. I don't need to panic anymore. Um, Rules, keep them, right? Stick to the rules because, the number one indicator to show you your progress is your journal. That is your number one indicator, and it's gonna be a little bit lagging indicator because you need to feel all the past trades that you took, good ones, bad ones. It doesn't matter, right? The journal will not, let's say, judge you. Oh, you had X amount of reds or X amount of greens. It's there for you to help and see, okay, where is my strong point and where is my weak point? And let me fix my weak point. Let me fix my mistakes. So every 5 trades or every 10 trades, stop, pause a little bit, and do a small assessment. It's okay. Let's see what how I've done. Maybe you are going to be in profit like 10%, maybe, right? But you have a lot of losses. And then you need to, evaluate why you had these kind of losses. What was it, right? And readjust that. So your number one indicator for your own trading journey into this market is your journal. Keep them, use them, right? Is your number one indicator. Second, don't listen to other people. Just do your own TA and improve on your own things. Study, study, study on your own, right? Third, external noise. Remove. Don't jump into trades that don't make sense. Don't jump into a trade because somebody else said it, because Thales said it. I'm nobody. I'm just one little drop in the ocean. I'm nobody. Seriously, I'm nobody. I'm here to help you. I'll do my best. But hey, I don't have the crystal ball, right? And if I do have the crystal ball, the batteries don't work, right? So do your NTA, study, improve yourself, bring the questions into the Discord. Come to the Discord and say, "Hey, I've got a question. I don't know what's going on. I'm doing something wrong. Let us help you out, right?" Um, understand the indicators that you're using, right? Don't jump into any indicator trigger, so to say. The indicators are there for you to show you and help you, but don't use one indicator just to jump into a trade, right? And tonight, I'm going to show other indicators as well. We are not done with the indicators. There are 2, 3 more indicators that you can use on a larger time frame, right? Exactly. And that's a very good, nice note there. Guys, the for you to win this trade and become professional, or at least make money out of it, right? Doesn't mean that you all have to be professionals and do this for life, but you can make some investments and have better returns in the future. It's good enough. Um, the number one, let's say, tool, the largest tool that you have under the table, in your drawer, is your risk management. It's not the strategy. It's the risk management is the one that's going to make you profitable, and you're going to win, a lot of stuff out there. So why is that? Risk management is stop loss. Risk management is I have the rules. Risk management is I have the journal. Risk management is I have, let's say, the plan of my trading. So when I plan my trade and I do the TA and I say this is my levels, this is the point of interest, this is my entry, this is my stop loss, this is my TPs, right? It's under the risk management umbrella, all right? And this is how you're going to become better and better and better. Risk management is the one that's going to make you profitable over time, right? Look at yourself every 10 trades. Am I doing better? Okay, if I'm doing better, it means I'm doing something good. Now I need to tweak it, improve it. Don't change it, improve it, right? Little bits. Um, the strategy, you only need one strategy. Seriously, I've tried many strategies out there. You only need one strategy. Use the one that is the most simplest and the easiest. That is what we do in the sniper team in school. It's very basic, I know. It doesn't have a lot of technical names, right? We don't use thousands of indicators and lines and stuff like that. All you need is horizontal support and resistance, a trend line, stochastic RSI, and Fibonacci, and patience for you to wait to get the conditions in play. Have the conditions in play. The strategy is going to help you to create a routine and for you to become patient and wait. Wait for the right moment. I'm going to use the example with a bus. There's no point you running on the street to catch a bus while it's moving. You need to be on a bus stop, and the bus will stop on the bus stop and you're going to get on. So you need to be on the right place on the right time when the bus is going to arrive. There's no point you chasing the bus. You're not going to get in. Seriously. Right? And even if you're in London and that the back end of the buses are open, if you're trying to run, you have high possibilities to fall. Right? So don't chase and move. Be there on the right time. That's what all you need. And also remember, on the same bus stop, the same bus route will come again and again and again. If you miss one trade, don't worry, don't panic, don't FOMO in. Just wait for the next bus to come. It will come. The markets are not going to finish. Okay, a few seconds more. So guys, much love out there to you all. All right, nice being here and seeing all these charts. Right, and enjoy Kyle and the OGs later. Follow the schedule. We're gonna be here all day for you, 24 hours. I'm gonna come back later on tonight and give more alpha, the same alpha, a little bit quicker, and then more indicators as well on the way, because we've got plenty things, for us to see, back up a little bit, and keep ourselves a little bit calm, right? So stay calm, guys. Don't panic, right? Stay in control, right? And do what feels right into your heart. Listen, no one. Remove the noise. Grab as much information you can. Backtest it. Try it, and you're gonna do fabulous. If you have any questions, we've got plenty mentors out there on Discord. We've got plenty and beautiful, good, mods out there. They're gonna help you on the spot straight away, right? The mods are very quick. We've got so many mods out there. They're all very quick out there for you. Don't be shy. We do. I do like 3 times a week. I do AMAs in the morning. If it's you know um, in your time zone, if it's convenient for you, come up and say hi. Come up stage. It's not only me talking, right, guys? We need to be together. We need to have a dialogue. We need to communicate together. Yeah. This is how I work. We need to be together. So come up there, say hi, bring up your question. There is no silly, stupid, dumb, what you call it, questions. They're not, right? All are very great questions. And maybe one of your questions will help somebody else that had the same question, but he never came up and expressed it. So do come up with questions and I'll do my best, right? So guys, much love out there. Carl is about to come up, right? He's due now. So much love out there. Be careful. Don't panic. Let the emotions out of your system. And we all gonna do better and we all gonna have better days, right? Don't panic. Either way, whichever Bitcoin goes out there, don't panic. You have plan A, you have plan B. You have a plan when it goes down and you have a plan when it goes up. And you're not gonna miss it. Seriously, right? Good stuff. Much love out there. Um, and relax. Don't let things panic you.
The Fed
See you
have given
later.
a hidden clue as to what to expect next for Bitcoin price action. So on today's show, we're going to identify the next major levels to focus on, as well as what you can expect to happen in the medium to long time frame, given the newest interest rate hike and the next expectations. So without further ado, let's get straight into the show. And on today's show, we'll be covering a high volume node target that we have on Bitcoin. We'll also be covering what's going on with the altcoin market and whether Ethereum could potentially be in a death spiral. So make sure you stay tuned until the very end. Smash the like button, hit the bell notification, and make sure you definitely subscribe to the channel. So let's get straight into it. Looking at the Banter bubbles chart over here, let's see, is there anything of interest going on the hourly time frame? Most of the coins continue to still pull back. This is, of course, obviously the market just digesting everything from yesterday's FOMC meeting. So let's have a look at some historical data, seasonality, and then establish where we may be going in the future. This is based on September results. So if you look at Satoshi Stacker, he says the last 2 times that Bitcoin had a green September, the following 3 months were also bullish. But the question is, will this September end green? Because we still have a couple of days left. I think we have, 10 days left of September. Make sure you vote. There is a poll in the comment section below. Make sure you vote. Will September close green, yes or no? Currently, the polls are running at 54% of you say yes, and 45% say no. No, we're not. So I think what we need to look at, though, is not what the September's at now, but what happened in the pre-halving cycles, right? Because that's what we are now in, the pre-halving cycle for September. So if we move on to this one over here and we say, well, the first halving cycle was in 2012, right? So let's go back to that chart over there, 2012.
and you can go to 2011. Okay, we don't even have data to 2011, so we can't compare that September. Let's go to the next one. Is going to be 2016, so we can look at 2015 September. What happened in 2015 September? We were in this one, right? Green September by 2.35%. That led into follow through in October, November, and December with completely green months as well. And then the next one that we had was 2020, so we can look to 2019 as the pre-halving date, and we closed that at negative 13.9, but October still came out green at 10.17%, right? So that is something to take note of. If you look at the halving cycles on this chart as well, though, you can see typically price does rally through those halving cycles, and it is onwards and upwards. The big question is, are we going to have a pre-halving dump? That is the question. If you look at Benjamin Cowen, we know he believes that we are going to have a pre-halving dump. And he says in 2019, after the first 20 days of September, Bitcoin was up 6%, which is pretty similar to what we're at right now. And then he says, but by the end of the month, BTC was down almost 14% from its monthly open, which means that the next couple of days are very, very important to keep your finger on the pulse of the market. Although it obviously is designed to wear you down, tire you out, you need to stay hyper-focused within the market because high volatility could come in and the trap could be set over the coming days. So he says BTC was then down almost 14% from the monthly open, and we can look at what that would look like, right? So if we look at the actual price chart and we took it from the monthly open and we said that based on seasonality, the same thing happens. Let's assume for our first target, where would that take us? Well, that is 10.54%. That would be the $23,300-ish level. You can see it's a strong horizontal level of support. And then if you went the full 15%, well, then you're looking at about just below $22,000. So that's on the monthly chart. That's what we'd be looking at. Looking at our monthly chart over here, though, we have our EMAs, or our MAs at least. That's going to be the 7 in white, the 20 in yellow, and then the pink 50 MA. Price is trying to get above that. That is a cluster of resistance which needs to be cleared. And I would say that ultimately that's a very, very easy level of invalidation if you are bearish. If you are able to get and hold above these levels, specifically above last month's high and close there, well, then you can say that probably the seasonality case is not going to play out and Bitcoin will probably continue on higher. The alternative is a rejection from these MAs and closing back below the 50. Well, that would suggest probably continuation further down. And then you can look for a macro higher low to form in relation to this area. So something like this, that is your first high low. You'd be looking for your next macro higher low to form somewhere around that region. Because the stochastic RSI is starting to turn over on the monthly time frame. The RSI, though, is still trending up with its moving average supporting that. And then you have the histogram, which is also picking back up a little bit higher. So interesting spot for the monthly close coming up in a couple of days. I thought, let me bring it to your attention now rather than on the actual day of the monthly close. This way, you can bring it up on your chart and monitor the exact levels to be watching. If you look also based on seasonality and how Bitcoin is currently performing compared to other cycles, this is based on the assumption that 15,500 was in fact the low. If you make that assumption, because the x-axis is the time since November bear market bottoms, right, on a 3-day time frame. So assuming that the 15.5 was the bottom, then you can look, this is kind of where we're at, right? Based on seasonality, you expect sideways and slowly upwards for price to continue to grind and later on lead into the halving cycle and then the bull run. This big anomaly over here was COVID in the gray, whereby price went down a lot further. So very, very interesting. History doesn't always repeat, but it definitely does rhyme. Okay, let's look at the Fed funds rate as well as what's predicted for the next meeting. Currently, you can see 33.5% probability that there will be another interest rate hike. That will be coming up on the 1st of November. So watch that for the 1st of November. And they did release the dot plot, right? The dot plot shows essentially where the different Fed members vote, where they think the Fed funds rate should be in the future. So based on that vote, this is the conclusion. We'll give you the summary over here. The Fed kept rates unchanged at 5.5% in what is considered a hawkish pause. So they paused, but kind of hawkish because they're probably going to raise again. It's just currently a pause to see how the market digests that pause. The Fed's statement repeated that growth is solid and inflation does remain elevated. And we know that getting inflation to 2% is their utmost and utter goal that they have for the future. Number 3, the dot plot shows 12 members of the FOMC still believe that they will raise rates by another 25 basis points this year. That is the majority vote. So out of all the Fed funds members, that is a majority vote. And then here you have the instant market reaction. The dollar rallied off of that, bond yield spiked, the stock market dropped. I will be giving you those stock market levels because coming into a key level of support in less than, I think, 2% away. And he says key takeaways. The Fed's statement sounded very hawkish, and a November rate hike is on the table as the Fed sees stronger growth and high inflation ahead. I'm sure you don't care that much about all of these macroeconomic things. You just care about what does that mean for Bitcoin. All that we can say for Bitcoin is we need to take it day by day, week by week. But currently, it still looks like we're in that transitionary market, transitioning from a long-term bear market into the beginning phases of a bull market, also known as a kangaroo market, right? Which involves a wide range where price action just bears out and ultimately slowly but surely grinds up towards the upside, which means that holding Bitcoin long-term as an investor is probably your best bet, and still not having too much exposure to altcoins will probably be healthier for your portfolio. We said if you bearish, short altcoins; if you bullish, long Bitcoin. That's kind of the play that we've been sticking with over here. So looking at the futures fund rates and the predictions for October, you can see it looks like higher for longer, predicting at 5.3. That's going to be in October of 2023, 24, 4.9, 25, 4.1. So very, very long before inflation comes fully under control. This is super, super sticky. And this is what typically happens when you print that much money, right? Stock market, here we have it coming into a key level of support. We have the mid-range, the range high, and the range low supported by the diagonal trend line over here. So looking for a little bit of a reaction coming into the diagonal trend line, holding the range lows over here and possibly creating yet another higher low. Where is this invalidated? We always have to have an invalidation and ask ourselves, well, where are you completely wrong on this trade idea? You're completely wrong if it starts to break below the prior high lows that we had at 43, 48 and close there. You start to see closes over there. Well, ultimately, then you're rejecting from a key level of resistance and it will start to look like a sign of distribution, right? Think of always, is the market accumulating or distributing? So you can see over here, this was distribution and it led down. That would then start to look like distribution, and then we would start to have to look for lower price targets. Maybe the first level is going to be around here at this 41.83, and then we can reevaluate to the next level at about 3,900 on the S&P 500. But for the time being, the trend is your friend until the end of the trend, and the trend is still pushing up, right? The trend is still pushing up, looking for those higher lows to stay intact. The DXY, look at that candle right now as of today, starting to open towards the downside. Our key yearly high was the main target that we're looking for weakness once it gets into this area. Could you argue that it's already getting weakness into that area? Well, if you move the little circle up, it is a possibility. It's not enough to call for a breakdown on the dollar yet, but the expectation is somewhere soon within this region. Following 3 months of up only, we expect that the dollar should show some signs of weakness, and that would correlate into both the stock market finding a higher low over here and then possibly Bitcoin continuing its upward momentum that it's recently just found. Okay, the oil as well, we're looking for weakness around 93.80. You can see the pullback is taking place. We now have our fib levels in place. And if this is going to continue a bullish trend, expect a bounce around the 0.382, which is going to be 86.9. 86.9. Anywhere around here, if it does start to find support, that will continue on upwards. Generally speaking, if oil continues to rise higher and higher, it adds additional stress to markets globally because it shows that inflation is getting out of control. And that is obviously what makes the Fed trigger happy to continue to rise those interest rates towards the upside. So key levels for Bitcoin, we have it very, very obviously highlighted in the pink box zone over here. There are some interesting changes which are taking place on the low time frames, most notably the 4-hour and the hourly time frame. I'll bring that up. If these can tie in really well with the high time frames and key pivot levels can be maintained, and Bitcoin can take out some higher zones on the low time frame, well, ultimately that would give this candle over here a chance to break and hold above the 21 exponential, which is the yellow line, as well as the 200 MA, which is the orange line. It's the pink box zone, right? That means you can challenge the previous high that we set over here, which is where a lot of stops are placed, and closing above this level, above 28,100, would start to look really good for the bulls. It's too soon to sell. We need to be hyper focused. Remember what I just showed you on the monthly time frame in September and seasonality. Usually the first 20 days are up, and then the last 10 days results in a major sell-off. So if you start to see a rejection from this level yet again, then it will be proving that this back test into this level is holding as resistance. You're confirming this is a resistance level, and then you have to ask yourself, well, will our major support, which is the previous quarterly low and current yearly mid-level, hold? That's the yellow zone. If it doesn't hold, well, ultimately we know where to look. 23.5, and then ultimately just below 21,000. So the chop continues. The chop continues within the zone. I'm giving marginally slight edge towards the bulls over here, ever so slightly, which seems to be what the comments agree with, right? If we look at the results I'm looking at now, will September close green? We have 53% of you yes, 47% no. It shows that the bulls have that ever so slight edge, and I would give it at that, about 55% edge to the bulls and about 45 to 47% edge to the bears, which creates this majorly choppy market. So moving on, we know we had the death cross right between the 50 and the 200. We understand this is a lagging indicator. We all know that. So you don't need to spam the comments about that. But if you understand how to use these MAs and EMAs, they can be incredibly powerful tools. And how did we use this? Well, we called all the way since the bottom over here. We said the false breakdown. Once that candle started to move back towards the upside on the daily, we confirmed the false breakdown, and we said the expectation will be a rally directly into that death cross. So although a lagging indicator, this gave us an opportunity to trade a almost 10% move on Bitcoin, which is pretty solid without even using leverage. That's a pretty good return. Now the question is, are we going to break and hold above this level? Well, the levels are clear, right? It lines up with what we're showing on the monthly time frame to clear those high time frame MAs, the 7, the 20, and the 50 MA on the high time frame, as well as getting above the weekly 21 EMA and the weekly 200 MA. If you get above that, you will also be clearing this daily cluster. So all time frames agree that the cluster of resistance is here between 27 and about 28,100. That is the war zone where bulls and bears will be looking to, bulls will be looking to mount an attack and get through that level, and bears will be looking to heavily defend this level. So very, very interesting zone we need to pay attention to over the course of this month. If you reclaim those key levels and get above 28,100, the stochastic RSI will have a lot of upside pressure. Now, we know historically, even in a bear market, even if they relief rallies, these produce pretty hefty results. Looking at this over here, this is coming off of, let's actually zoom out and we can look at the first major cross that we had towards the upside, led to a 46% move. This is already when the bear market has begun. The next one led to a 43% bounce, pretty substantial. This is, again, as a reminder, in the middle of a bear market. Then you got a 63% move again. Once the lows were set based off of the FTX collapse over here and the forced liquidation, 63% move. The next one resulted in 28% move. The point is, they are pretty substantial returns, which is one of the reasons I give ever so slight edge to the bulls. If the bulls can reclaim 28,100, this will allow for this momentum to move up aggressively. And I'll take my first profits over here coming into the range highs. Why? Well, it's pretty simple, right? Markets range much more than markets trend. So if markets range more than they trend, well, then you expect that this range will probably continue to hold, meaning the probability is much, much higher that when price comes into this level, it probably will involve some profit taking, and maybe it will find another high low in the mid level, and then later on, it can fulfill that entire move up to that $36,000 target. This is based on the historical results of the stochastic RSI, which gives on average about a 45% upside move. So we'll be watching that very carefully. Lining this up with what's going on with the miners, we know miners have a high impact on what happens with the market, right? And the profitability of the miners. So if you look over here, The Bitcoin difficulty has just hit an all-time high. Another 5% positive adjustment has taken place. And there's always been that debate of what follows. Is it hash rate or price, or does price go up and then hash rate follows? It's a chicken and egg approach, right? So he says we're in the midst of a bear market, and the hash rate is also at an all-time high, similar setup to the previous bear market back in 2019. This is typical of what you see in the pre-halving event. Right before the halving cycle takes place, the hash rate will start to go parabolic, and then usually price starts to follow that, and at a later stage break out, which is what we have over here on the hash ribbons indicator. This is why we had the buy signal. Remember, the capitulation shows that miners are suffering immense losses, and it's not really profitable for them to mine Bitcoin. Therefore, they have to force sell Bitcoin, and that leads to a capitulation event, which usually sets in major lows within the market, and then they become profitable again. It becomes worthwhile for them to mine Bitcoin, and price goes up. Lining that up with the MVRVZ score, this shows how many standard deviations the market value differs from the realized value of the market, and it shows ultimately you're in the lowest standard deviations when you're in the green. That is where market bottoms take place. When you get into the upper end over here towards the red, well, this is ultimately where market tops take place. So when zooming out, you can see using the MVRVZ score, all the major market bottoms over here, you lead into the pre-halving cycle, and it obviously rallies up into the red. Look for signs of distribution on price. Look for this to come into the red zone, and that is where you want to start selling. So you want to buy support, sell resistance, right? Using this as a proxy, it's pretty simple. You can see you are on the lower end. So from a high time frame perspective, the mid-range over here continues to hold on the 3-day chart. Here we have our mid-range level clear above this zone over here, and it now becomes a real possibility that we can make our way up towards the top side of this range, which were clear pivot levels from before. So that's what we're watching over there on the 3-day time frame. Now, how does that line up using the high volume node with Bitcoin on the daily time frame? Here it is. You can see price obviously came down into this level just below mid-range. We had the false breakdown, got back above the mid-range, and that was the long opportunity. The pivot level has been raised each and every day. Currently, our pivot level is at 26,678, and we just want to see these shorts get stopped out here. There's been a lot of short buildups ever since there. They would be trailing their stop loss, right? So stops moving their stop loss down, or excuse me, shorts moving their stop loss down each step of the way. If we get above that, we'll target the next high volume level, which comes up to the range quarterly. It lines up exactly with the range quarterly. So if you go from mid-range to range high and you measure out the midpoint of that, the number you get is a tick below 29,000. It's $28,999, and that lines up with that high volume area. Price tends to gravitate back towards those high volume nodes, which are also stacked with liquidity. So upside targets would look like something around there. Downside targets would be back towards the lower side volume node, which is coming in over here at 25,900. And that could be an opportunity to look for longs once again back to this level. So that is the daily. Lining that up with the 4-hour time frame, you can see stochastic RSI momentum is going to start to pick back towards the upside. And then what I really like to see over here, you guys know it, price is holding above the 21 EMA, which is also above now the red 50 EMA, which is crossing above the blue 200 EMA. And that is a golden cross, right? A golden cross on the 4-hour time frame. Watch these levels carefully. We'll wait for the cross to take place. Now, crosses work in different ways. It depends on how price is trading, right? So let's assume that the cross happened over here, but price is trading much, much higher, somewhere around there. Well, then you can expect a very strong pullback into that cross to backtest it as support. But in this instance, that is not the case, right? This is one of those examples that, if I'm not mistaken, we'll go back to look at it now. When we set the lows around December, I think the cross happened like this. A lot more gradual, a lot more steady, a lot more controlled. Price kind of moving sideways and slightly up. And you can see what followed suit. So let's go back to those levels. We'll move all the way back to December. Where is that going to be? Oh, guys, this is going to take a while, but let's see. Let's quickly pull it up. Shouldn't be too long. Here we are. Perfect. So it's looking very similar to this, right? Look at what happened over here. You can see price grinding up. Here, the cross takes place. Price is trading slightly above. In this instance, you can see no pullbacks into that cross. zooming in more to give you a bit more of an idea. There you go. Look at how high price is trading above that level. Let's go and measure it out. Percentage-wise, price traded, well, this would have created the cross. Price traded about 2.8% above. And then the lowest that it came towards the cross was 1.2. So again, comparing 2.8 and 1.2. Let's go back. 2.8 and 1.2. Okay, let's see over here. Using the cross, similar, right? 2.96. Price led up here to 2.96 to create that cross. And now it's come back even closer, 0.33%. So in this instance, I don't necessarily think that it's going to backtest hard into that. There is a real possibility that price just holds above this 21 exponential, the yellow moving average, and continues to just kind of grind onwards and upwards. In order to understand what's going on here, you really need to line it up with your range levels. And here are the range levels, keeping it super, super basic and simple. The main range that we're focusing on over here is 26,500 is going to be the mid-range. Anything that comes back into that, you're looking for it to hold the support. We had high, low 1, high, low 2. If you remember, I did the last show on Tuesday and, this was on Monday. We did this on Monday. We went actually long from this level back towards the top side. We got a nice little move up, didn't reach the final TP, but it's the same principle. Anything that comes back into this 26.5, looking forward to hold that, looking for long opportunities, and then potentially a move back towards 27,600. That is the hourly time frame. Okay, so currently, though, this is unfortunately not yet supported by spot buyers. Spot buyers continue to sell off over here, and you can see the leverage is kind of just moving sideways. So choppy environment over here. Open interest picked up ever so slightly, but nothing too noteworthy. We need to see spot buyers come into the market. Once they come in, then it supports a strong fundamental basis that price will continue to move up. Liquidation levels, top side 27.5, that lines up with our range high on the hourly time frame, and then coming in at 26,150 on the downside. Okay, you can see not many bids over here. Look at this, very, very low. One of the lowest that I've actually seen for Bitcoin, 295 million. Am I sure I'm on Bitcoin? I am. Very, very low over there. So short to longs, pretty even. 458 shorts, 401 longs. That's that. Okay. Let's look at some altcoins and a couple of other things. Cardano has picked up massively over here. 15% increase in open interest. Let's see what is going on with Cardano. What is going on with Cardano? Which chart do we have here for Cardano? Is it down here? Let's just quickly see. Here we go. Let's use this one. Cardano, what's going on with Cardano? Also, a very quick reminder, BNB, we're still running the short, right? BNB short remains. We're not changing this. The short, we're holding it into the final TP or until it gets stopped out. It's as simple as that. Your first warning sign of getting stopped out is if BNB gets above this level. And soon, if this continues down, we'll be able to move the level down. So we'll be able to take our pink box and probably put it there. It's too soon to do that. So now final invalidation is over here. If you are getting scared out of your position, you need to get above that zone. Okay, Cardano, what's going on Cardano? It's coming into the range low. It also does have mid-level support from this downsloping channel. So maybe there's a possibility that you'll see a little bit of a bounce on Cardano from these levels if the open interest is picked up so heavily. Remember, we want to buy support and sell resistance. And technically, for all intents and purposes, this is support. It's the 50% level of this wick. Although we've spent a lot of time here, which I don't like to see, at the end of the day, this is horizontal support, and it is supported by mid-level support if it does sweep a bit lower, right? If it does sweep a bit lower and you see something like this, Cardano coming into this level, back above, swing failure pattern, holds back that zone. Well, then that's your long opportunity. Stop goes below, and then you're looking to long back towards the next level. So that is Cardano. Let me know in the comments, do you know if there is something going on with Cardano? I don't know. I don't know why the open interest is up so high. Okay, also just in, Ethereum has now dropped below 0.6 BTC, the ratio, for the very first time in 433 days. So it is a very, very brutal bear market out there for altcoins. And I know most people hold a substantial amount of altcoins. And I think that's one of the reasons why the interest has dropped so heavily in the market. People are absolutely wrecked. Unfortunately, this is something that happens every cycle. when it comes to altcoins, because we seek more risk, right? We seek the higher beta plays, and typically those go down the hardest. And this is exactly what's happening. So just continuing to bleed towards the downside. But we outlined this as a target for a very, very long period of time. We've now rejected from the mid-range. I think the first time we started to bring this up and really start to short the market was based off of this candle over here on the 10th of March. And this is the ETH BTC ratio. We're holding this pink box as a tight little range, caught between the 0.25 level and the mid-range of this broader range. So what do we say? We said range lows or support, we buy, right? And range highs or resistance, we sell. Now, this is a range that's held since the 21st, the 6th of May, 2021. So almost a 2-year range over here, very, very long time frame range. Now, you have to be careful when it comes into this level, into the range low at 0.0557. You don't want to just blindly bid this level. And there's a reason why. I'll show you why now. So you don't want to just blindly bid this. You want to see price prove that Ethereum is holding this as support and moving up. Because if it doesn't, let's see, do we have the dominance chart here? Here's a good analogy for you. If it doesn't, the dominance here is almost the inverse of the ETH BTC chart. What do I mean by that? Let's quickly clear up this volume. We don't need that. Okay. Same as, look at the relationship between this dominance chart and the ETH BTC, okay? A long-term range, right? When did this range begin? Look at that, May 2021, just like the ETH BTC range, right? So we held this range, but what's happened over here? Dominance is already giving you a clue. Dominance started to break out of the top side of the range. It's back tested that level of support. And if it breaks above this 200-week moving average, well, now dominance is really going to get going. Let's go back to ETH BTC. What does that mean for ETH BTC? Well, the inverse would happen, right? If this is the range, when did it start? May of 2021, exactly the same. Let's quickly go into our highlighter to give you the same type of drawings. So it held that range. If it breaks out of that range, back test that as support, you could have a lot of trouble. You could have full distribution. So if Bitcoin dominance goes up over here and starts to break out like that, you expect that ETH BTC is probably going to break down over here, which means you don't want to blindly bid this area. That's all I'm saying. What you want to do is you want to be careful. You want to watch for signs of strength over here. Now, what would a sign of strength look like? Something like this, right? Big sweep down, create the higher low, break back into the range, hold, and boom, rips. Absolutely rips straight to the upside. You want to see something similar. Break down, get back inside, hold that level, deviation, long to mid-range, long to range high, take your profits, have a fun day, enjoy your money, and that's it. And then we look for the next one. I hope that makes sense. And bear in mind, ETH BTC is going to be a proxy for the rest of the market. So if Bitcoin dominance does break through those levels and start to rip, unfortunately, altcoins are going to suffer heavily. And we know there's already a lot of pain out there, but things can technically get worse. So this is why I'm so focused on this Bitcoin dominance chart. I want to really, really nail this. And at the moment, is there a possibility that this could happen? Highs, lower high, rejection over here, break back into the range, go down, in which case you expect ETH BTC to find support on those range lows and rally up. I'm open to that. I'm watching in case something like that happens. But for the time being, I have to give the Bitcoin dominance bulls the advantage because this is a very high time frame range that was broken out of. We've now back tested as support. We held higher low. Easy for me. Invalidation is below here as a bull. If dominance starts to get and hold below here, then cool. Time to start to move some of my BTC into ETH and look for the other side of the trade. But at the moment, it looks to me like this is going to happen. Once we get above this white line over here and consolidate, the probability increases that you're going to break that 200-week moving average. You get above this zone over here, hold here, consolidate above 52%, and this thing is going to go up. Then there's trouble. Then there's big trouble for altcoins over there. Whether it's a rising, remember, a rising tide lifts all ships. So if Bitcoin is the tide and moves up, of course, the altcoins are still going to be green, guys. You're going to be happy. It's going to be going up. It's going to look great, but it's going to be still losing against BTC. 99% of the altcoins will not outperform BTC when Bitcoin dominance is rallying. So I hope I made that super clear. But let's look at a little bit of a more optimistic look on some of the altcoins based on Emperor Osmo. I always like to take the other end of the coin and also analyze from their perspective. So he says, are we finally witnessing the market bottom that we've all been anxiously awaiting? While Bitcoin and Ethereum have risen 61% and 34% respectively, altcoins in the DeFi ecosystem have taken a hit. Here are some key observations. Stablecoin liquidity, which is on the bottom over here. Here's stablecoin liquidity trending down, but could be finding a base over there, right? It could be finding a base. So he says the stablecoin liquidity year to date has seen a significant drop of approximately $15 billion, and that accounts for nearly half of DeFi's total valuation. Bitcoin is up 6% for the month with its dominance sitting at 49. We covered that now a lot on the dominance. You know what to expect. When comparing blue chip altcoins to BTC over the past month, heavy losses can be observed across the board. You can see if you look at some of these dexes down heavily. However, it seems that these losses are starting to level off, indicating diminishing on the market's volatility. Temperament is shifting. Andrew Kang, quite a big trader, calling for reversal. Mark Cuban, he got wrecked. Usually the big guys get wrecked. Sometimes the market turns. Most narratives are exhausted, allowing fundamentals to rise once again, with a regulatory environment finally starting to shift in our favor and the frothy valuations having largely disappeared. The market seems poised for a return based on solid fundamentals. So watch for this base to form. I think you can get this stuff on DeFi Llama if you want the stablecoin market cap. It's probably this is from Artemis. It shows over here in the middle on the water stamp. Watch for this to base. Needs to base out, right? You don't want to see something like this, a bit of a base, and then boom, the downtrend just continues over there. So that is a little bit of hope. Before we go into the rest of the show, I do have a few more things to show you. I do want to remind you the Discord is packed with alpha, guys. Here's some of our previous trades that we've dropped for you guys. Massive percentage returns. Now, the reason I'm showing this to you is because we do have the BitGet trading competition, which is coming up. It's the King's Cup Global Invitational. It's going to be happening from the 1st of October. But more importantly, the reason why I'm telling you is because you can join my team. So if you want to join my team, click in the link in the description below. It should take you through to this over here. There you go. Whale Trades. Whale Trades is the name of my team. Make sure that you join the Whale Trades team. Click that link. It will directly take you there. It's $300 to enter. And of course, we will be dropping all these trades that have created so much profit for the community. We will be dropping these in the Discord. In the Discord is the sign-up links as well if you don't already have them. So I have a few more things that I want to show before we close off over here. Okay, let's skip that. Let's go. We did that already. Okay, DYDX, there is a potential long opportunity over here. It has been dropped in the Discord. We're looking for DYDX to kind of consolidate here above the daily open. If it can consolidate above the daily open, our stop will go just below Monday high over here, and we're looking to long it up to $2.91. Then $2.14 is TP2, and finally up to $2.21. So this is one of our trade ideas. We've been looking for trades. There hasn't been too much out there because of the FOMC. Everybody's been kind of market neutral, but this is one that could be developing. So put that on your radar. The other one I wanted to outline, what did I tell you guys? Unibot. I told you, do not FOMO into Unibot. I drew these levels back here, guys. I haven't adjusted a single thing. You can go back and look at the shows. I told you, expect for a bit of a range to form over here. The range is forming. Look at that. It's literally following the LARP lines almost to precision. And then we said, watch for a range low to be found anywhere between $28 and $45. So I hope you haven't FOMO'd into Unibot. I still wouldn't buy yet. I want to see the reaction coming into the zone. This is the area of interest, 28 to 45. That is for long-term buys. That's the area of interest. Okay. Again, check in the description below. BitGet, make sure that you join. Also, there's a link to Crypto School. Crypto School are having a 24-hour trading stream if you do want to join. They might find some interesting things over there, interesting trade setups. Join them. And then also Route to Fi, he said, just join post.tech. So you got friend.tech, you now have post.tech. This is the Arbitrum version of friend.tech. Full disclosure, I'm not on it. I just found it this morning. But oftentimes when you make money on these things. It's the ultimate Ponzi, guys, the ultimate Ponzi. We have to call it as it is. He says, my first impression is that they've created more quests to keep users interested longer. I can definitely see this as a protocol that will survive with friends.tech. He said it. Look at that. I didn't even read this yet. Now we have 2 nice Ponzi's to entertain us through this pre-bull market. So check that out. I'm going to be joining onto the call now. Remember, the call now also has the newsroom feature, which is great. It means that you can see, that's at least on Banter Bubbles. It means you can now see what we're dropping for the researchers as well. So that's from me, folks. Smash the like button, hit the bell notification, subscribe to the channel. Make sure that you join my team. I'm going to be dropping a massive amount of alpha in the Discord for those calls for you, for those trades. And so far, so good. You guys have been immensely profitable. We appreciate all the support. Remember, bring 1 or 2 of your friends with you as well. If you have friends interested in crypto, bring them in now rather than later, not at the top. So that's it from me. I'll see all of you on the next video tomorrow. Have a stellar day and cheers for now.
Hello, guys. Back again. Hi, Matt. How you doing? I can't hear you. You're muted. Is that me or is that you?
That was me, mate. Sorry.
Yeah, that's good. That's good. How you doing?
Hiya.
Good morning. Good afternoon. Is that to you? Your side?
Yeah. It's nearly evening, actually. Nearly.
Nearly evening. Okay. Well, you're here. I just want to make sure that everything is smooth and nice. I hope everyone enjoyed. Kyle, Matt is here as well. Going to be on the way. Please, a big, nice welcome for Kyle. Chaos will come. He's on his way as well. So nice big welcome for the boys, guys. You're gonna get some more alpha. So I'll see you later.
All right. Welcome, everyone. Another cracking show from Kyle there. Hopefully you guys tune into his regular shows. He's always very market updates, his look on Bitcoin and stuff like that. Also, go into the Banter Discord as well and join that VIP section. They're always putting out those the trades that he's in, things like that. So definitely tune into that, and have a look. If you're not comfortable with trading them yet, just put $1 in. Put $1 in, something minimal, and just get yourself in the game. If you guys caught my segment earlier, you the experience of you've got to have your toe in the water, as they would say, and the only way you gain experience is by literally putting in some money in there and having a go. But Kyle and all those guys, Sheldon, Dylan does a lot of the charts. Have a look at that particular the Banter Discord channel and go through, check out those charts. They've even set up now the alarm feature on there, which is awesome, because you don't even have to do anything. They've got the charts there. They've got the charts are marked up. They've got the fib levels. They've got breaker trends, some bounces off of support, or pullbacks on resistance, stuff like that. It's all there, different time frames. So definitely have a look at that stuff, work your way through it. I know Discord can also be intimidating to use at first if you haven't used it with all the channels and stuff that are contained within it. But you know, you can't really break it because you've got you know, those permissions are restricted and stuff like that. So, you know, a lot of it's read only unless you're, you know, writing a comment. So have a play with it, you know, flick through those different channels. For me, it was something quite bizarre as well. I think the first time I used Discord, my son was maybe 15 and he knew all about it from his, you know, his sneaker collecting that he does. So he showed me how to use it, and you know, it is actually really simple. It looks daunting, but you've just got different menus that you just follow through, which are the different channels. So have a play with it, guys. It's not as complex as it actually looks. And again, like I said, if you guys caught my thing earlier, is get on there. I don't like the word networking because I think it sounds a bit wanky, but you know, get on there, meet some people, make some friends, and you know, the best way to do that also is to just go into your own area. You know, we've got the US ones and Europe, and we've got APAC and stuff like that. So just go in there amongst it. You can go in through the alumni channel if you like as well. They're all the people that have graduated school. Or you can go into your own, you know, if you're currently doing cohort 8 and you're new to this, go into there. Just say, hi, everyone, what's happening? You know, someone will answer. Or if someone says the same thing, you just write back, say, I'm cool, what's happening? You know, you can share an idea, or is anyone trading anything? Even if you've got questions about the show, you know, you can reach out. There's plenty of mods on there as well. The mods and the mentors are out there. You guys can tag us. You'll see our names. Our names are in a different color. I think the mods we've got a, thanks to Terry Lynn, we've got a sweet little love heart after our name, so you guys can identify us. So yeah, get on there and have a play. It's, you know, Discord is so powerful and useful for people. It can help you with your trading, with learning, like even just direct with chart information, but it's just about, you know, talking about your ideas openly and learning and stuff like that. So it's really cool. You know, from a security standpoint as well, like if we touch on that, which is something that I know Chaos, when he joins us in a moment, he'll want to, you know, talk about as well, is the mods and the other people that work in the background of that. You know, we're not gonna be sending you, you know, direct messages, stuff like that. If you guys want to contact us, you can contact us by tagging us directly through the direct message into your inbox. In fact, we all have our direct messaging features turned off, so people can't direct message us. So yeah, if you do get a direct message from someone, you think it's Sheldon or, you know, Kyle or someone like that, you know, definitely don't click on it. Any direct message from anyone that seems to be associated with the crypto school or with Banter, I'd definitely like not click on it. Maybe reach out to one of us as well. Say, hey, got something a little that might be a bit suspicious. Can you look into it for me? I mean, that's what we're there for as well, because, you know, we don't want you guys to be clicking on a link that might, you know, cause you any harm, whether it be like a virus for your computer, something that, you know, does something, connects you to your wallet, drains your wallet, stuff like that. I mean, we're here to help you have a positive journey through here. So, you know, you just reach out to us. There's no questions are stupid, particularly, you know, when it comes Chaos, 5 minutes. Get that turbo running, buddy. So yeah, we're just here to help you guys. That's what the mods are here for. You've got the mentors can help you. There's trading questions. It doesn't matter, you know, what it is. We've all actually been in your position as well. That's something that you guys shouldn't forget about as well, is we're the ones that have started off at nothing as well, and we knew nothing. Like, and you forget how far you've actually come across time as well. So there's no stupid questions. Just reach out and ask them, and we want you guys to feel really comfortable in doing that. So yeah, hopefully you guys have learned a lot along the way. Maybe let's until chaos less than 5. All right, let's rock and roll. So let's maybe put some questions out there. Has anyone got anything that they want us to touch on while we're here? Someone ask a question, we can have a bit of a chat. Where's everyone from? Maybe we can touch on that topic as well, hey, until chaos gets here. Well, we're talking about some indicators. Him and I have a similar trading style, so we have been teaming up lately. We're going to go through some Lux Algo stuff with you. Belgium, nice. Nice. I raced my bike through Belgium a little bit. Brutal conditions in Belgium sometimes, but there you go. Greece, nice. South Africa, Washington State, nice. Ridden my bike through there as well. Netherlands, been there. Yeah, sweet. Some nice areas. Good job, everyone. Thanks for tuning in as well. Hong Kong, India. This is amazing, guys. This is really amazing to just see people from such a broad range around the world. This is so cool. Simon, Sydney. Oh, really, mate? All right, good job. I don't know how Chaos is driving his car and texting at the same time, but you know the guy is a wizard at multitasking. So, all right. Anything else? How about this? I'm in the US, have a VPN, but still have trouble moving money into any DEX. What's the best way found to use? Maybe Google Pay, Cash App, etc. Yeah, it's hard. Without being in the US, it's hard for me to know what works and what doesn't work over there. I know here in Australia, it's hard as well. The banks are starting to shut down what we're using to purchase crypto, particularly if we're using our normal funds from a standard traditional bank. But all I do now these days is I just transfer from one digital wallet to the next. Personally, I've also found that if I want to withdraw crypto, crypto.com's been pretty good for me as well. They have their Visa card, so you can transfer funds across, and you can use that as well. So sometimes when I've done some good trades and I wanted to reward myself, take the girlfriend out to dinner or whatever, just transfer it into that crypto.com Visa card, and then we're good to go. It's seamless. It's just using your crypto wallet, so you're just entering in your address, the network you want to transfer it through. So I usually use the Tron network. It's cheap and it's fast. So that's been a good way for me. Oh yeah, Revolut, that's not a bad one as well. That works well. So here in Australia, there's an exchange that does it well here as well, that can still take money out of your bank. Swift FX, I think they're called. So yeah. What else, guys? Any other questions? Bybit offers a card. Yeah, they do. Bybit doesn't always offer their card in every country, though. So it really just comes down to the rules of the country, how crypto is established, what the rules with Visa is, etc. So yeah, you have to play that by ear. But if you do go on to the Bybit exchange, you can read up about what countries it's available in, things like that. So yeah. Banter only just recently. Fefe contacted me a few months ago, and then we went from there. Just started a few weeks ago doing a few chilling chats with Thales, with my man Thales, and with Chaos, and then it's just kind of evolved into this. So been a pretty quick thing, really. But yeah, you guys will catch me around on Discord. Hopefully, hopefully Simon and I are doing a couple of more things together. If he makes his car ride safely without driving like a maniac, that would be cool. What time frame do I trade on? So I trade mostly on 1 hour. Use 15 to snipe a bit of a better entry, but usually I'm a 1 hour trader. And I don't like to hang around in there for too long either. So I'll usually trade up to the next resistance level, and then I'll just kind of get out, reassess it. If it forms a flag, then I'll often wait for the flag to break up, and then I'll jump back in. If the flag breaks down, I'll short it. But I like to, in and out in an hour. I can't really tell you why I don't like to trade longer. I just don't. I'm just not comfortable with that just yet. So, I found if things make you uncomfortable, you start making bad decisions. It's sort of one of the things I spoke about in my session earlier as well, was, if you feel uncomfortable and nervous about things, you start making bad decisions. You're not thinking clearly. So you find something that works for you, keeps you nice and chill, and then you can, trade better, be more consistent. So for me, just that 1 hour works nicely. I can jump in. I'm usually in it for, half a day or a day, which is a nice little time frame. Gives the market time to move around a little bit and get out. So yeah, if you guys saw my thing earlier as well, I spoke about a render trade I got into yesterday. So I was in that. I was in and out of that in less than 24 hours. I got like a 33% move, I think. Yeah, what was it? It was 38.43%. So, that was a nice little move in under 24 hours on a 10x leverage. So that was like a 3.8% move on the market. So, that was good. There's no point hanging around. I see now that it's actually pulled back a little bit as well. So, it might just pull back, form a little bit of a flag, and break up again. It's been pretty strong the last few days, but I just take my money. That's the one thing I've learned. It's unrealized profit, because you haven't actually realized it yet until you close your trade, and then it's yours. So if you're going to protect your risk, you might as well take that money when it's there, and then instead of just sitting in it hoping it continues, take the money when it's there. If you're seeing it's getting to a resistance level, let the market print some more candles, see what's going on. If you want to enter in again, you can enter in again. But then enter in again, protect yourself with your stop, and just keep riding it. But at least you're banking your money along the way, and you're not just letting it sit there, hoping that it's going to get there. All right. Which is my favorite exchange and why? I like Bybit, and also BitGet's actually good. BitGet's pretty clean to use and easy. I don't know if you guys saw Sheldon's little tutorial yesterday. I'd definitely check that out. It is a clean one to use. There is solid liquidity on there as well. So there are a lot of tokens that trade well on this. There's a good amount of volume, good liquidity. So things don't get chopped around too crazily like some of the other perp dexes do. But Bybit for me, I just love Bybit as well. For me, it's probably because I've used it the most. I like their stop loss take profit feature. You can take partials, all that, and it is just a big exchange. So that's the one I like. What else? Having my first 1x perpetual BTC short since yesterday. Just get the taste of shorting. Yeah, it's perfect. So shorting is one of those things it's a bit harder. Like for me, I'm naturally positive, so to find to get my brain into shorting, I find it difficult. So quite often when I do have a short, I'm actually usually doing it on low leverage because it's just something that's just not natural for me. So a little trick that I like to do as well is I like to inverse the chart as well. So you can use the inverse feature on the chart and flip it up the other way. So then you can imagine that it's a long. That makes me feel a little bit more at ease. It doesn't like hurt my brain so much to have to think about stuff the other way around. So that's not a bad little trick to do as well. So, but yeah, low leverage for me. And that's awesome that you're doing that, because it is a great way to dip your toe in the water, to do some trading. It really does limit. If you don't understand about how to calculate your position size with leverage, just do it on a 1x. And it's brilliant to learn to short on a 1x, just really small position size, just to get that skill in as well. So well done. Hopefully it pans out for you nicely. Thales, you joining us again, buddy?
Hey, yes, I'm here. Just to make sure to cover up a little bit until Chaos is going to sort out his technical issues there. You know, he was driving so fast to get there, and now he's having issues with the PC. I mean, for God's sake, I mean, you know, well, those things happen. I mean, you know.
Oh, here we go.
Here we go.
Hey, buddy.
Sorry about that, guys.
No, it's all right, brother. How you doing?
Serious problems. You know what? Even the stream isn't showing properly on my phone. It's just a massive Wi-Fi problem in the area today, I think. So,
okay,
mate, it's good to see you guys just cracking on. That was awesome. I was watching it in my car at about 300 miles an hour, just going, this is good. I'll just leave you to it.
I thought your tech problem was a speeding ticket. I thought that was your technical issue.
No, you know what, mate? There's a good to hear about throwing people in the deep end here and seeing how they fare. Nice one.
Yeah, what a stitch up.
It's all right, mate. Listen, we're technically still 15 minutes early. So, you know, we're not due on for 15. So the fact that you've just filled it for 15 minutes is awesome. Well done. Or 20 minutes now. Thales, amazing as always. What a great show.
Thank you very much, sir. I hope you enjoyed it. I hope the rest of the people enjoyed it.
Always,
I'm going to come back in the evening. Some more
awesome, bro.
What time are you on later?
That's a good question.
And the reason I'm loading. I'm loading up now. So
yeah, no, it's the GMT that confuses me, but it's going to be late. My time.
Fantastic. Well, I'll be sure to tune in tonight, mate, for you as always.
Good stuff.
Good. Right, I'm just getting fired up with presenting and everything else. So I'll just be another minute or so. The audience has been pretty good. Did you guys catch Carl's show as well? He's sort of he's slightly bullish for about the last, I don't know, he's like 51 to 49%, isn't he? We're hanging on by a ball hair at the minute.
Yeah, that's it.
So I wonder where we go from today. What do we think, Thales? Do we think up or down today?
That's a good question.
I'm sure that's what everyone.
I think it has, you know, a little bit push to the down. I see red day today.
Okay.
A little bit push to the down. Let's see by tonight. You know, let's see. You know, when I come back in tonight and see where we are sitting out in 26,997 currently. So let's see if it's going to be below that or above. But I got a feeling that it's going to be a bit lower than that.
Yeah, I think you might be right, mate. You might be right. I'm just,
you know, it may come all the way down to 26,700, you know, 500, maybe a small bounce there. We'll see. But you know, currently I'm sitting under my trend line anyway, so you know, I broke that trend line and still is under it. Trying to retest it, trying to break it, it didn't. It came back anyway. That push that we had yesterday wasn't a legit push from Bitcoin. It's because of Dixie. So we'll see how it goes. We'll see how it goes, guys.
I'm watching Total 1 today. I'll be interested to see what happens there.
Yeah.
And then more importantly, like Kyle said, Total 3, because obviously Total 3 been everything but Bitcoin and Ethereum. He was absolutely spot on when he said most of the people are wrecked. Accurate. I mean, I don't know about you guys, but I'm holding on to some stuff from the last bull market, and yeah, it's looking about 10 times lower than it should be. So definitely wrecked.
If I just 1 second to give you a screen just for you to give you a food for your thought. I'll do
Yeah.
just one
Go for it.
one window.
I'm getting set up anyway, man. So go for it. Yeah,
Okay, cool. So my window's up. Well, it should be. Who's the admin here?
Me. I can bring that.
Okay.
You need to click present or share.
No, it is. It's already there. It's on standby.
Is it? I don't actually see that for some reason. Hang on a sec. Maybe. Let me just carry on. I'm just going to check whether I'm still admin. Hang on a sec.
Oh,
there
yeah,
you go.
It's there we go. Right. So as you said, total 1. Yeah, this is total 1. Right. And if I zoom out a little bit, you can see that I draw like a supported resistance, like upper level, lower level, right, of a range. So we keep on getting, as I spoke earlier as well, we keep on getting like these. This is the highest, and then we've got a low high, and a low high, and a low high, and then again a low high, and maybe it's looking to come down to these levels again. So we come back to 1 trillion to hit that support. So that's why I keep on saying that maybe for today, we're looking red day today. Nothing major, just come down to retest these levels, right? That's it. I mean, I get very excited when I see these, when you see these breakouts, right? Those little things that came out under. It's very tough to break. It's keep on resisting, even on Bitcoin. I mean, you can see the same thing playing around with Bitcoin as well. So here's Bitcoin, right? And let's put that horizontal levels there out there. And let's put an horizontal level there around these areas, support the resistance, right? So remove that, no need. So we have that supported resistance. And it's trying to tap that resistance multiple times. You have that first tap there, second tap there, third tap there, close to this one, and then it just went just a little bit below. That deviation that Kyle talked about, yeah? When I see these kind of things, like this one here as well, right? I assume that when it's breaking even for a little while with bodies, usually it comes back again to these levels, right? It's going to revisit and retest these levels, usually. So that's why, I'm still adamant about the line and trying to recover. It failed, it came down, come back, retested, and maybe it's going to come down again. Not that far away. Yeah, I mean, 27, and maybe you come down all the way down to 25, 200, 300, maybe ish, that area there. Nothing major, but that's how I see it. It's failing to give us, a new high. It's failing to pass above my trend line. So most likely, it's going to go down and retest. 2 point of interest. These highs of these range, so to say, which is a retest this area. So maybe it wants to come down to this level, or maybe it wants to come down all the way down here. We will see. But at least for today, point A to point B. That's this is how I see it today. We'll see. We'll see by tonight. What do you think, Matt?
Yeah, spot on, mate. I agree. I think it's either going to go back to that little consolidation level that you said.
Yeah.
And it might just bounce around there for a little bit longer as well.
Yeah.
But
I
every
mean,
time it's hit that resistance, every time it's hit that support line there, mate, like the candle's closed right on it. It's done a nice little swing failure there and jumped a bit. So,
right.
It could come back and nail it again. But there's a lot of liquidity down below there we need to capture, right?
Yeah, I'll keep on saying that we have a lot of liquidity pool right there. That's why it came down and grabbed this liquidity pool. But there's a lot of liquidity sitting in this area. So if I put this the lowest points that it got retested, so this is the lowest points, right? So this is the lowest points, and let's say the support is here. So all this here, really what it is just liquidity. It's a liquidity pool. Right, a major, huge liquidity pool in this area. So, if he's touching and breaking these little points like this time and this time here, so I got a feeling that maybe he wants to come down and grab this pool. But I've seen Carl's today's TA as well, and I was like, interesting, because he thinks the other way around. He wants to go a little bit higher. We'll see how it's going to play. I mean, I cannot predict the market. I always react. I have this trend line, it touches that trend line, and then you can go all the way down. It's, trying to keep things simple as possible. And if I'm wrong, let's say that I made a wrong TA or the market decided to go the opposite, doesn't mean 100% I'm going wrong. Where's your stop loss? So, if I entered here, my stop loss has to be above, inside that trend line. So even if it decides to go above, let's say, in that unlikely case, then I'll be stopped out. Fine. I'll get out as soon as possible, right? Break that trend line, come back, retest it, and then goes up, breaks the previous highs. Then again, I'll catch another trade. And that's why stop loss is our friend. And it's very important for us to keep it because it's saving us money, right? It's something I'm doing wrong. It's going to take me out very quickly. Secondly, I'll get another opportunity sooner to enter in a different direction. Yeah, if you lose 2%, then you make another win 5%, 10%. So you're going to be in profit, plus you're going to take back your previous loss. So good days, right? So good stuff out there. I mean, it is not something tragic. Trying to make it nice, simple, practical, easy to go. A small touch about the security. I'm going to close this share. I just wanted to give you my thoughts and why I think it's going to go a little bit further down. 2 points above that range or hit that support or resistance level. We will see. Another point that I would like to touch because Matt did as well. It's very important. Guys, it's our community is growing and it's growing big, large. Yeah, we are over 25,000 people in there, students. Now, we want to be always transparent. We always talk to our community up front. And hey, hello.
I've got to get rid of him. All right,
Yeah.
he's being painful.
No, it's all right. It's all right. Part of the family. So, guys, we're trying to be transparent and be upfront. If we need to speak to someone, we're going to speak publicly, right? And it's the same way that you're going to attack me, the same way I'm going to, respond to you in the public. Now, is it an issue that you would like to speak privately? You make a request that you need to speak privately with us, and then we have a secret room that we can take you. Yeah, a secret room doesn't sound funny, but it's something dodgy. It's not like that. But we have a room that is not, it's hidden, and this way we the mods can gather up and have a conversation if we're facing a problem. So we can pull you there, and we can have a chat, and you don't need to worry about things that you need to say won't get exposed publicly. We don't do DMs. Even that we need to speak, private with you, we have a channel that is hidden, right? Like a chiller chat, so you can speak up with your voice and stuff like that, and we can hear you and we can talk. We don't do DMs, right? I will not come, not me, but every single mod and mentors and Sheldon and Charles and Terylene and Sunshine and Cows and Bruce. No one will come to you in private and say, um, you know, I'll do the trade for you, or come and join my special platform. Now, they got different ways of approaching people, and you give me one Bitcoin and sneaky hidden room. Yeah, whoop whoop, that's the one. Get the smiking. Uh, so yeah, um, we don't do anything in DM. We don't do something like that. We don't have different services, hidden services. You're not the chosen one, so to say. Out of the sudden, you get a message, and the message says that you are one of the special ones. That doesn't happen. Yeah, we're all equal. We're all special. We're all here together, and we're learning with this school. And we are, so be very careful when someone is approaching you and is giving you promises, like fake promises that I'm going to teach you how to do one Bitcoin in 24 hours and stuff like that. Or you come to a special inner circle trading room, whatever. Or I've got a special platform that, we pump it and dump it and you're going to make some profit and blah, blah, blah. That doesn't happen. If you got, let's say, the doubt, someone is talking to you and you don't know who it is, tag us. Tag us and let's investigate together with you and see, what's going on. Please be careful. Yeah, don't believe promises. Try to stick to actions. Yeah, we're here every day for you. We do like Matt is going to do it now. And, Matt is a new guy. He's not a new guy in school. He's been around for a very long time, right? But he's new, let's say, doing these AMAs. He's been on my shows as well. He's been with cows. He's he's going to be more around. So more people are going to be here. Daily, we have a show, at least a daily. I'm talking about inside Discord. I'm not talking about outside on YouTube now. Yeah, we've got daily shows on Discord. We're going to be here for you. If you got something, grab us. This is the best thing that we can do. Be here for you in the good days. Be here with you on the bad days, and we're going to be on Discord and do the shows and have a communication, right? We're not going to hide in DMs and private chats and private rooms and stuff like that. We don't do that. Okay, so be very, very cautious. If you have something, come up, right? That's it. Much about security. Be careful out there, right? What else? I don't want to touch any subjects that you're going to speak, Matt, with Chaos. Is Chaos coming around? Is Wi-Fi fixed or something?
Yeah, I haven't heard from him.
Okay.
Let me ping him in a message. See how he's traveling.
Okay. Don't be shy. If you've got any questions, please come up with these questions. And this is a two-way communication, right? And we human beings. I will speak for myself. Like the last time I checked on my little mirror, I was a human being, right? And I'm only just one little drop on the ocean, right? So you can speak to us, right?
Any questions, guys? You can ask us a question about anything. Just waiting on Chaos, see how he's going. It looks like he doesn't have any internet or something.
Any problems which would you like to discuss about the tools? Any tools, the psychology. Would you like to ask about FOMO or FAD, or what would you like to? What's the point that you need more to learn? We're not going anywhere. This is a 24-hour live. You understand this? We're going to be here until tomorrow. Right? Good stuff. Good stuff. Oh, guys, don't be shy. Don't be shy. Where are the comments?
Also, has anyone has anyone ever been watching the that newsroom thing that they do every day as well? Listening in, and it gives you an insight into Banter and how they operate. Having that call every day where they send in, the researchers pile in all the info of what they've learned throughout the day. It's actually pretty powerful to know what's out there and what they take into account on their shows and stuff. So it's pretty cool. So it's worth tuning into if you have the time every now and again. Have a listen to it. You really do have a fly on the wall view of stuff. So yeah. We get a question there, Thales. What do we get?
Explanation here. Okay, they want to talk about the FIP levels. So let me bring up again my screen very quickly. Window.
Science stuff, mate. Science.
It's good. I mean, Fibonacci is a great tool.
It is.
Okay, somehow the screen is not up there coming. So one of the admins must bring the screen up. So who's going to be the admin here? Is that Dave around?
Yeah, maybe Dave's in the background. I'm not sure.
Okay. If Dave is in the background and he's going to hear us.
Chaos can't get into stream into the software, so
okay.
We're just waiting on that. So
right, okay, guys. I mean, I'm going to explain it briefly, and when we get the chance to get the screen, you're going to see the numbers as well. Obviously, you have the starting point, right, which is going to be the 100 mark, and then you have the 0 and 1. 0 represents 0, 1 represents 100 as in percentage, because I use percentage values as well instead of the decimals, right? You have. Oh, hi.
Right, sorted finally. Sorry,
Sorry, good stuff, good stuff.
I think so. Carry on for a second. Thanks.
Okay. So the very first thing that you want to put up there is the 618. Yeah, I use round numbers. You know me. I'm using the average always. All right. So I use the 618, which is the 62. So let me bring up the settings now that you can see. Let me put that on the left. So I have the 0 and 0.62, which is the 618, really, right? I got the 79, which is the lower of the golden zone, and I have the 0.705, which basically is the middle point of the golden zone, right? And the 0.5, which is halfway of your move, right? So if you draw your Fibonacci, you have the 50%. And you know when the token is going upwards, so to say, very quickly, right? When it's going upwards, anything above 50, right, is gonna be your premium. Anything below that 50 is gonna be your discount. So that's why we use like the 50% there. So you need to know which side you are. You are on the upper half or you are on the lower half. If you are, if it's uptrend and the price, let's say that you got out, right, and you took your profits, your next entry ideally will be for you to wait when it comes back down under the 50, which is the discount zone, and obviously come back down to the golden zone. So the numbers are that I use is 0 and 1, 0.38. Let me bring up the settings again so you can see the numbers. Right, here it is. I'll take it by level to level. 0.38, I have it down here, right, which is there. 0.5, which is the 50. 0.628, which is the 618, and I use 62, sorry, right, I use round numbers. 0.705, that again is up to you if you want to use the middle point of the golden zone, right, or the golden pocket on the level. 79, which is the lower part of the golden zone, and then you can have outside of the Fibonacci levels, right, which is going to be your future targets either side, and that can be the minus 1, the minus 0.27, and the minus 0.62. All this into negative, right? And into the positive, again, the same principle. 1.27, 1.62, and number 2. Now, 2, it's the equal, let's say, length from 0 to 1 is the equal length from 1 to 2, right? So if I bring this Fibonacci now into real price data action, and let's use the daily for any chart, right? This is dollar index, fine, no problem. If I bring now the Fibonacci, let's say from this level to these levels, right, and I'm going to extend now these lines to the left, you can see that even that I am like, I'm trying to predict the future levels. If you go to the left, you can see that Fibonacci is respecting these future levels, right? So, this is the targets that you can have in the future. If it wants to go up, the next level will be 106, and the next level will be 107. If it wants to go under my Fibonacci, right, my levels will be like 98 and 96. And let's have a look in the past data if price action is respecting these levels. Well, you tell me, does it? So, no, it's crazy, isn't it? Science, maths. Fibonacci is a very, very strong tool.
It's amazing, isn't it?
It's amazing.
It's amazing. It's always maths that just works, isn't it?
Mm-hmm. So I'm gonna stop here. You are here now. So
finally sorted. I'm so sorry, guys. StreamYard decided to have an absolute nightmare today.
Beautiful. No worries.
But it wouldn't be a live show if there weren't technical issues, right?
Well, this is the only way that people can understand this is a live, right? It's
Yeah,
not recorded. Yeah, record is perfect. No technical issues.
You get a lot less abuse when people go, "Oh, what's going on?" when they can actually see there's real problems. So
Mhm.
there we go. Right, what did I miss? Mate, thank you for filling in. Thank you very much for filling in.
Thanks, Thales.
You're welcome, guys. Have a nice one.
Right, so at the minute, I can actually present screen now. I've managed to get sorted, Matt, so we're good to go. Here we go. Let's take
Sweet,
Thales
mate.
off stage. There we go. Right, present. Where did you start anything at all, or are we starting from scratch?
You know, we reflect, or you know.
Sorry, my phone just started making noises.
right.
Look, I didn't start anything on any of the indicators, mate. We just, talked a bit about Discord, stuff like that, how to navigate it, try and make some friends on there.
Excellent, cool. All right, guys. Well, look, thank you very much for the hold up, guys. I see we've got all the regulars in comments, which is awesome. I've not been able to put a background on today because that was apparently what decided that it was going to kill StreamYard. So you get to look at a lovely closed window, guys. Sorry about that. Anyway, there we go. So we're off the indicators section of the 24-hour stream. For those of you guys who know Matt and I, we're obviously heavy into our indicator trading. We've been on the live show with Dylan. Matt's been on once before. I've been on sort of quite a lot of times. So you'll probably get to recognize us now, which is nice that we're getting familiarity in the community. What I've basically got here is I've got with Matt, we've got an hour of, we've picked Lux Algo basically for our indicator of choice. We've obviously tested the likes of MDX's Algo, which is really good. It's got some slightly different features, but I've used CryptoFace's Market Cipher as well, which I really like. The guy he's really clever. He's made a brilliant indicator. But one of the things that basically seems to work for us or for our style of trading is Lux Algo. So we've basically chosen to center on that today. And then what we're going to do is we'll give a brief intro on it. I've made some notes. We're going to give an introduction on Lux Algo. We'll obviously go into some detail about how you can get it. Obviously, I've got a link here as well. And then once we've covered those bits, we'll actually dive into the indicator itself. So basically, I don't actually need to introduce Matt now because obviously you guys have been watching him for the last half an hour, which is brilliant. So well done for taking the show, mate. You've completely slotted in like an absolute OG because problems arise and you just fill it, man. So thanks for that. Okay, cool. So let's jump straight into it. Basically, what we've got here is we've got a regular trading view, guys. And then what I'll do is I'll save this, which is the link on how to get it, until later on towards the end, because I think let's just dive in. So basically, Matt, you're one of the team. Look at the comments, man. It's awesome. You're one of the pros, man, the OGs. So basically, what we've chosen here is I'm going to look at a different screen. So sorry if I'm looking at the camera. I'm going to choose to go onto everyone's favorite Bitcoin. All right. Let's just let it load up. Okay. So what I'll basically do is I'll basically cover on the ins and outs of it, why we should use it, why we shouldn't use it, and how this works with regular TA. So the very first thing to say is, first and foremost, we've come through sniper school, guys. We're used to looking at charts that look a little bit more like this. When you've done, I'm not going to draw them actually, I'm just going to show you guys. We used to kind of finding trends, trading support and resistance. You know what it's like. We've had teachings from Sheldon. One of the key things to note is that the TA that you guys carry out is more important than what any indicator is going to show you. An indicator isn't able to look at market sentiment, for example. Something like Lux Algo, the way that it works is it uses a sensitivities dashboard to essentially work out what the market has been doing for the last X number of candles. And if we shove it on the daily, for example, you could, the settings that are optimal on it, it would look like it's, say, the last 200 candles, okay? What that's not going to do is it's not going to tell you Jerome Powell speaking today. It's not going to tell you, Luna has just gone into the absolute death spiral that it went into. It's going to basically look at the market as black and white, and it's just going to tell you what it sees based on the data. So it's obviously quite important to know that nothing replaces TA. Okay, that's the first thing that I want to say. And if you're drawing trend lines, you know, we can see here that this is trending upwards at this point. You know, it's trending upwards. You know, you don't need an indicator to tell you that. So that's the first thing. You should never use Lux Algo on its own. You should never really use any indicator on its own. You know, even something as basic as the stochastic RSI, it will tell you whether you're in a sort of premium part of the market or overbought and sold, or whether it's at discount levels. But ultimately, if the price action is telling you something else, it's really, really important that, you know, you take everything into consideration and you formulate a plan, and you basically have, you know, confluence. Basically, you're finding a way to make your thesis work. So, Matt, I don't know if you want to add anything to that, or.
No, I totally agree. You know, like you said, the indicator is literally an indicator. It doesn't take away from your other TA. It to the tick to your box of rules that you need to follow when you're doing it. So, you know, I don't sit there with these indicators on my charts all the time. I hide them. But I do have, you know, something we'll touch on later. Chaos is the process that we kind of go through. Like, you know, I look at a certain thing first of all, and then I work my way through, you know, before I make my decision. But I don't live and die by this. It's a whole host of different, not a whole host, but a number of different things.
Absolutely. And I suppose ultimately what we're doing, guys, I'll just give you an example. What we're really trying to do is we're going to explain today. Someone said in the comments, when it's simplified as much as possible, I'm going to break it down per click. So it's going to be absolutely simple. But one of the things that we want to catch as traders, okay, is you see this one move here. This is a green sort of buy. If I was to take the top of that and just trade to the sell, even on a 1x, that's 120% move. So what we're really working towards, guys, is we want to get you to a point where you're comfortable trading on a 1x without leverage. You know, this is just a spot buy. If you were to buy here and you were to sell here, this is obviously back in November 2020 and through January 21, you would have made 120-ish%, which is absolutely insane. And if you're running a 10x, that's 1,000%, and that's a single trade. So what we'll do is we will now quickly take you through Lux Algo, basically. I'm going to throw it onto the 4-hour just because it's one of my favorite time frames to trade, and I think that it's a really good way to give you a demonstration of how it works. So what I will do, guys, we're going to take this all the way back to the start, okay? When you get and download the software, this basically will appear on your screen like that, okay? This is what you will see when you first log into Lux Algo. And in fact, that won't even be there, because what you actually need to do, I'll just quickly show you how to load them in. Once you complete the purchase through their website, and I'll put a link up later, you'll come back to TradingView and go to your indicators, and you actually go to your invite only scripts. And then what you'll find is that these are the various things that I've subscribed to. But I mean, realistically, the top 3 Lux Algo ones, you've got the oscillator matrix, which we're not, which is this down here. And we've also got signals and overlays, okay? And that is basically how it will look when it starts. There is a third one, which deals with order blocks. But we have got some absolute legends in this team that will be able to cover order blocks so much better than I will. And I don't think it's fair to take the steam away from them. So I'm just going to cover these 2 with Matt today. Okay. So when we are basically logged into this new indicator, this is what you see, guys. Okay. Over a period of time, we've played with these various settings, which I'll cover in a minute. We've got many settings here. We've got alerts. There's functions with alarms. It's taken, I don't know, Matt, what have we been doing this for? 3 months, 4 months, do you reckon?
Yeah.
Okay. Yeah. So we've spent the last 4 months hammering through this, guys. and trying to make it simple, because I mean, you know, look at this. I mean, you start throwing all this stuff on it, starts to get really complicated, and you know, you don't know what you're looking at. You know, so what I'm going to show you from my personal point of view is the way that I use it. Okay, now very simply, in the settings menu, you've got a set of presets. Okay, let me turn everything off. You've got a set of presets which LuxAlgo have made for you. Okay, and it depends whether you're a scalper, for example. So if you have to choose that, it loads in, okay, the best set of settings that it thinks a scalper would use. So for example, you've got these reversal zones, which are the green and the red clouds, and it even gives you a take profit and a stop loss and a trade. So that's if you're a scalper. You know, you might be a contrarian trader, for example, which goes against what the market's saying, and it will change the settings again. Okay, I'll show you one more. So let's go with a trend trader. Okay, so again, it uses the smart trails, which is the red and the blue. You don't have them both at the same time, they alternate, and it basically uses the smart trails to give you a strategy where you use them as a trader. So in order to make it really simple, I've turned that off. Okay, I'm not going to use that at all. All this does is it brings in the best settings combination of these bits here, guys. Okay, so I can replicate what we just saw by doing that. I can just turn these on and it brings up the same stuff. Yeah, so it's really important to know that this is complicated, this menu, but just ignore this. You know, you don't need LuxAlgo to tell you how you need to trade. It's great if you're a beginner, and it's great if you want to, for example, you can change the colors of the candle, right, to gradients and so on, but I'll just leave it as standard. And the way that I like to trade very simply is I pop this on, which is the reversal zones, which you'll have seen me use 1,000 times. I like to use the trend catcher, which is this background line, and also use the dashboard. The dashboard is essential, and I'll go through it in a second why. Okay, so let's make it so we can see it because it's tiny. Hang on. Dashboard size. I'm going to put it on large for now. This is going to, there we go. Okay, right. So this is the $1 million question that everybody's been asking for 4 months. Okay, what are the best settings to use for LuxAlgo? Right. So let's get rid of as much stuff as we can. Let's make it so you can see it. It gives you this dashboard, which is what we just pulled up in the settings. Okay, this here, okay, optimal sensitivity, it goes back over the last X number of candles. I can't remember the number. Let's just say 200. Okay, it brings up the last 200 candles all the way back to wherever it is. It might be 300. I can't remember, guys. Apologies. And all it does, it tells you the absolute optimal sensitivity the indicator thinks you should use in order to bring up your signals. So if I now change it to 15, because that's what it says, you go into the menu, okay, which is here, and you just change that to 15. And now if I move that, watch what happens here. Wait for it, wait for it. Is it going to change? It should do. Okay. I think it did it so quickly. Let me just make it a different one so you guys can see what I'm talking about. Great. Right, if you look here, I've now changed it again. You should find, there you go. So what we've basically done is we've turned the sensitivity way, way down from what it recommends. And as such, it gives us a heap load more signals, right? And if you were to try and trade this, you'd be in, out, in, out, in, out, in, out. You know, it'd be absolutely crazy, okay? You wouldn't be able to trade it even with a machine. So let's just go for the sake of today to 15, because that is what this says, okay? So just to clarify, this is really important. There you go, it's changed again. When you use LuxAlgo, you turn on the dashboard and you change this to what that says, okay? That is the main thing to pick up from here, all right? That being said, this is actually not always accurate. So that's the next thing to know. You can find that when you're trading these signals on, for example, 15, which is what it's recommended, it won't work for you. It's going to be too high or too low. So you'll start to learn over time how LuxAlgo works. You might find that, you know, we know that Jerome Powell's going to speak today. we know that there's probably going to be some heavy market volatility. And Matt looks like he's got a question mark in his head. Look at that for a comment. Not bad. Sorry, right. Matt looks like he's got a question mark in his head. That's a great one, Matt. Can you see that?
I am always confused, mate. So.
No, fair enough. So one of the things that we're basically going to have to, we're going to just do this for today, is we're just going to assume that the indicator is 100% correct, guys, and we're just going to leave it on 15. Okay, so that is the absolute first point where everyone says, what settings do I use? It's very simple. It gives you a really good starting point, okay? And the starting point is this. Matt, can you just take over for 1 second? Is that all right? I'll be right back. 1 sec. Just give me 1 second.
No worries. All right. Cool. Hopefully that removed my question mark. I just closed the blinds that were actually behind me. So
nice. Never mind, mate. It's all right. Someone just walked into my office.
Right.
I just got rid of them. Yeah. Is there anything else you want to sort of mention at this point, or?
No, I'm good, mate. You carry on. I'll get to my bit later, eh?
Cool. Okay, fine. So anyway, long story short, guys, we're already 24 minutes in, so I'm going to accelerate slightly. This is the absolute basic level, okay, on what settings you use when you start this. There's also, now let's run through the menu. Okay, so we've already said, don't worry about this. We don't need LuxAlgo to give you your settings. We're going to manually choose them from here. If I turn that off, and then I'm going to talk you through this, all right? So before I go through any further settings, I'm going to talk you through what we're looking at here. We have got on the 4 hour, just on Bitcoin, because, you know, why not? It's everyone's favorite coin, isn't it? Honest. The way that LuxAlgo works here, okay, with this strategy that I've used, is we're using the clouds, which are these reversal zones, as a springboard for price action to come into and then to bounce out of, okay? And then what will happen is it will make its way, not always, but often, down to the next one. But there wasn't one of these here, so I'll explain what they are in a second. Yes, Jane, you do have to change it every time frame, unless you go back to the settings real quick and you use this, okay? This is autopilot. This will automatically change this all day long with what this is confirmed with, all right? So I'm just going to say it out loud. I don't like this and I don't use it. So for me, I'm happy to go, oh, that's 15, settings, 15, click. It's about 3 seconds. I'm happy to do that for more accuracy, all right? So that's just answering James' question. Nick, my tea did not arrive. I'm going to go for tea later, don't worry. So back to the strategy. We wanted a simple strat, okay? We didn't want to have every cloud loaded, every trend loaded. You know, there are many ways to trade this. If I just say to you guys, on the 4 hour, the price action, it starts in one of the clouds, which is this thing here, and it bounces down to the next one, okay? It gives you another sort of entry point for a long, and it bounces off again, and then it gives you a short entry and bounces off again. Do you see what I'm saying? You know, on something like Bitcoin, you're only talking from that trade to there, a 5% move. On something like Matic, it would be a 20% move. And in a bull market, it would be 200% move. So it's worth bearing in mind that we're showing the most boring coin just to show you how this thing works. But I've already shown you earlier on in the vid that we could be talking 1,000% on the 10x. So, you know, just bear in mind that I'm just showing you from here to here is a 12% move. You know, or even if it's there, it's a 10% move. So, you know, this basic trading idea is not to be sneezed at. Right, Darren's asked, what does it mean when it comes out of the cloud? Okay, so with LuxAlgo, these signals, okay, these are, if you like, we'll just call it short and we'll call it long, all right? Obviously, you can say this is a spot buy, you can, you know, whatever, but we'll just call it short and long, all right? These signals, this is really important. They use, TradingView uses something called painting, all right? In TradingView, what it means, when a signal paints, it paints it onto the chart. If an indicator specifies that it doesn't repaint at all, What that means is on confirmation of the candle closure, so it's important that it's when the candle closes, this is there forever, okay? So this is the 4-hour chart. At what time was this? This was 9 o'clock at night. Whatever time, bearing in mind I'm in GMT, so it's different for everybody. Whatever time this candle closed, this is when the signal painted, and that's the word is painted, all right? It just means it's embellished on the graph and it's there forever, okay? It doesn't repaint, which means it doesn't take them off. So that's one of the questions. With regards to the cloud, the way that this cloud works is if you look at, let's zoom in. Yeah, we'll just zoom into the current price action, okay? This, where's my paintbrush? This space here, which is the black area between the green cloud and the red cloud, is what I consider normal price action. It's just what I've called it, all right? It means that price action, if we were here, price action can range between the two clouds in a normal, you know, market, ranging up, ranging down, whatever, it doesn't matter. But the point is, when it starts going into the cloud is when you get a reaction, okay? And you get times like this where it comes right through the cloud into this absolutely overextended position outside of the cloud, okay? This is all outside of the green boundaries, right? What that also ties in with down here is an absolute 0 or 2 on the RSI. It's bottomed out so hard that price action has pushed it out the cloud. So in answer to your question, yeah, kind of, Paul, but in answer to your question, Darren, when it comes out of the cloud, you should, in theory, and it can be delayed, like we've got this sort of umming and ahhing in this market. I'll give you an example with Bollinger Bands in a sec. It can take some time, but in theory, you should get the action and then a fierce reaction back up to the other side. All right. So that's worth bearing in mind. It's also worth bearing in mind this doesn't happen always. You know, nothing is ever guaranteed with trading, that's for sure. The only thing you can guarantee is you're going to lose a lot. Let me just see if I can show you what I mean about reactions. Here we go. Right, so just coming back to this, this is on the daily now. We've got something called squeeze, okay? Squeeze is how narrow these bands are. Look at this, really narrow, yeah? Over here, I'm just going to zoom in to make it a bit bigger. You've got much more of the black space to play with. It's still what I consider normal price action, but when you get a bull market, it will generally hug the bands. It will come off and it will hug the bands, okay? So you just got to have to get to a point where you can recognize on the different time frames what a bullish market looks like. Look, we just at the top on the red band, it pulls off, it goes again, pulls off, it goes again. You know, and the idea being in a bull market, that's what you get. And then when you're in a bear market, it's kind of the opposite. Price action hangs around, you know, on the green one. So you're hugging that, you're bouncing off, you're hugging it again. And then when we're ranging, we start to make our way off both. All right, we're bouncing. Do you see what I'm saying? So the way that you read this very simply is a trending market is different to a ranging market, as you've heard everybody talk about. And it's really important to know what market you're in. Right now, we are trending slightly up. You know, this week, I'm not so sure. It seems like we might be coming down again. But the point is, a ranging market, for me, is where the most gains are. If I take a short here, that's 20%. If I then take a long there, it's, you know, it's another 50%. So for me, this is easier to trade. All right. Right. Okay. Keep typing, guys. As you've got any questions, I'm going to go back to the settings menu real quick. Matt, do you want to add anything?
The only thing I was going to say is, you know, the thing with a ranging market is, like you said, man, it's easy to trade up and it's easy to trade down. This indicator is really good for that as well, because you can, you know, you take the long as it hits the bottom of the wave, and then you exit out at that reversal zone. But, you know, if it's a trending market, once the market starts to trend in a direction, it's hard to find an entry point. And I don't know if any of you guys experienced some of that stuff recently, where you have 2 days of where it pumps. There's no way to get in once it goes.
Absolutely.
So, you know, it's really good. We're actually, even though we're not getting huge moves, there are a number of opportunities out there. So that's where Chaos and I have refined this process a bit so that we can make the most of those opportunities that it gives us.
Absolutely, mate. You know what I'm going to do? I'm going to bring up one other coin real quick. You guys, no doubt, are on Discord at the minute, hey? If you've been following us on Discord, you'll basically know what we do every day. I'm just going to pop this on something that looks like it's not straight.
Bro, I just checked my Nakamoto bag the other day. I haven't looked at it for 6 months. And
How's it looking?
Yeah, boy.
Do you know what? Do you know what I've done this week, Matt? Using this only, I think it was on the 4 hour. Hang on. For some reason, it's taken all the lines off my chart, so I can't show you. Hold on. It's moved everything. You know how TradingView messes your views. On Discord, I've given a call there to sell your Naka bag. I've given a call there to rebuy. And this is all on the indicator section, guys. I gave roughly these 5 or 6 calls, right? We have made 70% free tokens just by buying and selling using this. So
and this is only available on spot, guys, as well.
Correct,
so what you're doing
correct.
is you're actually just farming more tokens. You know,
absolutely. Right, on to the next bet, which is really important. Hold on, let me go back to put it back on Bitcoin because it's easy. BTC. So hopefully everyone's with us so far, guys. Let's go with USDT. USDT. Let's go with the Binance chart. Hopefully everyone's with us, guys. Just I see Darren's put a question about coloring. I'm not sure, mate. I'm not sure. I haven't checked that. This is how I like to use it. I'm guessing they use this cloud as a, right, we're in the red now, it's going to come down, maybe. Right. With TradingView, guys, you obviously know you've got your lists that you can make. You've also got alarms. Now, I'm well aware a lot of people here will know how to draw a trend line, and then they'll know to right click on it, and they'll know to add an alert so that when price action pushes below a certain point, it will alarm, right? Pretty standard stuff. This is where this indicator absolutely blows me away, and this is a really good setting to know, right? I'm just going to choose the same one for the sake of what the thing's showing because we're giving a demonstration today. Okay, so, okay, right, the chart will update. There we go. You saw that this just moved over. Now, what I'm going to do is I'm going to teach you guys really quick using just this very simple method again with just, I'll put this on as well so you can see the trend which will appear. There we go. Right, this is the next thing. Okay, I'm not going to show this today because I think it misleads you. Giving you a full trade with a take profit and stop loss, for me, I think it's a bad idea. All right, I think they give you 5 or 6% zones, which is too much of a risk in my mind. So I'm not even going to show you that. What I'm going to show you is this feature called any alert, right? So the settings change. Right, so the settings change on each time frame. Just get into the habit of looking at your dashboard and changing it. Even if you go to the 8 hour, just look and go, right, to 15 again. Back I go, 1, 2. All right, what was that, 4 seconds? You know, it's worth doing because it will adjust your entry points, your exit points, okay? This is what I want to show you guys. This is absolutely vital. Just ignore all my other alerts. Don't worry about them for now. We're going to teach you how to use this. This is called any alert, okay? Now, what this does, bullish confirmation, okay, and bullish plus. This is a plus because it's got a plus. Plus just means it's stronger, okay? You get other ones where they are not as strong, and they, oh, look at this, we've had lots of strong ones. Hang on, there you go, there's an example. That is bullish, okay? And that is bullish plus. Same above is bearish, and you got bearish plus. And what these are, they're long and short signals for what Lux Algo thinks is going to be a normal move or a bigger move, okay? And they are represented by these 4, okay? Bullish and bearish, and then the plus versions, okay? We've also got a contrarian set of 4, which I'm not, so I'm not going to leave those on. I'm going to just forget about those, all right? Then we've got our bullish exit, our bearish exit, and we've got a take profit, and we've got a stop loss. And then finally, we've got bullish confirmation and bearish. Feel free to take a screenshot of this, guys. I'll leave it on the screen for a couple of seconds. more people get their phones. And what I will do is I'll show you in a second what this does. So just remember the name. It's called Any Alert. Okay. So now that I've selected all of the alerts that I want to be told, okay, I'm going to click OK. And now, anytime I get a signal, a take profit, which is what this is, from this trade here, guys, we've made our way down and we got a lovely TP. Look at that. That would have been an absolutely awesome, somewhere in the region of a 10% move. Lovely. Okay. Those you can trade that way if you want. You can choose to trade signals. You can trade these trend lines when they change color. It's up to you, and we can go through that after as well. But what I wanted to show you, this Any Alert function, okay, by choosing all of these, I have now got the ability to add an alert here, okay, and all I'm going to do is I'm going to change this to the name of the indicator, which is signals and overlays, and it will pull in every single alert function we just chose on the settings. So there's no more, I want to set an alarm when my trend line gets broke. There's no more, I want to set an alarm when I've got a green bullish confirmation. There's no more, I want to set an alarm when I see a TP. Does it all in one. So what this has now done is this is cool, right, KG? All I'm going to do now is I'm going to rename it BTC 8 hour, BTC 8H, and I'm going to click create. And now what will happen, it will appear here in just a second in my list. Give it a couple of seconds while we wait. There we go. Now, anytime at all, it doesn't matter when, on the 8 hour, when one of these shows, or one of these, or let's just zoom in a bit, one of these, or we enter the cloud, which is what one of them was for, enter the cloud, or we get a bounce off the cloud, anything at all, this alert will pop up. Now, how good is that? What do you reckon, Matt? It's cool, isn't it? It's really cool.
Mate, it is cool. It's man, like you get those alerts, then you can jump on the chart. You can have it's not an automatic, oh, I've got to take a trade, but it just gives you a little bit of a nudge. Go and have a look. Where are we at? Has it played out the way I wanted it to play out, or has something else happened? So yeah, it takes, because that's the thing is, right, the market can move at any moment. And how many times have you gone, oh shit, I missed that. I wish I was there. I wasn't. So having those alerts, you're not going through drawing a million lines on your chart, setting up all these different multiple alerts. It's one alert in one big package, and away you go.
Absolutely. And it works on here. Matt, I'm going to hand over to you in just a second. What I want to say, because the reason that we've split it in two, guys, I know I've taken 40 minutes. I'm sorry, but there's a lot to it. This oscillator, I use just as much as I use the price action. Okay. This to me, and I'll literally let Matt explain it all to you. I mean, all I'm going to say to you is I use this, which is the RSI, and I love to use this, which is the cash flow. So what I'm literally going to do, if you're all right with it, Matt, I'm just going to stop sharing. Do you want to carry on?
Yep.
Mate, that is awesome. Hold on a sec. Right.
I'll just share my screen in a sec.
If you present your screen, I'll pull it up for you. Guys, in the chat, let me know if we've gone slow enough, yeah? Just while we're, there we go, right. I'll add you to the stage, Matt, your screen. Are you ready? There we go. Okay, cool. Just give us a shout in chat, guys, if anything didn't make sense. But I mean, I've made this so simple, I think, that it should make sense. So do let me know if there's any problems. Matt, over to you, bro.
All right. You guys see my screen there okay? Yep.
Perfect. Yep.
All right, here's my little render trade from earlier today. So we'll get rid of that. But yeah, like Simon said, this oscillator matrix down here, very, very powerful. And to be honest, it's one that I use. It's probably one of the first things that I look at. So you can see in here, I don't have the Lux Algo indicators put in here. I don't have the signals and overlays turned on. I have it here. I just don't have it turned on at the moment. It just makes the chart a little bit messy. As you can see, I've also, used traditional charting here for my entry into my long, and that sort of thing with this flag. But But one of the big things I did look at was what was happening down here in the lead up to this trade when I was waiting for it. So what I use this in confluence with a few other things. I have the traditional stochastic RSI at the bottom as well that I use as confirmations as well, with the Lux Algo indicator. So it gives me another level of confidence. But so if we were to look at this, same thing with the settings, what you can do is you can go in here, you can call those settings up. And if I can move my thing, here we go. You can actually, you know, eliminate some information out of it to make it a bit cleaner and easier to use. So you can actually get rid of the upper and lower confluence, and you can just have it literally there with the money flow indicator, which is this green sort of cloud. And then you've got the red at the bottom and so on. So this shows the money coming in and out. You've got this hyperwave, which is very similar to the stochastic RSI, as you can see. As it's moving up, you know, like as the blue line here on the stochastic, you've got this green positive wave and then gray on the way down. Shows if the money flows, you know, positive, if the trend is more positive or negative, etc. But you can turn things on and off. You can get rid of the hyperwave if you wish. You can leave the hyperwave on there. And you can change the money flow colors, things like that. So if you don't want, you know, the money flow color to be green and you want money to represent yellow for you, you know, you can change it to yellow and it'll update. So you can make it kind of any color you want. It's really up to you what works for you. You get out of that. All right, it's back to green. Not the same green. I know. Now I've done it. All right.
Matt, someone's just asked, will you just zoom in a little bit? I'm not sure you can. Can you zoom in or? I'm still here, by the way. I've just got my camera off for a minute. I'm just doing something else. I'm not sure if they mean the whole screen. Your screen size is small if you can enlarge it. That's really weird. I think what they're saying, I think it might be me, mate. Hang on a sec. Let me just see if I can. I'm going to take
I'll zoom in on my browser here. Does that help? Is that better?
Hold on a sec. Hold on. For some reason, it's coming up quite small. I'm not sure why that is.
I've just upped my zoom on my browser, so.
Right, okay. Let me just look at it on YouTube real quick. Carry on, mate. I might adjust the settings slightly while you're talking, all right?
So basically, anyway, guys, what I do is I use, you know, this indicator, this particular one, the oscillator matrix. I use it pretty much on the standard default settings. So I run the upper and lower confluence things because that just gives you a really highlighted color as to whether the market's bullish, if there's positive money flow, etc. So it just gives you this nice bright green band there. But if we just break it down as well, piece by piece, the most important thing that I look at, now the absolute most important thing, and I can't stress this enough for me, is that I look at what's going on with money flow before I enter a trade. So, for example, I drew, you know, I've got fib levels and whatnot in here that I was looking at previously. And then I have this resistance, the support area through here, which I was hoping it to turn into resistance here, which it did. Now, at that same time, I would have looked at the money flow and gone, okay, the money flow is flowing out. So people are selling because it's negative and it's red. And it's selling out at a rate beyond the threshold line. So this line here, if you guys can see that, is a threshold line. Here's the threshold line here on the buy side, on the positive money flow, and this is the threshold line on the negative. So I could see here that the people were selling out of their positions on here or shorting, and you can see that that was represented here by the market dropping down in price. Now, Simon has a term for this. He calls it the aping line, and I think it's a really good term, because when the money flows beyond that threshold, it really does mean that people are either aping in or people are aping out of the market, and that's usually when you start to see some of these bigger candles. You've got some decent, size candles there now, because it was beyond that. One thing to note as well, if you see this money flow here, so the money, as this hyperwave has turned up to the positive, you notice at that point as well, the money flow leveled out and money flow became almost neutral in that sell side, and then people started buying back into the market. So the hyperwave changed. We've got this green little dot here that told us that things had turned a bit positive. Confirmation on the RSI at the bottom as well down here. You've got the blue line crossing back over the orange, and the RSI is starting to point up. So you've got 3 things here that are telling us that things are starting to look good. Another thing is, on the actual price action, we had the price come down, and then it bounced off of this purple line I've drawn in. This previous resistance level looked like it was going to become support, because I was looking for a swing failure pattern. And then bang, as the RSI turned, the hyperwave turned, and then our money flow crossed back above the threshold line, we had this beautiful little indecisive doji candle there, which gave us a look that perhaps this reversal was actually going to take place and happen. So that's how I use the indicator. Then that was when I actually did take a little long on render here. I waited for this green candle to fill on the 1 hour, and then I entered it, and then I wrote it up. Just near the top. I didn't nail the top perfectly, but I got a nice little 3-to-1 trade out of it. And then I was waiting for it to consolidate through this flag, and then I entered another one again last night and wrote it up. But yeah, so that's how I use this oscillator matrix. I haven't even used, even this particular example, I didn't even use the signals and overlays, at all for this. I do use it. I use it more if I'm seeing that the price action is getting towards a reversal zone. That's when I use it mostly. Like this render short up here. That's when I got out of my trade this morning, or earlier this afternoon, just before I went live earlier, was because I knew it was getting close to the tapping in on that reversal cloud. So things were looking a bit shaky on that. So my experience told me to get out. And then if you owe more confluence on that, you started to see that the money flow was looking shaky. It was well below the threshold, and it was showing, because there's a big gap between the green line here, if you guys can see that, the green aping line, as it's now fondly known, and the actual money flow, there's a gap there, and that usually signifies that the market's ranging a little bit, which it actually was. So if we look here, it formed this little flag, and it was just kind of like bouncing around within that flag, looking for some positive movement on that. And again, the RSI tells the picture. It just kind of bounced around. It didn't really jump. The hyperwave did the same thing, didn't really jump. So that's where I really use this indicator. You can set up the alarms the same way. And one of the other, things that Simon and I have done with all of our testing that we've done on these indicators and other ones, is that the divergence indicators on this are really good. So we found, compared to other ones on the market, these ones are really solid. So it'll show you, bullish and bearish divergences. You see here. We'll show you this one here.
That's a really good strat, Matt. The divergences, I give a lot of weight to them when they turn up. If you look on the 1 hour, they normally come best. But
look at this one. This one just here. If we look at this one just here, let me just turn off this signals and overlays. You look at this one here, showing this bearish divergence, because you got the RSI printed a lower high, but price printed a higher high, so it was losing some momentum. So the the coin was losing some momentum, and then what happened? It started to drop down afterwards. You know, money flow started leaving it as well. So, you know, they're really good indicators to give you some confluence with other things that you're seeing. Also teaches you to be patient. You know, I think Simon and I are always pushing ideas back and forth with each other, and we often use the money flow to say, you know what, let's just wait a little bit longer. I reckon it's got more to go. I reckon it's going to go down more. I don't think it's quite turned. I can't see, you know, this and that happening yet. So let's just sit tight. And you know what, if you miss the trade, you miss it. If the market all of a sudden does what you wanted it to do and you were patiently waiting lower, doesn't matter. There's always another trade. There's like, what, 20,000 projects out there. There's always something. So what do you reckon, Simon? Does that cover it, mate? We got it all sorted, or what?
You absolutely smashed it. There's a really good question about what time frame the alarms work for. So if you're talking about the alarms, they work on all time frames, guys. It's TradingView is really, really good for alarms and alerts. But obviously, just bear in mind that you're the one who sets them. So if you set it wrongly, you're going to enter the wrong trade. Do you know what I mean? So it's very important that you spend the time learning how to set them properly. But you'll find that they'll work for all time frames completely across the board, right the way down to like 1 minute. So, but yeah, Matt, that was brilliant. I mean, you know, do you want to just pull up? You're still sharing, aren't you? Do you want me to just quickly share one more time? Because I think for some reason the guys can see my screen bigger. I don't know why. Shall I just quickly pull up one thing, Matt? Are you done with explaining that? Do you want me to?
Yeah, man. Yeah.
All right.
Go for it.
Right, where
I'll
am I?
stop sharing. All right.
All right. Cool.
Yeah, I'm out.
So present, share screen, window. Here we go. Right. Share. Okay. There we go. Right. Let me just make sure that's working. Yeah. So if we choose not Bitcoin, let's go with something like Casper, because that's always a good coin. Let's have a look. Let's see if I can find. I want to just show you guys really quick. Yeah. Okay. Here we go. Right. So on Casper, if I have, bear in mind, I haven't even changed the settings yet. Let me do that quickly now, just to give a really accurate explanation. Right. So on 13. Okay. With Casper, the way that you use the price action and the oscillator together, guys, is just like this. Let's get rid of that and that. Right. So we look here, right? We go, I look at this first. I'm a big fan of divergences. If I see this, hopefully you guys can see this. There's bearish there. There's a huge bearish here. You know, obviously it doesn't always play out, but it's another thing that you take into your confidential point when you're trading. So this is how I use it. I look at the indicators, the matrix first, this RSI indicator, right? We're down here at 8 or 7. We all know that RSI and stochastic RSI is a huge strategy of Sheldon's, okay? So this is the first point. This is number 1, okay? I can see there's a signal there to go along. This is number 2. This for me is confirmation. This is a different part of the indicator. This whole red line here and this whole green line here is another way to trade, okay? That's 2 points telling me we could be going long. Now, number 3 is this. This is the aping line, as we like to call it. The price action here has entered back inside the aping line, okay? And then we've also got cash flow, which is this red sort of thing here, or money flow. And that's now starting to decrease back up to the plus side, all right? On top of that, we get a long signal, okay? We've also noted that we're down here, not quite in, but by the cloud, all right? So you've got 1, 2, 3, 4, 5 different things telling you that there's a long coming. Now, it doesn't mean that there's a long coming. Just remember that. This is what I said at the start, any indicator, okay? But when I'm taking a trade, I'll look down here first. I'll look at these points, these different things. Then I'll look up at price action and I'll be like, there's a long. Then I'll zoom out and I'll draw some trend lines. Okay, I'm not going to do that now because that's not what we're doing today. And I'll then go, I've got 5 things here telling me there's a long and a long signal's printed. When I trade, I'll go, right, I've already got in because I trust my TA and I trust these. I'm in here. Then it gives you a long. I'm going to ride this up at least to my second TP, all right, which I always do. This is how I like to trade. There's normally a maximum of 3 crosses that appear on any one trade. And so here we got 1. This is from the long, guys. Then we got 2, and then we got the next trade. On my second cross, I would have gone there, and I would have taken 53% off the table on a 1x. So I just wanted to show you that when I'm trading using Lux Algo, that's how I do it. I start down here. I take my complementary points here. I move up to the price action. I see that I've already had this. I'm already in before this is printed because I understand how this works, right? And then on my second X, which is how I like to trade, here's another example, guys. Entry, 1x, 2x. I've already jumped up before the long signal is printed. And it works the other way. Here's my entry, guys. 1x, 2x. I'm out before this is even printed. So I just wanted to show you at the very end of this, because we've got 1 minute and Shauno's ready. That is how I like to trade. These moves give me 50% moves here. They give me from this to here is a 50% move down. You know, straight away, guys. That's how I like to trade. And I hope that gives a really, really clear example of how this works. I mean, it's super powerful if you get it right. So I hope that helps.
We've only just touched on the surface as well, Chaos.
We have.
Didn't even talk about the, you know, the overflow of the money flow and stuff like that, you know, that signals reversals. So
what we will do is Sean, I'm going to bring you up in 20 seconds, bruv. What we'll do, I've got a thumbs up. What we're going to do, Matt, is we're going to spend some time on these live dailies and we'll show the guys how it works. All right. How's that sound? Perfect. Right. It's bang on 10. I've got nothing else that I want to add, but I want to just give a massive high five to Shauno. And Matt, are you good?
Yeah, mate. I'm sweet. Shauno, how are you, buddy?
Thanks for having us, guys.
Matt and Sai, you guys are absolute legends, mate. Incredible stuff. I can say I bought that Lux Algo, the paid one, a couple of weeks ago, and learning my way around it. But what you guys have showed us today is incredible. It just, you know, because there is so much stuff there, and I love the way you just made it so simple, and you know, less is more in a lot of situations. So yeah, incredible.
It's the easy thing, mate, is to get caught up in those indicators and you try and use everything that they've got to get your value, but you really don't need to. You just pick what works for you.
Oh, absolutely.
And like, it has all those presets, you know, it has the presets there if you're a scalper or whatever. I mean, maybe they'll work for you. It's just that, you know, Simon and I have played around with it and we just find it better for us to set it up our own way. So each to their own, mate. But you carry on, mate. I'm going to go have some dinner.
Fantastic. Enjoy.
All right. Good work, mate. I'll see you later.
I'm not sure, but you may have some experience here. I've kind of worked a bit late today, but I can't actually see the YouTube chats because I don't have them up. But I can see the chats that are on there on the Yardstream ones. So hopefully I don't miss anything. If anyone, you know, wants to support and come up, go for it. Absolutely go for it. Righty. Let's crack on now. I want to say for starters that the segment that I've got entitled here is essentially farming your HODL tokens. You know, I think anyone who's been around for a while, we all have a bag of tokens that we probably bought in the bull run. We still holding them. We didn't sell when they were at the top, and they're sitting there. And regardless of whether you bought one Bitcoin when it was 55,000, if you held on to it, you've still got one Bitcoin now, you know. And there are certain strategies, and if you have done the Sniper School course, Sheldon does demonstrate in the course certain tools that you can use to actually increase the number of Bitcoin, increase the number of Ethereum, and even increase the number of dollars that you have. And so the purpose of what I was going to present today is essentially just to try and break it down, make it easier to understand, and give you some options, some even more advanced options. And I think regardless of whether you go for the Lux Algo option, there are sort of free indicators from Lux Algo as well, or whether you have your own method, whether you're trading smart money concepts, ICT, your very tried and tested support resistance, looking for confirmations on volume and trend lines. Whatever strategy and style works for you, and honestly, simple is best, but whatever works for you, you can use this. And instead of when the next bull run comes, you still got that one Bitcoin that you bought at 55,000. Let's make it 4 Bitcoin, 5 Bitcoin. Okay. And that's the idea of my presentation. So I'm going to show you a couple strategies that we can do that. Now, I need to share my screen. Let me just check in this let me know in the chat. Can you guys see my screen that I have up? That says Sniper Mod AMA. No. Okay. Right. Present. Share screen. Okay. Let's have a look. That one should come up. There we go. Should be up now. Jane, AI, let's have a look. You guys can see it. Awesome. Right. So what we're going to do here, and look guys, this is just to cover our asses and my ass in particular, but please note the disclaimer. This is educational. We are here, it's not financial advice. We're just here to show you options and tools and things that you can use anytime you buy, sell, whether it's a stock, a foreign exchange, cryptocurrency. It's the onus is entirely on you to do your research, and at the end of the day, it's your call, right? All we're doing here is showing you some tools. Awesome. Okay, the stuff I'd like to get through, and we should have enough time to get through it all. Stuff I'd like to get through is on the screen now. I'm going to go through pairs trading because we get a lot of questions about, the Ethereum Bitcoin chart, or the Atom Ethereum chart, or the XRP Bitcoin chart. And a lot of people don't understand exactly what does it mean? How does it work? How can you use it? So I hope to dispel some of that uncertainty for you guys. Right? I will go through the difference between spot trading and derivatives trading, or leverage, whatever you guys want to call it. And then we're going to go through margin trading as well. What's the process? How does it work? Okay. Now, we're going to start with the understanding the pairs. Most people that are in the audience here would have done a trade. You would have looked at a chart. You will see that you've probably looked at Bitcoin USDT, you've looked at Ethereum USDT, Cardano, XRP, Pepe, whatever you've looked at. The last screen Simon had up was the Casper or CAS USDT. So dispelling the mystery around pairs is that if you've ever taken one of these trades, you have actually traded a pair. All USDT is a token that is pegged to the same value of a US dollar, but it's still a token at the end of the day. All right. So there shouldn't be any confusion in it. So when we look at this this slide I have up on the screen now, you generally have, so we're looking at the BTC USDT pair. It is a pair. The first ticker in that pair is called your base asset, right? And the second ticker is called your quote asset. And it is that easy. If just look at the chart, bring up the chart. Okay. Now, when we go through that, regardless of whether you're trading Bitcoin USDT or Ethereum USDT or Pepe or Casper, right? The whole idea of the trading is we want to buy in these green circles, right? And what happens when you hit the buy signal? If this was a Bitcoin USDT chart and you're buying in this little green circle here, you're buying Bitcoin, and because your quote asset happens to be USDT, you have to pay for it somehow. And the chart you've got up, or the pair you've got up on your exchange, is USDT, right? If you were buying, or you happen to have the Ethereum USDT chart there in the green circle here, if you hit buy, you're purchasing your base asset, whatever ticker is at the beginning of that. And you have to pay for it with whatever your quote asset is. And the same goes when we come up here and we start selling. If we are selling on a Bitcoin USDT chart, when you hit sell, you're actually giving up your Bitcoin. You're giving it to someone else, or you're giving it to someone who's interested in buying it. And what do you get back for it? Well, you're on the Bitcoin USDT chart, so you're going to get USDT back. And that if anyone's done a trade, they should hopefully understand this. Now, it shouldn't be too complicated, because when you start looking at different pairs, you go down to the third line here, look at XRP BTC. And if that happens to be the chart that you're looking at, when you hit the buy circle, or the buy button, the green one, right? What are you doing? You're buying XRP. But because you're on the XRP Bitcoin chart, you have to actually pay for it with Bitcoin. If you were on the XRP USDT chart, when you hit buy, you have to pay for it with USDT. If you're on the XRP Ethereum chart, you have to pay for it with Ethereum. Okay, and the same goes if you're looking at your Atom Ethereum chart. When you hit buy, you're getting Atom. when you hit sell, you're selling your atom. And what you have to pay for the atom when you buy and what you have to sell is essentially whatever the quote asset is, right? So I'm hoping, and I'm not sure if there's any new charts here, but as you can see, Sol BTC, you get the idea. That's the way it works, all right? When you hit buy, you're buying the first ticker in that. When you hit sell, you're giving up that, and whatever you have to pay for in the first place when you buy is the quote asset at the end of it, right? Now, how do we use this information? You've probably seen this chart before. You would have seen it, guys. Many, if you've been in crypto for more, and watched YouTube and watched, even if you've watched any of the Banter shows, the money flow in crypto. People start off in fiat. Fiat is your financial institution country, regardless of whether it's US dollars, Canadian dollars, euros, British pounds, South African rands. That is your your start, all right? And the money tends to flow from that into Bitcoin. And over the last 3 bull runs, however many there's been, I've only been through the last one. But looking back at the charts on those, you tend to see that Bitcoin is always the first to go. And we've already seen it now. We got a lot of altcoins that are down at or below their December lows after the FTX saga. Yet Bitcoin is up there. It's almost 2x from where it was in that time, and the money does flow in this direction. So you'll find your Bitcoin will pump first, and from there it tends to, people, when they've made a certain amount of money on their Bitcoin, they tend to take some of the profits, and with those profits they start buying the larger cap alts. Larger cap alts, number one is going to be your Ethereum. And so Ethereum, and then you also look at tokens like that are in that top 10, top 20, really good alts, your ones that have performed well. Your Solana, your Cardanos, your all of those larger cap alts that have performed well, are trusted, are reliable, and have survived at least one bear market, possibly two. That is where the profits from that Bitcoin increase goes. And as it progresses through, you will see traders start going and they start taking profits on their Ethereum. They start taking profits on their Solana and their Cardano, and they start putting it to some of their smaller caps. Those medium, that top, or in the sort of 50 to 150 or 200 top coins, those once again that have been around, that have survived a bull market. And quite often at this point, once those have really taken off, and people are quite often, you'll be up 4x, 5x, 6x, even if you're only taking out your initial capital and holding on to the rest of it, holding on to the other 80% if you're 5x up. And you're looking for something to do, and you've seen the meme coins like Doge and Pepe and or new and upcoming projects that have performed well, that you believe have such great use cases in the real world, and people start putting money into that. So, and that is the flow of how crypto moves through the bull market. Okay. I'm just going to pause here for a section. I see I have some awesome support here from Simon. I mentioned at the beginning here, Simon, that I can't see any of the comments on YouTube. So if there's anything that you guys want me to cover and you're not on the stream mode or you're on the YouTube, just if Simon, if one of you or anyone else watching can just pop it into this chat here, that'd be awesome. Okay. So taking into account that the money is going to flow into you into Bitcoin first, and if you're still sitting in you're still sitting in cash or in USDT, right? Your first action, essentially, considering this bull market has not started yet. Now remember, this is not telling you when to buy, what to buy, but if you want to follow the money flow, you're going to be looking at those charts using some of the indicators that were presented earlier by Matt and Simon, using whichever tools that you have available and that you've used, and in your trading journey, right? And if you do follow this chart, and we're assuming here that this bull run is going to progress the same way as the previous three have, okay? You're sitting in cash, so your first action is actually going to be a buy because you're looking at the BTC USDT chart, and so your base asset is going to be your Bitcoin, your quote asset USDT. So when you buy Bitcoin, you're going to pay for it in USDT. So your first action will be a buy, and then you'll be looking at the instead of looking at the US or the Bitcoin chart now, you'll start looking at the Ethereum Bitcoin chart, and you start looking at the other charts that people have brought up already, your Bitcoin dominance, your total two, and you start looking for weaknesses in that price action. Or you look at your Lux Algo, whatever trading style you've got, doesn't matter. And you're looking at that Ethereum Bitcoin chart, and it gets to a point where it's come to a horizontal resistance or support, a horizontal support. You think it's going to start bouncing up, and at some point you can go, and most exchanges will offer the Ethereum Bitcoin pair as a pair. And once again, you hit buy again, because what you're doing is you're getting your Ethereum and you're paying for it with the Bitcoin you bought earlier, right? And the market starts progressing through, and you may start looking at some of the other larger caps. And at this point, just going to hit a refresh here. Hopefully you can hear me now. Can I get a tick here? There's a few not hearing me anymore. Can you guys hear me? Yes, fantastic. Sound is back. Okay. All right. So the bit you missed, essentially the progression, you're going from your Bitcoin buy, your next step is another buy because you're actually buying Ethereum, but paying with your Bitcoin. Your next step is another buy. You're buying, and you've been looking at these charts, the Ethereum pair charts, and whether it's the Cardano Ethereum, the XRP Ethereum, the whichever one you're looking at, right? You're going to hit the buy again. Now, at some point, you're going to get to where everything's at the top. You've made heaps of tokens, and the big mistake that I made in the last bull run was I didn't sell. I didn't sell when I was up 6x on everything, you know. So you may at this point decide to do your first sell, and you may be looking at whatever you're holding, whether it's Cardano, whether it's whatever you're holding, you may decide to sell and put some of the dollars, bank it for the next bull run or for the next bear market. So, and the idea is you can now look at those really low caps, these tokens that are speculative at best. You're using house money, you're using profits. Okay, so that's going to be that. I hope that explains the I hope that explains the pairs and makes it so that you guys understand the way a pair chart works. All right, I've just got Lorraine Buerta say no sound again. I hope that's not the case. If anyone, Robert or Jane or Crypto Trading, can confirm that we do have the sound. Cool. Let's hear. Hopefully. I'm going to carry on. Right. We're going to cover. Okay, sounds okay for KG. Thanks, buddy. Appreciate it. Okay. So now we're going to look at the difference between spot trading and derivatives or futures trading. Okay. Now, the most important difference to recognize and to realize is that when you're spot trading, when you buy on spot, you actually own that token. If you buy, whether you buy Bitcoin or XRP or anything like that, you do own that token. You can choose what to do with it. You can send it to your cold storage wallet. You can put it on a staking platform and lend it out for some sort of return. You know, it's your tokens. They are yours. You can do what you want. You can sell them at a later stage, right? The important thing to note with spot trading is that you can't place a buy order or a sell order, whether it's you determining it in a trade as a take profit or a stop loss. You cannot place those orders until you actually own the coin, right? So what could happen, you may set an alert or a limit buy or something for half a BTC, whatever. It may trigger an hour after you go to sleep, and it may trigger in a spike that's gone up and come back down. And you could wake up in a loss because you can't actually set on spot trading. You can't set that take profit or that stop loss until you actually own the token. So when you've set a limit order, on spot trading, the intention is you want to hold that token at that price, right? Futures trading or derivatives is all about a contract, and essentially what you're doing is you're speculating on a change in price. When you're going long, you're saying, I believe this is going to go up, and I'm willing to put $10 of 10 of my dollars to say, yeah, it's going up. If it doesn't, I'm probably going to lose my $10. If it does go in the direction I favored, I'm going to get back more than my $10, right? But because it is a contract, you will find, first of all, that the fees that you pay are a lot less because there's no actual exchange or transfer of ownership of any coins or tokens. So yes, the fees are less, but you can also use a bit of leverage. You can decide, okay, I do want to take a $100 position in Bitcoin, and I can do it at a 1x, which is similar to spot. The advantage it's going to give me here is I can go for a long, I can also go for a short, which you can't necessarily do in spot trading. You can't sell in spot trading Bitcoin you don't have. So you can't short it in that way. With derivatives trading, yes, you can. And you can decide, yeah, I'm going to take a $100 position, and it doesn't really matter if you go $100 at 1x, or you go $25 at 4x, or you go $10 at 10x. You're still taking a $100 position, okay? And if whatever token you bought drops 10%, you're going to lose $10. Once again, your position size is $100 and it drops 10%, so that position size is now 90, and you are in a long, you're going to lose $10, regardless if you were at 1x in spot or at 1x, or if you had a $25 margin at 4x, or a $10 margin at 10x. You're going to lose that whole $10. Okay, so that's one of the things. So your big advantages with derivatives is, first of all, you can set a buy order. You can set a stop loss. You can set a take profit. You can trade in both directions. You can trade whether market's going up or going down. You can actually take a speculative trade or speculative contract in that direction. And you can actually set that buy order, the stop loss, the take profit, and go to bed. And if it happens to come through that, trigger it, whatever, those should trigger even though you're asleep. So that is a great advantage of derivatives or futures over and above spot trading. All right? You can't necessarily be totally shocked in the morning that your account's gone, unless you forget to set a stop loss or you've taken too large a position size. And there are things that happen. This is trading, you know. Okay. So I hope you guys understand the difference between spot trading and derivatives or futures trading. Now, the next section I'm going to go on to is actually margin trading. All right. With margin trading, it is, oh, hang on. I'll show you this. Spot trading. Let's go here first. Sorry, let's go here first. Let's say you've got a bag of, you've got $100 and you happen to have some token here. This is how it works. And if you want to increase that bag, now, like I said in the beginning, if you bought, say, 10 token, whatever token it is, you bought 10 token in the bull run when it was $500, it happens to be down at $30 now, you still only have 10 tokens. Your asset that you have at the moment is 10 tokens, right? And regardless of whether that price goes way up to 600 next time and you sell it, you've still got that 10 tokens. And the idea of farming and some of the stuff that Simon and Matt covered in the previous segment is, if you actively actively use those tokens. And if you have done the sniper school course, Sheldon says every dollar in your account needs to have a purpose. And for me, these are the techniques that I'm using. And these coins that I bought two years ago that I'm way down on, but I'm still holding for some obscure reason, they have been sitting there dormant until I did the sniper course. And what I've decided to do is I've given them a purpose. And their purpose is to make more of themselves, purely and simply. Because what I could have done is, or what I have been doing since that bull run, is I've been sitting with that bag of 10 tokens. And no matter what happens, if it goes to from $30 down to $1, I'm still sitting with 10 tokens. If it goes from $30 to $500, that's what I bought it for. Yeah, I'm at break even. Now, there is a way, and by doing this, you can actually, and Simon actually mentioned it in the last segment, he just got 70 tokens for free, right? You're looking at these, at the way the market's moving, and you're looking here, and you have 10 tokens that you've bought here in this green circle at $9, and good fortune favors you, and they come up to this next resistance here around that $11 mark. And you go, cool, this is a strong resistance. I'm actually going to sell them now. At the end of the day, I do still want these tokens, but I believe I'm going to get them cheaper in a bit. So you might sell. So you started with your, so say 11 tokens. You've sold them up here at the $11 mark. And you now have, your asset is now $121. All right. So you started down in this green circle at $9. You bought your 11 tokens for $100. And you get up to the red and you sold them. And now your asset is $121. So you essentially, you've made $21 profit. But for me, these are tokens, and the reason I'm still holding them since the bull run is I want these tokens when this bull run comes, because I believe in them, and I think they're going to succeed, right? So keep watching. It comes down to the same resistance again where you bought it initially, and because my asset is now $121, I'm now buying 13.4 tokens. So I've just made 2.4 tokens without actually taking any money out of my pocket or out of my bank or out of my wallet. I've essentially, regardless of whether that price goes back to 500 or 600, or I've still made 2.4 tokens. And what it's done to my average buy price is I've now still only taken $100 down here in the first green circle. I've only taken $100 out of my pocket to buy these tokens. And I now have 13. So my average price per token is below what it's ever sold at when I first bought it. All right. So the idea is you can repeat this, rinse and repeat as it goes, whether it's in a range, whether it's at pullbacks. That's the idea. And now, because you'll notice down the bottom here, I do have a stop loss. If they go down further, I've bought over here. If they do go down further, I'm going to sell those tokens and just wait. Yeah, I might only have $93.50 left out of my 100, but they may come down to $6, in which case I can buy 15 of them, right? Because the idea is I want more tokens at the end of this market. or in this bull run. Cool. One of these techniques, now what I'm going to go through from here forwards, you guys need to understand this. The technique and the process in margin trading is a lot more complicated than what you're used to if you haven't done this before. And I urge you, before you even attempt something like this, you need to, first of all, be a profitable spot trader, because you have to be making a bit of money on spot before you attempt leverage trading or futures or derivatives. If you're not making money on spot, if you're losing money on spot and you decide, okay, what I need to do is 10x, all you're going to do is 10x your previous results. So if you're losing money on spot trading and you decide, oh, I'll try leverage 10x, you're going to lose it 10 times faster, 5 times faster, 2 times faster, 50 times faster, depending on the leverage you take. So you need to understand that. And once you've been making money on spot trading and you've getting comfortable with margin and understanding how position size works with respect to the leverage you take, all right, then you can start looking at this technique and this margin trading. So what happens with margin trading, and you will see it in your exchange, it'll be, you'll bring up the ticker and you'll bring up your, whether it's your Bitcoin, USDT, or whatever chart you bring up. You will have quite often, depending on the exchange, you'll find it in the spot section because it's very similar to spot. And you will find that it'll have a 5x or a 10x next to it, meaning that you can actually take a bit of margin on your existing assets. And I'll tell you how it works. I'll explain it as simply as I can. If you want to buy a house, okay, and you've saved up a deposit and you have $50,000 in the bank, right? So currently your asset that you have is $50,000. And you go to your favorite bank and you say to them, I want to buy this house, and it's for sale for $500,000. Can you lend me the money? And if you check out and you've got credit and all that, the bank will go, yep, no problem. And they'll give you a mortgage. And what they do is they will lend you that $450,000. But they have, or you have, a liability towards the bank. You owe them $450,000. So your balance sheet at the end of the day is that you have an asset, the house, you have a liability, the mortgage, $450,000. And regardless what happens to property prices, regardless of, we had the huge squeeze, 2008, the global financial crisis. I think the US was hit worse than anyone else, where property prices tanked. And no matter, we've just had a recent spate here in Australia where property prices have just taken off. Houses are 20% more than what they were before COVID. And so regardless of what happens to the price of that house, you still have a liability. You owe the bank $450,000. So great. If your house value goes to $700,000, you still owe the bank $450,000. The house is still your asset, and your liability is still $450,000 to the bank. And the same works the other direction. If those property prices crash and all of a sudden your house is now worth only $400,000, you still have that your asset is your house. Your liability is $450,000 to the bank. And there will come a time where if the bank turns around and goes, we need you to pay 50,000 up front, otherwise we're going to take your house, because their surety or their collateral that they've got to secure that 450,000 they've lent you is now worth only 400,000. All right. So they're either going to foreclose on you, or you come up with some money and you start paying a little more on your mortgage, and you come to a deal. It's not always easy, but the important point in this is that you have your asset. Your asset is your house. You have your liability, which is the 450,000 you owe, regardless of what that house, the value of it or the price of it does. Right. So it's very important to just understand that concept in what I'm going to show you next. Okay. You need to know in this process in margin trading that the exchanges are not going to tell you what your buy price was or your average buy price. They're not going to tell you because it's similar to spot. You can't set a take profit and a stop loss before you've actually owned the tokens, right? You have to actually make the trade or buy the tokens first. So I'm going to show you how this works. With margin, just like buying a house, you can use that little bag of 10 tokens that you had, and you traded for, or 11 tokens you had that you traded in spot, and you proved over time that you're profitable. You could actually use them as collateral, just like you use your $50,000 in buying a house. You can use them as collateral to make a loan. And you make a loan from the exchange, right? So with that token that's now come, you sold it at at $11. It's now come back down here to your $9, and you decide, okay, I'm going to take a punt on this, but instead of buying back, all right, I already have 13.4 of these tokens. So what I'm going to do is I am going to borrow $117 from the exchange and use my 13.4 tokens as my collateral, and I'm going to buy another 13 tokens. All right. So now I had 13.4. My asset is 26.4 tokens, but I have a liability. I owe the exchange $117. And regardless of whether those, just like your house, regardless of whether those tokens go up in price or go down in price, at some point, I'm going to have to pay back $117 to the exchange, because that's my liability. All right. Now, as the price increases, so you bought those extra 13, you made the loan, you bought those 13, at $9, they go up here in this orange circle. Regardless of what the price is, your asset is still your 26.4 tokens. All right. Your liability is still the $117 that you owe the exchange. So as this goes up, it gets to your resistance again. You're up here at $11 now for the token. You decide, okay, I'm going to repay my loan. But because it's gotten up in price, I only have to sell 10.7 tokens to pay back, to get $117. So I can now sell that 10.7 tokens. I pay back my loan to the exchange, my $117 liability, and I'm now sitting with a remainder of 15.7 tokens. So in that process, I've actually made another 2.3 tokens in profit. Okay. Now, you will note here down the bottom, I have a stop loss here. And the way my stop loss works is, look, I started with 11 tokens. I want these tokens. The reason I'm still holding them is because I believe in them and I believe they're going to perform. So this process is what I'm using instead of having those tokens sitting idle in a wallet somewhere. When I want to grow them, I'm actually moving them to an exchange. I am actively farming them, actively giving them the purpose of making me more tokens. All right. Little Satoshi says taxes will eat all profits. Yeah, that's up to your own tax jurisdiction, but I'm not going to go into the taxes now. Okay. I am, however, going to move on to the next slide. All right. And how does the short work? So you might be up here in the red circle. You now have, from that previous little exercise, you now have that 15.7 tokens. So once again, you can make a loan. And in this case, you decide, okay, I've only got 15.7 tokens here, but what I'm going to do is borrow. I'm going to use my asset, my tokens as collateral. I'm actually going to borrow another 15 tokens from the exchange. Oh, I think my screen just went weird. Oh no, it's back. Okay. So I'm going to actually borrow another 15 tokens from the exchange because I believe it's going down. And I'm actually going to sell all 30.7 tokens. So now I'm sitting here and now my asset is actually dollars. I've now got $337, but I have this liability. I owe the exchange 15 tokens, regardless of whatever the price does. If that goes up or it goes down, doesn't matter. At some point, I have to give the exchange back 15 tokens. And as the trade progresses, as you get down, regardless of what the price does, down here in the orange circle, you still have your $337. You haven't done anything with it. The exchange won't let you withdraw it because you owe them 15 tokens, right? And you still have that liability, that 15 tokens. But it comes back down to your little support area here. In that green circle, you decide, fantastic. I'm going to take that $337 asset and I'm going to buy as many tokens as I can. And at that price, you are actually going to get 37 tokens, right? But you owe the exchange 15. So you pay your liability, you give them back their 15 tokens, and you're now sitting with 22 tokens. So you've made a 6.3 token profit on when it's actually gone down. And just like spot, when you sold into cash up here, you've bought back lower down in the green circle. This time, what you're actually doing is kind of leveraging or taking a loan for that. Now, you will notice that these ratios that I've been doing here is essentially a 2-to-1. That's all I've been using on this. And the important part and the reasons for it is, and the reasons I asked you to understand derivatives and futures trading first is to understand what leverage and making those loans are going to do to your total account, right? You have to track these. Now, up in the orange at the top here, you will notice that, okay, my stop loss in this case, what I've done is just, I've bought back those tokens. And the reason is I was in those tokens to start with. I'm in those tokens because I believe in them. I owe the exchange 15 tokens. And if this keeps going and it goes to $15, I'll take all that cash and I'm going to have to buy that. I'm going to have to give him 15 tokens back. And if it goes up to $20, I mean, I can buy 15.2 tokens. I'm left with 0.2 tokens after I've paid back my loan of 15. All right. So for me, once again, it's allocating the purpose of this particular token or wallet to farming more tokens for the bull run. So my stop losses here, I don't end in dollars every single time, regardless of whether if I get the trade wrong, regardless of whether it goes up or down, I'm finishing my trade in tokens because that is my purpose. I want to be in these tokens for the bull run. Okay, awesome. So I'm just going to do a quick summary, and we've got about 7 minutes left of my hour. I think up next, actually, I think Sheldon will be coming on, so we might have more than 7 minutes. Sheldon is coming on the live, will be streamed here soon. But I want to summarize for you guys very, very quickly. All right. When you're spot trading and you buy a token high or low, you sell it high. All right. You're accumulating tokens when the market falls. If you've sold out at the top and it drops down, you buy more tokens at the bottom. So when the market's going down, you're earning or you're making more tokens. When the market goes up, you're making more dollars, but you've only got those dollars if you sell those tokens, right? So spot, essentially, when the market falls, if you're in cash, you're accumulating tokens. When it rises, you're in tokens, you're accumulating dollars. Leverage, you have, you can accumulate dollars. And what do we accumulate dollars for? We accumulate dollars to buy more tokens because that's what we want in the bull run. We want those tokens. So leverage, you're able to accumulate dollars on the way up and dollars on the way down. With margin training and the way I've showed you, you can actually take those idle bags that you've had sitting there and use same charting techniques that you're using in your spot trading and your derivatives, but use them on your tokens that that you've had idle for so long. And you can actually make tokens on the way up and make tokens on the way down. All right? That's what it's all about. That's what farming is about. And I really want to stress, if you're not profitable in spot, don't try this. And don't try margin or leverage trading. Once you are profitable in spot trading, then start looking at the leverage. You need to understand what that X is going to do to your account. And then once you're comfortable with that, remember you need to track your stop losses, your buy price, your sell price, your percentages. And as you make loans and have liabilities in these tokens, you need to understand how much it's going to affect your account. All right. So if you've just started trading this month, this week, this year, don't do it yet. Go through the motion, build the foundation. Once you've built the foundation, you can start expanding on it. All right. Fantastic. And I think I was hoping to keep the schedule, and we've got 4 minutes plus banter time left. Let's please questions. I see Terry's here. Alex, we've got a Satoshi. Yes, KG says, I need to resuscitate my dormant tokens. Thanks, Shauna. You're welcome, dude. So what I have, or what I had a bag of about 50 plus tokens. And there's no way that I can keep track of all of them. So what I've been doing over the last few months is everything's down. Everything is down. So I've been doing a swap, and I maybe swap from one shit token to one that I believe is got more potential or more chance of success. And instead of trying to keep an eye on 50 tokens, which is impossible, all right, I've narrowed it down to under 10, and it's probably going to narrow further. But I've narrowed it down to a handful of stuff. And I would rather have be able to focus on this and to actively give its purpose of that 7 tokens or that 8 tokens that I've got, than have 50 that are sitting idle. So that's what I've started doing with my bags and bags that I had. So that's just the way I'm doing it. I'm not saying you have to go do it. I'm not saying please go do it. That it's just giving you options and showing you possibilities that we have. I mean, this is an incredible industry, and you know, our purpose here is to educate you guys and to show you the opportunities and the possibilities. You know, don't think we're going to moon. Don't think moon. Think Mars. Be an Elon. Think Mars. Think other galaxies. You know, we have those options. Right. Rob James has asked, where's the best place to swap? You're going to need to do it in wherever you are comfortable swapping. So whether you are, I don't advise keeping all your coins in one place on an exchange in particular. We don't want to get FTX'd by anybody. So I do have different exchange accounts that I have separated my stuff on. I also don't have all my tokens in the same wallet. But that's just me because I did lose 95% of my crypto in 2019, I think, or 2019, in a scam. So for me, that's just, you know, the way I go. I hope, we see Annie's in the house. She may be in the audience. Hello, Annie. Love your amazing content. Not sure if she's here yet, but she'll be up. And as soon as she does, I will move aside and watch with great attention. Fantastic.
Potential daily time frame reversal candlestick pattern and a potentially failed break of the 50 EMA, things are not currently looking too great for Bitcoin. However, today is also Thursday, which is midweek reversal day. So what we're going to talk about today is it all over for Bitcoin to the upside? Are we expecting further downside from here? Or are we being set up for the weekend trap? That's what I'm going to get into today. And guys, today, I just want to sit, relax with you and just do some good old-fashioned TA. So if that's what you're into, let me know in the comments. I purposely haven't done too much charting today because I literally just want to do it live with you and show you what my actual process is. So leave me some comments. Let me know if that's what you want to know, because, you know, at the end of the day, sometimes it's good to just watch someone chart without too much information about, you know, what's going on in the world. I'm just going to give a quick shout out here. How are you doing, Luke Sniper? Into the Coin Cloud says, wow, somebody at Banter can actually be on time. Thank you for noticing, because I definitely make a massive effort to always be on time. Already more than 200% in event short. Wow. Awesome. All right, let's get into this. So I'm going to talk about the daily time frame first. As you can see, I've got these 3 areas circled here. This is a typical retail trend line that we've got going on, and we've now had our 1, 2, 3 touches to the trend line. When you first learn to trade, you're taught the 3 touches to a trend line confirms the trend. So if the trend line is to the downside, that is confirming a downside trend. But there could be something that leads this to not actually giving us a new low, and I'm going to show you that on the smaller time frames. But I want to really hone in on what's happening here, because on Sunday I talked to you guys about the potential for this to be a W formation after a 3-level drop, and this is where the W had the potential, was setting up with a potential, I should say. At the time, I can't remember where the price was, but it was somewhere here. At the time, the condition was that we needed the W to break the 50 EMA, which is the blue EMA that you can see on my chart. It needed to break that with volume. Now, when you're using the same candles that I use, these are called PV SRA candles. I will just type it here because I know some of you complain about my accent, like I can do anything about where I was born. But it was this one right here, which is PV SRA volume by Cream Grab. If you add that to your chart, it will actually come up like this. So it's the volume one down here, and then you go into the settings of that and you click this one, set PV SRA candle colors. So that's not the indicator that I use because mine's a custom one, but this will be close enough for you if you're not part, obviously, of the TTC community, which you should be. And if you're thinking about it, there is a link in the description of this video to do that. The other thing you should do is if you're trading Bitcoin, but you're trading on any exchange other than Binance, you should have this override chart symbol and you should change it to the Binance Bitcoin perpetual contract volume. Why? Because Binance has the highest volume. So we want to know the volume coming in from that exchange, but you can still chart on whatever chart relates to the exchange that you trade on. So anyway, those are the settings so that you know what's going on. But what I mentioned on Sunday was that if we are to get this break, there's two things that we wanted. Number one, it needs to break the 50 EMA with volume. Number two, we want that break to break higher than the center peak of the W. And what we have going on right now is a failure of that. We've actually put in a lower low. We have not broken here to change a structure. Now, could it come? It could absolutely come because at this point in time, we're still above the 10 and 20 EMA and there's still, 14 hours to go before this daily candle closes. Anything could happen. But at the same time, we are setting up for the weekend trap. We're going to understand what is happening there on a smaller time frame. But before you get to smaller time frames, you have to understand where you are in the bigger picture. So the bigger picture right now is we can see this blue vector candle here, but it was a huge wick. Let me get rid of this circle here so you can see it clearly. But it was a huge wick that closed back underneath. And that now we have this potential reversal candlestick pattern, depending on how the current daily candle closes, that could be setting us up for an actual rejection of the trend line. And then we're going to come down a little bit further. So the W is certainly not a completed W at this point in time. In order for that to be a completed W, it needs to break up higher than the center peak, then come back to the 50 EMA to retest it. There is a chance of that happening because we will be setting up in the next 2 days for the weekend trap. And, the weekend trap can send price up. It can also send price down. What I want to explain to you about the weekend trap, because a lot of people hear the word trap and think that that means a squeeze, whether it's a bear squeeze or a bull squeeze. It doesn't. When you're talking about the weekend trap, it's a false move that happens on Fridays that is designed to actually trap you into consolidation. So I'm going to show you what that looks like on a smaller time frame. Let me go down to the 15-minute and see if we can go to a previous Friday in time to find a weekend trap. Okay, here. So if we look at this here, have a look at the price action that happened this was last Friday, right? So we have this fast move here. It usually happens during UK, and then the US can trap you the other side, or the US just continues the same trend. So we can see here that we've got this move here to the downside after a period of consolidation. So really this whole, excuse me, this whole period here of price action was just consolidation. Nothing really exciting was happening. Then Friday comes, UK's session comes, and we have this move to the downside. Sorry, guys. 1 second. Yes, while I'm having a drink of water, please smash that like button and hit subscribe if you're not already subscribed, whilst I die over here in my living room for no reason. But anyway, so we have this move to the downside. That's a trap one way. In this particular case, the US decided to trap back the other way. Look at the wicks to the top of this candle right here. And then what happens from there is absolutely nothing happens on the weekend. Have a look at this. So when you don't see dots at the bottom of this indicator, that is signaling to you that this is weekend price action. And the price just goes sideways until the market opens, right? So just to be very, very clear, a weekend trap does not mean you're being trapped into a position the wrong way. It means you're being trapped into an open position. Why is that bad? Because if price goes for 2-3 days without hitting your take profit, you don't close your trade, you get stuck in a trade for that whole weekend without it moving anywhere. And like a lot of the times, this sideways consolidation, it will just flutter around your entry. So you're not even getting, you know, hey, it's a waste of time. And B, like you're not even getting anywhere close to your take profit. And the reason that they do that is because by trapping as many people as they can over the weekend, when it comes to Monday or Sunday, 5 p.m. New York, when the market actually opens, somewhere around that time, and it usually does happen a little bit earlier, they assess what's on the board. So they're looking at this period of consolidation and they're weighing up how many people went long over that period of time, how many people just picked a long direction, and how many people just picked a short direction. You essentially did just pick it because you don't have a trend if price is literally going sideways. So if anyone opened a trade on a weekend when price was going sideways like that, you did just guess. And by doing that, because you could not possibly have any confirmations, right? Because there are none. So by doing that, you have set yourself up for the false move week beginning. The false move week beginning is the market maker's attempt to stop out anyone who opened positions over the weekend. And the way that we know which way people did that is if they send price down, they're hitting the stop losses or the liquidation levels of people who open long positions, and vice versa. If the false move hits to the upside, they're stopping out the shorts. But in doing that, they also then trigger pending orders. Anyway, a whole other different story. But the point being that the trap move usually happens on Friday. And today is Thursday, midweek reversal day. We're going to have a look at what price is doing currently. Are we actually going to get a midweek reversal? And because I won't be seeing you tomorrow, I'm going to give you an idea of what to look out for Friday. It really is a case where, because we know this in this method, generally we like to close our trades in UK on Friday when the peak formation is in. So let me try and give you an example. Let's just say, you know, this did give you a short position. For some reason you went short here. Then once it got to Friday UK session, you would follow this trend until you felt the peak formation was in. And in this case, the peak formation was formed in US, but usually it's formed in UK. You will close your trade there. You don't really want to risk going into trade, especially not going into trades, but you don't want to risk holding trades through the US on a Friday unless your trade is ridiculously in profit and you can afford to hold through a weekend. I mean, that's a whole other story as well. You would do that on futures contracts. I'm going to talk to you about that another day because it's a whole way to save money and whatnot. But I don't want this video to go on for too long. The point being that whatever trades you're in now, if you want to protect your trade so that you don't become part of this weekend trap, then you should consider closing your trades on Friday, or at the very, very least, if they are well and truly in profit, like well and truly, like you've got, you know, a 6-to-1 risk to reward at a minimum, then you can move your stop loss at a minimum to break even or to some part of take profit, so that if you know, there is a move like this on a Friday, your trade that's open is protected. But you don't do that unless you are very far in profit, because it's a risk to hold through the weekend. Literally, you know, anything can happen. Or, you know, you got to think, you got 8-hour funding fees when you trade futures. So if you're holding a trade that goes sideways from the end of US on Friday to around 5 p.m. New York on Sunday, I mean, I'm not good at maths, but there's many 8 hours in there where you're going to cop funding fees for what? For price to go sideways. Might as well take your profit and have the weekend off, you know, refresh, you know, get outside, get some air, do something exciting, and then come back, when the market is about to open with a fresh state of mind and get ready for your new trade. Anyway, I'm going on a rant there, but now that you know all of that, let's have a look at this. The price action this week has been a little bit tricky because, the false move week beginning was very, very obvious. I talked about this on Sunday, about there being a potential for the false move week beginning to be to the downside to take out this liquidation level that was at 26,396. And that was the hammer right there at the start of Asia that we got, that was the false move. And that led to a really nice uptrend for really 3 days, which is what we look for. We look for 3 levels or 3 days. So we got that. We ticked that box. Then we moved into this formation here, which, could be the M formation. However, it wasn't the greatest, stopping volume candle. It's this one right here. Now, when I say it's not the greatest, let me zoom in so I can show it to you super clearly. I personally like to see a stopping volume candle look like this. This one right here is the perfect kind of one, where the stopping volume candle is literally as it's labeled, it stops the volume in the direction that price is going, and it stops it with a large wick, a small body, and large volume, right? So this is the kind of one that I like to see, where price does not return to the wick. That's usually the first side of an M or W. So if price is to the upside, it's the first side of an M. If price is to the downside, it's the first side of a W. So this was looking great. But in this area, the reason I don't really like it is because that red candle right there, that's the stopping volume candle. But see how price then returned to it. So it was a difficult one to pick whether or not, that was midweek reversal. And then the other thing to note is that rises and drops. So I always say that price rises and drops in 3 levels. It's probably badly named to be rise and drop, because rises, they kind of imply an increase in price 3 times or a decrease in price 3 times, right? But that's not actually what it is. They're literally just levels, and levels can just go sideways. So if this was an M formation, it is possible, when we zoom out on what's happened in this current zone right here, it is possible that these are stacked drops here until now, where it's just broken the level. So it could be that this is your M formation. This is a stacked drop here, a retrace, a stacked drop here. And when I say, not stacked, that's the wrong word. A sideways drop. Stacked is up and down in price. Sideways drops, what they mean is that you have the high volume that counts as a level, but it doesn't actually create a lower low, or it doesn't actually create a higher high if in the case that it's to the upside. And that kind of looks like what is happening here. So we do have this M formation, didn't break the 50 EMA with volume, but that could be because we're in a sideways rises and drops. I feel myself getting way too technical. Please let me know if I need to beginnerize what I'm saying, because I can feel it. Leave me a comment, let me know. Sometimes I just get right into it, and then I'm like, Annie, slow it down. So let me know. Karen says, awesome alpha. What else? Closed my short earlier thinking it was going higher. Look, that's not wrong. We can talk about. Janice says TTC understands. That's because you guys are goats. Loving Super Chum says, loving your yeah, keep going. Okay, good, guys. You just have Albert Einstein, because I don't know. But anyway, so it is, it's possible that we're in these drops. Now, the thing that was tricky about this was this level right here. Let me get rid of this one because I drew it in. But this green line that you can see, hopefully, right here, it's called the high of the week. It's at 26,888-ish. And if I zoom out, I'll show you exactly why. Wait, was it? Yeah, it was. So it's the highest point that price went last week. In this method, the highest point of last week and the lowest point of last week, it's like what in retail trading you would consider to be support and resistance. So that means that this here was the resistance of last week, and that becomes a key level when you go into the new week. So when we have a look at this price action right here, the reason that it was a bit tricky to open shorts there is because I didn't like the stopping volume candle, number one, which we've already spoken about, and B, look how many times here. So this really proves to you why it's a key level. Here, and just now it's broken. But until now, it was holding the high of the week. So my advice in the Discord was I wouldn't really short this unless we broke back below the high of the week, because if the high of last week was acting as support, there was a good chance that we would get another rise, which forms the weekend trap. So like I showed you that last Friday where UK went up, then US went down, there was a chance of that happening. However, we've now broken it. So that's good because now we have clarity and it's looking fairly deep. But at the end of the day, once this move is over, it's happening right now, but once this move is over, at some point in time, it's going to attempt either a retracement or a board meeting. A board meeting is a made-up term by Anastasia, which is myself, which is where price just goes sideways. It's consolidation, but we call it a board meeting because the point of consolidation is for the market maker to reassess who they trapped within the last fast move and whether or not they need to go for another level or they're ready to reverse price. So that's why I call it a board meeting, because I literally imagine market makers in a board meeting deciding what they're going to do next. So now what we have to watch for, once this move to the downside is over, because we've had a break of the last week's high, great, but we have to wait and see if we get a successful retest now. So two things could happen. Number one, we could, once it's done, let's just pretend this is the low. We don't know yet. We're literally in the middle of the move. So once the move to the downside is done, it may start to create what will look like a bear flag. And the bear flag may come back up to retest, because now it's broken below the high of the week. It may come back to retest it. And within that, we may form what looks like a bear flag. Within the bear flag, you look for the lower high. If you get the lower high, after 5 touches, I should say. If you get that lower high, that's your confirmation that we're going down, and see how your entry would end up being fairly close to just shorting the break anyway. So this would not be a bad setup if it were to actually happen. But we're running out of time because tomorrow, Friday, UK, like we're kind of done. It kind of has to do that today. The other thing it could do is not actually retrace at all and just go into a very flat board meeting where price just goes sideways. That is harder to get the entry. But usually what will happen within a sideways board meeting is price just consolidates like this, right? And then within that consolidation, another M formation will form, right? So at some point in time, this will fail to get back to the top of your consolidation channel. And that's your hint that the next level is going to come. And then you would take a short off that second level and your stop loss would go just above the channel, and then your target could be down at a liquidation level if you have them, or you could even use the heat maps here to see if there are any high level orders below price. We don't really have anything right now. 26.6 is one area. It's not enough for a big bounce, and 26 is another area to keep in mind. But if it came down, that would be happened to be on the Twitter Spaces that we all did as a team just an hour ago. This is a point that I was trying to make to Ran, because Ran was saying he doesn't like trading small time frames because it's only a small move. But it's not about how much, it's not about the percentage that price moves, it's about your risk to reward. That's a 9-to-1 trade if we come back to those heat map longs, right? A 9-to-1 trade means that's a 9% total account growth if you only risk 1% of your trade, which is, just to be clear, an average good trader will do 10% account growth per month. So we're almost doing that in one trade if we were to get a setup like this. And that's why it goes to show it's not about the time frame, it's about getting the best risk to reward possible. To do something like this on a daily time frame, you would probably have to hold a trade like that for a month, and we can get that in usually 3 days. So go. But anyway, that's not to brag or anything, but we are the best. But anyway, so those are your two potential setups if we're going to have further downside. But it all depends on the retest here. At the same time, actually, let me go back because I want to show you something else that would happen. At the same time as that happening, what would add confluence would be that the EMAs start to catch up to price. So two things happen when you break a level and you start to change trend. Two things can happen. Either the EMAs catch up to price or price catches up to the EMAs. If it's going to be price catching up to the EMAs, that's a retracement. Right. So the price, it's like you got to think of it like a rubber band, like a magnet, right? So price moves away from EMAs in a big move. Let me point this out and show you a visual. Look here. So big move. See how price moves away from the EMAs and the EMAs fan out, but eventually they always come back like a magnet. So we had this big drop. It came back to the 200, back to the 200. Then it makes its next decision. Then again, price moves away. It fans out. So this is the case where price has moved away aggressively, and then like a magnet, the price comes back to the EMAs. And the other thing that will happen is price will consolidate and the EMAs catch up to price. So let me show you that. So we have this big move here. Price moves away, the EMAs fan out. Then we have a retracement, but see here, this is EMAs catching up to price. So consolidation is a chance for the EMAs to come back, but a retracement is a chance for price to come back. And both of those can present you with the entry for the next trend, whatever forms. But you just have to learn how to read the consolidation, because that's the hardest part, to be honest, because you're looking for stop hunts and you're looking to understand which way the market maker is trying to induce retail within a sideways, period of time. So those are like the two kind of setups that I would be looking for. But keep in mind the timing, because if it takes too long, then we could have the false move Friday. UK could send price up in order to trap people into the weekend. And again, just I like to show you a visual. But here, it could be something like this again, because now it's a little bit too obvious as well. And when it becomes too obvious, that's what makes it easy to set the trap. So just be careful of trading into tomorrow. If you get a good entry by way of a retrace or a board meeting that I just showed you, if you can get that today, you can ride that into tomorrow UK. But if anything else happens, you're better off just sitting out and waiting, because once we get into the middle of tomorrow, then you're being set up to be trapped into the weekend. Better to have it off and do nothing. But one other thing that I will say is that when Bitcoin goes into its weekend trap, that is the opportunity when it's just moving sideways. If you really want to trade weekends, which I don't, because I just like to use them as a brain rest, really. But if you like to trade weekends, for some people it's the only time they have to trade, and that's fair. Then whilst Bitcoin is going sideways, it's like, your parents that have gone out for dinner and you're left at home without a babysitter, so you can go wild. That's what can happen with altcoins. So you may find that weekend trading is fairly good for altcoins. Right now, with the Big Get KCGI competition, about to happen, it's probably a good time to practice, because we definitely want to play full out with that. By the way, if you are interested in joining that competition, come and join my team. We're definitely going to play full out here. I'm the new kid on the block here, guys. I've got a lot to prove. So not just me, but my whole team, we are ready to play full out with KCGI. I've got a whole scalping strategy that I share with you if you join my team. First thing you have to do is use the link below to get your BitGet account. If you don't have one, if you have one, fine. But then you can also, the link is in there to join my team. And once you've done that, you also want to get into my Discord and get your little badge that you have joined my team. To get my Discord, the easiest way is to go to my Twitter. Here, Trade Travel Chill with 1L. Just be careful. There's a lot of scam accounts on Twitter. And then here where it has this link right here, if you click in that, it will direct you to my Discord. And then you'll see the prompt that says get your badge for KCGI. If you get that, if you click on that button and get that, then you'll get access to the charts and the chat section and all the scalping strategy that I'm going to be sharing for that competition as well. So anyway, that's basically all I really have to cover for today. Just be careful see if there's any opportunities on the weekend to trade altcoins. It will be independent, and it will also not really follow the method that we trade, because it's you're being subject to retail emotion and what they believe is happening. But you can get some pretty good trades. If you see typical retail patterns, they're probably going to play out into the weekend, but just be out of them before that Sunday false move week beginning. Can USA compete on BitGet? I'm not sure. See how you go with a VPN. I think the KYC may have come in. That's compulsory. I'm not 100% sure on that one. I'm sorry. Let's go TTC, says Emma. What else? Definitely on your team, says Neueren. I hope I said that right. GB says, what's up, fam? Okay, guys. I love this, TA. Why are the vector candles different colors? Okay, I'm going to answer that one before I let you guys go, just so that you really understand what this indicator is all about. This indicator, the PVSRA, the point of it is to distinguish the spike in volume in comparison to the prior 10 candles. So if the candle is green or it's red, what that's telling you is that there is a 200% increase in volume in relation to the average of the prior 10 candles to that candle, right? So if it was this green one, it's in relation to the prior 10 candles, there's a 200% increase in volume. If the candle is magenta or blue, it's a 150% increase in volume of the average of the last 10 candles. You don't have to memorize that, but let me tell you why that's important. If there's going to be a 200 or let's say a 150 to a 200% increase in volume in comparison to the average of the last 10 candles, that means a lot of money is coming in at that point of time. The only people that can bring in that much volume within one candle, right, in comparison to 10 candles prior, are market makers. So we assume that when we get that when we get that volume spike, the market maker has turned up. So when we see white and gray candles, this is the market maker sitting back and watching what retail is doing. They're watching your sentiment, how you react to the move that just happened. And by watching you, they then prepare for their next move. So if we can understand when those volume spikes come in, then we get to sit back and watch what the market maker is doing and try to be on the same side of it, because we can't beat the market maker. Like, that's not how this works. Our best chance is to learn to understand what they are doing so that we can do the same and be on the right side of the trade. So it's very, very important to understand when those volume spikes are coming in. And the other thing too about it is if we have a volume spike, let's just say we have a move to the upside, we'll use this. We'll use this. So in this move right here, this is actually a really good example. In this move to the upside that happened at the start of the week, see how most of the candles to the upside were green, right? But then when we got to this top peak here, it turned blue. So whilst the green candle is a 200% increase, we now know that the blue candle is a 150% increase. So that means that the volume is actually dying off. So depending on where you see that blue candle, if it follows green candles, it could be a hint that whatever move you're in, and in reverse, it would be the magenta candle that comes after red candles. It's showing you that whatever trend you're in this case to the upside, that trend may be weakening now. Now, it doesn't mean it's definitely weakening, because you can get a blue candle that is just like a rest period. So you can get a blue candle that goes into consolidation, they build up a bit more momentum, then they go again for another rise. And that's why you have to understand how the rises and drops work. But if you happen to get a candle like this after a move up like this that's been mostly green, this could be a trigger to say, hang on a second, I'm going to stay long, but I'm going to start looking for reasons why I should exit my long and bag flip short. And your reason would be an M formation or, a lower high, or just something that starts, a wick's turn from the bottom of the candles to the top is another example that happened here and here. Anything that looks weak in the trend that you're currently in, that's your caution to take profit. And, bag some money, really. But that's all I've got for you guys. I hope this was helpful. Have an amazing weekend. Don't forget to use the links below. I want to, I'm like so close to cracking 100 members on my team. So, and I want to be the first to do it. So please help me out. And yeah, jump on the team. We're going to have so much fun. And make sure that if you do join my team, you also join the Discord, because we're going to be sharing a lot of alpha there, and it's free. It's free to do that. So I will see you guys Sunday. Have an amazing day.
What's good, everyone? How you doing? You stream? No, the stream's fine. We're just getting somebody to fill in. How you guys doing though? Where you guys all from, bro? What are you doing today? Or night? I don't know. What funny magic are you guys up to? Doing great. That's good to hear. Nah, Simon, I'm not Jackie, bro. I'm Elgato, yes sir. I'm that sexy cat you see on Discord every now and again. I'm from Cyprus, bro. What's good, bro? How you doing? Malta. Thank you. Great, thanks. I can hear something. No problem, bro. Always great to know it. He was greeting me. Yeah. Oh, that guy. Wow. Simon said, oh, that guy. That's crazy, bro. Simon really done me like that. He says like, oh yeah, that person. Seen the name, don't care. On a day off from work, bro. That sounds like fun. Perfect timing for school. Yep, perfect time for the 24 hours. Huh? Are you gonna be here for the full 24 hours, or like you just gonna be here for summer? I know I've seen you for quite a while now, but Simon's laughing at me. Wow. Thanks all for the superb marathon, bro. Don't worry, of course. Huh? It's not over yet. There's still like 12 more hours of fun. Trust me. South Africa has been watching for over 9 hours now. You've been here the entire time, Banter. I know. Banter Bubbly, I've seen you the entire time. Been here for a while already. Oh, look, the crypto Jackie, bro. Why should I steal my limelight? Hey, Jackie, hey, feel free to jump on if you want to for like 10 minutes, huh? 5-10 minutes if you want to. Crying internally? Nah, not yet. 12 hours still. Nah, it's always the first 12 hours. It's always nighttime. It's the hardest, bro. During the day, it's fine. It's like a smooth ride. But that nighttime, it's so quiet and boring. It's like you don't even realize. Been awake now since 1 p.m. yesterday. Come on, you nearly at my time. Let's go. Competition. Who can stay up the longest? Who is next? I will tell you now. Give me a second. We are are meant to have, I forgot what time I'm in. Fefe and Mason are meant to be on in 20 minutes. You can hop on if you want to. Feel free to, but like we do have people coming in like 20 minutes. So for now, we just talk. Huh? So if you want to talk to people, feel free to. See it through. But I only had 3 hours of sleep before this. That's better than me. Yeah, that's going on.
David,
What's good?
how are you, buddy?
How you doing? Not bad, you.
Yeah, good.
Yeah.
So you guys watching, you guys need to know something, right? David is the glue that holds this whole operation together. He's the one who, yeah, he does all the troubleshooting, the changes, the tech issues. I think in this 24-hour marathon, I think he's got one spot where one of the other mods is going to take over from the screen sharing and all the stuff that he's doing. And he's going to get about two or 3 hours sleep if he's lucky. He's an absolute, yes, he's the architect. Simon said it. He's the architect, the pilot, the engineer, and the architect of the whole program. So David's the man. Shout out to you, brother.
Thank you.
So I can see the chats in here. You guys got any questions? Let's try and answer them. Let's see if we can. Sorry, David, I just hopped in. I was taking a break myself quickly and just getting some stuff done around the house.
Nah, that's fine, bro. I was having a grand little laugh and talk with the people, so it's fine.
Awesome.
I see we all have about 3 hours of sleep.
Yeah, I know, right? I had 4.5 last night, so
sure.
Awesome. So I did see in our oh, Mizi's here. Hey, Mizi, such wonderful souls. She says, "Thank you, thank you. So good to see you around." David, I don't know if you started sharing already, but I saw somebody said, "David, why don't you share your story?" I might have missed it.
I don't know, bro. I was on here. I'm trying to fall into like Fefe and then get back. I've got things I need to do, unfortunately.
Okay. Cool.
Oh, Crypto Jackie is gonna join for a bit.
Jackie's gonna jump in. This whole community, I got to say something. This whole community is something special, and being a part of it has been incredible for me the last 8-10 months. And I've been following Crypto Banter for a couple of years, but just being part of it and helping people has been phenomenal. And with regards, Jackie, who's coming on, used to be the glue that held it together, and it's a big job. It's a tough job, and David is the one who's taken over from Jackie, but Jackie's still here, and he's still supporting, and he's still part of the community, and it's so amazing. And we've all got each other's backs, and that's the great thing. We've got David's back. Everyone else has got my back. We've all got Jackie's back. Everyone's got David's back. It's a fantastic community, and you guys that are watching now is the reason we do it. Fantastic.
Hey, guess who's in here? There he is.
There he is.
Hey, what's up, guys?
What's up, Jackie?
How are we doing?
We good?
Tired, bro. How about you?
Continue. Right, I'm just checking
Go on,
my
Shauna.
output settings.
Yeah, so Jackie, I don't know if you want. Have you got a screen you can share? I'm just looking at my. Don't have anything up here at the moment, but we had a question further up about Fibonacci, and that seems to be one of the. It seems to be one of the. It was D4 who asked it again.
Okay.
Finding an entry on the 618 fib. You know, I know Chris always talks about it a lot, and it's the kind of the edge of the golden zone. But are you in a position you could run through the fib and the 618 for us?
Definitely, man. I don't have any trades available, but that's okay.
No,
I'm
that's
always
fine.
prepped to present the chart.
That'd be awesome.
Cool. We're just going to bring it up on screen. Cool. Okay, so let's clear the chart. For the sake of the exercise, we're going to use ETH. It's the easiest to understand. So let me just get this right. We're trying to help you understand how the fib works correctly and the importance of the 618 zone, right?
Yeah, I think the question was more about finding entries on the 618.
Right.
And the whole thing I think that we all bang on about is that these are all indicators, and it just because it's a 618 doesn't mean it's going to bounce or reject. You need to find other confluences, you know. But Jackie will go through those with you.
Correct. So if you look at my screen just now, I've just drawn the fib for the last sort of leg down. And what you're seeing right now is that price has not come back to retest anything further than 382. So, you know, when you watch Dylan and the guys and you watch us on the live streams, we usually love seeing a pullback to 618, right? So 618 is that sweet spot in between the, let's say, Fefe usually uses the 50 fib, and this is just an indicator to show you that the chart has balanced itself out and it is happy to continue with its price action in any direction from that point. But usually when you just cross that middle point on the fib, you get this nice area called 618. So 618 in terms of the fib numbers is the one that has the highest, I'd say, affinity or attraction, whatever you want to call it. There's a million words for this sort of concept, but it's not too far down. It's also not too shallow. It's just the sweet spot. You know, like Goldilocks had, you know, her porridge just right. Same concept. So it's not to say that whenever you draw a fib, there will always be a horizontal level that lines up directly in that area, right? So if you look at the way I've drawn this fib now on the last leg, we don't really have a definite area on the 618. We have a lot of price action through the 618. Yes, that we see a lot. And essentially, you could say that, yes, because price moves through there a lot, you can say that this is ideally where the price is accumulating, which is true. But if you look at the 382 actually has a better defined level. And what I'm talking about is this right here, right? We have price action that stayed above it. Majority of this price action stayed above it. This was an inverted head and shoulders. So the shoulders themselves stayed above it, which still respects that horizontal. Then on this side of the price action, you can see that we've broken through here and it's now acting as resistance. Let alone horizontals alone aren't really the level. Levels can be a specific area, a group of areas, right? So essentially the top of the shoulders as well would be considered a level, but it's a little weaker than the bottom of this area that I've just shown you. But anywhere in between those two horizontals would be considered the zone. So that is why there is a few areas where you can plot your horizontals. So if you understand that concept, you'll see then if you use that same methodology of knowing that it's an area, not just one specific line on the chart, the same thing can happen with any of the other fibs as well. So with that in mind, if you keep looking at it this way, you will then see that we sort of have a level here of resistance. We've got a few candles over here that's been rejected. Ignore the two that has crossed over. We've got a few touches of this horizontal over here as well, and in this area. So that tells me that this is the range high in this case, and that is also the resistance for this sort of area. But now, if you take into account these highs over here, you'll see that you're forming another zone. So if you brought out your box, then you would see that is a zone as well. So with that in mind, these horizontals that you find, ideally when they line up with any of your fib levels, the key ones, so 382, 618, 786, but big emphasis on 618. So if you have a horizontal area like that lining up with a fib, it's really strong and powerful, and that is usually the place where you want price to go to, because you're more guaranteed to get a sweeter entry at those specific areas. So now the last part of that sort of question or ask was, how do you get your entries on the fib? So this is a concept that's very confusing to a lot of people at first. You don't get your entries on the fib. The fib is to help you plan where to put your entries in advance before the price gets there, right? So in this case, we want to see a pullback to 618 before we move further down. If price comes to the 618 and stops there, that would complete this trend, and it would be a lower low, or sorry, a lower high. So that then strengthens the trend and also confirms that we are making lower highs, which Intel says market should come down to make a lower low. Obviously, this is all just speculation as to what happens after we get to the next lower high. But what you are looking for is this next move. So let me just get my brush. So you are looking for this next move and the area where it will return down. So in this case, the fib just helps you to understand where you're more likely to reverse. So remember I was saying there was a lot of price action through here. So that this wouldn't be the horizontal level we're targeting. So if we're looking at what we see on the chart right now, this horizontal, if you look at this level, right? That exact level. So you see how many times price has bounced more or less on this level. So that would be the ideal area for a rejection to happen. So it won't be the 618, unfortunately, because there's been so much price action touching this horizontal. And you might not believe this, but if you bring up the 50 fib, that's a 50 level right there. So this is where Fefe's methodology will come in and explain to you what he sees with the 50, but he'll dive into that when he gets there. Just know that that was the strongest level on the fib right now. So when it comes to fibs, you're just looking for the strongest point of rejection or support.
That's fantastic, Jackie. Thank you.
Cool.
I see Rattus has asked, at what point would you consider the fib setup invalidated? And once again, we stress the fib level is not an entry. The fib level is that is a guide to help you plan your stuff, and you're using other tools as well, and looking for other confluences. So it's not that your fib is invalidated, it's using it as a tool, or one of your confluences or one of your areas to look at.
Correct.
And then
I think the only time... Sorry, go ahead. Sure.
No, okay. Misi also asked, she actually said some people say the 50% level is key. Now, 50% is actually not an official fib level, but depending what style of trading you're doing, if you're looking at smart money concepts, they use the 50% as a divide between the premium zone and the discount zone. So there's so much info out there and so much stuff that can absolutely drive you nuts. My best recommendation is to keep it simple and work with what works with you or for you.
Definitely can't agree with that more. Like also, if you're a range trader, the 50 fib is probably the best one out there, because if you get any of the others in a range, that doesn't quite mean that you're following a range. Then it means you're breaking out of your range. So that's why 50 is important for range trading as well. I just wanted to come back to the invalidated statement.
Yes, please.
The only time a fib is invalidated is if you drew it on a leg of price action that isn't complete yet, meaning it hasn't made a lower low or a higher high yet. So meaning the wave is still going up and you're trying to draw a fib on a wave that's going up still, or a wave that's coming down. You can only draw it from a low to a high. If it's drawn from a low to a high that's still being formed, that's invalid.
That's awesome. Cool. Musi says it makes sense. So does Rattus. I'm glad we could answer the questions. Bring us another one. We're on a roll.
Yeah, definitely, man.
Jackie's on a roll.
Team effort, bro. Team effort.
Absolutely. Absolutely.
I was laughing so hard with Terry Lynn the other night when Chris and I went over for supper, and she was like, "Yeah, no, we all started with a small trading group, and we were like, yes, Jackie, he says he's never traded." And then she's like, "No, we all think that he's been trading. He's just lying." I'm like, "No, guys, I learned all of this from you guys."
I can tell you right now that Jackie's actually a BNB whale, because every time he does a BNB, I think BNB is your one. He just calls that token like he goes, "Yep, this is the level," and yeah, whatever, Jackie, impossible, and it just goes bang. BNB,
BNB magic, man.
BNB just, yeah, absolutely. Yeah.
No, no. Sometimes you just have this natural attraction to the tokens. I mean, like if you look at Max. Max loved his Matic at a stage when we were all doing school together, and they traded that constantly. He was doubling farming tokens left, right, and center. At the time, he made up like 7% just on Matic alone, trading spot in like a week. And I was like, what? Okay. So yeah, and then obviously the one that you all know about is Bruce and Tomo. Like there's a million examples of this.
Mama Sniper and Theta.
Yes.
You know, you can actually make more focusing and intimately knowing one token than, you know, just trying to trade 6 different tokens every week. Definitely. Become a specialist.
Simon says he's too attached to ADA.
I started trading Phantom in February.
Okay.
And I got some phenomenal ranges on Phantom, and I essentially over the time I think I bought my first lot of Phantom. I bought 200 of them at about 44 cents, and I bought another 300. 800. I bought at about 32 cents. And I've been using my farming technique. I've been trading it up and down. I haven't put any more money into it, but I now have my average cost of my Phantom is down to about 16.5 cents, and it hasn't traded under that for over a year. You know,
Hectic.
um,
That's really
and
good,
it's,
Sean.
yeah. So even though I mean, I bought them, like I said, at 44 and 32 cents. My average cost is so far down that I'm actually better than break even. You know, and then it stopped playing game. It stopped playing my game, and I went on to something else. You know,
Right.
and I still keep an eye on it, but just like Bruce was on Tomo for about 2-3 months, and he's moved on to something else now. You know, because Tomo has stopped playing the game, or stopped obeying his or reacting to the style of TA he uses. It doesn't mean nobody's playing or making money on Tomo. There are other people that are. It's a case of, okay, for his particular style and understanding, there's something else he's focused on now. And a couple of people have said here, Cass is one of Chaos's coins, one of Chaos's tokens. Whereas Dylan, it gets burnt by Cass every time.
So
you know,
it's interesting. It's really interesting, like watching Dill get burned by Cass. But I came to the realization why it's reacting the way it's reacting. So in the bear market, you know what shines? It's the people that mine. And Cass is a mining token. I only found that out like a few weeks ago.
Oh, really?
Cass has it has the third biggest pool of mining, let's say mining power available right now. It surpassed ETH even as well. So you know that's a big play. That's probably the reason why it's growing so big right now. And that's probably why it's going to continue growing as long as the bear market goes on. Because now people want to accumulate their tokens, so they're going to mine the crap out of the Cass.
That makes total sense. Mizi actually just made a very valid comment there. She just said, I just need to get all this fantastic knowledge to stick. And there is a lot of knowledge out there, Mizi. And the one thing I want to say is that, you know, every time you hear a concept, right? Or actually, there's a saying. In order for any concept to come to light in your mind, it needs to resonate with something that's already in you. Okay? And there's so much info in this industry, and there's so many people, and there's so many different styles. The more you involve, the more you watch it, you're going to get little bits and little sayings and little things that will plant a seed within your subconscious. And
What's up?
Hey, Fefe.
Hey.
How's it going, gents? How's it going?
Really good.
Good on yourself, bro.
Yeah. You guys are looking good. Sorry for what were you guys talking about? I literally just jumped in. Good to see you guys. Good to see you. Looking good. Check it, Sean. What's up?
Hey,
What's up, Dave?
I was just answering Mizi. She said she just needs to get all this fantastic knowledge to stick. And I was explaining that as you go through it, you know, each time you hear something, or for any idea to actually germinate in your mind, you need to, sometimes it just goes over your head, but it plants this little seed. And as you go through time, you'll hear something that all of a sudden resonates with something you that went over your head so many times, but it's there. The seed is there. And you'll hear something, or you'll see something that suddenly feeds that seed or germinates that seed, and it starts growing within you. And you go, wow, now I get it. You know? So the more you're involved, the more you're involved with the community, the more times you watch it, the more times you hear it, little bits and pieces stick together, and they just grow and grow and grow. and they accumulate, and they stop being a single seed and they start becoming a forest. And that's the progression, and it takes time, you know, and the persistence is what's going to get it there.
Awesome. Awesome. All right, guys. Amazing. Incredible. You sticking around, or we got, I don't know. I see Rain in the house as well.
We were holding
Good.
the fort down for you, bro.
Oh, you're more than welcome to stay around, guys. You're more than welcome to stay around. Just not sure. So
Mason's in the house too.
Hey guys.
Sup,
Hey,
sup.
Mason.
When ducks? When ducks, Mason? When ducks?
I don't know.
Guys, in the comment section, write that Mason should ducks. Just say rain ducks. That's what he should do. Get his camera up and ducks himself.
So
I want to stay hidden.
I met Mason
will.
Mason in cohort 2 back in January, and I still don't know what he looks like. I know he's a great bloke.
Wait,
I love presenting.
That's
with
a secret.
him.
Nobody knows.
He used to
I
be
know
at
how
all
you
the
look, bro.
after
I
parties
stalked
with
your
me.
Facebook.
Come
I
on.
found you.
That he used to be. Him and I used to run a lot of the after parties on the advanced stage, and I miss working with him. It's fantastic. He's such a solid bloke and such a legend. You know, it's so good to see you, Mason.
Same here. Same here.
All right. What's up, buddy? How is it going?
It's too hectic, bro. Like over here, there's a big virus outbreak.
Really? Is that
It's called Nipah.
Okay. Don't say the other one because YouTube will ban our stream.
Oh my God, sorry.
No, the V is good. I don't think that's a problem, but don't say the other one together. Our stream is gonna be taken down. I just put my lenses in and it feels so weird. But should we start looking at the markets? What should we do, guys? First of all, I really read the comments up here and really want to know how is this thing going. Like, do you guys enjoy it? Should we do it again? Like, what's happening? How long? Who's been here the longest? Who's been here forever? Let us know in the chat. Who's been here for like? Is Bruce still here? He's been here in the morning when it was 4 a.m. for me. He was here, but I don't see him now.
I think Simon is here. Simon was in the morning.
Simon was there. I see Simon as well. Simon J, what's up, bud? So Mizi says raining ducks. So like doxing, that means like he should show his face, his identity.
SR.
Ducks. Yeah. Okay. So
SR. Like what is
So-
SR? Like,
I did see a comment. I'm just scrolling
Support
through.
resistance.
support
I
and
got-
resistance.
I think yeah, okay. Did I
Yeah,
explain
sorry,
about that?
I saw a
Sorry,
comment
sorry.
before. Somebody who said he got up at 1 a.m. his time and it's now midday or something like that. He's been watching for 10 hours or whatever.
Oh, that's like a European fella.
There's
Yeah,
two
I saw
people.
somebody say that, but I'm going to bow
Jump off.
out, leave you guys, but I'm going to be watching because honestly, guys, between Rain and Fefe, they incredible traders, incredible market analysts, and it's huge alpha coming in the next hour. So stick around.
Oh, thank you, Shona. Thank you. Nice seeing you
I'm
guys.
gonna do the same, guys.
Awesome seeing you, Jackie. Awesome seeing you.
Yeah, it's been a
Likewise,
while.
brother, man.
Yeah, for a while. I'm not in Cape Town, but if I will be, we gotta drink something.
Yeah, we definitely need to do that, man.
A glass of water.
You said the
And that
market's that dry
Yeah.
that you need water.
Tap water, and I'll take a vegan brie, my friend. So that's what's up. Brie is like a South African barbecue, right?
Correct.
Yeah. So, and I'm not eating meat, so I'm gonna take a vegan brie. All right, brother. It was awesome seeing you up here.
Likewise, bro.
Take care, man. Devs was here. Devs is one of our community members, moderators. Devs, what's up? He's been here for 10 hours.
Whoa.
10 hours. Good.
Legend.
I'm up since 10 hours as well, but I wasn't on the stream. I was working. So
Same here. Like
Rain.
I woke up at 7:30 or something, 7 o'clock or something, and now it's around 4 o'clock, 4:30 p.m.
Oh yeah. Cool. So people saying thanks, boys. So grateful to catch you later. It was for Shono and Jackie. Good job, guys. West is 4 GMT with a short break. Awesome. Water is best. Mizi, I agree with you. Last marathon, I watched 18 hours from 24. Awesome. You know, in the next one, I might stay up for 24 hours. Beer here from the start, slept 3 hours and back. Amazing. Sounds like a proper party. It is a proper party, dude. It is a proper party. You know, I will shield the beans now, and I didn't even tell to the team. It was today. We're talking with the team, and Ren just posted in a management group saying we should do a Twitter space where we talk about the story of Banter. And then I just said, you know, what we should do is that we should have this continuously every week, debating and having the name should be Banter on Bourbon. So we're thinking about launching a Twitter space every week where Banter on Bourbon, where the hosts come on and just discuss basically everything. You could have your questions answered. You could come on stage, ask questions and whatnot. So let us know how you would like that, because I think it would be cool.
That would be so cool.
Yeah, I think it's gonna be exciting. What do you think about the Indian crypto market? Rennie's getting very bullish on this. What's your thoughts, Ren?
No. Like for me, the government, like the ruling party as well as the opposition are against crypto. Do you know, like, we need to pay taxes on our losses too?
Yeah.
On crypto, just on crypto. So it's
That's
like too
that's
hard.
what's up.
Like I
Yeah,
don't
but
know.
they will,
Like,
they will resist at the beginning, and then they'll just adopt.
the thing is, like, most of the MPs in the parliament are not that educated, so they don't actually care about these things. They don't care about what crypto is.
Yeah.
So
Yeah.
the things that they're discussing in the parliament are way different from crypto and all these things. And for them, they only want to ban this thing.
Yeah, man.
That's all.
Well, they will adopt. I'm telling you, they will adopt. They will. It's
And
just a matter of
they're
time.
doing one more thing. Like they banned most of the forex exchanges as well as the crypto exchanges. You can't do leverage in India. Okay, so like the only way for you to do leverage trading in India is basically through Binance, and they are currently restricting people to trade in forex and crypto, and they are making people trade in the stock markets. So I don't know if you know this. The Indian stock market is currently at its all-time highs.
Ripping.
It's basically boom. It's basically exploding. The reason for that is because most of the traders are in the stock markets than in the crypto. Rain is a rebel.
So Rain, we understand why don't you dox. That's the honest truth now. We understand why don't you dox.
I want to be anonymous. Otherwise, the ED is gonna come to my house.
You gotta move to Dubai, man, or just move to South Africa. That's what you should do, to the Banter office.
Definitely.
All right,
like, I'm actually trying to do it to Dubai, so it's good.
Yeah. It's great opportunities there. By the way, guys, I actually now talking about Dubai. I think this is not why we came, but this is also cool stuff to just add. Nothing is sponsored here. Oh, by the way, smash the like button and subscribe to the channel. If there's anybody here I see in the comments who's not subscribed, I'll just, I don't know, send you a poop emoji. So go and subscribe to the channel because it's awesome. And we're going to have a lot of stuff coming out. So what I wanted to say is that a lot of people have issues with verifying on an exchange and whatnot, and KYC, and I know that it's getting to be a problem. And I just wanted to let you know about an option that I may or may not use. That could be a great solution for people who want to KYC to an exchange but can't. So I'm just gonna pull my stuff up here. Let me look at this, and then I'm just gonna share my screen.
Forgot to sub from this account. Rest in peace.
Okay, so there is something called
e-residency. Oh, e-residency. Okay, Palau.
Yeah, so there is this Palau ID, and this is a super cool stuff. So basically, you pay $248 a year, and they send you an actual ID. So you get an actual Palau ID. That's an official ID that I use when I go into, if I have this, then I use it to go into clubs to verify myself at wherever I go. It's a cool stuff to have, and you can use it as an actual ID. So you can leave this ID anywhere. You can provide this, and you don't have to. First of all, it's very good because then you don't have to do. So you can use this ID instead of giving your passport or your government ID. And it's also safer to use this than any other ID. And you can KYC with this on all the exchanges. And I go even further. You can order the Binance card to your home address with the Polo ID KYC. Now that's fucking crazy. That's very, very, very good. So
it's not just about Palau, bro. Like there is another country called Estonia, which also provides the same thing.
Estonia's neighbor here is
Yeah.
the Estonia is very close. I don't know about them, but I know that the Palau ID is 200. I just know about this, and again, it's not sponsored or nothing. I just say, this is something to look for. Palau ID RNS. You write this in, and you can KYC on any of the exchanges. They probably ship it out in 2 weeks. You pay the amount, and then you get the digital residency. And they're also, upgrading. So there will be a lot of stuff. So there will be a mailing address, phone number, utilities, digital banking. There'll be so much stuff coming out, and not only in Palau, but in different areas as well. So I would definitely check it out. So someone says show non-KYC. What does that mean?
Non-KYC exchanges. That's what he means. Like
show
they want
non-KYC
exchanges. Show non-KYC. Like
What do you
Bybit
mean?
didn't have KYC earlier, so that's what he's referring to, I think.
Oh no, but you can do the KYC with this. What I'm saying is that they approve this, so they approve this Palau ID.
Yeah, like that. Like the thing that people are saying is that like they don't want a KYC. They want to stay anonymous.
Oh, why?
How can they do that? That's what he's asking.
Oh, okay. You got to use a DEX, decentralized exchange. That's the only way to stay anonymous. And not even that. Now the Ren also said it's like they are able to locate you for like a very tiny region, so they can locate your IP address to like whatever 5 streets. So they can do it very, very precisely now. And that's an issue. So you can use a VPN, but then if you don't use it and the cookies and whatnot, I'm not an expert, but I would not play with that. I'd rather just get one of these IDs and then verify myself. Okay, cool stuff. So what's up, Rain? What are we looking at? What should we do?
Ask the community. What do they want?
So there was this token. I will talk about IMX, and then also you can just pop it in the chat. We can talk a little bit more about market structures. It's very difficult to jump right in here and give teaching, but the basic idea here, we have a lot more time than when we had in the morning, is that our trading style, partially what we do is called SMCs, which is smart money concepts, which basically means that you try to follow the smart money. So you try to follow wherever smart money goes. And that's good because sorry, it's just
guys know what the smart money is, right, bro? Right, guys?
So that's good because you trade with the institution. Sorry, I was just trying to look at the comments here. So you follow the institution. So what you do, or the big money. So people with larger amount of money, they cannot just get in the market or market price. So if you have $1,000 yet, let's say, you can just go into Binance or Bybit or whatever that is, and you say market buy, and you buy for $1,000, you're done. But if you have $100 million and you start buying up, you will start buying the order book up. So what happens is that, if you have, I don't know if you're familiar with an order or
like it's there in TradingView also. It's there in TradingView. So
I'll pull this up because people just see it. So this is called an order book. Order book, very important, not an order block. Don't mistake the two. The two has nothing to do with each other. So order book means a book or a ledger of the orders, an open orders that we have. Now, if you start trading, especially if you're going to get into the degen small stuff, then you gotta know this. David, can we pull Rain and my Twitter up and post it in the chat, please? I'd appreciate that. Thank you. You guys should follow us on Twitter. So anyway, so what this does is that you see all the current orders that are out there right now. So I'm just going to screenshot this, and I'm going to pull this in into TradingView so we can look at it here. And then the numbers won't jump all the time. Does anybody remember well to do that? Here, image. Let's do it. So this is very important, guys. No, the image is way too large. That's not good.
What happened?
No, I just can't. The image is too large, it says. So I'm gonna try to pull this in here. It's loading, guys. Hang tight, everybody. Hang tight. Okay, so this is what we're looking at. So this is the same thing on the other side, right? So if you look at this, you have the same on the. Let's do this. I'm gonna do this just so you see. We have this as well, and then we can just edit here 2, and then we will have both. So what you see is that you see all the orders in the order book that are out there right now limit. That means that you have 2 types of orders. We have market makers and market takers. Now we're deep diving, guys. This has not much to do with smart money at the beginning, but this is super important.
This is think about it. Like, you guys need to know one thing. Like, as an institution, like the institution will never place a limit order. Okay, so they are the ones who are the takers. Okay, the makers are the ones who are placing the limit orders, or who are placing a buy order in the exchange. So the institution are the takers. They never place a limit order.
So there are two main participants in the markets, right? There are the bears and the bulls, but also there are makers and takers. Now the makers, if you go into a fee structure, I don't know if you've seen it already. When you look at fee structure, for example, on Bybit, you will see you have different fees listed for different types of orders. So it will say maker fee and taker fee, maker fee and taker fee, maker fee and taker fee. Let us know in the chat if you knew it. Can we put a poll up, David? How many people know what this means? Can we put a poll up, please? Saying that's Matt's Twitter. You should also go and follow Matt, but I don't know why that's up. Can we put a David? Are you here?
I am. I'm not sure how to do a poll on here though.
Okay, let's look it up and then let's put up a poll. So we gotta put maybe you gotta do it on YouTube directly. So you gotta put a poll up and see, or just let us know in the chat. Let's do that now. For now, let us know in the chat. What's do you know what maker and taker is? Someone says yes, I know. That's not an answer, brother. Tell us what is it?
Explain it. Explain about it. Tell me.
Tell us in the comment section. Someone says, please cover order blocks. We will. Okay, so until people write in the chat, what I'm going to do is that I'm going to start explaining to you what order taker and maker is. So there are 2 participants. There are the makers, and the makers provide liquidity. The makers are the ones who put limit orders at specific prices. What does that mean? That means I want to buy 100 Bitcoin, let's say 0.1 Bitcoin at $26,000. I put this order in, and this order goes into the order book, the book of orders that keep track of the open orders. And I say I want to buy 0.1 Bitcoin at $26,000. So I am going to spend $2,600. This is like kind of the this is the equation that I do as a maker when I make the market. This goes into the order book, so it's visible here. I'll explain what you see in the chart here, but it is visible all the way down here. And then the takers are the ones who take these orders out without putting their orders in. So and that means that they just jump in here, they go market buy, and then they just simply market buy the order book. Now, what you see here is, and it's super important, especially if you play in small cap coins, you have to understand the order book, because this can get you wrecked, because you can see a price and you can buy something, you can buy something up, and then you realize that you bought the whole order book up and you're 20% down already, but you didn't even get into a trade. So what you want to see is that you have 2 sides. You have the buy orders and you have the sell orders. Guys, please let us know in the chat if this is something that's interesting for you. Please let us know in the chat if this is something that you think you can use, and this is something that will contribute to your trading. I mean, I know it will, but we just want to understand that you know it as well. So then what you see, you have the buy and then you have the sell. So you see different things. So you see the price, which will be at this price level. So what is the price that the orders are placed at? And then how many Bitcoin will be bought, how many Bitcoin order is there at this price point. So this is the equation. At $26,766.03, there is 10.24 Bitcoin order, which totals to $274,094. So this is the price that people are going to pay. This is the price this is the amount of Bitcoin that is going to bought at this level, and this is the amount of dollars that is going to be spent by buying these 10.24 Bitcoins, and the sum adds it all up. So if you move up on price, or lower on price, so people want to buy it 0.03, then 0.02, then 0.01, then 0.00, and as they move down, there are different orders added at these levels. Look at this barrel, by the way. At these levels, and the sum basically adds all together. So it adds the previous plus the current, and that's the summary. Previous plus the current, that's the summary. So this is the total amount. So if there would be someone who would come in here and say, I want to buy $289,000 worth of Bitcoin, the price he could get it at would be $26,766.01.
Sell.
Want to sell
They
it.
are buy orders. They are buy orders. So if someone wants to sell,
exactly.
You said
So someone wants to sell.
Yeah.
That's what I'm saying. If someone wants to come in and they want to sell $289,000 worth of Bitcoin right now on the market, they will have to sell it at 26,766.01. Technically, no, because they're going to sell 274,000 at this price level, and then they're going to sell the difference at this price level, and then they're going to sell the difference at this price level. And that's the exact same thing on this side, which is, they want to sell. So people want to sell at 26,758. So there is a difference. People want to sell for 758, and people want to buy for 766. Now this is not correct now because I took the screenshot later, but this will always be higher than this, always, because otherwise that's a sell, right? So if this would be the case, that would be no good because this order would have been taken out already. So what you see is the visual representation of the bulls and the bears fighting. That's what you see here. So you have the bulls and the bears on two sides trying to figure out, what price can I get my Bitcoin at? I want to sell. I want to buy. Okay, and I'm going to see someone is coming. I wanted to sell at 26,758.4. And then I look at the order book and say, okay, this guy is selling at 26,758.09. I'm going to put my order in at 58.08. And then people go lower and lower and lower. And then people at this stage, seeing this, also place their orders lower and lower because they want to get in lower. This is how the market basically moves. These two sides arguing. Now, why is this all relevant to smart money concepts? It is relevant because when you want to place a limit order, let's say now in this, if we understand, guys, let us know. Does this make sense in the chat? Please let us know if this makes sense. But if you look at the order book and you say, okay, I want to buy $2 million worth of Bitcoin, right? $2 million worth of Bitcoin. If I want to buy that, the price that I have to pay right now, I go down on the summary here. I can't even buy it up. So 26,741, the price would go up to 26,741, and I could only execute like $600,000 worth of orders. So the reason why it's let's see here. The reason why it's relevant is because institutions want to get in the market, and as Rain said, they just place an order. They cannot just say, and I'm going to buy the whole thing, $100 million. I'm going to put it in, because that's not going to work that way, because they are going to move the market. So they use different techniques to drive the market, to create liquidity, make the market in a way that they want it to be, so that they can get their orders in without manipulating the price and basically screwing themselves on the back. So that is what we're trying to identify, how we can get in on that action, and how we can participate in the action with the smart money, and understand how to place our orders so we do not lose on any given trade. What do you say, Rain? Does this make sense? Okay, cool. Rain is gonna be back, I guess. We are having numbers. We have 175 people. Guys, subscribe to the channel.
My mic was off. Okay, so
no worries.
They have to know liquidity for them to understand it in a better way. That's the reason.
Would you want to take it home and show us what liquidity is?
You guys want to know, guys?
They will let us know in the chat. Until then, just share your screen.
Okay.
I'll pull your screen up here.
1 second. Let me just take KuCoin.
Guys, let us know in the chat. Let us know in the chat if it makes sense, please. This is very important. First of all, so that you understand, and second of all, it's important that you
Okay.
that you ask questions if you don't understand.
Okay.
Maybe the chat is coming in late. Now I'm thinking.
I think so. Sure, go for it. Yes, please.
Yeah. Okay. Yes, you can show us free tools that print order book on TradingView and charts. Yeah, but this is the thing, guys. You should not use free tools, or you should not use tools at all if possible. Like, there are some tools that are cool, but there's no better. There's no tool out there. Again, everything. Oh, by the way, we should have started with this, Rain. That everything we say is just what we think. You know, it's not nothing. Like, everybody trades their own style. This is the style that worked for us. This is what we think. That does not mean that this is, you know, the holy grail, and it definitely doesn't mean that this is the only way to make money or this is the only way to trade. But we do not use indicators, and we do not use, you know, the tools, because it might be good to some extent, but a lot of times, actually, we might be able to look at. I haven't looked at Lux Algo for a very long time, but I know that.
Yeah, I don't use Lux Algo.
Yeah, let's see if it. I don't even have a sub. Okay, but I used to. The only thing I use from Lux Algo is this, which is the session indicator. But it's very important for you to learn. It's not difficult to spot order blocks, guys. This is not difficult at all. It's not difficult to spot liquidity, and after the end of the session, you will be able to do just that. So don't worry about it. Rain, you want to take it home? I'm gonna bring your screen up.
Yeah, definitely, of course.
Your screen is up, sir. I'll be right back in a second.
Okay, so I need someone to read the charts. Okay. So yes, guys, I'm just going to give you guys a small explanation of what liquidity is. Okay. So you guys might have heard liquidity. Have you guys? So you guys might have heard people say liquidity or this terminology a lot of times. The basic meaning for liquidity is orders. Okay. Orders. So that's the basic meaning. Like, a lot of people might say that it's basically stop losses. It is stop losses. It is actually stop losses, but it's based on a perspective of how you view the liquidity is. Okay. For the retailers, it's basically an area in which the market has a huge lot of orders. That's all. For example, over here, what is this considered as? Tell me, guys. What is this considered as? I drawn an image. What is this considered as? Anyone? Can anyone explain? Anyone? Hello? I think the chat is coming late. So, okay, so I'm just going to explain it. So what I've drawn is basically a support zone. Exactly, Peter. It's actually a support zone. So this is actually a support zone. So what does a support zone have? It has buy orders, right? You guys know that. So this is an area of price where a huge lot of people are interested to buy the market, right? So think about it. Let's just say that I'm just calling Dinesh. Dinesh is an institution. Okay, Dinesh is a whale. He has like a huge lot of money. He has like $100 million. And Dinesh, like if you are an institution, I'm asking you, are you gonna enter in this support zone? Tell me. You have $100 million, Dinesh, or Elizabeth. Tell me. You have $100 million. Are you gonna enter in this support zone? Tell me.
I'm gonna go YOLO, and I'm gonna enter 100x.
Okay, I think the chat is coming late, bro.
Yeah, proceed further. It's all good. It's all good.
Okay, so if you are an
everybody wants to know the secret. Everybody wants to know.
It is not a secret, bro. It's about the perspective of how you view the market. Like basically saying, as a retailer, like we are all retailers. Okay, the people who doesn't have a lot of money are called retailers. Okay, so I'm a retailer, Fefe is a retailer. Everybody over here who doesn't have a huge lot of money is basically a retailer, and the institution are the ones who have the huge lot of money, who have the big money. Okay, and the institution doesn't even care about these indicators or this support zones or this order blocks or anything. They only care about price, and they only care about how they want to enter into the market. So as I was saying, this is basically a support zone, right? So you guys already know that this is actually an area where a huge lot of buy orders are placed, right? This is an area where a huge lot of people are interested to buy the markets. So I'm going to ask you guys one thing. If an institution, or if Dinesh or if Elizabeth has $100 million, and if she places a buy order over here, tell me, won't it be reflected by a huge pump like this? right, Fefe?
It will be.
It will definitely be reflected by a huge pump like this because it already have a lot of existing buy orders. Okay, and like you guys know that from what Fefe told earlier, for you to buy the market, someone has to sell the markets, right? That's what Fefe showed you guys in the order book. So for you to buy the market, there should be someone to sell. And this support zone is basically the area where a huge lot of buy orders are placed. So if an institution wants to place a buy order, they can't do that because think about it. This is an area where a huge lot of demand is there. Demand as in buy orders. They need some kind of a sell order for them to enter. And so they can't enter the market. So if they enter the market is going to pump impulsively like this, and they will be the one who's moving the market, and they will be the one who is going to be in a loss because they will be the one who's going to drive the price up like this. Okay, and the retailers who entered over here are going to dump their tokens on the institution. Okay, so as an institution, they don't want to do that. But the fact that they also know is that this below this support zone, okay, in this support zone, there is a huge lot of buy orders. I'm just going to type buy orders over here. Okay, and the fact that you guys also know that, or the institution also know that below this support zone, there will be a huge lot of stop losses, right? So I'm just going to ask you, Fefe, like, what is a stop loss when you long the market? Tell me, what kind of an order is it? What type of an order is it? Tell me. Hello, Fefe?
Say it again.
When you long the market or when you buy the market, what is a stop loss? What type of an order is considered as a stop loss? Tell me.
What type of order is considered as a stop loss? I think it's a limit order.
No. Like that's a limit order, but what type of an order? Is it a buy order or is it a sell order? Tell me.
If I do what?
If you long. Paul
Sorry, I'll be honest with you. I'll be honest. I got a very funny video in the management group, and I'm asking them if I can share it with you guys. It's ran with and that's what I was watching. That's why I didn't listen. I want to show this to you guys. It's very, very funny. I apologize. Okay. So what were you saying? So the stop loss?
Okay. So when you long the market, what is actually considered as a stop loss? What kind of
buying? I'm buying up that, so I have to sell that asset.
Exactly. So a stop loss is basically considered as a sell order, right?
It is.
So think about it, guys. So the institution know that there is a huge lot of demand in the market at this area on this support zone, and the institution also knows that there is a huge lot of stop losses below these lows because this is the area of price where a huge lot of people have entered into the market, right? So what the institution is going to do is that they're just going to try to push the price down. So let's just say that Elizabeth or Dinesh has $100 million, and he's going to take like $10 million out of this $100 million and push the price down, and they're going to make the price break below these lows. So this is where the limit order and the market execution order comes into play. Think about it. A stop loss will always be a limit order, right, guys? Your buy order will always be a limit order, as well as a stop loss is also considered as a limit order. Okay, so when you place a limit order, you guys might have noticed that the fees for a limit order is basically low in the markets. Okay, the fees for a limit order is basically low, and the fees for a market execution order is basically high. The reason for that is because when you place a limit order, you're basically adding liquidity into the market. Okay, adding liquidity in the form of orders. Okay, so basically, like when you place $100 sell order or something, that like it will be locked over there. You won't be able to access that fund until you cancel it. Okay, eat dumping bad. Okay, I talk so fast. Do I?
You're good. You're good.
Okay,
if you slow down a little bit, but
okay. So this area has a huge lot of demand, and there will be a huge lot of stop losses over here. And the institution is gonna place a $10 million worth of sell order and push the price down. So when they push the price down, what happens is that all of this sell order over here is gonna get triggered. Think about it. When price goes down and it hits their stop loss, a stop loss when you long the market is considered as a sell order, right? A huge lot of sell pressure is gonna come into the market when the price hits the stop loss, right? So if there is no enough buyer to buy up the stop loss, price is gonna dump impulsively if there are no buyers left in the market. Okay. So what the institution is going to do is that they're going to place a market execution order. And at that time, you may see that even though the market broke below your support zone, the price won't actually go down impulsively because the institution is going to place their buy order inside this sell order. inside the sell order or inside the stop loss where all of the people who entered here placed. Okay, and all of their stop loss gets triggered, and the institution is gonna buy up all the sell pressure which is gonna come into the market at this time, and then price will come down to tap onto a particular area of demand. Okay, it can be an order block, it can be a support zone, it can be a resist, it can be anything, it can be a breaker block or anything, and then price is going to come down to tap onto this demand zone. Let's just assume this is a demand zone. Since the institution covered all of their sell pressure over here, there is not enough sell pressure for the market to go down because the institution cleared all the sell orders, or the institution has taken out most of these sell orders. So the market doesn't have a reason to go down now because the sellers are gone. So price is gonna tap onto a demand zone, and then the market is gonna push up, and you guys will see that the price is gonna move up impulsively after this thing. Okay, the reason for that is because the institution already entered into the zone, right? And this external demand or this demand zone is the one which is moving the price up, not the institution. Okay, and the only thing that the institution does is that the institution is gonna help the retailers or the other people to break above the key level, so that price is gonna go up and break above these levels. And one more thing, you guys also know that this is actually an area of resistance, right, guys? This explains break and retest. So you guys also know that this is an area of resistance, right? So a lot of people have actually shorted in this area, right? A short order is basically a sell order, okay? And you guys also know that there is a huge lot of stop losses above these highs. Think about it. When you place a short order, when you sell the market, what type of order is considered as a stop loss? Tell me. When you bought the order, when you buy the market, a stop loss is considered as a sell order. So when you sell the market, what type of an order is considered as a buy order? Tell me. It is basically a buyback order, or it is basically a buy order. Okay, a buy order. So what the institution is going to do is that they're going to push the price up and break above these highs. And when it breaks above these highs, that's going to tap onto the stop losses of the people who entered over here. Stop loss meaning buy orders. Buy orders meaning demand. So when it hits the stop loss, a huge load of demand is going to come into the market at that time. So if there are no enough sellers to sell the demand, if there are not enough sellers, then price is going to move up impulsively. So that is the one which drives the price up like this most of the time. Okay, you guys think that it's basically the retailers, but in reality it is not like that. It is basically the demand, the demand is the one which drives the price. The institution enters way early than that.
Yeah. So just to summarize, people are asking to let's summarize this up, and also we could also dig deep if you don't mind. I will take it back and then also show some examples. I think it's very guys, for some of you who think, oh my god, what the heck is this? Don't worry, it's a little bit more advanced, but we wanted to bring a lot of stuff all together. So throughout this marathon, we have the very basics, and then we have the intermediates, and then we have the very advanced, and all that. And it's absolutely fine. Do not feel that you're lost, please, because this is the part of the process, and you are going to be lost a ton of time. I promise you. Even when you are profitable, you are going to get fucking lost, because that's the part of trading, and that's the part of becoming a successful trader, and that's the part of the journey. So if you feel lost, don't worry about it. You will have timestamps on this video. It's going to stay up on our YouTube. You can always rewatch it, and you can always come and talk to us. So please do not feel that you are lost. Let me just bring my screen up. So what I wanted to say is that there are three types of main liquidity, right? So when exactly what Rain said, Rain was talking about a range, and somewhat said accumulation, and that is very clever. Because this is exactly an accumulation range. So it's very important to talk about what kind of liquidity we have. So we have trendline liquidity, which is whether in an accumulation area or whether we are moving, in an uptrend, or whether we're moving in a downtrend. I'm not going to do the trend line, but all kind of trend lines that you draw usually on the chart is a trend line liquidity, we call it. Why? Because people place their stop losses. When you're moving up like this, people place their stop losses to this low, and then they place their stop losses to this low. this low, and then they place their stop losses to the next one. And the same thing here. People who trade the range place their stop losses above the range, and a lot of liquidity is collected here. Liquidity, as we talked about, is the market makers, meaning the people who put their limit orders in there. So it's visible by the exchanges and by us, and those liquidities can be hunted by people who want to sell a larger position. So that's one. The second, all the relative equal levels or equal levels. So you might have seen this example. This is the double bottom. Now, why is it? How many of you in the chat, you can let us know, how many of you have seen
Know what it is.
say, know what it is? That's as well. But how many of you have experienced that you're like, oh, this is a double bottom, I'm gonna load up, and then this happens, bam, and then this happens? How many times have you seen this? Probably like a lot of times if you trade. The reason why this happens is because relative equal lows are liquidity. So relative equal lows and relative equal highs and triple tops and triple bottoms and whatnot, these are all liquidities, and that means that these are easy. When you see it, and especially retail, you have to understand the market is here to screw you. You know, like I'm sorry to say that, but that's what it is. 95% of traders lose money, and 5% takes all the profit home. And the reason is because retail is being trapped with shit like this. So when you say it's a double bottom, it's good. It's very good, but you have to consider how is it a double bottom, because this is why sometimes it works, sometimes it doesn't. This here is a double bottom as well, with relative equal lows, where this is not going lower than the previous low, and this is liquidity. Or this can be a double bottom as well. Why is this better? It is better because there is no liquidity left. There's only one type of liquidity left, and that is the strong low. But that is nothing, especially if the chart goes up like this and comes down in a very, usually you can call this a flag, but this is again what a trend line liquidity, meaning you know that when a price is coming down like this after a big push, you are due to another push, and this level will hold. So there is a difference between double bottoms like this with relative equal lows and double bottoms like this when the liquidity is taken with one of the bottoms and then the price moves on. So trendline liquidity. The second thing is the strong levels. So all the strong levels are liquidity. So for example, when you move in a double bottoms, or when you're moving up in an uptrend like this, all the lows, and if you're coming down, all the highs. So these are the major liquidity levels that you have, and then you have liquidity voids, which are fair value gaps on the chart. If you're familiar with them, we can talk about that as well. For example, here, when there is no interconnection between the candles. So you see here, this is a healthy price movement. The bulls and the bears argue, right? They go, I want to sell, I want to buy, we should go higher, we shouldn't, and then at one point,
all the areas inside that order, inside that pump, is actually accumulated. That's the reason. Like all the orders are filled.
Exactly.
It's balanced.
Exactly. It's balanced, exactly. And then there are inefficient moves. It's an efficient move because it's balanced, exactly as Rain says. So now, when there are places when there's only one participant driving the market, whether it's bull or bears, and this is when you see a candle like this that has no candles around them. This is what we call a fair value gap. So how you mark the fair value gap is from the wick of the other candle that's next to the big impulsive candle to the other wick. So this is the actual gap here between the two wicks. This is the gap that you mark. And this is what we call liquidity void as well, because one of the other orders stayed in, one participant in the market was very impulsive. So what Rain was explaining is that if you have a range and the range is broken, markets need liquidity to move. Always. Markets need liquidity. So liquidity, limit orders, now we know that, trend line, double bottoms, triple bottoms, relative equal highs, relative equal lows, and strong levels are there to be taken by institutions and people with larger money, people who drive the market. So that's why a lot of times what happens is that liquidity is starting to be taken, and then the price simply reversing because it only came back for the liquidity. But what I wanted to say is that price and the markets need liquidity to move, and will always move towards where the liquidity is. Where the liquidity is. Exactly. And now here's another thing that people wanted us to explain, Rain, which is order blocks. Not order books, but order blocks.
Like
So
it depends on what type of order block that you want. Like there are like multiple explanations for order blocks, multiple ones.
exactly. So that the very basic one, I think what we should talk about, there are, we can talk about the rest as well, but the very basic one is the last bearish or bullish candle before an impulsive move or before any move, So for example, what was the level here that was responsible for the high breaks here? It was this last candle, right? This last bearish candle that was responsible for the push up to this. You can maybe call this one as well, especially with the inefficiency. But like the on the major structure, this was the level, you see here, this was the level on the weekly that was responsible for the push to the upside. So that is, and then the next level is this level. So you always take the last bearish or bullish candle before a move that pushed to new highs. Now in the morning, whoever was here, we talked about market structures. It's very important. Higher highs, higher lows. Rune is crossing, guys. Rune is crossing.
Rune.
Yeah.
It's kind of risky. Like some kind of a news is with Rune, like negative news. I don't
Is
know.
it?
Yeah, like
It's been pumping like crazy.
Some kind of a hacker or an attacker used Rune to launder money or something. So that's the reason why Rune dumped.
But it didn't dump. It dumped like 8%, but it went up 40%.
Yeah, like this news came like yesterday or something. So.
Oh, okay. Anyway, I would be looking at a buy here. I don't know how you feel about it, but I would be looking. It induced this orbit. You see, for example, so this is a very good example. Let's talk about this because this is a great example. The only problem is that it's not in the discount, but that's okay. So if you look at it, what was the level that was responsible for the break? Let's not take this week under consideration, but this high here. So this level, the last bearish candle before the big push was this. So on the 4 hour, this is what we call the 4 hour bullish order block. This is a block of orders that were responsible to push the price higher. And so when you identify that, you can refine it. You go down on the 15-minute and you find the exact same thing. There is a lot to it, obviously. So it's not just this, but this is going to be a great starting point for you. So if you have something like this, this whole move can be considered as the order block. Like that block of orders push the price higher on the end. So you go here and then you can mark it as 15-minute point of interest. This is a point of interest where I would be interested to buy. This does not mean that I'm going to go all in. Like a point of interest does not mean that I'm going to start buying this up like crazy. It means that this is an interesting area for me to start looking for lower time frame confirmation to find a potential reversal or find a potential continuation. So an order block is always the last bearish or bullish candle before a move that changed the higher time frame structure, the main structure. Do you wanna take over and explain a little bit more on the other order blocks?
There like multiple explanations. So the first one that Fefe explained is basically the last bearish candle, right? You explained the last bearish candle or bullish, both. Which one?
Bearish one.
So the last bearish candle before a bullish move, that's basically the order block. The logic behind that is basically a lot of people are actually blocked over there. Like some form of sellers are actually blocked over there. So when price reaches that same level again, the people who shorter in that area are going to exit their position and switch to long. So that's going to create a demand in the market and that's going to push the price up. So that's the logic of the last bearish candle before a bullish move, that order block. And for the other order block, it's basically the last candle before an impulsive move, which is responsible for a break of highs or sweep of liquidities, because that is the area of price where some kind of an algorithm of an order or some kind of an algorithm of an institution got activated, which pushed the price up, which broke a crucial level of price and made the market go up. So that is the area of price where the algorithm of the institution gets activated. So when price reaches down to that same level again, the algorithm is going to try to buy up, or like you can just say that the people who saw that bump are going to buy it up again. So that's
basically the beginning of the inefficiency. So when you spot a fair value gap like this, you see what is the bottom of the fair value gap. I mean, this would be good, but this would, for example, not be that good because it didn't break any main structural point. We would be, for example, this one. So you take what was the beginning of the inefficiency up here. This would be the beginning of the inefficiency. So this is the level that you would want to look for. And this candle is the area where you want to look for, whether it's a bullish or bearish. Just a reflection on what you said, Rain. Just a reflection on what you said regarding the price coming back to these levels. It's very important to understand also that on bigger assets and Forex and whatnot, there are massive hedge funds. And hedge funds, what they do is they hedge. And hedging means in the trading
They
world,
go long and short at the same
exactly.
time.
Exactly.
They don't want to occur a loss in their portfolio.
Exactly. So what they want to do is that they want to go long and they want to show short at the same time without stop loss. Now this is something that we at school won't do, but multi-million-dollar businesses do. But the reason why they do it is because they know they can drive the price back down. So how that happens is that there is accumulation and whatnot, and they do all this and they go, okay, so I think we're gonna reverse here. So there is this down move, and I'm gonna go long and short here because they're like, we either go up or we go down. If they go down, that means that their position. So you have to imagine it in the same way that I put $1,000 for short and $1,000 for longs without any stop loss. That's what I'm gonna do. And then I'm gonna say, okay, so I'm actually waiting for this to play out. And my scenario, I went short here, right? So this was my short and my long position. What happens is that I break to the downside and I say, okay, so I broke to the downside, and that means that I'm due for a correction, for example, to the discount zone, which would be 50%. So we would come down. My prediction is that we would come down to around this area for whatever reason. So what they do is that they manipulate and drive the price all the way back up here, creating a lot of liquidity so they can get out of their losing position. So the idea here is that they can get out of their losing position at this level. They close at zero or a very little loss, and they drive the price back and continue on the journey down that they wanted to do.
The thing with that is, like, when they sell in that position, think about it. They went long over there. So when price reaches that same area again, they're gonna sell their position. That's gonna create a sell pressure, and that will push the price down. Fefe?
Yes, absolutely, 100%, 100%. So this. I just see Chris is in the house. What's up, bro? Welcome. All right, Chris. By the way, guys, you gotta give it up for Chris. He's pulled this whole thing together, obviously with the help of the team, but he's been on it, organizing it, making sure all the stuff is running. So he's been a legend, absolute legend. Okay, so that's the thing about order blocks, and that's the thing. And then there's one more thing that I think we could potentially talk about regarding order blocks. But order blocks are, again, block of orders where price had an area where that caused a major impact in the market structure. That's what it is. So there is one more point of all of the order blocks are point of interest. So these are not levels where you have to go long or short. These are levels that you could potentially find a setup that could be good for a long or a short. Now, if you look at the other thing that I think is very cool to know is called breaker blocks. And the reason why they are important is the exact same reason what we just explained with the hedging. So what happens is that breaker blocks happen when price moves on. So for example, price is coming down, and then at some point we make a higher high right here, and this would be, we call it a market structure shift. Why is this? Oh, because my
you're zoomed in.
Oh,
zoomed in. Yeah.
No, I'm not. Am I?
Yes, you are. Like, look at the time. I think so.
Well, anyway, so price is coming down. And at some point we have a reversal like this. This would be what we call a market structure. Oh no, something is not right. Let me just refresh.
You zoomed in too far. Look at the candles. Like, just zoom out.
Screw it. Let's do it. I'm gonna close. You see this? Very good example as well. Sorry, just about liquidity. Look at this. Very good example. Relative equal lows.
We were a huge lot of people confused. I think. Look at it. I think my brain has stopped.
Okay, fine. Let's not do that. So what I wanted to say is that you have an uptrending market. I started explaining it with a downtrend, so that's what I'm gonna do. You have a downtrending market, guys. It's okay to get lost. Like, if you really don't feel like it, you know, but it is really like it really is okay, guys. I mean, it's not like, oh, it's okay, but it really is fucking okay. It's like, you will, if you do not get lost, you are not progressing enough. And I'm telling you, if you do not get lost, you're not progressing enough, because, you know, progress requires a lot of learning, a lot of struggle, a lot of hustle, a lot of confusion. And if you learn, the more you're going to learn, the more you're not going to know. I promise you. It's not going to be like, you know, oh, I'm going to read a book on trading. It's like the same thing as brain surgery. I really can't just say that, you know, that I realized that when I started trading is that what I did was I went to the market, and let me know, please truly let me know in the chat, how many of you resonate with this, that you go into the market, you put a position, you lose, you take more money, you go on, you go at it again, you lose again. Then you whatever, read an article, and then you're like, okay, cool. So I'm gonna go now, and I'm gonna put another buck, and then I'm gonna lose that again, and it's just a vicious circle. And I was in that vicious circle. And let me know in the chat if anybody resonates with this. And what I realized is that if you consider yourself a serious person, so someone says, I agree, it's true. What made no sense last year now has begun to sink in, and I keep soaking in more energy. That's amazing. So what you want to understand is that if you are a brain surgeon, you will not go to a patient and say, I'm going to do a surgery on you. And when that patient dies, you're going to say, oh, well, sorry, like, bring in the next one. We're going to try again. That's not what you're going to say. What you're going to say is that I'm going to practice for years before I can get to the point where I will be able to do a surgery on someone. And once you get to that point, you will do the surgery, and you are at a level where you can be sure that you are going to do good. Now, will you mess up? Yes, most of the time, most probably because you are under pressure. When you're working on a dummy, that's not as big of a pressure as working on an actual live human being. And that's the same thing with the market. This is why I actually encourage you to take your first trades. Not financial advice, but take $1 and just put it on isolated margin to anything, honestly, because you just got to break that step to take a trade, and then you can go back and practice. Because if you do paper trading, paper trading, you don't have the pressure, and you don't know the feeling of actually putting the trade on.
Exactly. There's no emotion.
Exactly. No, exactly. So anyway, I don't want to take too long on this, but what I just wanted to say with this is that you have to make sure that you would never go back to the surgeon room and say, I'm gonna bring in the next one, and then you're gonna try a surgery and he dies, and then okay, bring in the next one. You never say that. You go back to the drawing board, you would learn, you would practice, you would get better, and then try again. And so that's the same thing. So you gotta go and test your strategies, and just make sure that you follow these, and then at some point you will get clarity. So anyway, what happens is that we have a reversal. This is what we call market structure shift, or in other words, you can say change of character. So we change the character. We were making lower lows, lower highs, and now we're changing character. We are making a higher high after a higher low, and that's a very strong indication that we are going to reverse trend. What we would expect here is a pullback to the region. Again, talking about the hedging, what we talked about. Institutions went short here, so they have to drive the price back down. When they get out of their position, they can send the price up. So, but sometimes because of news, because of whatever, this is not what happens. What happens is this. So what happens is that we have a major candle throughout the whole, maybe triple breaks, double breaks. You see a major candle. And if this happens, also depending on the liquidity a lot of times, but price will not necessarily come back to your order block, will not come back down to the place where where the order flow started. And that means that you have to look for another level, and that could very well be the breaker block, which was the highest point, the candle that created the highest point on the previous week level. So this would be something that we call the breaker block. This is where we broke through. Very important. You need to have a fair value gap or an inefficiency when you break through that level. And then price going to potentially come back down to this level and then reverse from here. So this is a point of interest, another order block, breaker block.
Exactly.
Okay, guys, let us know. I think it's getting heavy a little bit here. Maybe, I don't know. Let us know if this is good or you're enjoying it, and how should we proceed. Rain, what do you say? Do you want to? What should we do? Do you want to look at some markets and enlighten us on how do you find the trade?
How to find the trade, bro? Like, if I want to explain that, then it will take a lot of time. It's like a huge lot of time.
By the way, guys, subscribe to the channel, like this video, and follow us on Twitter. Definitely. Okay, Rain, try it. Try to give them something like, when you go down, like just how do you scale down from a higher time frame to the lower time frame and see how that goes.
Let me just take a different exchange. Okay, yeah.
Ready to pull your screen up.
Screen.
Until Rain pulls up his screen, I wanted to share you this with you. So this is also an interesting setup. What we just talked about. So price is pushing through, right? So it is Casper. Someone asked me to do this Casper analysis the other day, and this is where I have this here. But it actually can be an interesting trade. So what I see is that we are pushing higher and higher, right? We took this high, so that means there is not much liquidity here. So it was due for a reversal, and this is why you don't really trade these breakouts or whatever. So it's coming down. Back. I have to identify what is the level that caused the actual high break. So this would be the high break, right? So what level caused that? You could say this, but there was no decent traces. So this was the actual level that was responsible for the break on the main structure, so to say. So if you identify that this was the level, this does not live up to all the rules, by the way, because it's not in the discount zone, but that's another topic. But this is not a bad level. Rain, let me know if you don't agree, but this is not a bad level on the 4 hour. Yeah,
yeah, that is on the 1 hour. It's kind of okay. 1 hour and 15 minutes is kind of okay, but
Exactly.
it's risky, bro. Like it's kind of risky because there is no liquidity for the market to move up. Most of it.
Yeah, there is. Look at this. Look at all this liquidity.
That's a small one, right? Just to go to the higher time frame. The higher time frame liquidity is the one which matters mostly.
So here's my reasoning on this. Here's why I think this is gonna be a good trade. So if you look at the 15-minute, you will see, like you have this massive liquidity building up here. What is this liquidity building? And we left liquidity here. We made this higher high from no man's land. So this is why this is also like a trap, probably retail trap, because you say, oh, we made a high double break, whatever. People long put their stop losses here. This is going to get wigged. And also you see, I can even extend this now to this. So this is the trend line liquidity we're talking about. And we have a fair value gap here. Say it again.
That can be considered as a support zone for a lot of people.
Yeah, exactly. But this will be wigged through. This will be wigged through because of the liquidity and because there is the order block below that. So what Rain said, where did the inefficiency start? It started here. This is where the inefficiency started. This is where the big
liquidity, which broke the structure, which has the liquidity above it. So it means most of the criteria, yeah.
Exactly. So, and it's in a demand zone, in a 4 hour and 1 hour and 4 hour demand zone, which is this big area. So because above this order block, because of this inefficiency, the beginning of this inefficiency, we have decent liquidity built up. What you see here, a trend line liquidity just above this fair value gap. And we have a lot of liquidity, a trend line liquidity built up here for this to start moving up. This will be a great trade, in my opinion. Then we have to see a confirmation from there. But in theory, this should be working out pretty fine. Rain, I'll let you share.
Okay.
You should be sharing now.
Yes, I will be. Can you guys see this low on Bitcoin? Like I'm just gonna give you an analysis of what can actually happen. Like charting, it's kind of like there's a huge lot of things that I have to chart, and I am in KuCoin, and I haven't charted this thing in a very long time. So in Bitcoin, till Bitcoin breaks below this low, which is 26,630 in KuCoin. Okay, so this can actually change depending on the exchange. Till Bitcoin breaks below this low, you can stay bullish. And when Bitcoin breaks below this low, you can actually expect price to come down towards 22.6K. These regions. This is the only thing that I can actually say now. So now the reason for that is because there is a ton of liquidity build up for the market to come down from here. Like Fefe showed you guys earlier, there is some kind of a trend line or some kind of a support or like a support zone over here. So below this support zone, there will be a huge lot of liquidity, and the market makers will definitely try to make the market go down for them to enter, and then it will tap onto a particular demand, and that will push the price up. And it has stop losses for the market to move up also. Stop losses as in the buy order. So okay, someone said enjoying it but brain exploding. Wow.
Also, Rain, do you want to? Someone is asking that the breaker block coincides with the FIB 618.
It doesn't have to be with the 618. That's the thing. Like the only thing is that the only logic is that price has to come down below the 50%, guys. That's all. Like price doesn't have to go to the 618 or 786 level. Like below the 50%, anywhere if price has any form of demand, then price will go up. For example, like this move, I'm gonna take it from this low. What is this thing doing? A low, a high, and a pullback. So if you guys look at this thing, the pullback came down exactly below the 50%, because us buyers, like Fefe mentioned in earlier today morning, in the morning, buyers are always interested to buy a product at a discounted price. So price came down below the discount before moving up. That is the only logic. It doesn't have to come down to the 618. You can actually check this everywhere in the market. Price will always come down below the 50% no matter what. It didn't come down. So if you look at over here, it did come down below the 50. So the only thing is that price has to tap into a particular reactional zone before going. That's all. Price has to tap into a reactional zone below the 50% before pumping. So it happened over here, but this pump wasn't actually wasn't that good enough. So you can expect some downward movement in the markets to happen. And let's see. That is what I'm expecting to happen also on Bitcoin. Like if Bitcoin goes up to collect all of these liquidities, you guys might have draw this as a trend line, and you guys may be expecting a trend line break to happen in the recent time. But don't turn bullish till the market breaks above these highs. Okay, guys, be cautious. Okay, because even though the market breaks above this trend line, it can go down because it didn't actually break a major high point or a main structural high point, like I mentioned in today's video in the morning. So these are the only things that I want to say. Like if it goes up and collects this liquidity, or this if it goes up and collects all of the stop losses over here, then you can expect more downfall, or then you can expect more consolidation in the market to happen, because the market needs to build liquidity for it to move. If it doesn't have liquidity, then it won't move. A huge example is over here also. Look at this thing. It collected most of the stop losses, so there is no reason for the market to go up. So it came down to create stop losses for it to move up. Again, over here, it went up to collect most of the stop losses. It collected most of the stop losses, so now it doesn't have any reason to move up. So it came down to create stop losses over here, or like a trend line form of liquidity over there for it to move up. So this is the only thing that I have for the markets right now, because I'm only charting Bitcoin and I'm basically in Forex. Fefe?
Guys, do you let us know? Do you know what? Let's do something. Let's do something unique. Do you guys want to talk a little bit about Forex? Should we? I know it's crypto school, but should we do that? Should we talk a little bit about Forex?
I don't know, bro.
Okay, like we gotta have 10 people saying yes in the comments. Gotta have 10 people saying it in the next 10 seconds, and then we can talk about Forex. Other than that, it's all good. Someone says we have one guy. Okay, that's guys. You're already late. Already late. It's gone. Maybe in the next one. Someone said no. I'm true crypto degen. Okay, cool. So let's not talk about Forex that much. But Forex is the next thing. I'm gonna talk about Forex a little bit just in case. Just because some of you said no. Just very important. It's very, very important to know that crypto is not everything, guys. Crypto is an awesome thing to go and trade and whatnot. But when crypto is dying as it is right now, no volume, very difficult to spot trades, this crap market, it's always good to expand your views, expand your knowledge, and try to look at alternatives. That's just all I'm saying. I think it's very, very good to trade crypto, and it is absolutely doable. But if you feel like you want to expand your knowledge, I think it's worth looking into everything else, just so you can expand your own knowledge and understanding of everything.
Yes, you guys need to understand that Forex is actually the biggest market out there. Okay, the overall crypto market cap is about $1 trillion. Overall crypto market cap is about $1 trillion, and the daily traded volume in Forex is about $7.5 trillion.
The 24-hour volume is 7 times the total value of every crypto project out there.
So Forex is pretty big. So if you want to become professional, then you should focus on. You should expand your knowledge. You should expand the markets.
But guys, crypto is here to stay. Let's look for some. What do you guys want in the chat? I was just looking at these video clips that StreamYard has in here, just so we can have some fun. But I don't dare to click this button because this girl is on here, and I don't know what this girl is doing. But it's a built-in. So should I click the button?
I don't know, bro. Does it have any copyright issues?
No, it's not the. Okay, someone says, please bring on a great Forex overview. Thank you. I think let's not talk about Forex. We just wanted to expand your mind. I think it's very, very important to, the good thing, there's one very good thing about Forex is that you can have a funded account and you do not need a shit ton of money to get started and make money right away. So
Exactly.
funded accounts are like, you can get $100,000 away. Someone says click away. I have to, it's picking my brain. What is this? Let's do this. Okay, so this it's a built-in feature in StreamYard. It's I can't do nothing about it. It's like here. It's just looking at me. Okay, so so and it actually pretty good. It was saying I want money. So anyway, so what I wanted to say is that it's just good to expand your knowledge. A lot of people that can also be your issue that you don't have size. You know what I mean? And I know it sounds counterintuitive when you say, I lose because I don't have enough money, but I'll tell you what it does. Like it does happen. And the reason why it does happen is because you start forcing how many of you, let me know in the chat, how many of you think about your portfolio like, I only have $100, fuck it. Like, just $100. I don't care. Like I parted that over weekend. It's just $100. I'll put this on the trade, no stop loss 20x, because if I win, I'm gonna be the biggest guy on the planet. And if I don't, then no, it's just $100. How many of you think
that
or had this thought ever? Someone says, oh dear. Simon, don't
Hello,
leave. You know what I'm feeling now? I'm feeling now that I'm up since 4 a.m. and it's like 2 past. And yeah, I'm feeling the tiredness coming out of me. Okay, Flying Lizard. Someone says, yes, thank you so much, GMC. So, but the thing is that you can't have the problem that you're like, imagine, guys, if you can make consistently 10% in the markets. And I mean, I don't mean these, yeah, I made 100x and I posed the tile and all that cool stuff, but like actually make 10-15% consistently in the market, consistently, that's good. I'm here to tell you, that's good. That means that you are actually making money. And the only problem with that is that you have a $500 account or $1,000 account, so to say, which is a lot of money. In most of the places in the planet, $1,000 is a lot of money. So if you if you have $1,000 account that you can, use and whatever, and you train and you make 15% in a month, you're like, okay, that's good. That's like literally what a car wash in the States, kind of. So that's like $100 it's nothing. And of course, someone is saying $100 bucks in
spread it over 10 entries.
Say it again.
Like $100 and spread it over 10 entries. But sure did exactly that. Elizabeth.
Oh yeah, 100. Yeah, exactly. No, exactly. So the thing is that but you should not think about the dollar amount. What you should think about is, guys, we just broke above 200 live views. So we started with 170 something. So we gained 15%. That's not bad. So anyway, so what I wanted to say is that if you make 10% in a month, and this is like traditional investment vehicles make 6 to 8%. Like, 10%, you're in a month, 10%, you're a fucking genius. And I'm just telling you, it's not about making 10% once or twice or posting a title. I can, how these gurus do this. The thing that they do is that they take a $1 isolated position on 100x, hedge positions, so they go long and short before an FOMC, and whatever side is going, they just post the tile. And yeah, I made 873% profits. That's pretty cool, but that has nothing to do with trading. So you should always ask people, okay, what's your monthly P&L and how do you do on the longer time frame and whatnot? And so don't look at individual trades. So what I want to say is that if you can bring 10% in, that's pretty good. You should be very happy about it yourself. And so 10-15%, this is also but just what I think. I'm not sure if but like 10-15%, you should be very, very happy about it. And the problem comes down is that you get impatient, or I was very impatient, because I'm like, okay, I have a $2,000 account or $3,000 account. I'm making $300. It's not much. That's nothing. I'm sitting here all day trying to figure out how to do this, mastering the game and whatnot, and making a couple of $100 is just not worth it. And so you start taking much more risk than what you should, because that's the only way to gain much more than what you could from your capital. And that's where the real issue comes in. The issue comes in that you start, debating whether you should do this or not, and then you start taking risk, and then you start losing, and you start stressing because you're losing, and you put more in, and then you lose more, and then you leave the whole thing. And so this is where Forex could be very interesting, that you've got prop firms. If you can pass a challenge, they give you $100,000 account, and you can, if you make 10% on $100,000 account, that's $10,000 a month. Thank you very much. So that's the only reason why I think Forex is very interesting, and also because of the volume.
The thing with that is, like, if you know how to trade, then there is opportunity for you to make money. That's the thing. Like, you don't need capital. They're going to provide the capital. There are opportunities for you. That's the thing.
Yes, exactly. Let's what should we do, Rain?
Hey, master the psychology.
Master the psychology. That's
Yeah.
that's
I remember you used to trade aggressively. Like, man, I'm just gonna enjoy this trade. My gut's just telling you.
Bro, let me tell you also a story. Now we have a little bit of story time. Rain actually is the one that broke through for me. I'm in crypto since 2016, and I've been trading in 2018, and it was good and whatnot, but not professionally. And when I met Rain, he put some stuff in place where I was like, okay, like this is it. And then from there on, so what we're doing here is potentially just light, a bulb in there that says this could be a potential direction for you. The thing about trading is that there's no one style fit all. There are people who trade support and resistance. That's it. They don't trade nothing else. And if it works for them, fine. There are people who trade RSIs like Sheldon. If it works for them, fine. You have to find, there are people who hold trades for weeks, build positions and whatnot. And there are people who are in and out of the market like this, 2 minutes out. So it's just really about your risk limit, your comfort, your general understanding of the market that you have to master and understand. And once you understand yourself, you won't have a problem trading, because you will know, okay, this is my strength. I have to play on that. These are my weaknesses. I got to make sure that I limit my risk, limit my exposure to these weaknesses, because that's how I'm going to progress.
Exactly.
Yeah. So I
also need to understand that, like, in trading, 80% is basically the trading psychology. The rest of the 20% is the one which is, useful, which is the skills. 80% are the psychology. So if you have good trading psychology, then yes, you will definitely, as well as risk management, you will definitely be profitable, no matter what your strategy is, no matter what.
Yeah, definitely. People are coming for like a, like a secret sauce, and everybody who gets started with trading, is just give me the formula.
There's nothing like that. Like, it's just a way of you. It's just a way of how you view the market. That's all. Just think like the institution. That's all I can say. There's nothing like a secret soup or anything. Just, if you're an institution, what will you do when price comes to a particular level? What will you do?
Yes, I wanted to show you guys, but I can't show because I think we're gonna get copyrighted. But I wanted to show you there is a in the Kung Fu Panda network, what is it, cartoon, there is a part where this big tiger comes up and he says, well, give me the thread. I want to look at it. I want to know what the secret to mastering Kung Fu is and being the dragon warrior. And then he opens it and there is just a mirror in it. And he looks in it and it's like, there is nothing in here. And he's like, that's the secret. The secret is you. And I so resonate with this in trading, bro. It's like the secret is you. And I remember a lot of people telling me about this for a very long time. And it's just, you just don't believe it. You just get stuck with this idea that there is a secret sauce, that if I could just know that. And, you DM people, you look for courses, you look for whatever, and the secret is still with you the whole time. And that's you controlling your own mind, understanding how you can be better, understanding why you're, getting out of a trade, getting in a trade, understanding your edge and executing these emotionlessly. It doesn't matter what day I have or how great the trade looks. My risk is not going to be different. It's not going to be different. It's going to be the same thing, because this is a numbers game. A casino is based on luck. And for example, the roulette is 50-50, guys. It's like you've got 50-50. If you put black and white, the casino has the exact same amount of time, exact same opportunities as you. At the end of the day, casinos make billions and billions of dollars. How they do that? Numbers game. you know, because they don't look at one individual game. You know, there might be a day where someone comes in, puts $1 million on black, and takes $10 million home because he wins 10 times in a row. The casino
Well,
doesn't go bungus and says, say it again.
I literally saw that like 20 days back.
Oh, really?
So like one guy came to a casino with like 20,000 rupees. That's about $200, and that guy left with about $30,000.
What?
He came with $200 and he went out with $30,000, something like that. And
Yeah.
everybody in the whole casino was like looking at that guy.
Yeah, exactly. So here's the thing. But you know what the casino doesn't do? The casino doesn't go to that person and says, I want you to play more because that's when you're going to lose. And I want you to, no, fuck that. The casino sits back and says, well, it's another day. It's a business expense. No problem. No problem. We're going to have the next day and this guy's going to come back. And the odds are that we are going to win because we have the fees. And there's very tiny fees that you actually use to play. And then whatever you do, add up. Like it does add up. So on a larger time frame, they are winning because of the fees. They don't care if they lose or win, because out of 100 million transactions that they do in a year, you know, that tiny fraction of the fees that they take is enough to sustain them. And it doesn't matter if one day is a winning or a loser. At the same time, Tom Hanks had a very great talk and he said, this shall pass. And this is something you should all take away. Like, this shall pass. Do you have a good trading day? This shall pass. Do you have a bad trading day? This shall pass. Do you understand the markets to the dollar? It shall pass. Do you miss every trade by $150? This shall pass. So if you understand and you really take it and make it into yours that this shall pass, you understand it doesn't matter what the market is doing at this second, because this shall pass as well. So you just keep got to do your own thing. You got to learn, you got to expand your knowledge and understand that no matter how good or bad position you are in, it shall pass. Now, this has nothing to do with smart money, but I hope you guys, enjoy.
This has everything to do with psychology.
Yeah, psychology. Yeah, but that's important in trading as well. Okay, so Rain, what should we look at some trades? Come on, I want to take some trades, Rain. Enlighten us.
Search it. Which one?
I don't know.
This thing is coming down. Okay, you guys, stay put. You guys might get a good short on Bitcoin.
Oh, you want a short? You wouldn't want to go long on 26.5.
Look at this thing. No, 26.5.
Wait.
No. It has liquidity below, so I don't think that it will hold.
Thank you, David.
Like, look at this thing. There are a huge lot of stop losses built up below these lows over here.
Yeah.
So I don't think that this is actually a good area for us to long. So you can expect that either the market is gonna go up from here or it's gonna break below and come to this PPR.
Oh, that's also something. Rain, can you please explain this? Because now what you just said, people will go, oh, okay, it either goes up or down. But can you explain this concept that we work based off probabilities and we just go, you know, we have to have a scenario for every so we can't say, okay, we are going to bleed through or turn around. But we can say, if this happens, then this is what we're going to do. Can you elaborate on that? Because I think it's super important.
Exactly. Like we said, like the market basically needs liquidity for it to move. Okay. So earlier, like I said, if price dumps aggressively to this point of interest, like we are going to give you particular levels, and if price dumps aggressive to those particular levels, don't take it, because there is no liquidity for the market to move. But liquidity as in the form of stop losses. But if the market comes down to that level slowly, then after tapping onto that zone, and if it shows you an MSS, meaning a shift in market structure, then you can actually target the long, because there is enough liquidity for the market to go up. Okay. So this is one of the things, like this is one of the main reasons why I don't give trading calls in my Twitter most of the time. Because the market has to, pave path or create liquidity for it to move. Like earlier, the market had liquidity for it to move down. Look at this thing. Can you see this? This was in the form of a support zone or something. It had liquidity, but it collected that liquidity and it went up and showed an MSS. And after showing that MSS, the market doesn't have any reason for it to go down, because there is not enough liquidity for the market to go down, because most of the liquidity which was meant for the market to go down has been collected by this dump, a small dump, and then price regained back to that range also. Came back to that range also. So that's the reason why the market went up. But while going up, the market created liquidity below these lows. That's the reason why we were actually expecting price to come down. So it's all about perspective, guys. So you have to.
This is deep, lol.
Like, I'm honestly gonna tell you, there are only two reasons for the market, like why the market basically moves. The first thing is to collect liquidity. Liquidity as in orders. Chaos asks, do you use heat maps much, bro? No, bro. Like, heat map is basically a retail thing. Like, it's basically a retail. And I'm not saying I'm not against it, but like, what are you seeing in a heat map? Just tell me. It's basically limit orders which are placed in the market, right? A heat map is a particular chart or where you can actually see the amount of orders which are placed in a particular level. For example, you will be able to know how much of an order is placed inside the support zone or how much of an order is there in this trend line over here. You will be able to know that. So that's basically a heat map. So a heat map, in the heat map, you only see the limit orders. And like I said this to you guys in the earlier also, an institution will never place a limit order no matter what, because that's basically adding liquidity in the market, because they have a huge lot of money. And if they put a $5 million buy order as a limit order over there, it will be reflected in that order book, like Fefe mentioned. And the other institutions are going to see that. They can see it. They will be able to see that, okay, there's like a 5 million buy order over here. So I'm just going to add more money and I'm just going to dump my tokens to that guy. They'll do that. So an institution will never place a limit order no matter what, guys. So that's the reason why I'm not a great fan of heat maps. And one more thing, sometimes the institution can use the heat maps to manipulate also. Think about it. They're just gonna place a buy order over here. Like, they're just gonna place a huge lot of buy order. In the heat maps, you will be able to know the amount of buy orders which in which this area has. And when price comes down to this level, they're just gonna cancel that order. You, as a retailer or as a trader, are gonna expect this heat map to be respected, and you as a trader are gonna expect price to go up afterwards. But in reality, just because this institution cancel their order, price will go through. So are you saying institutions buy market buy? Yes, exactly. The institution always executes market orders. They will never try to execute a limit order, because that's basically adding liquidity into the market. When you place a limit order, if it will be reflected in that order book, everybody will be able to see it. An institution doesn't want to do that. I don't know if you guys know this thing. In stock markets, like you won't be able to see big buy orders. You can actually hide your buy orders. So,
I just so want to short IMX now. So want to short it. It's a perfect example of the liquidity that we talked about.
IMX?
If it comes back to the OB up there, I think we should short it. Again, the problem with this shitcoin is that we don't really, again, like, this also comes down to, like, do you want to gamble or you want to properly trade? This would rather be like a gamble. but
it will definitely be a gamble, bro.
No, but look at the 1 minute. Look at the 1 minute. The 1 minute.
Oh, wait, I'm just gonna draw a key level. No, I don't think so. Bro, like, there are no levels over here.
Come on.
You want to short? Wait.
That one, it almost came back to the premium on the the pump on the right side, the retracement that just happened now.
Okay. Where?
To the on the recent price. Yeah, exactly. It almost came.
It collected the liquidity, and this was actually a good short. You could have taken it.
Yeah.
Induced, OB, tapped. This would have been a good short.
Yeah, it's gone now. Someone was asking, when are we gonna long Kaspa? I think Kaspa is pushing.
Ade, bro.
What is it?
Every Thomas. I think I found a person who's from my place. Pallu.
Who? Oh, okay.
Every Thomas, yeah. I can call them steroid coins. Steroid coins. This thing, does anyone know the reason why this token pumped? It created a big void over here.
I don't know.
News? Probably news.
Let me look at it. Rain. Okay, let me look at the comments. Let's look at Kaspa. I'm waiting for this liquidity to break through and then touch onto the OB. So can you look at Kaspa?
Yep. KAS, right?
KAS, yes. Shout out to Sai, Chaos. I see he's in here. He actually told me about. He called this coin at like forever.
I still remember. Chaos is the one which which I invested in this token like long back when I came to Banter. Like,
Yeah.
I think 1.5 years ago or something, Chaos called Casper.
Yeah, I
He
didn't. I
told-
was sleeping on it for a long time. He was calling it all the year. I was sleeping on it, and then, but then I got it on the top. So don't worry.
like Chaos like secretly gave us a small course of how to fundamentally analyze tokens.
Yeah, IMX launched in Japan. That's the thing.
Like this thing is pumping. Okay, I expect the pump to continue. Like that's all I can say right now because it
definitely.
doesn't.
But that's what I'm
It
saying.
happened.
0.04608. That's my entry.
Like this can actually long. You can actually long this token.
Yeah,
if
but
Bitcoin
with what stop loss?
Below this one, because this basically
Yeah, but that's
collected
like
up to it.
huge stop loss if you wait for that.
Like you have to wait for it to come down.
Yeah, but that's what I'm saying. My entry is at 0.0446.
Why do you need to enter over here? 6.
Where?
I think it's better you wait for it to come down to these levels. 4.7, 4.58, and then long it. Or just wait for a confirmation, bro.
Yeah, 4.58. For me, why do you think 4.58?
You can see it.
It's 46 for me on the 15-minute.
Which exchange do you have?
I'm looking at it on Maxi.
Oh, okay. I get what you're saying right now. Yeah, like anywhere inside this area is the area you can actually expect a reversal from, either from 4.6 or from below 4.55, these levels.
But also what you want to see, right? What you want to see is that liquidity, that the relative equal lows, if you draw that in, that needs to be taken. And once that's taken and we see a reversal, that's where you want to get in.
Look at this thing. Like I mentioned earlier, like price has to come down slowly, right? It's building up liquidity over here. Look at this thing. There is a huge lot of trendline liquidity in the form of stop losses, because above these highs there will be a huge lot of stop loss. So this is actually considered as a trendline liquidity. So that's the reason. So it's coming down in a slow manner. So after tapping onto this one of these levels, price can actually reverse. This is a great example of what I mentioned earlier. Price has to come down in a slow manner. And if it doesn't come down in a slow manner, then it will dump. It will break through these levels. I think I explained it. Chaos got in at 0.004. Yes.
Yeah, I'm literally just doing that. Look. I'm literally just doing that. Look.
Shall we start, bro? Shall we start?
Yeah, look at this. This was Chaos's investment in Casper. This was his risk reward. What is it?
Yo, man.
1 to 40. 1 to 40 risk reward. And 1100%.
Is he here, Simon?
Yeah, he is.
Hi, bro. Sai got me a 20x. Like, not just Casper. I got in Canto also. Sai called it. At that exact day, on that exact day.
Let's give this legend a follow, guys.
Guys, if you
Banter
guys want
fan,
anything
Web3
to be
cards,
fun,
DeFi, finding new gems for next bull. This is what we're talking about, legends. This is what we're talking about. So, David, if we can put this in the chat, that would be awesome. Oh, I'm gonna put it in here. We love Sai. He's with the fan forever. Actually, you gotta know about him. He's like you. He's with the fan forever. Definitely worth a follow. Yeah. What were we explaining?
Casper.
Yeah. So here's my Casper. The problem is that I think we need to come back down to the 50% to discount at some point, but maybe not going to happen now. There's too much heat and liquidity is building up. So what I'm looking at is that I was waiting for this. This is what I was explaining. If you look at this, I drafted this on today's show, and what I wanted to do is that what I want to do, what I'm looking at is we have this relative equal lows all the way here. This trend.
Bro, BTC started. I'm broke below the level.
Hopa. Woo.
Let's see.
Rain, this could be a good long. Come on, admit it. Look at this liquidity up here.
No. Like I'm not gonna do that.
Okay, who wants to long this? Not financial advice. We're just talking here, having fun and whatnot. Okay. Who wants to long this? Let me know. Who would look? Why wouldn't you long this? It would be good. What?
No. Like if it comes down to 26,400 or something, and if it gives us
Yeah,
a good
exactly.
reaction, then we can actually try it. Like
Yeah, that's what I'm saying.
the
That's
main reason
my
is like
man.
New York Open, bro. That's the thing. The New York Open.
No, it's an hour from now. Huh?
5:30, which
Yeah.
is like
Oh no,
30,
it's
it
just
actually
opened. You're
opened
right.
30 minutes ago.
Yeah, you're right. Yeah, but there was no manipulation.
Well, let's see.
I think we are going to. I think we are going to bounce here.
Like this is what I tell about liquidity. See, price broke below that support zone and it collected the liquidity. Can you guys see it? Can you guys see the wick? Some kind of a order is getting placed. Some kind of a huge lot of stop losses are
But you
getting
see
triggered
here,
over there.
it comes down here. It takes out this low. This whole liquidity and this equal lows has been taken with this move. This is why I shorted it up here. So this, the range taken comes back. So this is done. I'm actually thinking about closing my short, to be very honest with you. I think we can go up from here. I mean, it's very difficult to say, but I think we can go up from here.
Let's see. Like the New York Open, bro, there is a ton of liquidity left for it to come down.
Yeah. No, yeah, I agree with you. I agree with you all this way here.
That's risky also.
Okay, so let's see what people say. Still in my short. Can we have some music?
I absolutely have no idea. I think copyright issues are there. What about the liquidity on the left side? Below, there is like a strong level over there, bro. So that lower must be broken for us to confirm it.
Okay. Yeah, no, yeah, I agree with you. Also, total market cap is coming back down, but I think I'm not necessarily looking at the only problem why I'm looking at lower, and on the total market cap as well is because of the equal lows. Guys, is the music good? Is this good? Should we leave this on or should we not? Or
thanks, looks terrible.
Okay. Jake is saying long. Okay. So anyway, so this relative equal lows is what I'm concerned about, right? But I mean, guys, this is gonna be massive. When we're gonna shoot, we're gonna melt faces. I'm sure. And I'm so sure that we are close. We're so close. Don't give up. Maybe close meaning maybe it's 5 months, but we're so close, so close. What do you think, Rain?
Along. You're going along.
No, I'm just talking about when are we going to rip?
Consolidation. Like in about maybe in about 1 month. Let's see. 22.6k is my level. I'm waiting for it to come.
What's your level? 22?
22.6.
What is it?
22.6.
No.
That's an approximate one. Just go down. Let's see. You can see it, right?
I have this area marked here.
Like what? Oh, that's a weekly. You marked the whole weekly.
Yeah, because I'm like, we're gonna get down here.
It will. Like that. The initial one was weak, right? So that's the reason.
Oh, yeah, this one here.
No. I'm expecting the one above.
Whoa.
We are in a different area, I think. Yeah. You guys watching Tara? No, bro. Taraxa, another one I gave. Okay, Sai is there.
Tara, yeah, I'm on Tara, but you can't really chart it. Okay, let's look at something, guys. What is it that you would like? Should we just go through the tokens, or what should we do? What would you like us to do? What do you find value in?
Tell me. I mean, tell us, guys.
Dixie, how many of you know the correlation between Dixie, the total market cap, Bitcoin, and whatnot? I think it's relevant. It's very, very relevant. Very relevant. So very important that in general, I'm gonna get into a little bit more. Someone says got no dollar to get into any more trades. Now probably you liquidated. Probably you took way too big risks. So you gotta just save up and $10 start testing around. Why is dumping so hard, Ethereum? Why is Ethereum dumping so hard? That's the question. Let's look at it. This is my short. This is one more thing which is making me feel that it's gonna go down a lot. What is it?
Like normally, if the market wants to go up, then the altcoins are gonna hold. Okay, the altcoins are gonna protect their liquidity for it to go down. The sell side liquidity. the sell side liquidity is going to be protected normally, but for the altcoins, the sell side liquidity is actually going is getting taken. That is what's making me concerned. The total market cap is coming down. It's almost in a particular level where it can actually break below, and then there is look at the dominance.
Charted dominance the other day.
It's actually in a good area. Let's see if it breaks above these highs, guys. We are in for a hell of a pump in the BTC dominance.
You mean here?
50.69, that high. That one exactly, yeah. So if it breaks above it, then we are in for a hell of a big pump in BTC dominance. The alt is gonna bleed. Ethereum is gonna bleed. Everything is gonna bleed.
My eyes are gonna bleed if that happens. I'm actually thinking about. I'm so much considering just going all in Bitcoin. Honestly, the thing is
It's the best way.
Yeah, but I mean, I have so good alts. There is a coin called I don't remember the name now, but I made like 140%, 180% on that coin in the past 2 months, 2 weeks. So they're so good alts, but it's just overall you're bleeding yourself out. So I'm thinking putting everything into Bitcoin. The worst thing that can happen, we go down another 30, 40% from here. But the best thing that can happen is October 16th. Guys, mark it in your calendars. October 16th is BlackRock ETF approval date. And there is a chance. I mean, I'm not saying it's a big chance, but there is a chance that it's going to get approved. And let me show you what's going to happen if that happens. Like if the dominance, I really have to sleep.
Ethereum is dumping it because look at the ETH BTC pair. Look at it.
Wait, I want to show everybody what's going to happen once the Bitcoin ETF gets approved. Like if BlackRock's ETF gets approved, guys, this is what's going to happen. Let me show you. Now, drum rolls. This is going to be the daily candle. And I'm not even kidding. I honestly think that. If the Bitcoin ETF, if BlackRock's Bitcoin ETF gets approved, this is how the Bitcoin chart is going to look, in my opinion. This is what we're going to see.
Now the agents over here are going to buy a Bitcoin and make it pump.
It's going to be crazy, bro. And the good thing about it is that it can really happen in October. Ren believes that everything is going to get approved at once. So if that happens, guys, and then the thing is, that alts will bleed. Alts will bleed, and that's the problem. So, yeah.
Alts are getting bleed.
What is it?
Alts are bleeding right now. Look at it.
Yeah. Let's. You can share your chart if you want.
Yeah, I'm actually showing. I'll show you something. I'll show you something.
I put your screen up.
And you guys see this? This is the ETH BTC pair. Look at the dump. So this is the reason why Ethereum is basically dumping. So be careful.
It's filling the gap though.
Expectation, either I'm expecting a reversal to happen from here, but here it's kind of risky, bro. If it comes down to this level, it's gonna go down more. That's not actually good for the markets.
Let's look at Atom. Chaos is telling us to look at Atom.
Atom. I don't know why my
someone is saying I thought Doge was gonna go up. I had a Doge chart.
Atom, this is my shorting level. Atom.
Oh, so are we getting an Atom chart here? But it didn't. Oh yeah.
Look at it.
Yeah.
This is my shorting level. Kind of risky, but let's
do that, Rain. Let's do it.
Bro, 15 minutes.
Fine. Guidance through. Guys, before you proceed, we do not recommend you take any trades. We do not want you to, trade and lose money. So this is not financial advice. So don't take the trade. But why would you? Hold on. I think you're looking at the wrong. What coin is that?
Cosmos, Atom.
What exchange are you on?
Binance.
What is that? But did you see the daily chart?
It's bullish, is it?
Yeah, it's just turning. But I mean, it's good. I think it's good. I think it's a great trade. We are coming back to at least $7, eh?
Yeah, mark this level long back 6.22, but this thing got induced, so I'm expecting this to be a trap. That's the thing.
So, Brain, I would like you to do something for us as a roundup almost.
Okay.
I would like you to delete everything you have on the chart. And you have 210 people watching you, just saying. So delete everything on your chart and tell us, like, open it up. Like, listen, this is what we're gonna do. This is what we're gonna do, Rain. We come in here and I say, hey, good morning, what's up, buddy? Can you show us a trade? Because I think you might have a trade like that could be so impactful, like an atomic B that we don't say. Can you look at some charts and then you say, hey, I have this, and then then you start showing us. You wanna really guide us through, like, why do you take the trade, all that.
I have a
huge
lot of
very juicy
reasons. Okay, here it is. So on the daily, what am I seeing? I'm actually seeing that the market is actually going up like this, right? So we have a strong MSS. So I know that the market is gonna move up. And I also know that till the market makes a lower low on the 4 hour, I can't turn bearish. So over here, the market did make an MSS, which told me that the pullback is actually starting to happen. So I'm just gonna go to the dailies. I'm just gonna mark the PD. So I do expect this to be in a good level. Let's see. Oh, great. Even better. So like this will be my level to long the markets if price comes down. This is actually a good area for me to long, because that is considered as a reactional zone, or you can actually call it as an order block. Let's see. And it has a ton of liquidity for it to come down also. So now we have an MSS, or a market structure shift, and it's going up. And this is the structure now. MSL. 10 minutes. Not a good level, but yes, this is the only one, but it's kind of risky. Let's see. Like, what is here, bro? Like, does this chart have something? Are you guys seeing this?
What? We are
Like,
seeing
what the hell is this thing? Look at this.
What is that? What is happening on that chart? Oh no, that must be a mistake.
Oh, okay. So it doesn't. Okay, it is not there in the other one, but yeah.
Not there?
In the futures, it's not there. This is a spot one.
Okay.
So you can expect
price
to go up to this level. Okay. If price doesn't go down before going up to this level, you can actually take a short position. If price doesn't do that, okay, if price goes up to this level initially, and if it shows you a market structure shift on the 3 minute, which means a lower low on the 3 minutes, then you can start to enter a short position. That will be my view, and I basically try to place my stop loss above these highs over here. If I get that MSS, and then I'm gonna expect price to come down towards the first TP level, which will be over here. And if it breaks below these lows, I'm gonna ride this trend to the downside over here towards these levels. So this is how I'm gonna analyze the market.
I think we can short it now. I just look at the Bybit chart. It looks decent. It looks very good. I mean, it's a little bit counter trading, but we had a. So this is how can I take over?
Yeah, definitely. Yeah.
So if you look at this, so here's how we would analyze that. So you look at the daily, and you want to identify a decent level for potential reversal, right? Because it's coming down. So you say, what is the order block, right? So what was the last bearish or bullish candle before a move? This was the one, right? So on the daily, come here and you say, okay, this is my daily level. Did I touch it? Yes, I did. Awesome. What did I see on the daily? On the daily, I broke above here. I created a market structure shift, or I have created a change of character. So I created another.
Bro, one more thing, Fefe.
Yeah.
Did that attain PD? Did that dump
No,
attain PD?
I don't think so. Let me look at it. I'm just trying to put. Can you take the comments, David, if you're here?
Yes, I'll look at it. Oh, it's mostly Simon.
Let me. No, it didn't. Yeah, but it's still good. It's still good.
It's good, still good for a long towards
It's
that
good, but it
area.
has to come back. So there you have two options. Number one, you're waiting and you're on the sideline, which is good as well. You know, that's waiting is sometimes the best trade. But what it didn't do here is that it didn't achieve. We don't have time to talk about this, but it didn't come back. A pullback considered a decent pullback when it comes back at least 50%. That's what you should remember. I'll repeat: a pullback is a pullback if and when it comes back 50%. We have 216 people watching Grain. I'm just saying, just so we know. So I can pull up the sound and the voice. No, so let's do this. So guys, it has to come back 50%. So what I see here is the following. I would look at it and I'm like, okay, we had a decent. So in theory, the good thinking would be, the very professional thinking would be that you try to find the order block that was responsible for the break on the daily and the break on the weekly potentially, or just the other level. So the double break. So what level was that around the 50%? It was this level, this bearish order block right here. This candle right here was the responsible for creating a whole move before the break. The reason why we don't take this is because this is not in the 50% region. So it didn't come back. Therefore, this is one big move. So that means that I'm like, okay, cool. So price needs to come back to this level for me to look for a long position. I would look for a continuation. So I would be interested in getting in a long position either here or lower down here. But right now, what we could potentially do is to look for a short. Okay, if I would be looking for a short, where would I be looking for a short? And then I just mark what? My bearish order block. So I'll just mark the order block that was responsible for what? Creating a break here. Now, this is the internal structure. So it's not, again, like this trade is not a perfect trade, as you already see. And you might not want to take it. But the reason why this level is not the best one is because, as I said, it didn't come back to the 50%. So my actual main structure is still this, right? So this is my main structure. But within the internal structure, I think it's not a bad idea to take this trade. I honestly do think, not financial advice, you do whatever you want. I'm just telling you what you could potentially do. So it comes up to this level. There is liquidity up here as well. Yeah, so potentially, yeah, maybe, yeah.
You can expect it to go down. That is my expectation also, bro. Like,
yeah, so you could potentially just take the, because if you go down the 5 minute, here's what you're gonna see. Here's what you're gonna see. You came up here and look, we already had the rejection. Look at this. You could even leave. Honestly, you could even leave your stop loss here. Yeah, you look at this.
Liquidity. Look at this. Look, what to the left side.
Yeah, here. That's a problem. But then we can enter here. If this is taken, it will come up here.
Yeah, that's the reason. Like I told you, like my level is about 7.52. That's the level. Just look at it.
Also, you would wait. But what about, there is a rejection here. I would not wait. Look at this.
That's aggressive. Let's see.
So what I see is that it made this low here. It comes up and what does it do? And I think this is a strong level. Look at it. So what we see is that it comes back to the discount, makes another high on the 5 minute, and it rejects it. Look at this.
Someone saying this is head and shoulders. No, bro, that is not head and shoulders. Nobody knows where the market is going. So, like, you can expect, like, New York is the one which is going to move the market. So, I'm basically bearish. Like, I expect it to go down because everything...
You could see head and shoulders. I don't know. We don't really trade head and shoulders, but you could see head and shoulders. I don't know. You know what? I'm going to put my money where my mouth is. I'm going to take this trade right now.
Bro, like, this thing is making me also nervous. Like, they have a rejection over here on BTC.
I'm targeting... You know what? Let's be bold. I'm gonna target down here.
Look, BTC.
125.
Look at BTC.
What does it do?
A small rejection.
Yeah, from this one.
Yep. That is kind of bad.
Yeah. No, you're right.
That is kind of bad for the short.
Yeah. I just wanted to encourage people to take a trade. Guys, you know what you could do if you want? Take it with $1 isolated margin so you don't get wrecked. I think this is not a bad trade. Obviously, Bitcoin might pull back here, but the rejection is not strong. You see as well in 15, we have nothing. Like,
liquidity is there. Like, you can expect a pump.
Yeah, you can expect a pump. That's true. Anyway, I don't think this is a bad trade. And again, like going back to the trades, right? It's very important to understand that so it's not about the individual trades. It's about looking at the market as a whole. But I think I think, David, I see that you pulled up Ren's show, but we have to switch streams because we're at 12 hours. So how's that gonna go? David. Okay, so until we're waiting for David, we're gonna read through the comments, guys. I'm gonna make sure that we put this in just one more time, just so, you know, we don't miss it.
I want money. That's what I want.
Hey, David, are you here? Because I think we have to move. Can someone please let David know that we're waiting for him? We need to. I think we need to move to the second stream.
David is sleeping, I think.
But don't leave yet, just yet, guys. Don't leave because I want to read through the comments, and also we're waiting for David. Please, someone from the team who sees it, let David know that we're waiting for him.
ARP can be long right now. Look at the total, bro.
Oh, look at you. I'll pull your screen up. I'm reading the comments. I pulled your screen up.
So like the total, he did actually tap onto a particular level. It is showing some kind of a reaction. Let's see. Let's see. This low must be broken for the total to go down. And if this low gets broken on the total, BTC will always obviously dump, no matter what. So key level, guys, and Rune is pumping. This thing got induced.
Yeah,
wait. Let me see if I can actually give you guys.
Yeah. So I think we are approaching the 12-hour mark. So I see that you pulled up Ren's show, but I think we've got to switch or swap. We've got to swap streams.
Okay.
I mean, I'm asking you. You are the one running it. I'm just asking.
What is this thing?
Okay, get us an answer, please. If we have to swap, and what should people do?
I'm not sure.
Okay, think it through, and then we can do it. Ren's show is in 2 minutes. Cool. So we have someone saying Dodge. So I am in a Dodge trade. If you look at, so if you look at, I mean, oh, sorry, I'm not in a Dodge trade. Sorry, no, I'm expecting Dodge to dump a little more, and I'm expecting for that buy. But I would wanna buy here, down here. So I still want Doge to dump another 6%. That would be the low. What?
The person got mitigated. No, Rune.
Oh, Rune. So this is I'm seeing a long on the liquidity is being taken and is being created. There is no way that this is gonna shoot from here, in my opinion. But you know, you can never know. This is what I would be looking at on spots. This would be interesting, and of course, if we see a lower time frame, rejection or turnaround, then what I would be looking for is putting my stop loss on leverage below the low when we see the reversal. But this is the level that I'm looking at. David, I hope you have an answer for us. What should we do?
Can you show what you see on Matic chart?
David left from the studio. Guys, I think I don't know what's happening. I don't know, but I think, please don't leave yet, but I think that because YouTube has limitations, and there is, I think it's like 12-hour mark when we have to move over, and we're just there. So I don't know. I don't know what we got. I'm asking the team what should we do, but maybe we'll get an answer very soon. So don't leave. Man, we've been above 200 people for most of this session. It's pretty awesome. I'm so happy you guys did this. And we had, let me look at it. We had almost 3,000 people tuning in, guys. Almost 3,000 people. We have 362 likes coming in here. Incredible. Very great stuff. Okay, ARB can be long. Can you look at ARB? I put your screen back.
Mine. ARB. I charted this thing long.
Someone is asking Matic if you can look at Matic.
Like ARB, I basically charted this thing long back. Like bro, like there is no good level. Just showed it. It's the only thing that I can say. Like I'm not actually seeing any good levels. ARB is coming down. So like there was an opportunity for you to short ARB. Yes, there was.
Okay,
an
guys. So it is. Sorry, it
Hold
is confirmed. So we need to swap. We are going to swap.
Yeah, man.
So I don't need the Streamyard link, guys. I need the link to the new stream so we can put it in here so people can see it. Please,
First
please,
level.
please.
Second level. Watch out for these two levels. You can actually take a short position if when price count goes up to that level. Can you see render? Fefe should wrestle under the long wick of the left of the dodge. Oh, Fefe, it's for you, bro.
Say it again.
On a dodge straight, someone is asking you.
Okay.
Like, why wouldn't you put a stop loss below some low or something?
Oh, I would. Okay, guys, this is the time. Will David launch the other one? Please, David, if you launch the other one, I have it here. I'll share it, and then we can all move over. So what you guys have to know is that we have a limitation on YouTube. YouTube has a limitation, and that means that we unfortunately cannot stream more than 12 hours. Chaos just posted the link. If someone launches, please, David, if you launch the live on that one, I will share my screen here, and we can see that. So guys, we appreciate you so much. Thank you for being here. Follow Rain, follow me, follow us everywhere. Yeah, thanks for being here. We truly appreciate you. I hope this session gave you something. Let us know in the comment section if you like this. People are already lining up in the other stream. Please click on the link in the comment, and please, David, launch it, and then people can move over. We are going to stream Ren's show, and then we have amazing people coming up. I already see Banter Bubbly over there, Morne Vessels over there, Jordan Cressel over there. Okay, you know what? Rain, can you stay here? And I'm gonna go launch the other one.
Oh, yeah, definitely, yeah.
Okay, guys, come see you over there. I'm gonna go and launch the other one. Okay, let's do this. Rain, I appreciate you, brother. Talk to you.
Anytime, bro. Talk to you.
And then let's chat in the group when we can finish this off.
Definitely.
Okay, 2 seconds. Let me just launch it here.
Good morning. Good evening, bro. Be Clicky is here.
Bruce woke up.
And what do you see on Magic? Magic, I'm expecting a short, guys, on all the tokens. On Magic also. Let's wait. Bubbles are green. Hey, Rain. Hey, Fefe. Hey, Bruce. Hey, bro. How's sleep? How was your sleep? Did you get any trading dreams? I'm on both streams. Nice. Me too. Guys, most of the other alpha is gonna be streamed over there. I think the next person we will be sharing is who is the next person? Just give me a second. So the next person who will be streaming it will be okay, I'm not actually seeing it. I am 11 AM 11 AM 2. Okay, it's Rand's live, and after that you will be able to trade live with the mentors. I think you need to end this one, David. Yep. I like Zoom more. It's more familiar and personal. Live trading in an hour. Yes, exactly. Right now you will be able to see Rand's show. Okay, don't panic. Yep. So tell me, guys, don't want to give out a loud pakshe naatilavara. It's kind of like bro, I want to say anonymous. That's the reason, but still I'll say it. I'm from Kollam. Where do you trade forex, Rain? I trade in a funded firm called My Funded FX. as well as I have live accounts on FXGM. Thank you guys. Where is links for Rand's show? It is gonna be posted in the group, I think. Stream is not on yet. Yeah, there is some issue over there, but yeah, it will be there, guys. Stay put. Also prefer Zoom. Shows 9 minutes, then it's Rand show. Exactly. Rand is coming. Also interaction between you and us is working way better. Thanks, guys. You will be able to see more of this. A big shout out to Chris. He's the one who is responsible for this event. He's the one who made it happen. Yep. Thanks for the time today. Anytime, guys. Yep. And after this, after the Mentors Live Trading, you will be able to know about some trading psychology with OG Craig. Pain and Pleasure, that's the title. After that, it's Bruce, the man in the comments. Man. Bruce is gonna have a special guest, Nick Sean. "48 hours next time." Let's try, bro. Let's try. Let's try to do it 48 hours. All the ones are amazing. Thanks, guys. Cool, bro. Keep trading and stay safe from Kottayam. Anytime, bro. Thanks, man. Stream not on yet. Yes. YouTube. Tell me in the comments, guys. How long have you been trading? 4 years, 1 year, 3 years? Sai is here. Be keeping you company, Ring. Thanks, guys. Well, I'm waiting for Rand's show. Three years, nice, Vishal. Nick is a world-class forex trader. Position size is about 45 times 15. It's around $600, right? What are your thoughts? Okay, 5425. That's kind of good. Yeah, that's actually a good short, bro. 5425. Yeah, I expect price to go down towards 5152. That will be the area of reversal that I will be watching. If price goes down to that level, then you can actually wait for a good reaction. And if it gives you a good reaction on Magic, then you can exit. A good reaction as in a higher high. And thanks, man. Fast and efficient. Thanks, man. Guys, was I speaking fast? Because I get that a lot.
Right.
Yep.
I'm gonna end this stream and we're gonna move to the new one.
Perfect. Guys, the new links here.